stock as well as index futures. And they went ahead and they wrote more calls than puts, which is telling you at higher levels, you're going to see a lot of resistance coming in there. And in the last few trading sessions, though the market has been holding its own and rebounding from lows, 24,000 call, that was fairly active. 24,100 call was fairly active. You put that together, that's close to around 70 lakh shares getting added at higher levels, and there was writing being seen at these particular levels. So looking at the technical levels, looking at the options data as well, the key resistance level comes up for you in the screen. That comes in at around 24,250 to around 24,300. I say that because I look at the options data, and also the 100 DMA comes in at that vicinity. On the downside, you have the 20 as well as the 50 DMA. Well, that's important at around 23,850. So for the time being, you're working with this sort of a range. The Nifty Bank has been the big outperformer. Dips are getting bought in there. It's trading above most its technical levels, whether it's 20, 50 as well as 100. The nearest possible level you're looking at is the 200 DMA. That's close to around 500 points away from current levels. And the Nifty Bank, all bets are on that this one goes to fresh all-time highs, which is around the 61,000 odd mark. And if that happens, then the Nifty gets that opportunity to get closer to around 24,500 and get past that. So though the headline index is in a bit of a range, what's giving you hope and what's making your portfolio feel good is the broader markets. Even in Friday's trade, if you look at the number of stocks advancing in comparison, number of stocks declining, well, you had, by the end of it, you had that pretty much even, Steven. And all through the trading session, there was some kind of improvement in terms of the breadth of the market. So you like that. For starters, we start off, I think, with a mild positive bias. You'll want to build on there and get closer to the resistance mark of around 24,250 odd.
You get point. Nigel, thanks a lot for that. GIFT Nifty indicating a 75-point uptick to start things off. So let's see where that goes from here on. Mark Matthews of Bank Julius Baer & Co. now joins us. Mark, good morning. The developments that are taking place in the talks in Switzerland between US and Iran, irrespective of the directions that they're taking, short swerves on either side in a short time. The price of commodities and market tells you that, it's not going to escalate much from here on. Would you be in that camp as well? And were that to happen, do you think it's case for emerging markets to start outperforming once again?
It's so difficult to put any odds on these negotiations. I think they will be successful because I sense the tone from the Trump administration is that they want the memorandum of understanding to become a permanent thing. But it's very hard to stop the fighting in Lebanon, especially when there's an election in Israel later this year. And all of the parties in Israel, frankly, need to show that they're very tough. So I'd like to think it will hold. And if it does, then the oil price should continue to go down. That is our view. Our forecast is $60 a barrel this time next year. And if that is correct, then I would think the emerging markets, which are most sensitive to the oil price, that of course includes India, would be the obvious beneficiaries.
Okay. Mark, hi. Good morning. Good to see you. So are you investing, trading, approaching the markets with, war completely on the sidelines? That it's not a part of the investing approach? Or is it a part of your, the way you're constructing your portfolio right now and incrementally investing money? And if yes, if you could explain that.
Well, as I said earlier, we hope and think that the memorandum of understanding will stick and the Strait of Hormuz reopens and the oil price will go down. But I can't put a probability on it. So I would simply say that the conflict in the Middle East, if it does go away, I think that will give us a sugar rush in markets and ultimately take all of them quite a bit higher. If it doesn't go away, I think that ironically, markets were managing to survive just fine. The pain point in the United States for oil to hurt their economy and stock market is way above where the price got to, which was about 115 at its peak in April. I think it needs to be north of 150, maybe even closer to 200 to have a serious impact on the U.S. economy. Of course, for countries like India, the pain point's much lower. It's probably around $90 a barrel. So if this memorandum of understanding sticks, then I think India is looking better.
Hi, Mark. Good morning. Good to see you, Ben. That was a bold call you made 2 months or so ago. Late April, I think crude oil prices were going out of whack. And you said, I think that we expect crude oil prices to be sub $70 per barrel mark by the end of this year. Well, hopefully it comes sooner than expected. And, this war de-escalation actually has aided that. You said that India could actually do well. Do you think India could actually outperform? Because we have been ranked underperformers. You see it from the start of this war as well. Equity markets have been holding up, as you said. Do you think there's a case that India outperforms? And given the kind of flows that we've seen, outflows from India for the first 5 months of the year, do you think there's a case that the FI has gradually come back? Because now the rupee is showing signs of stability. Crude oil prices have cooled up. And hopefully we get back to our growth as well as earnings growth.
Yes, the crude oil price coming down is, of course, a positive, and also the RBI making it more attractive for non-resident Indians to have fixed deposits in India, and the government getting rid of taxes on foreigners investing in fixed income in India. All of those are good things, but ultimately, I think the problem is that the earnings growth in the United States is so strong. It's probably going to be around 20% this year and high double digits next year as well. India can't really match that because it doesn't have this big AI-driven earnings cycle that the US does. What I would say is when the AI bull market eventually peaks and rolls over, then I'm sure money will want to come back to India. And the thing is that we just don't know when that is. Even today, nobody knows why the dot-com bull market peaked in March of 2000. Why wasn't it in March of 1999 or March of 2001 or 2002? We don't know. And so trying to put a top on this AI bull market, I think, is next to impossible. But it is still very much alive. And as much as it remains alive, I think India is not really on the radar screen of global investors.
Okay, got that, Mark. Yeah, hopefully things turn around a little bit, because as you said, that AI trade is up and kicking. A quick word with regard to what you heard from the new Fed chair, Kevin Warsh, last week. He sounded a little bit hawkish, according to most market participants, and now we are factoring in a rate hike. What did you make of the comments out there? Do you think that could be a bit of a spooky factor that plays out in the latter part of this year? We have the crucial PCE data as well that's expected, I think, on Thursday this week itself.
I don't think he's a hawk at all. And I think, in fact, he wants to let the economy run. He doesn't want to raise rates. The historical precedent he looks at is exactly the one I just talked about, which was the late 1990s. And from 1996 to 1999, Alan Greenspan did not raise interest rates, even though there was a big productivity boom driven by the internet. It was the right decision not to raise interest rates because the productivity-driven internet boom did not actually cause inflation. Warsh is on record as thinking that is the same case today. And he said, even last fall, that it would be a mistake to raise rates because of this AI productivity expansion. So I don't think they're going to raise rates. And the dot plot, which you mentioned, Nigel, he did not contribute to. And he's also on record as saying that he thinks it provides false predictive, false guidance, because it's basically a signal the Fed thinks that rates are going to go a certain way. But its track record is no better than the economists on Wall Street. So I think he feels that it provides some false guidance, and he'd actually like to get rid of it.
Right. Just to go back to your point on trying to call an AI top. Now, it's impossible, like you said, but I'm sure from the earlier runs that we saw in the market, thematic runs, there were signs when we were nearing the top. What could those be when we're looking at the current cycle?
Well, I think the most obvious one is the price-earnings ratio of the big technology stocks. And the peak of the dot-com bubble, the big 5 technology stocks were over 50 times price earnings. Today, the Magnificent Seven are on in the 20s, in the mid 20s, price earnings wise. I don't think we can make a case for an extremely overvalued market for the United States. You might be able to make it in some other parts of the stock market where there's been these smaller AI plays that are extremely expensive, or SpaceX, obviously, and some of these big AI IPOs that are coming up too. But for the broader S&P 500 and the big technology stocks in it, you cannot call it an expensive market.
Mark, it's been great chatting with you. And now we've got some big IPOs coming up in the Indian markets as well in the second half of the year. You've got National Stock Exchange, then the Geo IPO. So these are large ones, and they will, to some extent, suck out liquidity in the secondary markets in India. But great chatting with you. Thank you once again. Moving on now, let's quickly tell you the interactions lined up on the show today. So first up, 8:35, we bring you a discussion around the key takeaways from the Reliance AGM, the Geo IPO, 9 a.m. Manoj Gori of Equirus Securities will put the spotlight on consumer durables. 9:20, Mihir Vora of Trust Mutual Fund will be the market master for the day. 9:30, the management of LG Electronics joins in to talk about the impact of the weak monsoon on the business, the road ahead. And following that, the management of Fractal Analytics will join in at 9:40, following the plummeting, the gashes that we saw in IT last week on Friday. Towards the end of the show, Lata will speak to external members of the MPC on the minutes of the June 5th policy.
Time to slip into a quick break. You come back, we go full tilt on stocks. We'll be looking at our top 10 stocks. And for the time being, I give you a sneak peek. Amber, Voltas, Bharat Forge, Uno Minda, PDC Industries, RVNL, PowerMech, GRSE, as well as Texmaco Rail. All of them will be reacting to positive news flow. On the flip side, you have Oro Pharma that will be reacting to negative news flow. Take that break, come back, get into further detail on all of these names.
Welcome back. You're watching us here on Bazaar Morning Call. The Gift Nifty indicating a 70-point uptick to kickstart things. A bunch of stocks on our radar. And as always, our team with us here this morning. Good morning, guys. Happy Monday, so to say. Upasna, you're looking at a couple of stocks this Monday morning. Good news coming in for both Voltas as well as Amber.
Well, certainly. First up, let me start with Amber Enterprises. It recently held its analyst meet, and here are some of the key important updates given by the company on the back of the OPPO collaboration and the strategic rationales shared by the company. Now, the company says that the collaboration is expected to diversify the company's revenue profile and also reduce its seasonal concentration in its RAC business. Given the asset-light nature of the arrangement, the capex requirement here is quite minimal, which is below the 50 crore mark is what the company has indicated. Now, coming to the trial production, it is indicated that it is expected to commence in Q4 FY27 with commercial production with the OPPO collaboration of manufacturing of the mobile phones will be starting from Q1 FY28 is what the management has indicated. In terms of volumes also, it has guided nearly about 8 million units in year 1, scaling to 13 to 15 million units by year 2 of operations. Now, moving on to Voltas, the company has crossed 1 million AC unit sales in FY26 to FY27, and it reaches the milestone in a record time, which is nearly just about first 3 months of the financial year. It is the company's fastest ever run to 1 million unit is what the company has also emphasized, and it has attributed this momentum to strong consumer demand, even the company's continued focus on innovation and execution, and even strategic initiatives taken by the company. The company also says that the demand continues to remain encouraging across the market, and it is certainly looking to build on the momentum in the months going ahead. So all in all, these two stocks on our radar today, expecting green on both these counters.
Thanks a lot for that, Upasna. Well, hopping across to Sudarshan, as always, he's got a list of stocks that he's tracking. Morning, Sud.
Morning, Nigel. We'll start with Bharat Forge has signed 425 crore rupees contract with Ministry of Defence to supply gas turbine generators to Indian Navy, and this contract would be executed over next 5 years. And next one is Minda, another approval under Press Note 3. Company has got the approval for investment by Innovance Auto in Minda Auto Innovations, but this investment would be subject to regulatory approvals that the company receives from Hong Kong and China. Aurobindo Pharma, its subsidiary Eugia Steroids Unit Andhra Pradesh, has received 5 observations from US FDA, and for that inspection was done from June 10 to June 19. Last one is PTC Industries. Board is likely to meet on June 27 to consider fundraising, and that would be via equity issuance or other securities. So green for PTC, Bharat Forge and Minda, and red for Aurobindo Pharma.
Okay, that's the PTC India. What we've tagged, it's PTC Industries, which is considering a fundraise, and that's the one which closed up with a gain of more than 5% on Friday. But Vinny joins in with more stocks which are in the news, and Vinny, lots of order wins.
Hi, absolutely. Lots of order wins of what we're seeing coming in this morning. We have RVNL that's going to be in focus after they've received a letter of award from NMDC. This is mainly to build a 10 million tons per annum buffer stockpile as well as blending yard in Visakhapatnam. Order value of this is around 2,900 crores approximately. So green expected here. We have PowerMech that's also in focus. They have received an order from JSW Thermal Energy. This is for a civil construction work order for 2 800 megawatt of thermal power projects in West Bengal. The order value of this is around 1,000 crores. And do not forget, the order book for the company stands at around 15,800 crores approximately. So green expected here as well. GRSC, the company has officially been upgraded to Navratna status by the Ministry of Finance. So positive moves expected here as well. Texmaco Rail, 2 orders. One is a 253 crore order that they've received from JSW South Rail Logistics. So that is a positive one, as well as another small order from Odisha Power Transmission of around 11 crores. So both these things could keep the stock on the positive side as well.
All right, Vinny, thanks a lot for that. We'll thank the entire team on that note. And in case you missed all the top stocks that we're tracking this morning, here's a quick recap. Stocks with positive news flow. We have Amber Enterprises, Voltas, Bharat Forge, Minda, PTC Industries, and RVNL along with PowerMech projects, GRSC and Texmaco, while Aurobindo Pharma is the only stock which is likely to open in the red. With that, let's go across to Manisha Gupta for a quick roundup of all the action coming in from the commodities market overnight. Manisha, even as the negotiations continue, crude prices fairly range bound, currently $79 per barrel.
Well, yes, at one point in time, we started Asia with nearly 81 plus kind of levels, but there have been statements since a joint statement really from Iran coming in about how there is a major progress to end the Lebanon war. That clearly has been a bit of a thorn in the flesh. And then, of course, there have been more positive statements about exports being waived off, blockade lifted, frozen assets released, and major reconstruction and development plan launched for Iran. So all of those factors clearly have brought the crude oil prices down yet again. Remember, from a conflict high of $120 a barrel, we are down to 80 at this point in time, and that's nearly 40% of a decline coming in for the crude oil prices. And while the crude prices have seen a decline, it has led to some gains come back in case of metal prices. So whether it's gold, 1% higher, silver, 1.5% on the higher side, and copper as well, trading a percentage point on the higher side. A bit of a strength coming back into the dollar index is something that's keeping the prices in check. But the scenario right now is decline in energy and gains in metals is how Asia is functioning.
Got it. Thanks a lot for that, Manisha. For the time being, we slip into a short break. You come back. We have Dharmesh Kant of Chola Securities who's waiting for us. We'll get straight to some fundamental stock talk. Welcome back. You're tuned into Bazaar Morning Call and hope you're having a good start to the week. Well, let's welcome Hormuz into the show. He's here to tell us about some of those big movers in Friday's trading session. Hey, Hormuz. Good morning.
Good morning, Nigel. And Berger Paints was one of the big movers on Friday. It was the third best Nifty 500 performer that day. The stock was up around 9% and it's the biggest single day gain since March of 2020. And those 80 lakh shares that were traded on Berger Paints were the highest in a month. The sum total of the last 22 sessions put together as well. And the delivery percentage too was around about 19% in compared to the total number of shares traded. The 20-day average was just around 4 lakh shares, so 20 times its 20-day average for Berger Paints. Around 15 lakh shares marked for delivery, and the 20-day average being close to 2 lakh shares. As a result of that, the stock has turned positive on a year-to-date basis. Infosys was the big underperformer on Friday. Of course, the entire IT basket, most of them recovered from the day's low, but not Infosys. The second worst Nifty 500 performer that day. Close to 5 crore shares were traded on Infosys. The 1050 put option was the most active, where the premiums went up almost 4x that day. And the 20-day average is just 1.5 lakh, so 3x it's the 20-day average when it comes to the total traded volumes. And half of those shares were marked for delivery, so close to 2.5 lakh shares for delivery. The 20-day average is around about 82 lakh shares, so that too is around 3x for on the delivery front. And the stock in the month of June itself is down around 10%, and this is despite the fact that the stock was up almost 10% in the first 2 days of June. And lastly, Anandrati Wealth was one such performer on Friday. Did well. It's gained in 7 out of the last 8 trading sessions has the stock. Volumes around 9.5 lakh shares. The 20-day average was around 5.5 lakh. 54% of those shares were marked for delivery. So 5 lakh shares for delivery. The 20-day average was around 3 lakh shares. And in fact, the stock over the last 12 months has been a big wealth creator, up around 80%.
Right, we take that point, Hormuz. Thanks a lot for that. A bunch of stocks on our radar. They were buzzing around. Berger Paints definitely stands out with the kind of move that we saw on Friday itself. But the big news in the second half of Friday was the Jio IPO. From disrupting India's telecom market in 2016 to becoming a digital giant, now it's readying for its market debut. Rima joins in with the details. Rima.
Well, it's been nearly 10 years after Reliance Jio's commercial launch, and now it's finally headed to the public market. So just to recap its journey, Reliance Jio was commercially launched on 5th of September 2016. Free SIM cards, unlimited voice calls, free data under the introductory offer. And this launch transformed India's telecom landscape almost overnight. It triggered an unprecedented price war, accelerating the company's digital adoption. At Reliance Industries' latest AGM, Mukesh Ambani has now announced that Jio Platforms has filed the draft papers with SEBI for an IPO, and it marks a major milestone in the company's journey. And remember, Jio's entry reshaped the entire telecom industry. SL got bankrupted, Reliance Communications collapsed, Vodafone India merged with Idea Cellular. In 2020, Jio Platforms then raised more than $20 billion from 13 global giant investors. We're talking about Meta, Google, Silver Lake, KKR, General Atlantic, and many others. At that point, Jio Platforms was roughly valued between $58 to $65 billion. Today, investor expectations are for $110 to $120 billion in terms of valuation. Jio has gone from a disruptive telecom challenger in 2016 to India's largest digital platform with more than 500 million subscribers. And Jio's IPO marks the culmination of one of the most consequential business transformations in modern India. But now let's get to the details about the Jio IPO. Well, it's going to be a pure fresh issue. No offer for sale component. The existing shareholders, which includes Reliance and all the other investors like Meta, Google, they will not be selling any stake. The primary objective of the issue is to pare debt. The company said more than 27,000 crore will go in reducing the debt on the books. Now, ahead of the IPO, Jio's numbers are basically showing you a company which is entering into a cash generation phase. So these are the numbers for last year. The revenue has gone up to 1.46 lakh crore. That's a growth of about 15%. The profit is also up in excess of 30,000 crore rupees. Subscriber additions also rebounded very sharply last year. They went up by 36 million, and currently they stand at close to 525 million. The ARPU stands at 214. But I think the most important thing is the cash generation. Now, the metric we're looking at is the EBITDA less capex. Now, that number was about 1,450 crore in FY24. It shot up to nearly 20,000 crore in FY25 and now stands at 42,000 crore. It's basically a jump of 29x. What does that signal? That the company's heavy 5G network, the capex cycle perhaps is now behind it, and they've now entered a cash generation phase. Now, for most investors, really, there are limited telecom options, right? You've got a Bharti Airtel, you've got a Vodafone Idea, which is more of a call option on its survival and strength. Now, Bharti has been an investor favorite. It's a premium play. It's got higher ARPUs compared to Jio, higher margins, and plus you've got the Africa and Indus Towers optionality. Where does Jio score compared to Bharti Airtel? It scales on customer volumes. Jio subscribers are more than that of Bharti Airtel. And Jio is also more than a telecom play because it offers a play on India's digital economy. It's got mobile, home, broadband, enterprise, AI, all bundled into one. It is definitely one of the most awaited IPOs and the first IPO actually from the Reliance Group in nearly 20 years.
Thanks a lot, Rima, for that neat run-through out there. Well, let's welcome Nitin Soni of Fitch Ratings, as well as Piyush Pandey, Senior Vice President at Centrum India, who joins us on the show. Good morning, gentlemen. Thanks a lot for joining in. Well, Piyush, coming across to you first. What are you factoring in terms of valuations on Jio? Remember, it's been long awaited, and the last 10 years have been absolutely spectacular for the company. Multiple you're giving it, what kind of valuation you're looking at?
So we are building in valuation of close to $130 billion, and that is 13 times EV/EBITDA FY27. But we do expect that the IPO will come at slightly discount, a 5 to 7% discount for this.
Right, the IPO will come at a 5 to 7-8% discount. They'll leave some money on the table. But, from a Reliance standpoint, what's the kind of valuation holding company discount that you're factoring in? Because that was one of the reasons why the stock perhaps saw a bit of a decline as soon as this announcement was made.
We do expect that the holding company discount would still be around, say, 20 to 25% post the listing of Reliance Jio. And that is what we expect, post the listing.
All right, 20 to 25%. Nitin, your thoughts on this development and, how does it change the dynamics of the sector now? Because you'll have another listed player here and all of them will be looking for profitability.
Yeah, thanks for having me on the show. So we do rate Reliance Industries at BBB flat on foreign currency IDR, and local currency IDR is BBB plus. So it's a positive development from as a credit analyst point of view, given the fact that it's an offer for sale. The money will come in, and as the DRHP of Reliance Jio says, they will use the money to apply for debt repayment. So it will definitely strengthen the balance sheet. We know that industry is now essentially a duopoly, and both the players, Bharti and Jio, are monetizing their investments. Rima just pointed out that the free cash flow generations have increased significantly in FY26. So we do expect ARPU to improve 10 to 15% each year. And at the same time, data consumption per user per month will also increase from 42 GB at the moment for Jio.
Piyush, hi, gentlemen, both of you, good morning. Do you want to compare Bharti Airtel and Jio based on the numbers and from an investor point of view? What is the best strategy? Own both, or is there a preference for one over the other?
Better would be to own both these companies. Maybe in the ratio of like, say, 60 to 40. So one can have a weight of 60 to, say, Bharti Airtel and 40 to Reliance Jio. And in terms of numbers, I would say very similar, like, say, for example, both of them have revenues exceeding, say, 1.5 lakhs crores, plus EBITDA margin of 50% plus. But I would say for Reliance Jio, the key thing would be like, say, how their ARPU grows in the coming years, like, because they have the industry-leading customer base. Now, I think how they're able to monetize the data usage, the customer base, that is something which will trigger for this Reliance Jio.
You said that there is money left on the table. So assuming the valuation comes at 110, 117, these are some of the market reports which seem to be suggesting the potential valuation of Jio. You think that there is value which is left on the table, and this is a no-brainer investment for, retail investors should be subscribing in the IPO? Piyush?
Yeah, of course, there is value left on the table because we still have a story, I would say, investment story of increase in ARPU over the coming years. But apart from that, you have, like, say, JioSaavn, Jio TV, other, say, digital apps businesses, which are yet to, I would say, take off in a meaningful way. So I would say, plus telecom story remains primarily like a duopoly story where market seems to grow at, say, on an average of 14 to 15% of revenue basis. And in terms of, I would say, capex intensity has come down, and there is a scope to, and in fact, Bharti has launched premium 5G services. So I would say Jio remains an open area.
Okay, so your advice is own both Bharti and Reliance Jio in the ratio of 60 to 40. Nitin, what are the risks at least one risk is out of the way, that there is no offer for sale. So selling shareholders, the existing shareholders, and they're quite sizable because the promoters own about, I think, 60% stake. The balance is held by shareholders and they're staying put right now. And I presume there would be a lock-in for them also. At least for now, that risk is out of the way. What are the risks one should be aware of in this IPO?
Yeah, it's a good positive development that it's a fresh issue of shares. It's not an offer for sale, so which means that the investors, Google, Meta, and other investors, when they invested in 2020, see the growth in the company, right? They believe that the company has potential for growth in the medium to long term. As far as risk are concerned, from a credit point of view, we don't see any risk there, given the fact that it will strengthen the balance sheet. I think what is going to happen is that Jio will further invest in their network deployment on a 5G infrastructure. And we are looking at Jio digital platform compared to Bharti, which is a pure mobile and fixed broadband company. Obviously, when we look at Jio platform, it's more of a platform company where they have a wider range of products. They have a wider moat and wider investment in terms of investing into AI digital platforms, ownership of the content, ownership of the other AI related products. So we'll have to see, in what products, in what networks they are going to invest further in the next 2 to 3 years, or maybe in the medium term. But I think that will add a lot of cash generation for Jio platforms as a whole.
What value would you ascribe to Jio's non-pure telecom business, the non-mobile business, or the non-broadband business, to the other businesses that you were talking about as a platform company? Is it 10%? Is it 20%? What's the ballpark number? Nitin?
Yeah, at the moment, I'm not a valuation guy, so I can't really give you any value number. But what I can tell you is that clearly the company is going into the right direction. As you know, regionally and globally, India is a laggard in terms of the AI deployment, right? In terms of the AI infrastructure, we are still at a much lower base in terms of the capital investment. With this IPO, the money coming into Jio platforms, I think it's a good development that the money will be deployed into further accelerating the AI. Our data consumption per user per month is one of the highest globally, which is 42 GB when last recorded. And I think what the two telecom companies should be looking at is to further invest in the AI products and AI deployment and platforms to increase, further accelerate the data consumption, which definitely is going to grow from here on. I'll not be surprised if in 3-4 years it will be 100 GB per month per user.
Piyush, one very quickly, because we're out of time. Can Reliance Jio at some point be looked as an AI play because of all the investments that they're looking at, and therefore the valuation could be different?
It can be like, say, for example, they have large customer base, and if they're able to launch some AI apps for, like, say, education, learning, agriculture, then maybe they would be able to amortize their customer base, and it can be seen like an AI company, but it depends on use cases. They're able to launch their AI apps, yeah.
Gentlemen, thank you very much for joining in. We'll keep coming back to you as this story unfolds. For now, the latest is that the DRHP has been signed and market is expecting a listing perhaps towards the end of this calendar year. Dharmesh Kant, Head of Research, Chola Securities, is now joining in. Dharmesh, both the previous speakers seem to suggest that Reliance Geo IPO for retail subscribers is a no-brainer. They've left value on the table, assuming the valuations that the market is talking about, 110, 120 billion dollars. What is your own assessment of the numbers that we've learned from the DRHP?
Yeah, good morning, Rima. Thanks for having me for the show. We were penciling $100 billion to $110 billion for the simple mobile business platform for Jio. So it's almost there. If you take it at the lower end of the valuation multiple, it's around 10% discount to Bharti. And upper end of the valuation multiple is around 10% premium to the Bharti Airtel. So that way, I think is fairly best. Let's see what's the IPO price they are working on and how it's being carried forward. So as far as mobile play is concerned, it's fairly valued. In AGM, the directions were pretty clear. So future directional move where the business is going to take, they have clarified very clearly. So that's a good point, and nothing more you can expect in an AGM regarding the details of the businesses. So what could be the next leg of the growth driver, and that is the three verticals, be it LEO satellites or the data center play or the AI. These are capex heavy, business models and low margin business. So right now it's 52% kind of an operating margin. Data center, typically, if it's an infra play or architectural stack kind of a play, it will boil down to 15 to 20% kind of a margin. AI, depending upon enterprise AI rollout is there, then it can be around 15 to 25% kind of a margin business. But if it's a consumer AI, so right now, most of the consumer AI plays is around negative operating profit to 10-15% kind of an operating margin. So that's a challenge out there. LEO satellites in its matured form they can give you around, say, 35 to 40% kind of a margin, depending upon the scale, size, and the type of satellites they launch into the orbit. So much details regarding what kind of a capex will go into it and what can be the blended margin will come into play. Having regard to the IPO, I think market will definitely give a premium to these businesses in future. In next 7 to 10 years time frame, I think more than 50% of the revenue and profitability will come from these new businesses, be it data center, AI, or the satellite play. And there, I think 30-35% kind of a premium will be given to that. So even on the higher side of the valuation multiple currently, so we are penciling it around 20 to 25% kind of a listing gain. So it's going to be a good listing as far as our understanding is concerned on the Geo platforms in light of the future businesses which should turn profitable, given the management pedigree and the way they have, whatever they have said, they have actually delivered, though the time may vary, 1 to 2 years, but deliverance has been there.
Okay, all right. Hi, Dharmesh. Good morning. Good to see you again. Dharmesh, Voltas, they've gone ahead and hit 1 million, and faster than last year. I think last year it was in 88 days. This time it was in 81 days or so. And last full year, I think they did close to around 2.4 million units odd. So they're saying it's a good start to the year. Margins is going to be a question though, but top line growth should be there because price increases as well as volume growth will be there. However, because of the currency depreciation, input cost spike, we'll have to keep an eye out on margins. What's your view on the stock?
Yeah, good morning, Nigel. Definitely Q1, as far as margin is concerned, there would be some challenge out there, but it's a transitory phase because now the input prices have cooled off significantly, and after Q1, we would be walking into the festive season. So the way things are panning out, we have seen there's a huge tailwind in the economy. Even the direct tax and indirect tax numbers for the June was a robust 22% kind of a growth in the corporate tax and 8% kind of a growth in the individual NHUF, the non-corporate taxation side. So that does underpin the point that there's an underlying current in the economy. If monsoons are somewhat, near to their guidance of 90 or 92% of LPA, then I think this is a transitory phase. Q2 and Q3 should be good for all consumer durable companies because the last 2 years has been a washout. And keeping that in mind, there should be some pent-up consumer demand coming into play. Let's not forget the wage revision codes because a lot of cash in hand take-home money has increased in the hands of most of the people on account of future savings though, because the 1800 kind of PF reduction has given ample money on the take-home front. So I think all these factors should play. Our topic from the entire space has been LG Electronics for quite some time. And though we are bullish on the entire segment, but LG Electronics remains our topic out there.
All right, LG Electronics it is. We will obviously hear from the management shortly. That's LG Balakrishnan that the team is flashing. It's actually LG Electronics. So pull up that stock and closer to 1680 on that counter. Take a short break, come back. We continue our conversation with you, Dharmesh. Also, we'll connect with Mitesh Thakkar for some technical trades. Stay with us.
Welcome back. We've got about 10 minutes to go for the pre-opening rates to kick in. Dharmesh Kant of Chola Securities is now joining in. The GIFT Nifty is suggesting a positive implied open of 59 points, so 60 points up. So some recovery after Friday's fall. And the fact that crude is trading below $60 per barrel is also helping sentiment. Dharmesh, IT was the big casualty, the accident of last Friday. Did you all make any purchases or it's an avoid? I know you have some individual stocks like Orion Pro that you like, but broadly, what's the call now on IT? And two, is there a risk that the guidance given by Infosys, for example, there could be a downside bias to that? Or do you think the guidance shared adequately captures in the macro uncertainty?
Rima, to our mind, I think the guidance given by most of the IT companies adequately captures the FY27 kind of an outlook. I don't think there would be a downside risk to any of them being on the constant currency front. In fact, there can be some upsides of the budgetary surprises coming in, as most of them has tied up with some or the other AI service providers, and most of the products which are being now rolled out is AI enabled. So some business out there, but net, if the net sum of it remains to be more of a constant kind of a play rather than any growth coming in, there would be people who would be buying into the corrections because of the corrections have been pretty sharp. So for us, it remains a clear avoid. We don't think it can be a structural growth story in the making. What can be there on the table is some kind of a catch-up rally being happening to the valuation discount place which has been there because of sharp corrections which is happening. So it's a trading play, nothing beyond that.
All right, nothing beyond a trading play. Dharmesh, we'll again take a short break. Come back on the other side. We'll have all right, okay. Just a word before taking a break on a couple of these paint companies. Berger Paints for one, a big mover on Friday's trading session. Crude prices are down. These companies have already taken price hikes. Competition is now moderating, at least the intensity, because now the price difference between the disruptors and the incumbents has come down. And given the monsoon has been delayed, it gives a longer window for people to, paint their houses. So typically that is positive for these companies. Would you concur with that? And given the recent underperformance, would you bet on any?
Yeah, but I mean, painting your houses is a different, it's a pure consumption play, and it's a cyclical play. Around 2 or 3 years, you go for the replacement kind of a painting. And as far as new constructions are placed, it's a continuing business. Definitely, whenever you take a price hike, rollbacks are not there. So Q2 onwards, there would be some benefit of the margins coming into play, and Q3 would be the best for them because the inventory exhaustion would have taken place. So 45 days to 50 days kind of inventory built up most of these companies have. So that side, we are not very bullish on the paint segment, though there can be, last Friday there was a huge spike in the Vajan paints. But around 10 to 12% kind of growth on a blended basis on the revenue front, taking into account volume as well as the price hike is what we are expecting this season. And to that count, if you look at the valuation multiples, they are fairly high. They are not cheap any longer. Maybe 5-10% kind of a trading play can still be there. But as a structural theme, I think the incumbents as well as the new players are playing very hard. But that again, the competitiveness as to the pricing will return back. So to that count, we are not avoiding this segment as a structural play.
That point, Berger, a lot of people believe that is also a play on the revival of West Bengal after the election results in terms of GDP growth coming in out there as well. Take that point. Thank you. Always a pleasure speaking with you, Dharmesh. We'll leave it at that. Take a short break. Come back. We'll have the pre-opening rate. Also, Manoj Gori of Equirus Securities joins in. We focus on consumer durables.
Welcome back. This is Open Exchange, and we are coming to you live from the CNBC TV 18 Motilal Oswal studio. Well, it's that part of the show then where we get our technical experts to help you out with how do you trade this session. Mitesh Thakkar, President Retail Research at Bonanza Portfolio, joins us on the show. Hi, Mitesh. Good morning. It appears it's going to be a good start to Monday morning because the GIFT 50 is suggesting some bit of green. How would you trade the index, the Nifty as well as the Nifty Bank first up, and then we'll get to your stock calls?
Good morning, Neil. So, on Friday, I suggested that if we get a good dip, we'll buy into it. And the target area of buying was around 23,850, while the low was 23,901. But the bias remains on the upside. I think, if you look at the 10-day, 20-day, 30-day averages, they're all pointing upwards. The 10-day has crossed over the 20-day, the 20-day has crossed over the 30-day. So it's net, the overall bias remains on the upside. Now, one, if you don't have positions in Nifty, if you want to buy now, I think today's 50-60 point kind of a gap up would not be a bad idea to buy into. Keep a stop below 23,975, 970 on this spot. And good chance that we might test 24,150, 160, which was the level which we tested last week, and eventually head towards 24,350 or even higher level. So in the short term, in the immediate basis, the bias is definitely on the upside.
All right, so 24,350 thereabouts is what you're looking at on the Nifty. Would you have a call on the Nifty Bank? That's been the rank outperformer here, right? How long before we get to 60,000, and what's the probability here?
So the Nifty Bank as well, Mangalam, has been trending on the upside. It's been slightly outperforming the Nifty as well. But what remains a very significant hurdle on the historical charts is the level of 58,350, 400. I would expect, and while the bias is positive, that around these levels, some profit booking in the banking names, banking stocks, or the bank index itself would be done. The next leg of stronger up will happen only once we start closing above 58,400. So whether it will happen in the first go or in the second attempt, that is something which I'm not clear about. But yes, I think that's the level which I'm watching. Around those, my idea would be to take good parts of profits off the table. And if we start closing above 58,400, 450, then a fresh long can be initiated.
All right, now we have pre-open rates coming in pretty much in line with what the GIFT Nifty was indicating, about 100 points on the Nifty as against the GIFT Nifty suggesting a 70-75 point uptick. While we'll wait for those to settle, one that really stands out is Reliance, up around 1.5% in pre-open. Mitesh, saw a bit of a decline after the AGM on Friday. But do you believe that this is a stock which is poised for some outperformance here, if at all? Do the charts suggest that?
See, Reliance, I have had a positive view. In fact, we had some longs on Friday, which got stopped out because the price after starting well around 1340 dipped below the immediate support levels of 1315, 1310. I mean, just close below that. But again, I think the setup is not a negative. It's just the price action which was slightly negative. In case we can bounce back and recapture 1330, 1335 levels again, I think Reliance should again do well and possibly head towards 1360. That's the minimum pivot. But I think more logically, 1395, 1400 is what I'm.
1360, next stop, 1395. Got that. But you've got some more stocks as well that you want to tell us about. Please go ahead, Mitesh.
On the stock side, Nigel, in fact, today I have all buy or long side recommendations. The first stock which I'm looking at, which could possibly move on the upside is APL Apollo. After a good correction, the stock is showing first signs of reversal. So buy here with a stop at 1844 for targets of 1920. Lupin is something which I've recommended in the last couple of days as well. Now it's a fresh buy. Keep a stop below 2320. Look for targets of 2415. Then a buy on Eicher Motors with a stop below 7560, and the short-term one-to-day kind of a call for a target of 7700, and also a buy on HDFC Life with a stop below 582.5 for targets of 16.
Right. A few months of trading history is what we have on LG. Mitesh, listed in October itself. From levels of a little over 1750 post-listing, the stock was an underperformer. Just the last few weeks, it's come back, and it's now closing in on, once again, its earlier high of near 1750 thereabouts. Do you think this time around it crosses past that and there is fair momentum here?
So Disclaimer, I actually hold this stock, I just bought it last week itself when the short-term price chart suggested a breakout above 1570, 1580. And the idea is that this is a breakout which has triggered some kind of an up move. Closing above 1680, would be very positive. The indicator setup is quite rising and suggesting good momentum. So 1680 was the highest closing which the stock did, rather 1683. I think it was way back in November 25. Now, historically, it's the only pivot left on the upside. So 1680, 85 is the near-term target. But I think once the stock starts getting past that, I would not be surprised if the stock can continue to run to as high as levels of 1800, 1850 to begin with, and in a good case, even 2000.
Got it. Okay. All right, Madesh, thanks a lot for that. Just one more stock I want to talk about is Vedanta Aluminium. You should keep an eye out on the stock, not, at the start, but maybe towards the end of trade. It will be excluded from the Nifty Next 50. And, as per estimates, the outflows could be to the tune of around $140 million. So for the time being, it's a bit of an uptake, but towards the end of trade, there will be a big volume spike last 30 minutes because it will get excluded from the Nifty Next 50. $145 million of US dollars of outflow is what we're expecting. So keep an eye out on that. But let's focus then on the consumer durable sector. Amber Enterprises, well, that one signed a manufacturing pact with Oppo India. The company aims to diversify revenue. They had a con call on Friday. Let's go across to Upasana to tell us about the takeaways. And Upasana, tell us about Voltas as well. They have crossed 1 million units of AC sales. Please go ahead.
Well, certainly. First up, let me start with Amber. The stock remains in focus on back of that important investor meet takeaways. And the key focus this time around was on the Oppo collaboration and even the strategic rationales shared by the management. The collaboration is expected to diversify Amber's revenue profile is what the management has indicated and even reduce the seasonal concentration in its RAC business. Given the asset-light nature of the arrangement, the capex requirement is below 50 crore is what the company has indicated. In terms of volumes and the timeline, the company has indicated that the trial production is expected to commence Q4 FY27 onwards, and with the commercial production will be starting nearly from Q1 FY28 onwards is what the management has indicated. In terms of volumes, they have guided for 80 million units in year one, and this can scale up to nearly about 13 to 15 million units by year two of operations is what the management has highlighted. Moving on to Voltas now, the company has crossed 1 million AC sales units in FY26 to 27. It reaches a milestone which is crossed just within the first 3 months of the financial year. Mind you, this is the fastest ever run to 1 million units by the company. Now, company has attributed several factors to this run-up. It says that the momentum of the consumer demand continues to remain strong. Company's focus on innovation and strategic initiatives has also led to this kind of scale-up. And going forward, it believes that the demand continues to remain encouraging and company looks to build on this momentum in the months coming by. So both these stocks on our radar today on the back of this.
All right, both those stocks on our radar. Voltas, 1 million units is what they've sold, and Amber on account of that Oppo deal that they've had. To discuss this further, we do have with us Manoj Gori, who's the Associate Director Equities, Equirus, joining in. He tracks the space fairly closely. Let's start with Amber. Did well in the previous trading session. The Oppo deal is what the street was gung-ho on. Not sure whether you track it, but do you have a view on either Amber or Dixon?
First of all, thank you for having me on the show. See, on Amber, if you look at over last 3 to 4 years after COVID, company has taken consistent efforts to diversify their business into non-AC portfolio. They used to be heavily dependent on the seasonal product category, and slowly and gradually, if you look at right from PCBs to Sidwell and now Oppo, the company has consistently been looking to diversify its product portfolio and lower their dependence onto room ACs. I think this is one step that they have taken it, and probably they will try to build it further from here on. And accordingly, if you look at now today, Amber no longer remains a AC play, and in fact, it remains more attractive at a subsidiary level, especially if you look at the other product categories.
Right,
So
but
it seems to be an exciting opportunity, an exciting runway for Amber Enterprises.
does Amber's win mean Dixon's loss, or both of them are okay?
I think at this juncture, I won't say it's a Dixon's loss, but yes, Amber definitely seems to be moving in the right direction.
All right. Hi, Manoj. Good to see you in. Good morning. What about Voltas? It's getting hot in here, but it's good for Voltas. Clocked 1 million units. And sooner than, I think, the previous year as well. I think this was, quicker than the previous year. What are you penciling in with regard to Voltas? And it's going to be a little bit of a tricky situation, right? Because top line growth is going to be there, price increases, volume growth as well, both of them thumbs up. However, input costs actually would also have spiked up. So what are you building in terms of expectations, maybe for the first quarter? Will margins expand because of operating leverage, or will there be some kind of pullback because of this input cost rupee depreciation as well?
Yeah. So if you look at 1 million units, roughly into 45 to 50 days into this, roughly around 75 to 80 days into the quarter, I think it's an amazing milestone that Voltas has achieved. And that shows their leadership position also. Now, when you look at from a volume point of view, we believe like they would have grown significantly stronger on YOY basis, given that the base is also favorable. Secondly, on the margins, on YOY basis and on sequentially, we do see that margins will be improving, mainly because of the price hikes that the companies have taken, and the entire RM impact plus INR depreciation won't be visible into Q1. So Q1 numbers, especially on the top line and on the margins, on YOY basis will look significantly better. And just to highlight, like last year in Q1, margins were significantly under pressure. So on a lower number, yes, it could have a materially YOY improvement. I think the RM impact would be more visible into 2Q. But if you look at, given that the war fears are also like we also see that it's being behind us now. So somewhere in next 3 to 4 months, we might see normalization in supply chain, which should be offering some comfort on margins during second half of FY27. So probably there might be some margin pressure for the industry in consumer durables during 2Q. And probably from 3Q onwards, we should see some improvement on sequentially.
Okay. So Manoj, Q1 growth, the top line should be very strong. There will not be too much of a raw material impact. In Q2, we will see the margin compression on account of the raw material price inflation. So in Q1, when the numbers start trickling in July onwards, do you expect EPS upgrades? And do you think this momentum that we're seeing in sales in Q1 can extend into Q2 and in a way offset the margin pressure? And therefore, Q2 could also turn out to be a strong quarter?
That's the interesting point, in fact, if you look at, because see in Q1, obviously, when you look at the base, for the full year, the base will continue to remain favorable. Now, this kind of number, what we are seeing today, this is a normal growth that Voltas and the industry is seeing. The El Nino effect, which everyone is expecting, even there have been weather forecast on this, that impact will be more visible into 2Q. Now, if that plays out, probably we will see significantly faster growth on YOY basis during 2Q and remainder of FY27. So probably what we understand is somewhere when we were talking about 20-25% kind of volume growth assumption for FY27, a couple of months back, this used to be like it seemed to be more optimist rather than realistic. And now today, if you look at those numbers are clearly visible into what Voltas has reported in their update.
We'll leave the conversation here. Manoj, we had more questions. I even wanted to get your thoughts in on Xiaomi's plans to enter the white goods space, the consumer durable space in India, and how that will impact the competitive landscape. But that's for another time. Thank you for joining in. Voltas clearly will be one of the stocks to watch today. Mitesh is now joining in for some 9-10 calls. Mitesh?
Yeah, I'll go to the buy on APL.
APL, Apollo Tubes. Any levels?
I think, I did mention that in the call. I think I'm looking at a short-term, this is a short-term price target. Would recommend a buy, with a stop just below levels of 1844 and a first target of 1920.
Thank you very much for that. Sonal is now joining in to quickly put the spotlight on oil marketing companies. Crude prices are trending below $80 per barrel. Sonal?
Thank you for that. Well, a couple of brokerages which are positive on the oil marketing companies. Kotak, for instance, says the profitability has sharply improved post the March-May squeeze. Fuel price hikes raised break-even to around $102 to $105 per barrel. But now crude correction of around more than 30% restores strong margins. And they think some excise duty rollback is likely. But full reversal of 17.5 rupees per litre benefit appears unlikely. Now, the sustainable break-even level for these companies is anywhere between $85 to $90 per barrel. Pre-war, it was anywhere between $75 to $80 per barrel. Now they do not expect any FY27 losses versus what was expected earlier. And FY28, FY29 earnings are expected to be really strong at current crude oil prices. There's strong cash flows that can fund strong capex and also can create earnings buffer. That's why they've upgraded the stocks to upgrade BPCL, target price 320. For HPCL, it's 400. And for IOC, it's target price at 150, and all of them have been raised to reduce from sell earlier. JP Morgan is also very positive. They say now the petrol and diesel margins are above pre-war levels. LPG losses, yes, they continue to remain high, but they have come off from the highs. And Q1 is likely to be hit by inventory losses, but Q2 will see improvement from here on. Profit recovery is largely aided by excise duty cuts, and government may allow debt reduction before restoring excise duties. So FY28 margin, however, it looks very uncertain because volatility could continue. They prefer BPCL and IOC, and OMCs continue to remain a tactical play on how crude prices move. So that is something that they are slightly worried about.
Okay, thank you very much for that. Awaiting the market opening, it could be a positive start because US and Iran have approved of a roadmap aimed at reaching a final deal within the next 60 days. The opening bell has rung and the first tick on the Nifty is around the 24,100 mark. It's a positive start, a gain of 85 points. The Sensex surging nearly 300 points. In percentage terms, it's a start with a gain of about 0.3%. The mid-cap index is moving nicely. That's got a gain of about 0.5% with a positive advanced decline ratio. The heat map will also come up for you on your screen. We'll watch for the IT stocks after the bashing that they got on Friday post Accenture reducing the guidance. IT is seeing some rebound today, so you've got green on the screen. So the second and third top gainers on the Nifty are IT names like Infosys and Tech Mahindra. The advanced decline ratio is skewed in favor of the advancing side. On the way down, ONGC clearly is under pressure, and that's on account of the decline in crude prices. But what the market right now is reacting to is some progress being made by US and Iran in the talks in Switzerland. They've also announced the establishment of a high-level committee that will, provide some sort of an oversight on the mediation as well, and the fact that crude prices are below $80 per barrel.
Well, that's right, Rima. From the broader markets, though, there are plenty of stocks that are doing a thing of their own. Kirloskar Oil, that stock has burst up in today's trading session. I have a note coming in actually from JM Financial, and they have upgraded the stock to buy from add, and the target price had increased to around 2,430 rupees odd. The reason they say is that they believe that the valuation gap with Cummins should actually narrow. So that's why that stock is up, and volumes are rather high. Another one that's moving pretty well this morning is, I think, Igarashi Motor. That stock as well is up close to around 9%. On the flip side, a couple of stocks actually that are reacting negatively. Aavas Finances, pull up that stock. There was a resignation coming in there from the CFO and the CRO, I think so. And there is a Money Control article that suggests some queries being raised on the company. So that's why that stock, in fact, is lower. Vikram Solar, the quantum actually of, the proceedings that they're fighting out in the NCLT from one of their, vendors, it's small, but actually the stock has opened up 2.5%. Remember, in Friday's trading session, I think it corrected 5% from the top. We'll have to wait to see proceedings from here on, whether or not there is relief or the quantum is small. But that stock has opened up on the back foot as well. What else? New India Assurance stock continues to rocket up. For this month, it's up close to around 35%. So big move up there. Vedanta Iron and Steel, that one's moving from circuit to circuit, so that's up close to around 5%. Vedanta Oil and Gas, well, that one's up close to around 5% as well. The street is dipping into these stocks. And Vedanta, that's up close to around 2.5%. The stock to track from the Vedanta group in the final hour of trade is going to be Vedanta Aluminium, because they will be selling to the tune of close to around $140 million approximately. Vedanta Aluminium, that's the other stock that we're talking about, yes, because it will be excluded from the Nifty Next 50. Manglam, what else?
Well, the space to be in this morning has to be consumer durables. Look at Voltas, 1 million units sold. That stock is up 4.5%. Taking it along higher is EPAC Durables as well. EPAC Durables is another stock which is up 8.5%. So Voltas has moved fast. EPAC Durables only moved faster. We have PowerMech as well. There is an order win that is coming for that company, and that stock is higher at open as well by about 4.5-5%. But again, back to the consumer durable space. So Upasana did tell us about the management sounding fairly confident in Amber and their prospects with Oppo. That stock is up around 2.5%. And if Voltas is selling as many ACs, I'm sure Blue Star is not far behind, which is what the street is betting on, which is why that stock is higher by about 2% as well. And we are seeing some traction on a few of these makers of these products as well. So PG Electroplast is the other one which is opened higher. The only one which is not doing well from this space right now is LG Electronics. After a big outperformance that we've seen on this stock over the last couple of weeks, maybe some bit of profit booking is in order for that counter. So that stock opens about 1% lower, and now that dip has been bought into as well. So it's flattened out a little bit. Som Distilleries, their request for the excise duty agreement coming in hasn't come by, so as a result of which that stock's opened lower by about 4%. But remember, had seen a big cut on Friday already, so down about 15% for this month for that stock. RVNL as well, higher on account of order win. And in the broader markets, the only stocks which are seeing some bit of profit booking right now are the ones that saw a big rally. So Berger Paints was one, down about 1.5%. Cummins is the other one, down about 2% after rallying 30% this year. And we have Varun Beverages as well. A big surge is what we've seen on the stock in recent times. That stock seeing some bit of profit booking. But good time to then, welcome our market master of the day. We do have Mihir Vora with us in the studio. Mihir, we're underperforming right now if you compare it to the globe. But if you look at some of the broader market themes, they're actually beginning to show some signs of life. And it's bringing some, at least the domestic investors, some optimism that maybe the worst is behind. Would you agree with that? And is this the time to buy?
Absolutely. Good morning. Thanks for having me. I think we are just seeing a continuation of the good results that we saw for the March quarters. The same thing happened in the March quarter results, while the headline numbers were okay, but the broad market results, especially in the mid caps and small caps, were really good, which meant that even in the March quarter, the demand was quite strong. And that seems to be carrying forward into the broader market even now as we speak. So surprisingly, in spite of the war, the domestic demand story seems to be panning out, and plus the segments where the government still has its focus on, and the globally linked sectors. By the way, we do have some bullishness because of the global situation in the data centers, in the AI plays, etc. So I think the markets are trying to find pockets of growth and rewarding those.
Sorry, Mihir, to talk about a stock, but I believe you own Kirloskar Oil Engines. Is that a part of your portfolio? I can see it as of May. It's a part of the small cap fund.
It is, yes.
Okay, because that's a stock which is actually doing phenomenally well today. It's up close to about 15%. So broadly, not asking for an investment recommendation, but what was the thesis behind this particular investment or the sector, this particular theme?
Sure. So, I mean, not to kind of, talk about the stock, but in general, if you see, we are quite positive on the capital goods and the infrastructure, industrial goods, so to say, space. And that's because of 2 or 3 sub-themes. One, of course, is the government's focus on Atmanirbharta, which includes, defense, which includes some of the other capital goods, some of the other infra plays. Then you have the data center and AI plays, where you require a lot of power backup generators,
And Kirloskar falls in the AI data center as a backup diesel generator.
And then of course you have the other plays in like the people producing the physical infrastructure, the transmission and distribution segments. So broadly, there is a lot of themes, both global and local, that we can play in the industrials space, and that's what we are playing for.
Hi, Mihir. Good to have you in the studio. Mihir, we've got a couple of IPOs that are lined up, and rather large ones. And the street has
our version of SpaceX.
Oh, the street would love that. I'll tell you what. But some part of the street says there's going to be a big supply that's coming in. 25,000 crores, another one, 30,000 crores. Between them, it'll be close to around 55 to 60,000 crores. I'm talking about NSE and the Geo IPO. Some would say that now there's further supply that's coming in there. What is your view? Maybe the FIs don't like what they see right now, and they may be preferring something that's fresh on offer. So maybe they'll be more interested in those two. How would you see this play out?
No, we always keep debating this supply, demand. The point is supply will come only when there's demand, right? Whether it's from local or foreign. In fact, at the worst of the COVID crisis, you saw some big FI names and multinational names come into the country, not in the listed stocks, but in some of the stake sales, etc. that happened. So wherever there is value, FIs and domestic institutions are there, and domestic retail is also there. So I really ignore supply-demand equation when I really take a view on the market, because supply only comes when there is demand. And you can always pace it up. The last 6 months, there's nothing.
Yeah.
Now that the markets have recovered a bit, we are hopefully towards the end of the Iran war. Things are bubbling up again. So that's part of the market.
But what would your view be? See, on listed companies, we let you go. Now, these unlisted ones, you can give us a view. Tell us, what's your view on the Geo IPO? What's your view on NSE? There's going to be a lot of interest. So I ask you, at this point of time, there is a peer that is already listed as well, for both these two.
That's a good thing, actually, because we have reference points.
Yeah.
So as long as the IPOs are priced reasonably, we are interested, frankly speaking, and it's all about the valuation equation. So we don't really treat IPOs separately as far as approaching the stock evaluation is concerned. We would want the IPO stocks to be at least 10 to 20% cheaper than their fair value, because you need that listing upside. You have to leave something on the table. So as long as the companies are willing to do that, we are there.
The worry is that the ones where no one is subscribing, the valuations are very high, and ones where the valuations are fairly good, you're not getting enough supply from the IPO, because obviously, there are so many takers for that. There's massive oversubscription and all of that. But do you think whoever wants as much will get in these because the size is so big?
Again, if the valuations are so attractive, then you might see a lot of institutional buying, cornering the supply. That can also happen. So I think it's all a function of the pricing ultimately.
You joined us and you said that the renewables theme is something that you like as well. Do you continue to back it?
100%, absolutely. Because not only in India, but globally, renewables, especially solar, is one source which can be ramped up fast. It takes many years to set up a nuclear plant. It takes many years to set up a hydro plant. Even for the coal-based, thermal, gas-based plants, the ordering cycle, etc., is very long. The thing about renewables, especially solar, is that the ramp-up can be very fast. And, you have enough supply of panels, etc., in the global ecosystem.
So what part of the value chain offers most attractive opportunities right now?
So the way we are playing it is essentially through T&D. That is one, because renewables require disproportionate amount of T&D compared to conventional, because they are fluctuating. So you need the grid to be much more strengthened, so to say. So T&D is one area. The second area is some of the providers of solar. So we have a name which is basically providing, commercial the renewable supply to commercial entities, not to the state government bidding, etc. Yeah. So we feel that wherever there's pricing power and you are not competing on an annual basis, that's where you should be on the IPP side.
With the usual disclosures, what would the name be? Just for one to understand, what is it that the company does?
I mean, there are only 2 or 3 names, right, in the private sector, and only one listed one does, commercial, so to say. And they're basically, tying up with most of the multinationals, etc., who want to set up data centers in India. So that's that's one of the names which is again indirectly linked to data centers.
Okay, all right. Mir, the debatable one. Tech. What do you do out there? There's not going to be growth, but we know that. There's going to be a couple of shocks that come about from the globe. You're pretty much expecting that as well. After this sort of an underperformance, do you think these are well-run companies and you want to allocate money because now they're evolving, they're buying some strategic stakes in AI companies like what we saw with HCL Tech? Or do you say you're not interested at all? Why to go for this when there are plenty of other sectors? How are you all positioned on tech?
So we are growth investors.
So then you're not interested?
No. I tell you why. There's a framework that we use: leadership, intangibles, and megatrends. Right. So intangibles, software, IPR, intellectual property, etc., patents, etc. That's one. So our IT companies are not there. Megatrends is something we'll ignore that for the time being. But the thing is leadership. For us, the biggest thing is hunger for growth. Are these IT companies hungry for growth? I don't see that happening.
Okay. So then you wouldn't want to be part of it?
Absolutely. Business as usual, there's not going to be enough growth.
Sorry, just to get back to that point about the renewables and private CleanMax, is that the company?
Yes.
Okay, got that.
Quiz.
All right. So, when we've spoken in the past, you had a clear bias towards small caps and flexi cap. Now, you run both the funds, but you said that the market conditions are right for investments more in small cap versus flexi cap. Does that still hold right now?
Absolutely. I think we're just seeing the beginning of the revival of the corporate cycle, etc. in India. And small caps and mid caps are where you can do the maximum amount of stock picking. Ultimately, it's all about alpha generation, right?
Okay. So the bias still remains for small
absolutely.
caps.
And in fact, if you notice, our small cap fund and mid cap fund have done phenomenally well.
Okay. Any themes that you've stopped liking that you liked, say, at the start of the year, but now it's run its course?
The theme that I'm probably waited a bit too long, and we're still waiting, is financials. Right? We've been waiting for financials to start performing. There are some signs after the RBI's measures, etc., that hopefully they'll start, working, especially after the FCNR inflows come in, liquidity improves, cost of funding improves. Then we are hoping that NBFCs and banks start performing. So that's one sector we were overweight on. Now we are neutral, and putting the trigger, finger on the trigger to go overweight, but not yet.
And within financials, what will it be? Private or the PSUs? Because some of these large, well-run banks, they have underperformed actually the PSU banks.
Yes.
And the valuation argument as well has narrowed between the two.
Yes.
So at this point of time, what would you be more bullish on between the two? Or would you be looking at the NBFCs? Because the cost of borrowing as well could remain subdued for longer than expected.
So NBFC is definitely a better play as of now.
Okay.
But the thing about PSU banks is that the weight in the index is still very low. So while we like PSU and private sector banks equally well, in terms of absolute weight, you still might see the private sector to be on the heavier side because of the sheer index weight.
And on the private sector banks, you like the big boy who has underperformed for very long, even after the corporate action. It's been dragging itself. HDFC Bank would,
Again, we are growth biased, so we typically prefer the higher growth segments.
So since you're growth biased, I have to ask you about the new age companies. The one thing that they are not lacking is growth. One thing they're lacking is profitability, but it's falling into place. There is an IPO likely in the quick commerce place as well. You have Zepto. So what are your thoughts on the new age companies? Because growth is coming, but not necessarily at an attractive price and not cash flow accretive either.
Right. So think about new age companies is there are so many segments, right?
Yeah.
So the stock that you mentioned has existing competition.
Exactly.
So I'd say that that segment has matured quite a lot, and incrementally, hopefully, cash burn should decrease. That's what it's looking like. But are we as bullish as we were, say, 2 years ago? Probably not, because the competitive intensity is a little bit more than what it was 2 years ago. So I'd say we are neutral to a mildly positive on the segment. But there are so many other companies where we are really positive. So as a segment, new age, we are actually quite positive and overweight.
There are new age financials.
So you have the travel linked companies. You have auction companies, online companies. Then you have the insurance selling companies. So those kind of themes we like.
And you have the ones with their spectacles as well.
yeah, absolutely. and online teaching.
Physics wala, Lenskart.
Exactly. So many segments there. We are quite over it on that segment.
I'm just curious. You said auction company. Auction company in new age?
I'd say what you can call it. Online listings. For second-hand stuff and all.
Got it.
Wow. Chatting with me here is like solving a riddle, Every question is a riddle for us to solve.
Regulation, compliance.
All right, take that point. Thank you so much. Always a pleasure speaking with you, Mihir. And, we always learn a lot more about the companies that we should be reading about. And the quiz that, next time I think what we'll do is we'll put all your points and put it out as a quiz for viewers to write to us, and then Kaun Banega Crorepati with me is what we'll do. Thank you so much. Always a pleasure.
Always a pleasure. Thanks.
All right, maybe you want to stay on for listening to this conversation right now. Let's focus on LG Electronics. That stock's been doing fairly well over the last few trading sessions. Brokerages are positive on the stock as well. CLSA, for one, believes that it will be a key beneficiary of India's durable consumption upcycle. We've heard from Voltas, they've crossed that million unit mark in sales as well. To discuss this and more, we do have with us Sanjay Chitkara, who's the Director, Co-Chief Sales and Sales Marketing Officer. Along with him, Atul Khanna as well, Chief Accounting Officer. Thanks a lot, gentlemen, for joining in. We've had multiple conversations during the IPO, post results. There's a bit of a lull as well in demand, but now things look like they're looking good on the top line. So, if you could give us a sense on two things. One, this extended summer, and as a result of which your sales growth that you've seen in the AC segment. And the second part, as we move along, the cost of raw materials have increased. So even though we'll see volume growth and perhaps revenue growth because of price increases, would that translate into profitability?
So I would like to start here. You rightly mentioned this year summer season is helping very well. Last year we saw a cool summer. And see, India has a very tropical temperature, long summers, and rising pollution. So AC has become a necessary household these days. And the penetration of air conditioner is just 11%. We are doing fairly well in air conditioners. In first quarter of calendar year, we crossed 1 million air conditioner sales. If we see the economy, geopolitical tensions have resolved. Raw material prices, crude oil prices, dollars are moving towards, there is a downward trend. Consumer confidence is back, the best part is, and sentiments are positive. These all things are helping us to grow our business. Regarding talking about profits, see, to meet the profits, we have done two round of price increases. The first price increase was mainly of the structural type, where to meet the star rating compliance requirement, we increased the price. And second price increase was due to this external volatilities. And based on our competitiveness, brand strength, and value for the customers, we are taking that decision. During this period, we focused on premium sales, optimized our cost, worked on our operational
Atul,
efficiency.
we know already that you crossed 1 million unit of sales in the previous quarter. What we want to understand is this summer. How many units have you sold? How many units do you intend to sell in the quarter that we're currently in? Because that, for your AC business, is the largest. And if you could quantify the price increase that you've seen versus same time last year as well.
Just what Sanjay ji explained about our business for air conditioners, it is going very well as the summer demand is picking well, and the consumer has accepted the new B-rated regulated price hikes also. And they understand particularly the compliance of B rating and more energy efficient product being available to them. Whereas effective April also, we have taken a price hike in a room air conditioner as well as other product segments. It was being done structurally to absorb I will say, the impact of, so you can say pass on the impact of FX demand as well as some commodity price hikes. So, and the business is going very well. We cannot call it as a number, but we have shown a very positive trend during this quarter end numbers.
Okay, all right. Hi, Atul as well as Sanjay. Thanks a lot for speaking to us here on CNBC TV 18. Always a pleasure to host you all. Well, a quick question with regard to the point you're making on price increases. How much of the cost increase has been passed on? Most of it, 85% or 100% of it? Could you give us so we get some clarity with regard to margins?
See, we always think about our consumer, and our all pricing increase decision are based on our brand value, our price competitiveness, and affordability of our product, and the profit consideration as well. We took around 10 to 12% price increase for air conditioners.
Okay.
Roughly, if you see this year, B guideline was to improve 11% of efficiency. So to meet that guidelines, there was increase of raw material, which we inputted in that, and there was some external volatility also. Our products are still very competitive, doing very well in the market. We still hold #1 market share in air conditioner, value market shares. So things are very positive. Regarding our numbers, we are mainly a calendar year first quarter company, where we do almost 60% of our sell-in. And balance part, we do 40% of the entire rest of the 3 quarters. So things are moving as per our plan. And once we'll close this quarter, we will definitely give you our numbers, what we achieved. But our current growth and profit is moving is aligned with our governance, which we...
No, so since you spoke that the first quarter you do about 60% of the sales, the remainder 9 months you do about 40%. I'm just back calculating. First quarter you've given us that number of 1 million. If you do about 40% more already, 1.7, 1.8 million is what you should end this year with, or because of the extended summer you can also touch the 2 million mark, Sanjay?
So we will definitely touch 2 million mark. The reason is, if you remember last year, there was a cool summer. So we started this year, January, with a high channel inventory. So the sell-in shifted towards the first quarter of financial year, from quarter 4 to quarter 1. So that our traditional 60-40 ratio has a little bit shifted towards the other part of the year. And definitely, we, being a sales leader, we would definitely like to touch or cross 2 million mark.
Okay. So you will be around...
Said here, adding to what Sanjay ji said here, that we are not a air conditioner company. We are having a very well diversified product portfolio. As Sanjay ji explained, that 60% of the AC sales we have done in numbers in quarter 1 of calendar year, whereas the other segment of refrigerator, TV and washing machine, we have a good pie of business where AC contributes almost 20 to 23% in our business contribution. So this quarter, running quarter, we are also expanding TV segment as well as washing machine very well, which is also followed by our refrigerator business as well.
Just some more questions on the AC and then we'll get to the other segments as well. So, Sanjay, would you be significantly above 2 million or hovering around 2 million for the full year? And could you give an indication of how much would come in, say, Q1, Q2? And what about the inventory levels? For LG, where does it stand at as we speak?
See, Atul has rightly mentioned, we are not only a AC company.
So we'll come to that on the other businesses.
So, the specific numbers I will not able to, or I should not talk about at this time. When the time comes, we'll give you appropriate time, we'll give you the specific numbers. Regarding inventories, the partners have reduced their inventories because the H2, the calendar year H2 is full of festivals. So they are very well prepared and aligned to take benefit of second half festivals. The inventories are very much rationalized now. Actually, this year, last year, September, if you remember, GST cut was announced, which is helping really very well to our industry, because despite of price increases, the impact on consumers was very little, because 10% GST cut was there.
Okay. All right. Gentlemen, since you all have mentioned numerous times during the conversation as well, you all are a diversified company. So, cross product lines, could you help us out with your market share? And in which segment have you all gained market share? Have you all slipped a little bit in any segment? And where is that market share headed? Because, we have in the RAC business, you have Voltas that is saying they have done very, very well in quarter 1. And it could be an industry-based phenomena as well because it's so hot and demand has moved up. So give us some color with regard to market share. Please go ahead.
So, till now, the global market share research company has declared till April market share. And currently we hold highest market share across all categories, including air conditioners in value terms. We are a market leader for TV, washing machine, microwave oven, and air conditioner as well. Our market share in side by side have crossed 40% now, and our market share in OLED TV have crossed 60% now, 60% plus. The 55-inch of TV segment is doing extremely well. In quarter 4, it contributed 47% of our business. It's now touching almost 50% of our business. So our premium market shares are continuously improving, and this is our core focus area.
Okay. All right. I'm going to ask a very simple question, sir. I think we should put the guidance plate for our viewers up on the screen with regard to what you had given us for this year. That's FY27. And you all had mentioned that you all are looking at mid-teen sales growth with early double-digit margin. The start of the year has been very, very good going by what you're saying. So either of you gentlemen, is there a possibility that you can outbeat this guidance? Would you like to revise it a little bit more from your, for the remainder of this year? You can break it to us first here on CNBC TV 18. Please go ahead.
So every organization, I'll say that the dream and vision is to beat their performance of past years as well as the guidance which they have given. But
and you look like you're going to be doing that this year?
We are following this guidance note, mid-teen sales growth in FY27 and early double-digit EBITDA margin is a more rational guidance from us as of now.
Okay. Such a good start, sir. Don't you think you can outbeat that? Quarter one has been phenomenal. So do you think that there's a possibility that you could outbeat that guidance?
If the demand goes well with respect to the current which is going as now, definitely we would outbid this performance of guidance which we are given. But we need to consider it is too early. It's 2 months only have passed so far, 2.5 months. So there are other factors also going in maybe upcoming time. But yes, if this type of demand grows up, definitely we'll gain the market share as well as we'll beat our estimates as well.
Wonderful. Just a final word, Sanjay. When we spoke during the IPO, we had posed a question: 30,000 crores in revenue, 3,000 crores by profit by FY27. Obviously, because of external factors in the overall industry, it looks like it won't happen in FY27. But do you think this happens in FY28?
Definitely. See, I am a sales leader. Definitely will try to surpass this. And if you see, our quarter four was very well. We did 8.1% growth. We registered 11.7% EBITDA also. It shows our brand strength, our strong fundamental and consumer trust. If external factors also helped us this year, only 2 months have passed, Atul has rightly mentioned, we will definitely touch or try to cross this.
Mount 30,000. All right, take that point. Thank you so much.
One more point here. Adding one more point here is that FY28, because there are almost now 2 years, right, from now, right? When we talk about our horizon to expand our exports is also phenomenal. So we would be expanding our exports we are adding on more countries as well as we would be adding more revenues in exports, which will drive our margins better.
Beautiful. Give us that number. Where will exports be in FY28? Last year, what was it? And going ahead, I mean, FY28, what is the target?
So current contribution is almost 6% we are operating in. As FY26 was, I will say, kind of subdued year for industry as well as for us. So, but though we perform better than the industry during this period of FY26, so we are seeing that it would touch upon nearest to in FY27, touching upon nearest double-digit exports.
All right, double-digit exports in FY27, and by FY28, maybe low teens?
We cannot call it exact number because giving a number is very easy, but it has to work upon a lot of operational things. But we definitely, our endeavor is to surpass this double-digit.
Got that. Take that point. Thank you so much for joining in. And we go back to, once again, the question when we asked them about competition, what's your biggest competition? They said that our last year's numbers are our biggest competition. So we'll obviously, monitor growth in this year as well and move along too.
All right.
Very good. Thanks for tuning.
Okay, gentlemen, we'll leave the conversation here. Thank you very much for that. The Nifty for now is holding about 24,100. Reliance Industries is the big mover today, so that's got a gain of about 2.5% following the AGM and the Jio IPO. CLSA has pegged the target price at 1,800 and IT stocks are rebounding. So you've got a Tech Mahindra 1.5, Infosys, HCL Tech with a gain of 1%. And you go down the curve, you also have a TCS rising nearly 0.5%. But the top gainer today is Cipla. Get into a break. On the other side, the management of Fractal will join in to talk about the company's FY27 outlook. Stay tuned. Welcome back. You're watching Corporate Radar. Now let's talk about the IT space. Remember, IT plummeted on Friday after Accenture cut the guidance. What's the read-through? We have with us Srikanth Velamakani, co-founder, Group CEO at Fractal Analytics, joining in. Srikanth, great to have you this morning. You know, I'm going back to that town hall conversation that we had when you came down to our studio, and we'd asked you the prescription for Indian IT going ahead. And you said that companies need to take some short-term hits. They need to increase their R&D spend. It's okay if the margins reduce. They need to convince the street about it because that's what it takes for long-term sustenance. And, you know, I'm just tying in with what Vishal Sikka, the former Infosys CEO, recently said on Voices of the Valley to CNBC TV 18. He's actually arguing for IT and SaaS companies to consider going private because then they can take those bold, radical calls for innovation. I mean, you know, since the last 1-2 months since we spoke, things are again changing. They're changing rapidly. What is your view on the Indian IT from now on? And talk to us about how they need to reinvent themselves.
The first thing to realize is that the demand for software, for tech, is only increasing. Companies are becoming more and more tech-centric, tech-intensive. Therefore, overall, the world, people will spend more on tech than they have spent traditionally. So which means that the opportunity space is large. The only question is, how will the tech services industry capture it? And they can capture it if they can move from input-based models to output-based models, bring in more productized revenue, and increase the overall R&D investments into what they're building. I think they will be ready to capture that much expanded market in the next couple of years. I foresee that the best days of the tech industry are well ahead of us. It's just a short-term blip that companies have to find ways to encounter and grow from.
You know, tech spends undoubtedly are going up, but it's getting redirected towards the infrastructure side. The services spends seem to be compressing. How long do you think that will last? And do you think the only way for the Indian IT companies to survive is, to thrive, not survive, is to go beyond services? Or do you think the services spend itself will expand after this initial period of compression?
What you're saying is that overall, the world economy is growing by 2.5% a year, whereas the tech spends are growing by about 13% a year. So there's a major gap between the growth rate of the world versus the growth rate of tech. That's an expanded opportunity. A lot of that, like you rightly said, is going towards infrastructure, is going towards tokens, and so on. But what you will see eventually is that every company in the world will need to transform itself through technology, through AI. And therefore, even the services opportunity will expand dramatically in the coming years. The way it will work is that, let's say you need 100 units of work to finish a task. Earlier, it was 100 units of people time. Now it's probably only going to be 20 or 10 units of people time. But then the total amount of work dramatically expands through what is called a Jevons paradox. So therefore, the services spend will also expand, but it will not be if you are trying to be undifferentiated, you'll be struggling. You have to be very differentiated. You have to bring in AI, and you will certainly build products and so on as well as a way to overall expand your revenues and expand your margins over the next few years.
And that point that Vishal Sikka made, that companies must consider or think about going private, because that gives you the freedom to innovate without getting tied up in these quality, quarter after quarter numbers and reporting. I mean, it's a radical thought, but do you think it's far-fetched, or do you think that's what's needed right now?
This is not the first time that would have happened. And any company that needs to, let's say, structurally reinvent itself, it makes sense for them to go private. And fix whatever has to be fixed and come back into being public. That works. My sense is that at this point in time, there is peak fear. There's peak fear about technology services stocks. You can see with what happened in Accenture over the weekend and so on. The key thing is right now is that the market will understand if you're going to say, hey, I'm going to let my margins suffer a little bit. Let me increase my R&D intensity. Let me come back in a different avatar. They don't have to necessarily go private in order to do that. The market will understand if they're making structural adjustments in order to be much more competitive in the next couple of years.
So R&D spends. Now, broadly, Indian IT as an industry may be spending 1.5% of their overall revenues. You are at 6.5%, and you've spoken publicly about going to 10%. And many of the global companies are, 10, 20, even 30% in some cases. at least to begin with, what should be the number that, by how much should the R&D spends go up by?
So firstly, let's look at product companies. They spend roughly 14% of revenue on R&D. Services companies are currently spending about 1% or less than 1% of revenue on R&D. Fractal sits in the middle at about 7% of revenues on R&D. I would expect that most of the services companies should go at least to 3% of revenue as R&D. That would give them a really good opportunity to build things that the world needs. AI is really changing the way world works, and it is giving an opportunity to reimagine every business process with AI. So what it does is that if you build those products, you can certainly be a part of that transformation, drive your licensing revenue, and move from input to output-based models. Right now, a lot of the industry is in a commoditized selling people's kind of stage. That is the part that gets compressed very badly, and therefore companies have to move away from selling people into time kind of a model into more output-based, outcome-based, license-driven models.
Should they also, so that's of course one part of the pivot, moving from labor arbitrage, input-based to outcome-based. But should they also consider building products?
Yes, why not? I think the entry barriers to building products has come down. You can use AI to write code, and you can write 10,000 lines of code. You can write really deep products. The world is full of opportunities, and anyone who has a focus area can go really deep and build a very high quality product today. And if startups can do it, so can big companies. What big companies have to do is to increase that R&D intensity, and second, increase the density of talent. By that, I mean increase the quality of talent rather than just quantity of talent.
So just getting back to the point about Accenture, they lowered the upper end of the guidance. Now, I think NASSCOM's guidance for growth for this year is 6.1%, similar to last year. Is that the number we're working with? And is there a risk to that?
I don't have the exact number with me right now. My sense is that the numbers will be low single digit for this year, but will start to expand about 18 months from now. My guess is that some of the structural challenges, and also caused by macroeconomic headwinds and the wars in the Middle East and so on, these will all continue to play for some time. But between 12 to 18 months from now, you will see that the compression would have played itself out to some extent. Companies would have emerged with newer capabilities. And given the macroeconomic improvements, companies will start to see growth. Therefore, I think it is about the sort of having patience for about 12 to 18 months from here.
Okay. So FY29 is when perhaps things start getting better. But for this year, we should prepare ourselves for a low single-digit kind of a revenue growth. How was Q1 shaped up for you, Srikanth, for Fractal Analytics? I mean, when we last spoke, I think it was April, on the numbers, on the quarterly numbers, you'd said FY27 should be better than FY26.
Overall, our expectations from FY27 is that it should be better than FY26 for sure. And we are so obviously in now beginning to enter the quiet period, so I'm not going to talk about our Q1 numbers. But overall, we continue to stay bullish about how Fractal is shaping up and how we are building products, how we are building Cogentic as our flagship product, how we are seeing the progress of Vaidya and our medical foundation model, and overall bullish about where the company is going from here.
Okay. And just one final word on Fractal Alpha. That is that big optionality that investors in Fractal Analytics have. I think currently it's about 90 crore in revenue. Losses are coming down. It was 14 crore. What could those numbers look like? 3 years, 5 years? And are there any new big AI-related bets that you're making, whether it's related to sovereign AI or sovereign LLM frameworks?
So Fractal is betting on a number of AI products. For example, our Cogentic platform is expanding nicely. We launched a Cogentic e-commerce product, which helps companies accelerate their e-commerce revenue just last week. We are increasing our investments into Vaidya, which is our medical foundation model. You'll see some interesting stuff happening there in the next few months. We are also increasing our Asper investments. So Asper is our revenue growth management platform. It's part of our Alpha portfolio. It's expanding very rapidly. Overall, what you're seeing is that the product investments and product revenues are expanding quite well relative to the overall business.
Srikanth, great conversation. Thank you very much for joining in. Look forward to chatting with you when the numbers come out. So many estimates are that Fractal will continue to grow at 17, 18, 19% at a time when the industry itself is struggling to grow in mid to high single digits. So Fractal has been outperforming, just going by what market estimates are, that about an 18% revenue CAGR is what the street has for this year and the next 2 years.
Got that, Rima. Well, the markets are holding in the green with a gain of around 120 points, but plenty of stocks in the broader markets are doing well, and that's why the number of stocks advancing, if you compare it with the number of stocks declining, that's in the ratio of around 3:1. And a couple of stocks that are on the radar, JTL Industries, one of those big underperformers. There was an offshore-based fund that bought a stake in the company at around 72 rupees in Friday's trading session. So volumes were massive on Friday. Today as well, that stock has perked up. It's up close to 3%. Massive volumes from that one. And the other one is, Stovecraft. That stock is, well, a big underperformer. Volumes have come back. We had done an interview on Chartbusters a couple of weeks or so ago. And the stock is moving up because they said that demand is good on ground. Remember, this is a stock that was, I think, at around 1,100 rupees, corrected to around 500 rupees. And from there, it's seeing a bit of a recovery. Let's see how Q1 shapes up, as well as the remainder of the year. But the management was rather optimistic when they joined us here on CNBC TV 18. Time to get a quick technical view, though. Nagraj Sethi joins us on the show. Hi, Nagraj. Good morning. Good to see you in. Hope you had a good weekend and a good start to the week. 120 points up on the Nifty. What would the trade be? And fill us in with your fresh trades as well.
Hi, good morning, Nigel. Yes, Nifty has bounced back very well from near the support of around 23,900 levels recently. And overall chart pattern is looking positive. I'm expecting Nifty to sail through the immediate hurdle of around 24,200 levels in the quick period of time. The next target would be around 24,500 to 600 levels in the near term. Second, I have two stocks from alongside. First one is Waaree Energy. Chartically, it has been showing a consolidation. Recently made an attempt of upside breakout, placed above the 200-day EMA and 10 and 20-day EMA. Overall chart pattern looking positive. Currently showing some consolidation. It's a buying opportunity at the consolidation. Currently trading around 3,108. One can look to buy at this point of time. 3,300 is going to be the immediate target, and one can place a stop loss at 3,000. Second one is from a railway side, IRFC. IRFC, after a big move, has been in a consolidation phase last few sessions. However, it has placed above the crucial hurdle of downtrend line, the chartically looking positive. Currently trading around 100.30. One can buy at this current market. Immediate target would be around 106, and one can place a stop loss at 97.
All right, we take that point. Nagaraj, just before we let you go, you have a view on the auto space. It's making a bit of a comeback right now. Bajaj Auto, for one, has moved to the high point of trade. We're also seeing some traction in Eicher Motors, which has suddenly spiked up. The auto index as a whole has moved to the high point. Do you have a view here?
Yeah, I have a positive view in auto sector. Auto prime stocks as well as the auto components, mid-cap auto stocks are likely to outperform. If you look at Eicher, what you just discussed, showing consolidation movement in the last few sessions and making an attempt to break above the hurdle, the chart pattern is looking positive. I'm bullish on auto sector as well as auto components, mid-cap space as well.
Okay, thank you very much for that. Get into a break. On the other side, Manisha Gupta will join in to talk commodities. Stay tuned. Welcome back. As promised, let's talk commodities. Manisha is now joining in to talk about the slide seen in crude prices.
Well, absolutely. If you look at the previous week, the crude oil prices have declined by 8%, and this is following the 6% decline that we saw in the week prior. And if you look at from the kind of highs that we saw during the West Asia conflict, the crude oil prices did go to $120 a barrel as well. And from those kind of levels, we are trading below 80. So that's almost a 40% of a decline that we're looking at in the Brent crude prices in the matter of last 2 months or less. Well, it is about the volatile peace talks that the market seem to be reacting with. In the Asian markets, we did see prices at $81 a barrel. There are concerns or uncertainties about reopening of Strait of Hormuz. As of now, we have a positive statement both from US and from Iran as well. And there are reports on how some 35 ships have crossed in the last 2 or 3 days via the Strait of Hormuz. There is a joint press note from Iran and US, and while it says that there's a tireless Pakistan and Qatar mediation that has delivered major progress to end the war, it also says that from what we are looking at right now, the oil and petroleum exports have been waived off, the blockade has been lifted, and the major development plan has been launched when it comes to Iran's development. So some positive coming in, and that is ease the kind of premium that we've seen in case of crude oil prices. There is support, though, that might just about continue from the fact that the Ukraine drone attack forces Russia into a fuel rationing. And second is there has been an operational incident that we know of at Qatar gas plant. But apart from that, it's almost everything that seems to be putting the prices on the lower side, especially the rise in supplies. The OPEC plus supplies will now start coming into the markets. Beyond Iran, it is Kuwait, which is going to hike crude output by 2 million barrels per day versus 0.5 million right now. Not just that, you also have Iraq, which is looking to restore output from the Western oil fields to the tune of 3 million barrels per day. So you have all of that crude coming back into the market. And then it is about the low demand estimates as well, which seem to be putting pressure. 50% of new car sales in China are EVs or plug-in hybrids. And then you have China pivoting away from heavy infrastructure where you require oil and petroleum to high-tech manufacturing where you require chips and rare mineral metals. So that is what we are looking at in sense of shift coming in there. And then apart from that, it also is about aviation efficiency, sustainable aviation fuel mandates coming in from various countries. And it is about the global bans on single-use plastics, reusables. All of that will in some sense gradually even will decrease the demand coming in for crude there. There have been various reports and suggestions on whether or not we're looking at oil demand peaking. Well, there is quite a divergent view on that as well. IEA believes that could happen in 2030. Goldman Sachs puts it to 2034. And you have OPEC suggesting that 2050 is what it'll take by the time you're looking at world oil demand peaking. And that is because while the West, the developed countries are not looking at such a strong demand in sense of oil, it really is coming in from the Southeast. Countries like India, Africa, Middle East, Southeast Asia is where the demand for crude just about continues. And that is what will perhaps lead to stronger demand forecast going forward as well.
Thank you very much. Thank you very much for that. A quick check on markets before we get into the break because things are picking up now. We're now at 24,150 on the Nifty, 130 points higher. On the gainer side, you've of course got Reliance and the IT names, but a couple of these auto names are perking up. So Tata Motors passenger vehicle has a gain of about 2.5%. It's crossed the 50-day moving average. Along with that, Bajaj Auto is inching up 2%. Again, crossing the 50-day moving average. Eicher Motors has been trending nicely. Large cap banks like ICICI Bank, HDFC Bank, also seeing some buying. But the space that's alive is the mid-cap space. Individual stocks, not the index. NOSIL, 20% up. EPAC Durable, also a play on the AC space because it provides the manufacturing and it does the manufacturing for many of these, RAC, room air conditioning companies. EPAC is seeing buying along with that. Voltas, NIIT Limited, 12% up, so that's circuit up. Lakshmi Organic, Clean Science, Aegis Logistics, the two Vedanta stocks, Vedanta Oil and Gas, Vedanta Iron and Steel, both nearly higher by close to about 5%. Along with that, Vedanta Power too is seeing a lot of interest. EIL is another big mover on pretty large volumes. On that note, we'll get into break. It's our special Indianomics segment on the other side where Lata will connect with external members of the MPC on the minutes of the June 5th policy.
Welcome to Indianomics. The MPC minutes were made public on Friday, that is the Monetary Policy Committee minutes, and those minutes show that most members have preferred to pause on June 5th, given the very high uncertainty surrounding fuel and food inflation. During the June 3rd to June 5th meeting, when the meeting was happening, crude was $95. And even now, one isn't very sure of the opening of the Straits of Hormuz. Likewise, the exact impact of a deficient monsoon on food prices is unclear. RBI members also point out that the last available inflation number for April is below 4%. Also, members have argued that there is no demand pull inflation, no overheating of the economy, as Saugato Bhattacharya put it. A cost push inflation policy must wait to see whether it is getting transmitted into the second round of hikes. That's Indrail Bhattacharya's statement. So where does all this leave us from here on? Is an August rate hike even more unlikely since June 5th crude prices have actually fallen by about 20%? I'm joined by two of the external members of the MPC, Dr. Nagesh Kumar and Dr. Saugato Bhattacharya. Good morning, gentlemen. Okay, Mr. Nagesh Kumar will be joining us shortly. Saugato, good morning, and thank you very much for joining us. Well, first up, you have also argued that there is no overheating of the economy just yet. Now, what signs will you watch out for by the time we come to August or October to give you a feeling that policy needs to move? I think you're on mute.
Thank you very much for having me on your show. Always a privilege. So I have to point out what are the things that we are looking for post the policy. I think we are already beginning to see some feed-through of input cost inflation in the May CPI number, which happened, of course, stated in the but even now, despite inflation coming close to 4%, CPI inflation coming below 4%, and WPI inflation is 9%. Even now, I believe it is really not very evident that input costs actually are translated into retail inflation.
Ms. Saugato, just a minute. We seem to have a problem with the audio. It's not coming on very clearly. We'll try and redial and see whether we can set the audio right, and also wait for Mr. Nagesh Kumar to join in. Okay, well, I think we have Mr. Nagesh Kumar right now. Mr. Kumar, good morning, and thank you very much for joining us. The question that I was asking Saugato before you joined is, what exactly would you watch out for in terms of moving policy? Many of the members have argued that they will wait for second round transmission. You have not said anything. You have just said there is uncertainty. So what will you watch for in the August policy?
Well, I think what is very important for all of us to watch is the evolving growth and inflation dynamics. So if we see a major impact on inflation, or if we see a major impact on economic growth, then accordingly the action would be thought about. So. Okay.
Mr. Kumar, since the policy was announced on June 5th, that evening itself, we got growth numbers which were much stronger than expected. I mean, we had a 7.8% Q4. One full month was war impacted, and still the growth was very strong. Will not that give you the confidence to move ahead that, growth is very sound? It doesn't require help. Would that be an argument?
Well, it is certainly a very encouraging thing that we saw 7.7 point kind of growth in the outgoing year. But, the inflation side, the pass-through of the rising crude oil prices started happening only in May. And so one could not see the impact of that already in those numbers. So this will still be unfolding, and so one has to be waiting for the new data to come in, and especially after the partial pass-through, I would say, began to happen. And secondly, another good news, potentially, until it holds, this peace process, the deal was signed, but of course there are 2 months of negotiations, one has to watch out. But already in anticipation of this, and the blockade has been lifted, the oil prices have begun to come down, which is a good news for India.
Okay. No, I agree with that. Crude has come down by 20% since you all met on June 5th. But, the way in which the Reserve Bank has projected the inflation, the expectation is that very soon we will be at 5% and maybe closer to even 6% by the time we come to the third quarter. So would you wait to see a 5% before you move, Mr. Nagesh Kumar, or will you move in advance?
No, I think one has to see not only the numbers, but also inflationary expectations, how they are building up. And so, RBI conducts forward-looking surveys. So the one gets a hang of, or, some movement, which way it is going. And if the situation begins to go out of hand, there may be a case for, taking preemptive action. However, as I said earlier, the oil prices have begun to go down, which is the major factor in driving prices in India. So I do not, at this moment, I do not see a major cause of worry or alarm.
Okay. Well, even now, oil companies are making losses. The entire thing has not been transferred to the consumer. But let me get Saugato into the conversation. Saugato, let me start with the other point which only you make and which all of the market makes. But, we don't see it in the minutes. The global neutral rate appears to be rising. Clearly, Kevin Marsh's statement was not dovish, even if you don't argue it is hawkish. And the ECB has already raised rates. The global interest rate trajectory is going higher. Will we be caught behind the curve?
No, I'm not really sure whether we'll be caught behind the curve, but I mean, the space for cutting in response to any potential slowdown that happens, that space is narrow. So of course, you have to look at macroeconomic stability issues. You have to look at the external balance, given the fact that we are operating in an open economy, macroeconomic environment. So you have to consider global interest rates. But the primary focus, I think, should remain the domestic the growth inflation balance. And that's still a very evolving story. But I completely agree with you that rising global rates, rate cuts are almost out the window when global real neutral rates are rising. So that does constrain domestic monetary policy.
The same question that I asked Mr. Kumar, what will you watch out for in terms of, overheating or in terms of second round impact? Exactly, can you train our eyes to what you will watch out for?
It's very obvious, really. You need to look at what is called underlying inflation. So some say super core inflation. So if you take out the effects of precious metals, etc., oil, gas, food, so all of that. So the moment you begin to see, and actually you are beginning to see that in the main inflation numbers that I was beginning to talk about earlier, some read-through that is slowly coming in. So I think we will need to see another month worth of inflation data. So obviously it's both core goods and core services inflation, which will begin to signal whether inflation is getting embedded in the system. And of course, as Dr. Kumar says, the part of household and enterprise inflation expectations will also be a major factor in looking at how inflation is getting entrenched into the system.
As you point out,
in actuality and in terms of expectation.
Yeah, as you point out, and we are playing that statement of yours, already 1 year ahead inflation expectations have risen. Therefore, what would you wait for to vote for a hike?
So of course, there are, as you know, the Reserve Bank of India is working with a couple of committees to try to recalibrate the inflation expectation survey, both enterprise and household surveys. So that, while that is in progress, but it is a little worrying that household expectations of current inflation are higher than the actual print of inflation. So that is something that needs to be watched. But even more than inflation expectations rising from the already elevated levels, that's one trigger point in association with actual prints of inflation, core inflation, underlying inflation feeding into the system. And of course, together with this, as you rightly mentioned, that this is currently still largely a cost-push inflation. If demand parameters also begin to increase, so it's not just inflation, what you're seeing on the high-frequency indicators of growth, etc., that would also begin to signal that demand is rising, and that will probably, the pricing power of companies to be able to pass through certain input costs, those will also be rising. So it's both inflation numbers as well as the actual demand parameters that are working through the system.
Mr. Nagesh Kumar, when the MPC debates, how much accent do you all put on core and non-core inflation? Does core get a higher weightage in your conversations and in your thinking?
Definitely. I think, the point is, which, Saugata was making, we tend to look at whether the inflation is driven by supply side or the demand side. And if it is the supply side, then monetary policy obviously has a very limited role in adjusting or, managing that or addressing that. And the core is actually much more stable kind of, number or metric. And this is certainly which is, making or shaping our views about the inflationary expectations that are building up in the economy or not.
Okay. Well, Mr. Nagesh Kumar, we have to get into a break, but very quick monosyllabic answers from both of you before we take that break. When you meet in August, you will only have the June inflation number. Even the July inflation number will not be there. And chances are that will be a 4 decimal. It's not going to be 5. And you have a slightly lower crude price. So do you think it's premature to expect a rate hike in August?
Yes, I think it is premature, at this moment. And going forward, because the crude prices are, going down, not going up. And that would also help India to calibrate the, pass-through much more, correctly, or because right now we were waiting whether, this conflict will linger on.
Correct.
And it lingers on.
Yeah. So my question is more about August. So let me quickly ask Saugato. Saugato, in August, you will not still be at a 5 handle. We are more likely to be at a 4 handle. Will that move the Reserve Bank, the MPC? Because a 5 is on the, it's just the other month. Won't that move you all?
No, so I'm not speaking for the MPC. I'm talking about me.
Yes.
It's not premature. It depends on incoming data. Data needs to be monitored. The inflation balance that will have an impact.
Oh, that's most useful. I have a few more questions about real rate. The real rate, even if you get the average of 4.6 inflation, is a very, very limited real rate that the Indian savers are getting. Does that become a question for the MPC when they discuss that and other questions after the break? Bazaar viewers, you can listen to the entire conversation after market hours.
Reliance leads the market high. The stock is one of the top gainers on the Nifty as a whole host of brokerages issue bullish calls following the company's AGM on Friday, where it announced the Jio IPO and unveiled a growth roadmap for its retail, AI and new energy businesses.
Strong demand momentum sees Voltas hit 1 million AC sales in the first quarter of FY27 itself. The stock rallies but is off the highs. EPAC Durable, which is a contract manufacturer for Voltas, is up more than 10%.
Kirloskar Oil makes a foray into the data center business, wins an order to supply gensets to a 192 megawatt data center. Brokerages JM Financial and MOSL issue bullish notes. The stock up 20%.
The Finance Ministry grants Navratna status to Garden Reach Shipbuilders and Chennai Petro. Both stocks are up to around 3% in today's trading session.
And the government extends its anti-dumping duty on sulfonamide accelerators from the United States and China for 5 years. Nosil, India's largest manufacturer of these chemicals, up 18%.
Well, hello and welcome to Chartbusters. We are coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel, with me is Manglam, and it's a good start to the week. The bulls will be feeling good. The Nifty up, the Nifty Bank as well higher in today's trading session, and the breadth of the market holding firmly in favor of the number of stocks advancing. Manglam, it's looking green. Hopefully it stays that way.
Looking green, hopefully stays that way, continues to do well. The portfolio is looking a lot better, the broader markets. And as we speak, through the course of the day so far, newer stocks have been hitting the highs of the session. So, moments ago, we had some of the auto names do well. Look at pharmaceutical. That's coming back now. So Cipla has moved to the high point of trade. Gain up for over 4%. We've seen Sun Pharma as well. See a bit of a spike currently at the high point. So the auto sector has done well. Now it's time for some of these pharmaceutical names. So the pharmaceutical index itself comes up for you right now, currently at the high point. Good time to welcome Shivangi Sada for a quick technical check on the market. Shivangi, the last time you joined us, the Nifty was a good 300-400 points below where we were right now. You like the color of our ties, both Nigel and mine. And now you have a view on the index based on the color of our ties as well?
Absolutely. Very good morning, Manglam and Nigel. Thank you for having me. So I've taken in a bit of that color on my shirt today. We've seen that, of course, the indices are quite positive, and follow-up buying and support-based buying has been quite strong at these levels. Of course, we're cheering above 24,000 levels, but the next marks that we're seeing is 24,500 on an immediate basis, and then 24,650 zones. There is some bit of call writers which have unwinded and which should lead to the next leg of rally for the short covering move. Now, support wise, we're looking at 23,950 as an important base here. Buy on decline to continue with a lot of sectors and stock specific action here in the market. Now, we've seen that overall Bank Nifty, of course, has been a major contributor in this entire rally, and this has kind of outperformed as well. We're having a buy on decline take on this index as well, although it is kind of consolidating from the last two sessions, but overall we are expecting the next levels of around about 58,500 in Bank Nifty with a support of 57,350 zones. So buy and decline and a lot of sector action to be capitalized here.
Okay, got it. Hi, Shivangi. Always good to see you in. Irrespective of the color of our ties. But tell us the individual stocks that you're looking at for today's trade.
Yes, Nigel. So stock-wise, the first stock on my radar is Bharti Airtel, which has kind of moved consistently in the entire June series, and we've seen that this is one stock which is quite resilient, which has been resilient in the entire market. On a weekly basis, it's comfortably making a base over here, and after the consolidation of the last almost 9 to 10 weeks, it is getting ready for a consolidation breakout here. So this one's looking quite positive, and we're looking at 2,000 as the next targets for Bharti Airtel with a support of 1880 zones. And the second one that I'm looking out is Titan, which is actually one of my favorite. And we've seen that, on the weekly basis as well, this stock is kind of moved after taking a support at an exact retracement level. So this one's quite positive with good amount of OI addition from the last 5 sessions. and we're looking at Titan for the next target of 4,600 levels with a support of 4,300 zones.
All right, when you said Titan is your favorite, is it the stock or are the products and the watches or Tanishq jewelry?
I'm biased towards both.
All right, take that point from Nigel Me. Thank you so much, Shivangi, for joining in. With that, we'll move on. And in this market, get you some more ideas of profit coming in from our colleagues at Money Control Pro. Today, we have Kanchi Shah joining in with the stock.
Today's stock idea is Bharat Forge, which is increasingly becoming much more than just an auto component company, and that's what makes this story interesting. So the core automotive business continues to do well and should benefit as demand in export markets, especially in North America, improves. But the bigger story is the company's growing presence in areas like defense and aerospace, which are emerging as important growth drivers. So Bharat Forge has a defense order right now of nearly 11,000 crores, and recently it has secured a major carbine order from the Indian Army also. What's noteworthy is that about 40% of its defense revenue comes from exports, highlighting the company's increasing global presence in the segment. Also, aerospace is another area where the company is seeing strong momentum. Management is targeting a revenue of more than 1,000 crores from this business over the next 3 years compared to around 400 crores currently. The company is also looking to tap opportunities in the emerging market like semiconductor ecosystem. So while it has no plans to manufacture the chips, it just wants to become a part of the supply chain for equipments which are used by the leading semiconductor companies. Overall, Bharat Forge appears to be benefiting from multiple themes at the same time. Valuation-wise, it appears to be rich at 47 times FY28 earnings, so I would recommend to accumulate this stock in a staggered manner with a long-term view.
Thanks a lot, Kanchi, for joining and giving us that neat explanation on Bharat Forge. For the time being, though, we slip into a short break. On the other side, we'll continue to focus on markets. We'll also focus on some stock-specific action. Welcome back. Keep an eye out on the screen. A few of these stocks actually are bucking the trend. NHPC, I think we should get up for you on the screen. That spiked to the high point of the day. So good up move is what we're seeing. Urban Company, that's another stock actually that's spiked up. It's up close to around 5%. Volumes are very, very large on this one as well. And Equus, that's another stock that's up, I think, only around 3.5%. But it's seen a little bit of a perk up in the last few minutes. Volumes, again, rather high on this name as well. But let's focus on, on Reliance and the consumer part of their business. Remember, they've laid out a very, very ambitious plan for the next few years. Mangalam joins us to put all of that into perspective. Mangalam?
Well, dare to dream and care to execute. That's exactly what Reliance has been doing in their consumer businesses over the last few years, be it Reliance Retail or now increasingly the Reliance FMCG business itself. So Reliance Consumer Products, which was demerged last year, the gross revenue of this business in FY26, as per the annual general meeting, was 22,000 crores, and that's doubled since last year. So 11,450 crores in FY25 has turned into nearly 22,000 crores. And that's the fastest growing company that we've seen in the consumer space for the longest time. And in fact, in such a short span of time, for any company to reach over 20,000 crores in revenue is a matter of history itself. And what is it that's done well for them? Campa, which is nearly 5,000 crores of revenue, and some of the key markets they've got into double-digit market share as well. Independence, which is their FMCG brand, which has done extremely well as well, closing in on 26 600 crores. And add to that, they are pushing on manufacturing to drive the next leg of growth. And it's not just sales, it's the absolute reach. The products have reached nearly 3 million plus outlets and 5,000 plus distributors. So all these factors aiding Reliance FMCG business. But the question is, how does it stack up against some of the other players? Well, I was looking at Reliance's numbers. 22,000 crore in FY26 revenue within 3 years of its existence actually pits it closer to Nestle, which is here for over 60 years and now 23,000 crores in revenue. Look at something like a Tata Consumer, Britannia, both of them at around 20,000 crores itself. So Reliance FMCG is actually as much as Nestle and bigger than Tata Consumer and Nestle. If you look at some of the other players as well, there's Marico, there's Dabur, all of them doing 14,000 crores in revenue. Godrej Consumer itself, over a 100-year-old company, doing 15,000 crores of revenue, and Reliance in just 3 years has disrupted all of that. But they're not done yet. We have a very near-term vision and the long-term vision from the company as well. The near-term, they aim to reach 1 lakh crore in revenue by FY30, and long-term ambition is to be one of India's largest FMCG companies. As Mukesh Ambani said, that the consumer business will be their next multi-million-dollar opportunity. So while all conversations in the annual general meeting were around AI, new energy, and the Jio IPO, this one suddenly slipped through the radar, but could be the next multi-billion-dollar opportunity.
All right, Mangalam, thanks a lot for that interesting piece out there. We'll have to see how that goes. But I think we can hop across to Vinny. She's joining in to tell us about Kirloskar Oil. Remember, the company has made a foray into the data center business and the stock is locked up 20% or thereabouts. Vinny, take it away.
Hi, absolutely. Rightly mentioned, right? This foray is an interesting one, right? They've secured this 192 megawatt hyperscaler data center genset supply. And this is an order that's coming from Hypernext. Now, when you talk about it, what is it? 192 megawatt I mentioned. But this is 96 units of 2,500 kilo voltage. That's the measurement, right, that you have of gensets. So normally for data centers, you require these high kilo voltages, and that is why it's a positive one, because Kirloskar Oil, normally you assumed it to have those low horsepower, medium horsepower range of gensets. Now this is a high horsepower genset, and that is a positive sign. Now this OptiPrime dual core power system is what they'll be applying here as well. On the back of this, you have JM Financials that has upgraded the stock to a buy from a previous ad. Target price at 2,430 rupees. Previous target price was 1,955 rupees. They also highlight that this order is a major breakthrough for them in the data center space, where there's still minimal presence that they had. Significant inroad that the company has made, especially in the colocation as well as hyperscaler data center space. And they believe that, this 2,500 kilowatt of what they've achieved, they've already had offerings of 2,750 kVA as well as 3,300 kVA as well overall. So that is also something that is available with them. And because of this, obviously this becomes a big opportunity for them. So that's why they've retained the FY27 EPS, but increased the FY28 EPS by 8%, given the higher growth that they're expecting in high horsepower business for the company. So in terms of value, they're giving it 42 times FY28 EPS as well. Previously, it was 35 times approximately. Motilal Oswal also similarly is maintaining a buy, revised the target price to 2,350 rupees from previous target price of 1,900 rupees. So positive news for coming in here for Kirloskar Oil, and that's why the stock is locked in upper circuit.
Take that point, Vinny. Thanks a lot for that. Take a short break, come back. On the other side, we have VMAT Retail. Lalit Agarwal, who's the founder and MD, joins in. Welcome back. The market's doing well. The signs of rains in Mumbai, but not so much in other parts of the country. Let's see what the consumer sentiment is like. And to decode that, we do have with us Lalit Agarwal, founder and MD of VMAT Retail. We'll focus obviously on the consumer sentiment. That's the most important part, Lalit. Thank you so much for joining in. Always a pleasure speaking with you. And if you could talk us through business in the first quarter so far, right? I mean, there was inflation, there was this uncertainty, people trying to reserve their resources and savings, and at the same time, it's not yet rainy, and monsoons haven't kicked in. How has that impacted your consumer sentiment, especially given your presence in tier 2, tier 3 and beyond?
Good morning, Malam. Definitely, things have not been very easy and good for the consumers. It looks a little stressful. There is an inflationary pressure which is building on. Definitely, things could become a little difficult if the rains continue the way it is happening right now. There is some amount of fear in the rural consumer about the rain. But largely, what we have seen in our markets, the consumption is still on. We are able to see some consumption coming in. There has been definitely little consumption which is there. There is some impact which is there. But there are some internal pieces that we have done internally in the organization, wherein we are able to see some consumption growth which is coming in. So things are stressful. Things are under a little bit of threat. But still, I would say it is ticking on. It is going on. It is not meeting our expectation that we had. Things could have become worse if this stalemate over Iran and US continued. But I think if things goes a little more neutral on these lines, if our fuel prices and the crude prices goes down, there should be an inflationary challenge which should get reduced, and that can really help our consumers during festival days. That is what we are expecting now, that our festival days should be protected. And if the rains are even around 90 to 93%, that could also be not so challenging, is what we feel.
So fourth quarter, you did about 1,000 crores on the top line. First quarter, what's the kind of growth that you're seeing despite this consumer sentiment being off, and you having done some, internal changes to the business to boost it? What can we expect? Is there going to be moderation, or is there going to be growth year on year?
See, they will be. We are definitely working on a little higher growth number, but we will have some neutral single digit, mid-single digit to a little higher mid-single digit number of growth that we will be expecting from the similar stores and same stores that we believe we should be able to deliver. We are also very gung-ho on some new store openings, which we have continued in the last quarter as well. So we have had a good base of last quarter new store opening that we have done, which has not performed the entire 12 months. So we'll get some growth out of that also. So we are anticipating a good double-digit growth overall.
Okay, so double-digit growth led by mid to high single-digit SSSG, right?
Yeah.
That's for the first quarter.
Yeah.
All right. Hi, Mr. Agarwal. Good to see you again, sir. What about some of the state elections that have got out of the way? The West Bengal election, there's been a change there in terms of regime. What is your exposure to a state like West Bengal, and how do you see things pan out in terms of sentiment, in terms of demand on ground?
So I think, Nigel, there is definitely a lot of enthusiasm in the consumers or the citizens of West Bengal, Assam, which continues. But we are seeing a lot of enthusiasm in the consumer base. They are expecting a lot of growth in their state. They're expecting a lot of formalization of economy to happen. They're expecting better law and order situation, better infrastructure, better business conditions, and better employment generation. So I think that is building a lot of hope and a lot of confidence. So we have a good exposure in West Bengal. We are definitely trying to grow in the entire eastern market. So we believe the consumption for the next 5 years in West Bengal is definitely bound to come in. There will be some movement from informalization of economy to formalization of economy, because what we saw in Uttar Pradesh last two decades or 5 years back, we may see similar kind of impact here as well in West Bengal. Some change of hands of money also happens during these periods. But I think it will happen a lot for a better state and better economy, and which is going to become very, very healthy in the longer term process.
Okay, all right. Mr. Agarwal, you're sounding quite optimistic, but you missed out in terms of your exposure to West Bengal. If you could quantify that. And also, you have given us guidance for the first quarter. For the year, what should the SSG target look like and revenue growth for the year, FY27?
So, Nigel, we expect similar kind of revenue from same-store sales growth, 5 to 7%, mid to single high digit same-store sales growth revenue to continue as we have done in the last year also. It could vary according to quarters because the festival keeps shifting. So you may see a little weaker second quarter, but you will see a very stronger third quarter because Diwali and Dussehra this time falls into completely into third quarter. So, but overall, we should have a good growth. Because we are also planning to open good number of stores. We opened almost 90 new stores last year. The net became almost 80 stores. But this year we are targeting around 100 stores. So we should be able to build a good number from both like-for-like as well as the new store openings, which should give us a growth somewhere around 18 to 20% overall for the year. That is what our base assumptions are. If things don't go very bad because of monsoon or things don't go very bad because of inflationary pressure, we should be able to do that. And other than that, I think West Bengal, we have an exposure. We are almost have 36 stores in West Bengal. So we would want to grow that because the market is very large. We would want to grow more in that market.
All right, you have 36 stores in Bengal and you want to grow that market as well. For the full year, you're targeting 18 to 20% revenue growth, led by 5 to 7%. SSSG, 100 stores being added in this year itself. I wanted to also know in terms of the cost of operations, because of increased fuel prices, increased procurement prices, likely to increase labor prices, would that have an impact on your margins? How do you see that panning out over the next year?
See, there is definitely a lot of pressure that we are facing because of the raw material prices increase, because almost 70-75% of the raw material consumed is largely connected with crude oil. And there is a crude inflationary pressure and the scarcity, which is leading to even more pressure. But still, I think we have learned our hard ways in 2020-23 when we had seen some similar kind of pressure and we increased our prices. So we do not want to repeat our same mistakes. So we are not trying to take up a very high price rise for our consumers. We are trying to create a lot of alternate product lines, a lot of innovations to drive similar kind of look and feel with a little lower price product, and trying to do a little bit of more efficiency generation in the production and manufacturing processes, so that we are able to generate a similar margin with not keeping the cost line high. So we are working hard right now. There may be a little bit of blip of maybe around 0.5% in the gross margin side, but we still expect to have a better full price sell-through so that we continue with a better overall margin. And that is what our expectations are, and that is what we are trying to do. We're not trying to dampen our margin any sort.
So 13.5% or 12.5% to 13%?
I can't spell you those numbers. My CFO will be able to do it that better. But similar margins is what we are expecting.
All right, just a final question. Since you're opening 100 stores, since you're looking to add stores and cost of inputs have also increased, would that have an impact on your working capital days? If yes, how much higher could they go from current levels? What's the kind of working capital investment that you're looking at this year?
So, Mangalam, we definitely have created a lot of efficiency. We are using a lot of technology. We are actually getting into better technological algorithms and better ways of working. So we are trying to really work hard on reducing our inventory, bringing higher freshness in our stores, bettering our days of cover. So some money also getting released. You must have seen that in the last quarter result also that we gave. We actually are better on inventory days. So we will want to continue that spree more, and we will want to reduce our working capital days as well. But overall, definitely as you are growing up with the store, the overall working capital number may look a little higher, but that is in the ratio with the turnover. But overall, the days of inventory should go down, and we should have better cash flow, we believe, because that is what we did in the last year also. We had a positive cash flow. We should continue doing positive cash flow even this year.
Always a pleasure speaking to you, Mr. Agarwal. Thanks a lot for joining us here on CNBC TV 18. Wishing you all the best for the remainder of this quarter as well as the year. We'll hold you to that guidance and chat up rather soon. Well, from the market perspective, we're at the high point of the day. So Mangalam and myself, for the last 3 hours that we have been on air, well, we have made sure that the markets have stayed at the high point of the day. Over to the team of Trading Hour. They'll take all the action forward. Stay with us.
Good morning. It's time for Trading Hour. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I am Horvas Fatakia. Joining me as always, Ritu Singh. And it's a good start for the markets today in what is a truncated week. We have the weekly expiry of the Nifty contracts tomorrow and the monthly expiry of the Sensex contracts on Thursday. So it's an action-packed week that is lined up in store. And after the Nifty managed to hold on to that 24,000 mark on Friday, courtesy of the FTSE and the Sensex rebalancing flows, the index has carried on from where it left off from the lows on Friday. Another 150 points added in today's trading session. So we are above the mark of 24,150. It's a good start to the trading day. And the one that's leading the charge today has been Reliance Industries. And the bulls would be happy for that as the big contributor to the index upside, even though most of the others are taking a bit of a breather today. 2.5% higher on Reliance Industries. Absolutely no reason for the bulls to complain this morning, Ritu.
Absolutely no reason to complain. Even if you look at the breadth of the market, that shows you almost 3 stocks advancing on the National Stock Exchange for every 1 stock that is declining. So about 2,214 stocks are in the green as we speak. The bank nifty, the mid cap, the broader market small cap, all of that is holding up well. The big boy Reliance adding to the gains seen on the frontline index, holding up above that 24,160 odd levels as we speak. Sectorally, what is pulling the market up is also the IT pack doing pretty well in trade today. You have names like Infosys that are doing relatively better. Tech, Mahindra, Forge also gaining in trade. Media, auto names, financial services, real estate, all of them in the green. What is seeing a bit of a weakness or flattish trade today is the FMCG pack and some of the mid-select names like Dixon, Indocin, etc. They're also a tad weaker. But apart from that, it's looking pretty good on the screen. Market breadth is positive. India WIX remains around the 13 mark. So that's a decent setup to start this new truncated week. But as always, let's put the spotlight on the top movers in the market. And Hormuz has walked over to the wall to give us that list.
It's a good start, as we were also mentioning, right? The dip has been bought into this morning, and the leg up that the market has received over the last few minutes, the bulls would take that as well. But of course, the important level to watch on the upside for the Nifty comes up to be the 100 DMA, around about the 24,200, 250 zones. That's going to be the first important level to watch on the upside. That is where the index had reversed as well from on Friday. The Nifty Bank had a bit of an intraday dip earlier in the day. That dip has been bought into, and now the index has started to move higher again, nearing the highs of the day. So nearing the higher end of that 57,000 to 58,000 range. Sustaining above 58,000 would be further positive for the Nifty Bank. Of course, it took a bit of a breather on Friday after that 3,000 point rally that it has seen from the recent lows. Leading the way, of course, as we mentioned, Reliance Industries, the top contributor to the Nifty gains in today's session, had a bit of a choppy move on Friday, but seeing a very good rebound today after the fact that brokerages are also positive on the stock. But one group that's doing well today is the entire Kirloskar group companies, and that's because of one stock, that is Kirloskar Oil. This foray into the data centers business, the upgrade that it has received, a 20% circuit for the stock, another 20% circuit for Kirloskar Industries as well, 9% move on Kirloskar Pneumatic, Kirloskar Brothers also up 10%. So a big move on all of these Kirloskar group companies. You take a look at the newsmakers as well. Nosil is one name who surged around about 20%. That's of course after the anti-dumping duty news. That's a positive for the stock. Cipla, where Citi has opened a positive catalyst watch for a 90-day period. So positive brokerage recommendation. Blue Cloud Softtech, it's a 1,300 crore market cap company. That is, the company has informed that it is exploring some opportunities with SpaceX. That stock is up 17%. And Aavas Financiers at one point was down around 3.5–4% after the management clarification has recovered some of those losses. New India Assurance is up for the 7th day running today. 4.5% added after its name appeared on the NSE list of selling shareholders. It's a one-way move for the stock. EPAC Durables after the move on Voltas. After Voltas and Blue Star are off the highs, but EPAC Durables is at the day's high now, 13.5% higher on the stock. And Aegis Logistics too doing well for itself in today's session. A lot of these communication companies are at 52-week highs today. Tata Com is up 5.5%. That's at a 52-week high. HFCL continues to move higher after a bit of a profit booking circuit seen over the last couple of weeks. So 2.5% higher in today's session, and Finolex Cables too having a good day at the office, 3% higher on that one as well.
All right, lots of individual names there to focus on, but the big one that we've been talking about here, the big boy Reliance Industries, brokerages there are coming away increasingly bullish after the annual general meeting last Friday, highlighting AI, new energy, FMCG and exports as the company's next growth engines. Sonal Bhutra joins us now to tell us what the street is betting on. Sonal.
Well, a couple of big announcements that the company made this AGM, right? And the stock had been underperforming, so there's a big surge that we are seeing today. CLSA has an outperformed rating on the stock with a target price of 1,800 rupees a share. They say that the company spoke about using AI as a core tool for businesses across the board, and company will be commissioning its first compute capacity by the end of 2026, and that is something that they are quite bullish on. AGM showcased a variety of Reliance's AI solutions for customers across its businesses, a foray into the underground coal gasification, where the government has been also talking about a big outlay, along with multi-sector exports were revealed as new areas of growth. A target to double EBITDA in the next 5 years was announced, of course, and the target price currently is not assigning any value to the AI business, new energy business, export plans. So, of course, there could be an uptick and upside from these levels as well. Nomura also has a buy with a target price of 1640. Jio listing by end of 2026 is possible. The valuation band is anywhere between 117 to 127 billion dollars as per media reports. AI, according to them, is the new growth engine for the company. Intelligence moves from plan to execution. The Jamnagar becomes sovereign AI hub. They are targeting 120 megawatt by end of FY26. New energy turns on. That's the word that they've used, because after announcing that big capex back in 2021, now it is coming on stream, be it solar, be it cell manufacturing. And also the fact that new energy will report revenues for the first time from FY27 is something that will, of course, bring an upside to financials as well. $3 billion green energy supply agreement with Samsung C&T also supports the ambitious green molecule story that Reliance has. Jefferies also has a buy with a target price of 1675. They are liking the reiteration of some of the objectives that they had outlined in 2025 AGM. Recovery in retail growth could re-rate the stock from the one standard deviation level it is trading at currently, so they are positive on this particular name. Motilal Oswal also has a buy with a target price of 1655. They talk about the 5 major value creation pathways for Reliance Industries. They have reiterated oil to chemicals business to create secular growth revenue streams. New energy is going to be the big trigger, which is also not a part of the SATP. Reliance Intelligence will be the most prolific growth platform according to them. And Reliance Retail, that could become India's largest FMCG companies. $125 to $150 billion exports for by the company by 2032. These are some of the big pointers that they highlighted. Most of the brokerage is quite positive on the stock.
33 out of 34 buy recommendation. Sonal, thank you for that update there on Reliance Industries. But staying on that, from disrupting India's telecom market in 2016 to becoming a digital giant, Jio is now readying for its stock market debut. Jio Platforms filed for what is likely to be its for the largest ever IPO of around $4 billion. Rima is here to tell us how this listing is set to be a defining moment for India's public markets and the digital economy. Rima.
Well, indeed, it's been nearly 10 years since Jio's commercial launch. It's finally heading to the public markets. Now, remember, Reliance Jio commercially launched on 5th of September 2016. They offered free SIM cards, unlimited voice calls, free data under the introductory offer. And that launch transformed India's telecom landscape almost overnight. It triggered an unprecedented price war and it accelerated India's digital adoption. At Reliance Industries' latest AGM, Mukesh Ambani has announced that Jio Platforms has filed the draft papers with SEBI for an IPO, and this marks a major milestone in the company's journey. Now, Jio's entry reshaped the entire telecom industry. SL got bankrupted, Reliance Communication collapsed, Vodafone Idea merged with Idea Cellular. In 2020, Jio Platforms raised more than $20 billion from 13 large global investors. We're talking about Meta, Google, Silver Lake, KKR, General Atlantic. The list is very long, and at that time, it was roughly valued between $58 to $65 billion. Come today, investor expectations for the IPO or for the Jio valuation is $110 to $120 billion. Jio in 10 years has gone from a disruptive telecom challenger to now India's largest digital platform company with more than 500 million subscribers. And this IPO will mark a culmination of one of the most consequential business transformations seen in modern India. But now let's get to the details about the IPO. Now, this is going to be a pure, fresh issue of 27 crore share, 2.9% dilution. It's an absolutely fresh issue, no offer for sale, which means existing shareholders, which includes the promoter Reliance Industries and other investors like Meta, Google, KKR, etc., will not be selling any stake. The primary objective is to pare down debt, and they're talking about reducing the debt by more than 27,000 crore rupees from the funds raised. Now, ahead of the IPO, let's see the numbers. Now, I think the key takeaway for me is that the company is now entering a cash generation phase. So the top line for the company went up 15%, 1.46 lakh crore rupees. The bottom line, net profit stands at 30,000 crore rupees. Again, a jump of 15%. Subscriber additions for the company are very strong. They stand at 525 million subscribers. The average revenue per user stands at 214. But as I said, the key is the cash generation. The metric to look at is the EBITDA less capex. Now, that number was 1450 crore in FY24, ballooned to 20,000 in FY25, and now stands at 42,000 crore rupees. We're talking about a jump of 29x. Now, why is this number important? Because the EBITDA less capex, the capex is basically the company's 5G built out, the network built out. And this number seems to be indicating, this improvement seems to be indicating that the company's capex cycle perhaps has peaked and is now entering a cash generation phase. Now, for most investors, when you look at the telecom space, the options today are limited. You've got a Bharti Airtel, you've got a Vodafone Idea. Bharti Airtel has been an investor favorite. It's a premium play, it's got higher ARPUs, higher margins, and plus you've got the Africa and Indus Towers optionality. Now, where does Jio scale? Well, in terms of customer volumes. Jio's volumes, subscriber numbers are more than that of Bharti Airtel's India numbers. But Jio is more than just a telecom play. It offers a play on India's digital economy, mobile, home, broadband, enterprise, AI, all bundled into one. And I think this is one of the most awaited IPOs, and it's also the first IPO from the Reliance Group in nearly 20 years. Back to you.
Hima, thank you for putting that together for us. All eyes on that big Geo IPO. Take a short break. On the other side, put the spotlight on the bond markets with Manisha Gupta.
Welcome back. You're watching Trading Hour, and as promised, let's get you straight to all of the bond market action. Manisha Gupta joins in with the latest on that front. Manisha.
Well, thank you for that. And the crude oil price is yet again coming back below $80 a barrel is supportive for the bond markets. Remember, at one point in time, early Asia, as soon as the week opened, we did go to 81 plus kind of levels as well, but trading just around at 79 at this point in time. The US to Iran are reporting progress in sense of peace conversations there, even despite threats that we've seen coming in from both the countries over the weekend there. The rupee, in the meanwhile, has seen a very slight decline versus the US dollar on your screens. This is after banks seem to be buying dollars for their importers therein. Interestingly, the FPI holdings of state government bonds has surged nearly 5 times in last 2 weeks. This is since the RBI measures on the MPEC date have come in. If you look at the overall numbers on Friday, that is 19th of June, the overall state bond buying via the FPI stood at around 22.4 billion. This is versus 4.17 billion that we saw on 4th of June. So very sharp increase, as you can see on those numbers there. Interestingly, the largest of purchase of nearly 5 billion came in just about at Chhattisgarh's 7.0% 2029 bond. So that was the most bought one there. The state bond issuance is, in the meanwhile, for the current quarter, seem to have crossed $1.86 trillion. So strong numbers continuing on to that one as well. And then when you look at the private bond issuances, well, that list continues to grow longer every single day. The latest one on the screen are India Infra Debt. They're looking to raise nearly 15 billion rupees, and they're doing it via issuances of bonds maturing on December 2031. There also is India Renewable Energy Development, which is also looking to raise 15 billion, and they are doing it via bonds maturing in 2029. Torrent Power, in the meanwhile, also is looking to raise a total of around 38 billion. They are doing it via issuances of nearly 4 bonds with different maturities in the years to come. And then there also have been reports, and we've been reporting that on that the board of Godrej Industries has now improved issuances of 2 series of NCDs set up for nearly 10 billion rupees therein. There have been some very good bond issuances that have racked in some money as well. Cholamandalam Investment and Finance is one of those. The board has allotted issuances via NCDs worth nearly 1 billion therein. And then you have Bajaj Auto Credit Limited also has raised 5 billion. They have issued 3-year bonds which are maturing in 2029. And finally, Aadhar Housing Finance should come in on your screens, and the board here as well has allotted NCDs worth 2.5 billion rupees.
Manisha, thank you very much for bringing us that. But, with that, let's also shift focus to the NBFC space, which has very much been, the chatter the last couple of weeks, especially with the RBI announcements coming in, which makes banks go tap some of the overseas market, the expectations of a longish RBI pause, and what all of that means for the NBFC sector. Let's bring in Ajit Kumar, who is the BFSI head of JM Financial Institution Securities, who joins us now on the show to discuss how the quarter gone by has been for the NBFC space and the way forward, what could play out in favor. Ajit, thanks very much for joining us here. The first question is that, do you think we're in for a re-rating for the NBFC sector given the recent run that they've had? And now this expectation that RBI's rate hikes could perhaps be later than initially anticipated on the back of what's happening in West Asia. And secondly, every dollar that banks are now going to borrow overseas, thanks to ECB raising some of those deposits overseas, means $1 less that they borrow in the domestic market. So in terms of cost of funds advantage also, that would continue for NBFC. So how do you put all of that together in terms of how the space could look in the near future?
You said it right. Good morning, everyone. Thanks for having me. At this particular point of time, at a sectoral level, we prefer NBFCs over bank, mainly due to the vast difference in the earnings growth. While we do have our preferences both in banks and NBFCs individually, but at a sectoral level, we prefer NBFCs over banks. Just to give you some numbers, for 16 banks that we cover, profit growth in FY26 was only 7%. And even in FY27, it is expected to remain somewhere around 7 to 8% only. In contrast, for 24 NBFCs that we cover, PAT growth in FY26 was 22%, and it is expected to be more than 25% for the next 2 years. And this difference in the earnings growth between banks and NBFCs is actually leading us, us being more bullish on the NBFC side versus bank side. Now, for NBFCs, what is happening is that there are 3 positive variables which are playing out. One, your loan growth is quite robust. So for all the, especially the diversified names such as Aditya Birla Capital, Bajaj Finance, Tata Capital, Piramal Finance, all the diversified names are printing more than 20% loan growth. That is point number 1. Second is, since the last MPC meeting, the NBFC yield across, let's say, 10 or 1 year, 3 year, 5 year, all have come down by roughly 25 to 40 basis points, which is going to have positive delta on the cost of fund side. And last, post March, we haven't seen any deterioration in the asset quality matrices in any of the segments, at least till now. So we have done our channel checks, and even in the month of May, we haven't seen any, much deterioration in, especially in some of the vulnerable segments such as, LAP, MSME, unsecured loan. There might be some inch up here and there, but we haven't seen anything, materially negative as far as asset quality is concerned. So all these 3 variables is leading to, higher earnings growth for NBFCs versus banks. And that is why we are, more bullish on NBFCs versus banks. Having said that, within NBFCs, as I said, we prefer diversified financials more like AB Cap, Bajaj Finance, Tata Capital, Piramal, etc., followed by housing finance companies, then MSME lenders, then vehicle financiers, and at last, MFI names comes into picture. In the banks, we actually prefer, private banks over PSU banks, mainly because of the fact that while going into FY27, for the overall banking system, profit growth should not be more than 7-8%. But if we bifurcate that between, let's say, private banks earnings growth versus PSU banks earnings growth, in our estimate, private banks earnings growth is going to be more than 15%, whereas PSU banks, earnings growth should not be, or in fact, their profit should come down by at least 4 to 5% in FY27. So yeah, I mean, valuation ultimately is a game of earnings growth, and wherever earnings growth are there, that that's where majority of re-rating should happen.
Ajit, thank you for taking out time. I was just reading your note on the MSME space as well, where you mentioned that the stress is showing early signs of stabilization, and you mentioned that there could be some monsoon that we are warning of, as the Met Department is warning of. Would that not be a sector that becomes the first hit, the MFI/MSME/ those kind of sectors?
Yeah. No, you are absolutely right. And that is why within NBFC, so NBFC is a very diversified space, right? We have diversified financial on one side, housing finance companies on the other side, MSME lenders on other side, vehicle financiers are there, and then MFI names are there. And that is why in the opening remark, when I gave you the pecking order, it is actually diversified financial at the top, followed by housing finance companies, then your MSME lenders, vehicle financiers, and MFI names at the last. This is basically to factor in any negativity that might comes in the asset quality because of the subpar monsoon. You are absolutely right. If let's say monsoon is deficient, rainfall is deficient, it is going to have negative impact on some of the segment, let's say for example CV financing or tractor financing, and even in let's say lower state of the society, which is basically included in the MFI names. So these are the segments where we need to be a little bit cautious. But within NBFC, the larger ones, which is basically your diversified financials, which are basically present everywhere, whether it is unsecured loan, housing loan, or let's say, auto loans, that is the segment, where we are, most positive at this particular point of time.
Ajit, let's get to some specific names. Tata Capital, Piramal Finance. Do you believe they could be, great compounding stories from here? Those are two names you've particularly highlighted in your report as well. As having potential. In Tata Capital, you have an add-on, and Piramal as well, I believe.
Yeah. So actually, we upgraded both Tata Capital and Piramal Finance, from add to buy. The one thing which is common between both of them is both of them are having largely secured book. Even in case of Tata Capital, more than 60% of the book is focused towards housing loan and corporate loan, and within Piramal Finance as well, more than 60% of their retail book is dedicated towards housing and LAP. And housing and LAP is basically one segment where we should not see much deterioration in asset quality because of this West Asia crisis, or maybe because of this subpar monsoon. So that is one. Asset quality trends should be better for these two names versus other lenders. Second is both of them have the capacity to grow more than 20-25%. Tata Capital, being a AAA rated entity, is able to borrow at a very competitive rate, and they should able to grow their loan book by more than 22%. Whereas similarly for Piramal Finance as well, since they have run down their legacy wholesale book over a period of time, and now the legacy wholesale book is right now only 3% of the total total loan portfolio, they should also be able to grow more than 25% in the next 2 to 3 years. So yeah, less risk on the asset quality side, their ability to grow more than 20%, and at the same time not much impact on the cost of funding side because of decline in the yields. And on top of that, Piramal especially is trading at a benign valuation of 1.3, 1.4 time, which is frankly speaking is the cheapest, or one of the cheapest across, let's say, diversified financials, or across NBFCs. And NBFCs, most of the names are trading at more than 2 times. So yeah, these are some of the reasons why we have upgraded Tata Capital and Piramal recently, and we believe that both of them can be a good compounding story going forward.
Ajit, very quickly, if you could tell us about HDB Financial as well. You have an ad rating as a target of 660, which is still below its issue price of 740. What will it take for HDB Financial for it to re-rate and then deliver returns that are substantially higher than its issue price?
Yeah. No, so actually, we had actually upgraded, our target price for HDB Financial is 710. Probably, after that we had changed. So even, for HDB Financial, we like it. The only problem is with HDB Financial at this particular point of time is in next couple of years, our loan growth estimate is 15%, which is probably the lowest among all the, diversified financial. All the diversified financial that we have discussed till now, Tata Capital, let's say, AB Cap, or let's say Piramal, all of them are going to print more than 20% loan growth. Whereas for HDB Financial, loan growth is going to be, somewhere around 15-16%. While, rest of the variables are looking great for them as well, but mainly because of this difference in the loan growth profile, probably we can say that, we are more bullish on Piramal and let's say Tata Capital versus STB at this particular point of time.
All right, Ajit, out of time, but great to have you today. And thank you so much for sparing time in joining us here. Let's send it to a break. When we return, we're going to discuss market technicals with Saumil Mehta of Mirae Asset Sharekhan, also get his top trading ideas.
Welcome back. Still holding on to levels of 24,150 is the index. Saumil Mehta from Mirae Asset Sharekhan is now joining in for a quick chart check and some trading ideas as well. Saumil, thank you for taking out time. But now that the index is decisively held on to that 24,000 mark, what's the next level of resistance that you see on the upside, and your stock calls as well for the morning?
Good morning to everyone. Market has been steady above the 20 and 40 daily moving average, which is a great sign for the markets, creating high top, high bottom formations on the daily charts. Previous week high has been also crossed on the upside. The most important part here is that the markets have taken support at very crucial level, that is 23,000, 23,100, which was the 61% retracement of the previous rally. So now that crucial level has been held on to, and we are stable above the short-term averages. Now the next level to watch out as resistance is 200 daily exponential moving average, which is close to 24,460 levels. I'll be expecting markets to break above those levels, and the next resistance, which is the previous swing high, is 24,600. That will be a key resistance as well, but that will be a confirmation for a medium-term uptrend. The next target in the medium term would be 25,100, 25,150 on Nifty, and my strategy would be to buy on declines. Now, the two stocks which I've chosen is, one is Supreme Industries. Supreme Industries are broken out of a small consolidation pattern, trading about 20 and 40 daily moving average. In the very short term, my target is 3740 and my stop loss is 3500. And the second stock which I've chosen is PFC. PFC, we've seen a small correction in the last couple of months and then now taking support at 200 daily exponential moving average. Today, we have seen a breakout of a small consolidation on the upside. So my target for PFC would be 470 and my stop loss would be 428.
All right. Thanks very much, Saumil, for joining in with that. We have to slip into a short break again. But back next with fundamentals with George Thomas of Quantum AMC on the markets in just a bit. Welcome back. You're watching Trading Hour, and let's get in our next guest. Josh Thomas from Quantum AMC joins us now to discuss market fundamentals and his top sectoral picks. Josh, thanks very much for joining us here. Of course, with what's happening in West Asia, the crude oil prices, there were headwinds for several sectors, auto, cement, and whatnot. But now with, some signs of a resolution there, who do you think will be the key beneficiaries as this cycle turns? And, on the flip side, because of what's happening with the weak monsoon predictions, where do you see the most earnings downgrades happening in the near term?
Okay, thanks for having me on the show. So when we look at the input cost pressures, the obvious beneficiaries, if there was a durable solution to the conflict in West Asia, would be the oil marketing companies and some of the commodity plays and some of the commodity plays where oil and crude derivatives are a key ingredient or a key input material. They would benefit. They would benefit in the near term. But the factor to watch is, how, so whether we can call the current scenario a durable solution at this point is the key thing to watch. And investors should be cautious or should be mindful of the normalized profit levels of these companies. So even some of the gas utility companies would be beneficiaries if crude and the overall energy prices were to correct, because the offtake can improve from these levels. But the key thing to watch is some of the how the valuations are faring at this point and the normalized earnings levels, because the fluctuating earnings levels may not be a key, may not be a good indicator in terms of identifying the attractiveness of companies.
How about the oil marketing companies, George? A couple of brokerages recently came out with notes on them. One is believing that their fortunes are now turning after the de-escalation in West Asia. The other believes that they are just tactical plays as of now because there are still some underlying risks for them. Which camp do you lie into? There has always been this valuation comfort plus dividend yield tailwind for them. But is that enough to make an investment in these companies?
See, oil marketing companies would be obvious beneficiaries because marketing margin would be a clear reflection of how the global crude prices are panning out. And as if the crude prices were to correct, there is obviously a case for margins to expand for these companies. But the key thing to watch on these companies is they would always be in the limelight in the sense that regulators may not want the end pump prices to fluctuate in a big way. And whenever there are volatility in crude prices, their profitability would take a direct hit to that extent. So therefore, being mindful of these risks, we have decided on certain valuation bands. And if we were to apply those valuation bands at the current prices, they have not reached a level where we would earn the threshold return levels for our portfolio for the next couple of years.
So, let me just extend that and ask you, if you apply this valuation band, overall on the market sectors there, where there's been meaningful correction and now pockets of opportunities are emerging, where would you place your bet?
If you look at our portfolio, the largest weight continues to be in financials, which is a mix of private sector bank and insurance companies. There is one AMC company where the upside is limited and therefore we have trimmed a bit. The second largest pocket where we are allocated right now is IT, where purely because of valuation reasons, demand could be a bit volatile in the near term. But if we want to take a slightly longer term view, the current valuation levels are quite attractive. And the other recent additions have been spread across a variety of sectors. There has been an addition in a cash logistic player. There was an addition in a pharma player where the street was worried about one of their drug going to a cliff. But we were kind of hopeful about some of the other drugs in the portfolio kind of compensating for that, and that has played out. Even we were able to add into a real estate player who is one of the largest branded play and who would be a beneficiary in times of stress and when when the macro environment goes through a rough patch.
Speaking of real estate, George, there has also been this fear. You also saw the updates that have come in from the BMC recently due to the paltry rain that the city has received so far, the pause in construction activity that has taken place. Do you see that as a headwind emerging for a lot of these city-based real estate companies? Because then there will be execution delays and delivery timelines get delayed as well, and therefore their sales guidance is also come into threat because of that.
See, clearly, as execution slows down, some of the milestone-based payments would be delayed, and that would directly impact their cash inflow. That is one part. And the second part is even the sales run rate is likely to slow down if there was an execution delay. But when we value our companies, we are slightly longer term. So we are not too worried about what could happen in the immediate near term, and we would look at a longer term picture. But the player where we have taken a position, they have a fairly diversified exposure across key cities, and they're not purely reliant on the Mumbai region to that extent. Plus, they have a fairly strong balance sheet. So even if there were to be a slowdown in cash inflows in the near term, they are well positioned in terms of withering through that this phase. And there could be, therefore, there would be a net beneficiary. So investors have to be cautious if balance sheet is weak and if they are over-indexed to a particular city.
All right, George, appreciate you taking the time out and joining us here today. Thanks very much for being here. We slip into another short break, but when we return, we're going to be joined by Mitul Shah of EVA India and Bhavesh Shah of Equirus Capital to discuss SEBI's revival of open market buyback. Stay tuned. Welcome back. Now, as promised, SEBI has brought back open market buybacks starting the 1st of August, reversing a move it made just last year after changes in the tax regime made this viable again. Let's first bring in Mitul Shah, partner of capital markets at EVA India, for more on this. Mitul, thanks very much for being here. You know, the timing is pretty interesting. You have a market where we're going to get a flood of supply from IPOs that are planned, the QIPs, the OFS, etc., that we've been seeing. And now this buyback option opens up. Do you think that'll be a meaningful counterbalance to all of this supply that's also coming into the market?
Good morning. Thank you for having me here. Yes, this is a welcome change by the regulator. It offers the option to the issuer to select between the two available options, which is your tender route and the market route. What the market route does is it offers the company the ability to buy out the tail investors who have been selling the stock and creating pressure on the stock. The 66-day window that it offers it allows a price stability mechanism for the stock in concern. And buybacks are also a tax efficient mechanism as they are taxed at the LTCG or STCG rates, as the case may be for the shareholder, versus dividends that are taxed at the income tax bracket. It also offers a lower acquisition cost compared to the tender route, where the company is able to purchase based on the current prevailing market dynamics. So all in all, it is a welcome route. It offers companies one more option to select between a market buyback and a tender route.
But how beneficial is this for a small ordinary shareholder? It might be beneficial for a company, as you just highlighted, for the tax purposes, for the lower cost of acquisition. For a small shareholder tendering a share in a tender offer, he at least knows that this is the price at which his share is going to be repurchased and he's going to get an X amount of premium. For an open market buyback, how does it benefit him? Because for a person tendering them in an open market buyback, A, they would not be aware of the price, and B, there is this uncertainty of whether that share would be repurchased or not. That's the second question.
So yes, a tender offer does provide a price mechanism to the retail investor in terms of at what price their shares will be acquired, and that window is remained open only for 5 days. A market buyback, on the other hand, does provide the necessary liquidity to the tail investor who can exit. Yes, in terms of a price parity, the tender offer does provide a better price parity than an open market buyback.
All right. We also have, do stay on, Mitul, Bhavesh Shah, MD and Head of Investment Banking at Equirus Capital, joining in now. Bhavesh, hi. Thanks for joining in the discussion. Quickly, your thoughts on SEBI reintroducing this and whether corporates will favor this over dividends, and looking at the balance sheet of companies also. What are the sectors or the companies that are cash rich that could come out with the buybacks? I mean, MNCs, IT Pack, who'd be the first in the line, you think?
Yeah, thanks for having me on the show. But, this is a very welcome move by SEBI, especially companies who are in the space where they are generating a lot of cash and with no very visible capex needs as far as finances are concerned, and wherever they feel that the stock is not justifying the true value or is it below the long-term value, it makes a lot of sense for companies to do buyback. And within that, I think the stock market buyback route, which was stopped by SEBI because of the inequality which was present in the earlier situation. Now, with that being corrected, I think it tends to give out a very positive and a flexible way of doing a buyback, in my view. It also signals a strong intent from the company side of the long-term fundamentals of the business to the investor. So I think it's a very welcome move from a SEBI's perspective to introduce stock market buyback back again. And I think it's a great opportunity for companies, especially in these sectors like IT, wherever they are generating more cash, they can use this route to kind of create more shareholder value by accreting to EPS.
Bhavesh, I was asking the same question to Mitul as well. For an open market buyback, do you believe that the retail shareholders will have the kind of response for it as compared to a tender offer buyback, just for the pricing mechanism that it offers?
No, I think so. For the retail investor, I think earlier, it was a very non-transparent mechanism when it came to the stock market buyback, because there could be order pricing mechanisms which were kind of they have been done away with. So as far as the retail investor is concerned, on a buyback which is happening through the market, it is as good as selling in the market. And as far as tender is concerned, to that extent, the shares are kind of, proportionately bought to the extent of demand which is generated. So, frankly, from a retail investor perspective, I think the buyback from the market tends to become a little more, if I may use the word, more certain in terms of what the outcome could be. Whereas in case of a buyback through tender offer, it will be subject to proportionate, proportionate acceptance.
All right, Mithul and Bhavesh, thank you so much for joining us here today. Short on time, but that was a rich discussion nonetheless. Thank you very much for sharing your perspective. Now we'll move on to a CNBC TV18 exclusive, where we understand that the government is set to sell stake via an OFS in yet another PSU. Let's go across to Sudarshan for the details on this one. Sudarshan, take it away.
So over the last few weeks, we have seen that government has been launching several OFS to raise funds. And now we understand from sources that government is likely to launch an OFS in Cochin Shipyard. We don't know exactly what the quantum can be, but the price that we understand from sources that it can be at a 6 to 8% discount to current market price. And so far this year, government has raised more than 16,000 crore via OFS. And going forward over the next few weeks, there can be OFS in PSU companies, and number can be around 6 to 7. That we understand from sources. We have written to Deepam regarding this, and we are still awaiting the response.
Cochin Shipyard, then another potential OFS in the offing. Sudarshan, thank you for that update there. The stock down around 35% from its 52-week high of around 2,300, down 10% for the year so far. And the government shareholding as of the March quarter shareholding stands at around 68%. Get you more on this as the day goes by. Take a short break. Back with more on the other side.
Welcome back. As always, let's get you the macro signal as well. For the markets holding on well above 24,000, holding up with gains of about 120 odd points as we speak, 24,140. The Sensex as well holding on with gains of almost 425 points. Oil prices, they're doing well. There was some volatility today because the markets reacted to the conflicting geopolitical signals from the Middle East and the progress in these high-level diplomatic talks that are taking place in Switzerland. So after an initial surge, the market opened, which was driven by fresh threats from, U.S. President Trump. Prices have since retreated following reports of some progress being made in the negotiations. Brent crude currently, in fact, below $79 per barrel, almost 2% down after reaching an intraday high of $82.30 a barrel. The rupee has, been trading flattish today, now at about 94.48 against the greenback. The currency is, of course, benefiting from the cooling oil prices and the optimism surrounding this peace deal. but the gains are being capped by a strong US dollar and technical interventions by the Reserve Bank of India. Now, what do I mean by technical interventions? Well, RBI is seen to be actively rebuilding its forex reserves, which had fallen to about $681 billion from the peak of $730 almost billion a few weeks back. So this practice of buying dollars to shore up reserves is effectively capping the upside for the rupee. And of course, the dollar index is also trading firm, driven by the hawkish Federal Reserve, and that is limiting how much the rupee can appreciate. Meanwhile, you have the 10-year benchmark index, 10-year benchmark GSEC yield hovering around that 6.8% kind of a mark, flattish in trade today after snapping that 6-day falling streak that we saw last week. So that's as far as the macro setup is concerned. Hormaz, over to you.
It's still a pretty decent market for now. We're still around about 120 points higher on the index, although we have cooled off ever so slightly from the highs of the day. Still around about 24,130 is where the index is. The one stock that is continuing to extend its gains, though, is EPAC Durables. That stock is now up 15% as we speak. So good going for that stock after that very strong update that Voltas reported earlier in the day, and 15% higher on EPAC Durables. So that continues to do well. Kirloskar Industries continues to gain as well. A couple of small cap names that are still making moves is Igarashi Motors. That stock is up 17% in today's session. And well, as many as close to 10 or 12 stocks on the small cap index are trading with gains in excess of 10%. They include the likes of EMS, Subros, NIIT, Igarashi Motors, as I just highlighted, and of course the ones that we spoke about earlier in the show as well, the Blue Cloud Softex and the likes. NACL Industries too is locked in a 10% circuit. Take your leave on this edition of Trading Hour from Ritu and me. Thank you for watching. Halftime report on the other side.
Stocks climb led by heavyweights after US-Iran make progress in talks. IT services and oil and gas stock leads the charge.
Reliance Industries' deployment of AI across businesses and the scaling up of its new growth engines, deep tech, new energy and FMCG, along with the likely $4 billion Jio Platforms IPO get a big thumbs up from analysts.
Voltas races past the 1 million AC sales mark in FY27 on the back of heatwave and delayed monsoons. LG Electronics too flags good summer season for ACs despite a 10 to 12% price hike. Stocks of AC makers perk up.
The number of oil tankers sailing through the Strait of Hormuz see a distinct pickup even as US and Iran announce a 60-day roadmap for a deal after talks in Switzerland. Brent trades at below $79 per barrel mark. Hello and welcome to Halftime Report live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me is Vinny Motiwala. Vinny, good afternoon. A fresh new week, a fresh day for our own markets and shrugging off some of the volatility that we could see with respect to the P stocks. Indian markets higher in trade. It's a good start for the bulls on a Monday. 122 points higher on the Nifty. We are comfortably above the 24,100 mark. It's a 30-point downtick from the highs of the day, but there's nothing worrisome in that case. But most of the sectoral indices are in the green, barring the FMCG pack. Nifty IT is the top gainer with gains of around 1.1%, followed by oil and gas. We have some contribution coming in from pharma. There's realty. Basically, it's most of the sectors which are contributing to the gains that we are seeing today. And IT has made a comeback.
IT has made a comeback. Sonal, good afternoon to you as well. And in terms of what's not doing well today, it's just the FMCG pack. That's a bit muted in the trading session, right? Down almost 0.1%. So we'll watch out for that in the trading session. A lot of individual movers in trade, especially coming in from the broader end of the market as well. New India Assurance is one such name that has been buzzing in trade, and this is coming after the NSE IPO announcement that's come in. And we've seen significant gain coming in for the stock since that announcement came in, right? So New India Assurance, keep an eye out on that. Other than that, we have Urban Company that's buzzing in trade and a lot of other movers. But we have a very exciting lineup for you all on the show today. And first up, we'll put the spotlight on affordable housing segment with the sales in the segment having halved since 2019. Now, to decode how the industry is navigating these challenges, we'll be joined by Prashant Thakur of Anurok as well as AM Karthik of ICRA to talk to us about that. We'll also be putting the spotlight and focus on buzzing stocks and big movers in the trading session as well. So stay tuned in for that. We'll also have our commodity corners with Manisha Gupta, who will take us through a conversation with Christoph of Crystal Energy to discuss the recent volatility in crude prices. That's the lineup for you all. But first up, let's go across to Vivek, who is here to take us through the stocks that are moving around in the trading session. Afternoon, Vivek.
Well, good afternoon. Quite a strong move that you're seeing across the markets, especially in the broader end of the markets, and especially when you're looking at the IT pack. Remember, the top laggard on Friday, today doing very well in the session. In terms of individual names that you're tracking, can't look beyond Reliance Industries, one of the top gainers on the Nifty, supporting the market very strongly, almost 2% higher, and this is post the strong commentary that came in the AGM. The other stocks are doing quite well. Kirloskar Oil Engine, and it's also taken up along with it the entire Kirloskar group names. The company has received a data center genset order, and JM Financial has gone ahead and upgraded this particular name higher by 20% today. Voltas, remember, some positive news flow coming in. The company has gone ahead and surpassed the 1 million AC unit sales as far as FY27 is concerned. The run rate much stronger versus FY26, and this is something that the street has liked. Power Mech Projects, quite a large order win coming in, over 100,000 crore order that the company has received from JSW Thermal. And the IT pack, again, the rebound over here has been quite good. After the strong down move that we saw on Friday, today we are recovering most or recouping most of the losses. Coforge, Tech Mahindra, Persistent, some of the top gainers today. In terms of stocks that are seeing quite a bit of selling pressure, Aavas Financials, the CFO as well as the CRO have both resigned with immediate effect. But the company gave a clarification, and that particular stock has rebounded quite smartly off the day's lowest point. Varun Beverages, one of the top laggards as far as the F&O space is concerned. Cummins India, again, some competition coming in from Kirloskar, and as well as this particular name seeing some amount of selling pressure in the F&O space. And Craftsman Automation on higher volumes, this particular stock too, seeing quite a bit of selling pressure, almost 5% low for Craftsman today.
Thank you so much for joining us with all those details, Vivek. So those are some buzzing stocks from the broader markets, but Reliance Industries is the big boy, which is buzzing on the upside. Big moves coming in here from that stock after the AGM announcements that the company made on Friday. Let's talk about what brokerages are making of this move. CLSA has an outperformed rating with a target price of 1,800 rupees a share on the stock. They spoke about how the company revealed AI as a core tool used by the company across its businesses. They will commission their first compute capacity by the end of 2026, and it also showcased a variety of Reliance's AI solutions that the company is using in other segments of the business as well. A foray into underground coal gasification. Remember, that's where Center has also announced a big outlay, with multi-sector exports were revealed as the new areas of growth, and a target to double EBITDA in the next 5 years was announced. So the target price that they have currently does not assign any value to AI, to new energy, to the FMCG media or new materials business. So there's definitely an upside that could be seen from here on. Nomura also has a buy rating with a target price of 1640. Jio listing is expected by the end of 2026. The valuation band is anywhere between 117 to 127 billion dollars. AI is the new growth engine for for Reliance from here on. Reliance Intelligence moves from plan to execution because the Jamnagar Sovereign AI Hub is targeting first 120 megawatt of capacity by end of of 26. New energy turns on. That's the term that they've used because now solar cells and modules which are already commissioned. First phase of the 40 gigawatt hour battery commissioning will be done this year itself, and New Energy will report its first revenue from FY27. That's a big move, and the $3 billion energy supply agreement with Samsung C&T will be an important update as well. Jefferies too has a buy rating, target price 1675. They reiterated some of the objectives they stated back in FY25, and FMCG investments are going to propel revenues to levels of 1 trillion by 2030, and recovery in retail growth could re-rate the stock from the current standard deviation levels that we are seeing. Lastly, Motilal Oswal, they also have a target price of 1655 with a buy rating. They like 5 major value creation pathways for Reliance Industries. How oil to chemicals is going to be the secular growth revenue stream creator. They are accelerating and commissioning early revenue generation in new energy. New energy is going to be one of the biggest growth pillars from here on. Reliance Intelligence into the most prolific growth platform. Largest FMCG company is what they expect RCPL to be, and $125 to $150 billion of exports by 2030. So big targets. Some of it what they announced in 2021 are coming to fruition now, and now there are fresh capex plans that the company has. So big announcements, and that is something that the street definitely likes.
Absolutely, big announcements, and that's something the street likes. As of now, the stock is up almost 2%. But Sonal, there's another stock you're tracking as well, NOSIL. That's up 20% almost in the trading session. Specific reasons for that?
So, the company had announced back in March that the Commerce Ministry had approved the initiation of anti-dumping duty on rubber accelerators from China, European Union and the US. Now, DGTR, that's the central government, has given the final approval for that. The final go-ahead has been received. So, in March as well, when this news had come by, the stock surged around 20% in that week itself. So, there's a follow-on buying that we are seeing. Why is that? Because all the products and geographies would be positive for the company. It will add around 40% to the top line. The company had indicated that they are expecting this final approval to come by in their Q4 results, and it has come by, and hence the sharp uptick in the stock. So again, this is not something which was not known. It was largely expected. So if it hadn't come, that would have been a bigger disappointment. But Street nevertheless likes this approval, which was largely anticipated.
Absolutely. Largely anticipated approval that's come in. Stock is up 19.9%, 20% approximately in trade. But let's move on and actually slip into a very short break. After the break, we'll come back and we'll focus on the affordable housing segment, with the sales in this segment having halved since 2019. To decode how the industry is navigating these challenges, we'll be joined by Prashant Thakur of Anorak as well as AM Karthik of ICRA. Stay tuned for that conversation.
Welcome back. You're still tuned into Halftime Report. It's time to focus on the affordable housing segment. The sales in the segment have been declining. The affordable housing launches have also declined in 2025. To understand what the industry is doing, how they're navigating the challenges, and what the real ground reality is, we are joined by Prashant Thakur, EDN Head Research and Advisory at Anirog. We also have with us M. Karthik, Senior VP and Co-Group Head Financial Sector Ratings at ICRA, to understand the lender's perspective as well. Gentlemen, good afternoon. Thank you so much for joining us. Prashant, let me start with you first up to understand what the ground reality is looking like. The conversations that we've had indicated that affordable housing is going through one of its worst phases when it comes to sales and launches. Can you give us a sense in terms of numbers? How has the performance been? And is it a builder-led problem or a buyer-led problem?
It's, no doubt that last 3 years we have seen a phenomenal growth in overall residential real estate, but it came at a cost of affordable housing. We saw a K-shaped recovery where, upper segment really did well, and affordable, which accounted for almost 45% in 2019. By the end of 2025, its share was, hardly 13 to 14%. So that's the sad story, that has played out, unfortunately. And, it's kind of more of a structural problem that I would say. The definition of affordable housing is kind of quite outdated in terms of today's context. And, affordable housing has a very limited capability to absorb shock. And what we have seen during these disruption, which was, caused by the war and then, various other disruption in terms of tariff, the ability to absorb cost was quite limited for this sector. And also after pandemic, what we have seen is that the preference for larger houses was quite significant, and that's where the developer focused on coming up with the launches. And a couple of factors which includes steep land prices that the developers acquired land at, the increase in construction cost, and also in the demand side, if you notice, the buyers of affordable segment comes from I would say unorganized sector. So for them, credit availability in this scenario becomes a challenge. So I would rather say, in spite of overall sector doing quite well, affordable has lagged because of structural challenges, and its ability to absorb shock is very limited.
Okay, structural challenges, and the segment is unable to absorb challenges and shocks that we're seeing. Mr. Karthik, let me come to you because your report says that there is moderation, but there's been decent growth. So it really doesn't match the commentary that you are giving and what Prashant is saying. Can you explain what your report suggests? Are you seeing green shoots? Is it in projects which does not match the definition, because that also is outdated? Give us more sense of what you are seeing on ground.
Sure, good afternoon. From an affordable housing entity perspective, right? So we are looking from financiers. They specifically focus on tier 2, tier 3 locations and so on. So the data that we see in general from a real estate point of view does not get into so much granularity. So from an affordable housing financial perspective, about 50 to 80% of their exposure is towards semi-urban and rural locations, right? Depending on the entity that we see, and a sizable portion of the funding, especially from an affordable housing entity perspective, about 40% of their funding goes towards self-construction. When I mean self-construction, is the borrower constructs his own house. He has a land, he just borrows and constructs the house. All of this does not get captured in the broader scheme of data, which comes out from a housing sales perspective, which is more organized, if I have to put it from a market perspective. So this is where the divergence comes in. We expect this segment to grow at about 20%, while you see the organized part of this business, which is somewhat primer kind of a product, you will see a much slower growth of about 12-13%. So the divergence is essentially the nature of product that is getting financed and the target borrower segment, which is the financials target vis-a-vis what is available at a headline, sales data level.
Karthik, I just want to understand, right? Are banks actually becoming more cautious also on the lending towards lower income borrowers? How is that also? If you could help us understand that also.
Banks have a larger play in the prime segment, which is 25-30 lakh average ticket size, And we have a clutch of housing finance companies which do operate in this space. When I say affordable housing entities, these are the entities who have an average ticket size of about 10-15 lakhs, right? So this forms about, close to about 15-18% of the total housing finance company market. When I say housing finance company, it's only the non-banks. In the broader scheme of the housing market, which is close to about 45 lakh crore, the affordable housing finance accounts for only about 1.5 lakh crores. So it's a very small segment at this point in time in how we define affordable housing. And the growth on this very small base has been quite high and quite healthy, at about 20-odd%.
Prashant, you spoke about it, that how affordable housing, the definition is quite outdated as well. And we understand that, industry also wants affordable housing, that cap to be raised also. Your thoughts on that, and, what will it mean also in terms of EBITDA margins? Are there normally affordable housing has thinner margins versus premium?
To answer the first part of your question, yes, the definition needs a reset. Today, affordable housing, as per definition, is still capped at 45 lakhs and below. And this definition was set, I think, almost 6-7 years back. And after that, we have seen a huge run up in the cost. And then, it doesn't make sense to get stuck at 45 lakhs. So in my opinion, and the recommendation that we have been making is that at least for tier 1 cities, the definition should be increased to at least 85 lakhs to 90 lakhs. So that would bring a lot of inventory under the fold of affordable housing and would classify for 1% GST and other SOPs that this sector would get. The second part of the question that you asked is whether the margins are thin. Yes, affordable housing operates on a wafer-thin margin, and that's where I say that the ability to absorb shock is also limited, and coupled with a very wafer-thin margin makes this product very unviable for developer in today's scenario, where your construction cost has gone up by 10-15%, land prices have shot up, and there is highly uncertain environment that they're operating in. Your approval takes almost 2 years to 2.5 years, depending on what kind of land parcel you're considering. So overall, if you think of these variables, in today's scenario, even if the developer wants to come up with affordable housing, he is constrained by a lot of structural challenges that he's facing.
Got it. So there are structural issues. First, the definition needs to see a change considering the issues that we're seeing right now, and wafer-thin margins for developers, that's not working for them. Karthik, from a lender's perspective, do you think it's profitable to lend to the affordable housing segment? How does it differ versus the developer's POV?
It's an extremely, a profitable business and a very attractive proposition from a lender's point of view. Typically, the yields in an affordable housing business is about 300-400 basis points higher than the prime segment. The only difference is that the cost which comes with it is also higher. And affordable housing entities make a fairly decent, their industry level ROAs are about 2.8-3%. While the conventional housing finance companies will operate at about 1.8 to 2% ROA. So it's an extremely profitable business to work with. Credit cost is something that we have not seen a full cycle, because that's the segment has grown so fast that the seasoning in this business has been low. They have tried to keep the credit costs very close to the prime segment. So that's something that we will watch out very closely, because the segment has not seen too much of cycles like a prime segment. But otherwise, it's a very, very profitable business from a lender's point of view. And that's why we see a lot of, housing finance companies getting into this segment. It's a different segment to operate with vis-a-vis their conventional prime, positions. So they try to operate it via, a separate business unit within the larger scheme of things. So it is a profitable business, but it requires a certain set of skills and also branch infrastructure and people infrastructure, which could be different and higher than a conventional housing finance.
Mm-hmm. Okay. Point taken there. Karthik as well as Prashant, thank you so much for joining us on the show this afternoon, helping us understand affordable housing. Where is that moving? Given the fall that we've seen over the years, what's happening there was important to understand. So thanks so much for that. A quick look in terms of what the market is doing right now, right? When you look at it, 24,120 around that mark, slight bit off the day's highest point, but yes, That's what we'll watch out for. Whether we manage to sustain this 0.5% of gain that we're seeing on the Nifty will be key to watch out for. IT is leading the charge today as well. But on that note, we're going to step into a very short break. After the break, we'll have Dharmesha of ICICI Securities who will join us to discuss some of his trading strategies as well as individual stocks. Stay tuned in. Welcome back to Halftime Report on CNBC TV 18. While the market is holding quite steady, we have some of the names that have perked up in trade in the last 30-odd minutes. Delivery, that's gone up almost 2% in the last 30-odd minutes. Then you have Sona BLW, that's also run up. Indegene is another name that's seen a bit of a spike up. So let's watch out for that. Delivery, like you can see, is trading at the day's highest point. Sona BLW moving back again from the lows and recovering in trade. So moving again towards the day's highest point, as well as Indegene also is seen a bit of a spike up. So that's what we'll keep an eye out on. But let's move on and also say that Carlyle may sell up to 10% stake in Vash Scientific with a slew of mutual funds and investors keen on the stake. Let's go across to Vivek to give us details on this one. Vivek, afternoon. What are you picking up here?
Well, good afternoon. The stock in focus, or the company in focus, is a company known as Vash Scientific. This particular company was earlier known as Sequence Scientific. What we understand from our sources is that Carlyle, which is now the promoter of the company with over a 60% stake, is looking to trim up to 10% stake, and this is likely to be done in the block deal process. What we understand is that the mandate has been launched and given to a couple of investment bankers, and a whole host of mutual funds as well as strategic investors have already evinced interest to go ahead and pick up the stake that Carlyle is looking to divest in this particular name. Now, remember, this particular company, Carlyle actually is the promoter right now. Carlyle's stake was actually at 53% when it acquired Sequence Scientific and then rose to 61% post the merger of VS Life Sciences and Sequence Scientific. So post the consolidation, Carlyle's stake rose to 61%. Now this particular stake is held via two investment arms, CA Harbour Investments and CA Hull Investments. CNBC TV 18 reached out to both Carlyle as well as VS Scientific. We are awaiting a response from both of them. Another important thing to note is that the company recently, last week, actually announced an acquisition. This is for an Italian company, and on June 25th is when they will be having an investor day, number one, to explain the rationale of that particular acquisition. And also we understand there will be quite a few investor queries that will be answered, as well as the company will lay the roadmap. This particular company, remember, is in the animal health business, and this particular stock, VS Scientific, is the name that we're talking about.
Okay, all right. Higher and trade at the day's high. Thank you so much, Vivek, for joining us with all those important details. With that, let's move on and get a technical check on the markets as well. Dharmesh Shah, Assistant VP, ICICI Securities, is joining us on the show now. Dharmesh, good afternoon. Thank you so much for joining us. Higher highs in the Nifty, do you think that's a possibility? What's the next important level?
So good afternoon, Sunal. Absolutely, I think so. The week started on a very strong positive note. We managed to hold on to the 24,000 levels on the weekly closing basis. Looks like, I think so, the way the technical setup seems to be forming, it looks like the market seems to be moving towards the 24,500 for the Nifty, with strong support placed at around 23,800, 900. Now coming to why we remain to be positive for the market. If you look at the market, the faster time of retracement, where the 11 days of the trading session decline get replaced in just 5 trading sessions, indicating a more of a structural turnaround happening for the market. Apart from that, if you look at the market breadth, I think so that is an important indicator to understand the sentiment of the market, where 65% of the stocks are now trading of total Sensex 500s are trading about 200-day moving average compared to 52% of the last week. So it seems to be, I think so there is an improvement in the market breadth. Also, crude oil prices, I think so, trading below the 200-day exponential moving average, indicating a further weakness towards 73, 72 levels, which augurs well for the Indian market. And last but not the least is the mid-caps, I think so the one. The mid-cap index has been on making a new high, and small-cap index has witnessed a falling trend line breakout, indicating, I think so, there's a lot of steam left out for the mid-caps and the small-caps in the days to come. So overall, I think so the outlook remains to be more positive. We believe Nifty should be looked for a target of around 24,500 is a likely target for the Nifty, keeping a stop loss of 23,800.
Dharmesh, could you give us your individual stock picks as well right now?
As far as stock picks are concerned, meaning I think so the way the hotel space is forming, I think so the way the stocks have seen a good correction in the last 6 months, I think so the risk reward looks more favorable for hotel space as a whole. Also, the geopolitical tensions getting eased off, I think so that could augurs well for the overall industry. So among the hotel space, Lemon Tree remains to be a topic at the current market price, where the stock has witnessed a falling trend line breakout, again supported by strong sets of volumes, and also the weekly chart forming higher top, higher bottom formation, indicating a target of around 128, giving a stop loss of 109. Apart from hotel space, I think so banking as a space looks more positive from the current levels. In Bank Nifty, I think so if you look at the ratio chart of Bank Nifty versus Nifty, it is on the verge of a consolidation breakout of last 5 years, indicating in the days to come, I think so Bank Nifty should relatively outperform Nifty, where Kotak Bank remains to be our topic. Now again, for Kotak Bank, again, if you look at the long-term chart since 2020, I think so the stock is holding on to the upward rising channel, indicating I think is a strong buying demand at the lower levels. Apart from that, 52-week EMA has been holding for the Kotak for a long period of time, indicating I think the structural changes happening for Kotak Bank at the current market price. So Kotak again, we look for a target of around 448, keeping a stop loss of 370. So Lemon Tree and Kotak Bank remains to be a top pick.
That point, Dharmesh, we do have some queries. Request your quick reply on these. Neeraj writes to us from Mumbai, holds 25 shares of MCX at 3,450 rupees, wants to know the long-term outlook on the stock. What do you make of this? Is it a buy if we read them from the charts level?
Sundar, if you look at the M6, I think the stock has seen a handsome gain in the last 6 months. I think so. What we see currently, I think the stock seems to be consolidating in this range of 30 to 40 to 3,500. We believe, I think so. For the way the stock has seen some bit of correction, we expect, I think so, stock to find a strong support at 2,700. But I would advise, I think so, on the bounce towards 3,100, 3,200, one should book the profit.
Dharmesh, we have one more query. Arunima Roy, who's writing to us from Kolkata, she holds 1,000 shares of Grow at a price of 188 rupees per share. Wants to know if she should continue to hold or sell this one. Currently making a little bit of profit on this one. What's your view on the technicals?
Yeah, if you look at the chart from the since there is not long-term history for the growth, but whatever history we have, I think so the way the stock seems to be behaving this current corrective phase, I think so 185, 86 remain to be the very strong support for growth. Again, I would say that for the stock to move on the high side, one should book profit around 210, 250.
Okay, all right. Take that point, Dharmesh. Thank you so much for joining us today. With that, it's time for a break now. In our commodities segment, Manisha Gupta will speak with Christophe Ruel of Crystal Energy to discuss the recent volatility in crude oil prices. Stay tuned for that conversation. Welcome back. You're still tuned into Halftime Report. Markets continue to trend higher, 24,122, but they have come off from the highs of the day. So that is something that we need to track, whether those highs of the day sustain or not. A lot of these chemical names, they are surging in trade today. We spoke about Novosil at the start of the show, but there's also Lakshmi Organic, which is up 8% as we speak. There's Clean Science Tech, which is up around 6% right now. Tirumalai Chemicals is the other one, which is surging up around 4.5%. India Pesticides is up 6.5%. Poshak is other stock, which is up around 5.5%. Other than that, if we talk about more stocks in focus, the Vedanta Group stocks, they are also higher in trade. But we do have Brent crude prices. They have come off sharply. There's so much to discuss in the commodity space as well. Manisha Gupta is joining us now, and she has a guest with us today. Manisha.
Thank you for that. Yes, Christophe Ruel is Global Advisor at Crystal Energy, joining us on the show now. Christophe, hi, thank you so much for joining in. And finally, it does look like that there is a peace agreement in place. There is a joint statement, and Iran seems to have in detail told us that, yes, there is a waiver when it comes to exports, even unfreezing of some accounts, and the blockade clearly seems to have opened. What is your latest reading and the way the crude oil prices have now reacted to?
I think you're right. It seems as if there's an agreement in place to be, for the most part, still negotiated, but it certainly looks better than it did just a week ago. But we should also be aware that we had several false starts, and this is not likely to be a smooth process. So I would expect, threats and maybe even short-term disturbances to continue occurring. But also the underlying trend now for weeks was one in which, frankly, the US did not have that much choice and had to settle with an agreement which seems to look pretty good for Iran. And that's the trend, and that will continue for energy markets, for the markets for fertilizers, for all the markets of trades blocked in the Strait of Hormuz. That's good news in the short term.
It is. And now the second step of this begins, because there's a 60-day to have a conversation to reach a final agreement. As you said, it's not going to be a smooth thing even.
It's not going to be a smooth journey. That's the only thing we can say with almost certainty, and probably I will be proven wrong. But I think what matters here is that there's two things. There's, of course, the political side, which is at the moment the dominant one, the general trend towards negotiations, towards trying to forge an agreement on both sides. The other is the medium-term implications this has for energy and others. And we have already seen, while the strait was closed, the first reactions on the supply side. Increased pipeline use through Saudi Arabia and through the UAE, trucking through Iraq, through Syria of Iraqi oil. And on the demand side, where we saw the shock being disseminated and refineries being very flexible and producing more of what was needed the most. And repercussions all across these global markets who have started to adapt pretty well. And I think it's a safe assumption that as a result of that shock, global energy markets will become a bit more diversified, a bit more resilient, and a bit less vulnerable. And when I say energy markets in this context, I mean the markets for fossil fuels, mostly for oil and for gas. So that is a positive development. And then if you think ahead a little bit, behind 2026, we have already the announcement in the UAE to make themselves independent from the Strait of Hormuz by building more pipelines. Together with their announcement of leaving OPEC, we still have a situation of general overproduction of oil in the world once the strait is open again. So looking into 2027, we should still see the severe crunch in oil prices, which most analysts expected for this year, but which hasn't happened for obvious reasons.
Oh, yes. Christoph, would you want to put numbers to that? What kind of a surplus are we looking at in 2027? And what's your crude price range going forward, let's say, for the rest of 2026?
Well, you look at it for 2026 until the February attack happened, and for the end of 2025, prices hovered around 60. Most analysts were surprised that they weren't lower. The explanation was mostly China. China jumped in and took the surplus of production over consumption and built up huge strategic storage. So for 27, if we assume again an overhang of oil production over oil consumption of 1 million barrel plus, that would indicate oil prices falling below the $60 frontier. But we cannot exclude that China or other countries now spend a lot of time rebuilding their inventories. So I would not go to these extremes, but certainly several percentages below where it is right now.
Christoph, even as we saw a total closure of Strait of Hormuz for almost 3 months, we did not see the crude oil prices go to 140. Yes, it did go to 120, but a couple of times, and it did not stay there. Would you say it has much to do with the kind of advancement into EVs and the fact, as you mentioned, that many of the producers are now looking at pipelines and alternate routes as well?
It was a very interesting situation because it reflected that the oil prices have changed dramatically since the last crisis in the 70s. And the most important of these changes is that the amount of oil we need to produce our GDP, the things we all enjoy, has decreased by 60% or so over the last 50 years. So we need a lot less oil to produce $1 of global GDP. And what this means is that there is a lot of runway for prices to go up in case of crisis before we have some dramatic impact on demand. Now, what it also means is that over these 50 years, in most of this oil which has been replaced comes from easy areas where it could be substituted before. And we don't have oil and electricity anymore. We have a lot more EVs, things like that. It means that if there is a disruption, it could hit oil in very strategic locations, which is bearing a lot of economic load. For example, oil used in transport, oil used in shipping. If that were to be taken off the market, there would be repercussions of an uncontrollable nature through the global economy. But until it gets to this point, it takes much longer. It takes much higher prices than it did some years ago. And on the other side, we have, of course, this the situation which you described, that there's a lot of measures on the demand side which have already come into place. One of them is EVs, which continue this trend of losing less oil. So it hasn't happened that oil was squeezed so badly that prices went into these regions of above 300, which would have had to be reached to be comparable to the 70s. But we may look in a few years' time, indeed, we may look in the rear-view mirror and say, okay, 2025 was probably the year in which oil consumption peaked in the world, because these efficiency improvements are likely to continue. And it's already growing only in a few regions, India, China, the Middle East, that's it. And if these regions are now, as a result of this shock, becoming more efficient, we may have seen peak oil demand already without realizing it. May have. It's a big if.
All right. Christoph, also, as we move ahead from here, go forward from here, as you mentioned, China is an important one to watch out for. The only reason that we've seen the crude oil prices decline quite sharply in May and June is because China withdrew, or the demand fell by 3.5 million barrels per day. But China has this thing about coming back into the markets when the prices are low. And if we are trading below 80, with an expectation that we could be looking at prices at 75 or below, would you see China come back into the markets? And at what level, what price do you see China come back?
We think it will come back. I think the answer is that China has played this extremely well. They have used the prices of low prices. They've used the disruption from Russian oil coming into the market to rebuild strategic reserves, whereas other countries like the US have used it to keep their gasoline prices low, to deplete their strategic reserves. So China was much smarter there on a macro level, also under much less political pressure, obviously. But what we don't know, what nobody knows, is how big actually their storage capacity is. So I would expect them to come back if oil prices go low to refill that strategic storage. But how long that can continue for, nobody can tell you except the Chinese government. And one of the big differences is in the US, you can read the numbers and in China, you cannot.
Absolutely. But the headline clearly from Christoph is that we're looking at 1 million barrels per day of excess supply next year, and the prices can go to 60, around that. So
how times change, right?
Oh, yes. We were talking about hundreds, and here we are talking about 60 yet again.
Exactly. Okay, all right, Christoph, thank you so much for those insights. Thank you, Manisha, for taking us through that conversation. That's all about the commodity markets. For now, we'll slip into a short break. Up next, in our Movers and Shakers segment, we'll focus on Kirloskar Oil, there's Texmaco, RVNL, Cipla. There's a long list. You don't want to miss that. Welcome back. You're still tuned into Halftime Report, and it's time for our Movers and Shakers segment where we track a whole host of stocks buzzing in trade. First up, Winnie, Kirloskar Oil, 20% higher. Tell us what's happening here.
Hi. So, the word data center comes in and the stock starts moving, right? So finally, they've gotten a big order, very big order. They've secured a 192 megawatt of order, which is 96 units of 2,500 kVA. That's a unit measured, kilowatt, right? You use to measure for a data center, hyperscaler data center. This is from Hypernext, and this is for their OptiPrime dual core power systems. Now, obviously, this is a very big positive. Because of this, you've seen certain upgrades that came in also for the stock. Now, JM Financials, they've upgraded the stock to a buy from previous ad rating. They've increased the target price to 2,430 rupees per share. Obviously, this is a major breakthrough order in the data center space with a space where it had very minimal presence. Plus, it was more known for, lower horsepower, medium horsepower size of sets that would come in. Now, this is an entry into high horsepower or more production onto the high horsepower side, which is a positive for them, or which even investors are liking it. Now, the company is obviously, looking at these engines of high horsepower as well. They've already achieved the 270 kilowatt also of engines for data centers previously as well. So it'll be interesting to see from here on where they're going to be headed. Even Motilal Oswal continues to maintain their buy rating. They revised the target price upwards as well to 2,350 rupees from earlier 1,900 rupees per share. And clearly, a major breakthrough. The data center side is something that's keeping the stock abuzz. But let's move on and talk about some other order wins as well. And this is from the railway side. We have Devyani to take us through that. Devyani, over to you.
Well, both railway stocks doing well in trade today on the back of strong order wins. Now, Texmaco is first. They received an order worth 253 crores from JSW South Rail Logistics for the manufacture and supply of rakes and wagons. They received two other orders worth roughly around 11.5 crores from Odisha Power Transmission Corporation for the construction of the second line circuit SC line on DC tower on turnkey contract basis, with an order book now sitting at around 5,400 crores at the end of FY26. Now, this continues a strong trend of non-Indian Railways based orders for the company. Now, next up is RVNL. Now, they received an order worth roughly around 2977 crores from NMDC for setting up of buffer stockpiles and blending yard of roughly around 10 million tons per annum handling capacity at Vizag. Now, they continue to build on a strong order book of roughly around 99,292 crores at the end of FY26. So both doing very well in trade on the back of strong order wins.
They are. Thank you for bringing us all those details, Devyani. But we do have Cipla also, which is doing well in trade, 4.5% higher on that one. There's a positive Citi note. Winnie, tell us more.
Yeah, there's a note that's coming from Citi, and this one is a 90-day positive catalyst watch that they're keeping on Cipla, right? Why? What are the triggers that they're highlighting? Near-term US pipeline. So that is the generic Flovent approval as well as generic Ventolin approval, which are launches are there, which investors and everyone's confident that this will lead to a better profile for the company on the complex drug side as well. Then you have the expected support that comes in for US revenues because of these two as well. So a rebound at the US business. India business, they highlight that is also doing well. The recovery is coming in well in the respiratory segment for the company. So that is also a positive. Plus, there's an Indore facility of theirs that is lined up for a re-inspection anytime soon. And a US FDA clearance on that one could be a near-term catalyst for the company. So a 90-day positive watch is what they're keeping an eye out on. They said that the earnings have bottomed out in the last quarter from the Revlimid, generic Revlimid cliff, right? We've seen those numbers decline. So now that has bottomed out. And again, an up move is what we could see. Valuations at 25 times for FY27 is what they're saying is a risk-reward favorable for the company, and that is why the stock is buzzing in trade. 90-day positive catalyst watch for Cipla from Citi. On that note, we're going to step into a very short break. After the break, we'll get you more on markets and more stock-specific action. Stay tuned.
Welcome back. You're still tuned into Halftime Report. The markets have come off slightly from the highs. There's nothing very worrying. But we do have some of these names which are at the day's low in the Nifty pack. ITC, for instance, has come off from the highs, is actually at the day's low at this point in time. We do have L&T also, which is off the highs of the day. HUL, Nestle, Asian Paints, a lot of these consumption names are seeing lows of the day as we speak. There's also Wipro, which is not doing so well, so it has come off from the highs again. In the broader markets, though, the mid-cap index, where the advance decline ratio is in favor of the advances right now, we do have these Vedanta group stocks which are surging. So Vedanta Oil and Gas, which is logged in upper circuit. Vedanta Power is also logged in upper circuit. We do have PhysicsWallah, which is up 5.2% in trade as we speak. Imagica World is the other stock which is up 5.5%. There is Pearl Global Industries, Acme Solar. So particular sectors in the broader markets which are doing well, and we'll keep tracking that for you. The markets are in an up move today, but with that, it's a wrap on this edition of Halftime Report. Business Lunch will take all the action ahead.
Stocks climb led by heavyweights after the US and Iran make progress in talks. IT services and oil and gas stocks lead the charge. Reliance Industries' deployment of AI across businesses and the scaling up of its new growth engines, deep tech, new energy and FMCG, along with the likely $4 billion Jio Platforms IPO, gets a big thumbs up from analysts. Voltas races past the 1 million AC sales mark in FY27 on the back of the heatwave and a delayed monsoon. LG Electronics also flags a good summer season for air conditioners despite a 10 to 12% price hike. The stocks of AC makers perk up. The number of oil tankers sailing through the Strait of Hormuz sees a distinct pickup even as the US and Iran announce a 60-day roadmap for a deal after talks in Switzerland. Brent trades below $79 a barrel mark. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Hormuz Fatakia. Well, it's a good day for the market so far, although, well, the indices are slightly off the highs of the day, but we are still holding on to levels of 24,100 as of now. The 24,200 is turning out to be a bit of a barrier yet again for the index, but no reasons to complain after the recovery that we made from the lows on Friday. So the good thing is the fact that we are holding on to A, 24,000, and B, that 23,800, 23,900 zone on the downside proved to be a very strong support on Friday's trading session. So that's something that the bulls would appreciate. There was a bit of an intraday dip on the Nifty Bank earlier in the day. That dip had gotten bought into, but since then too, the index has continued to remain around similar levels. There is no significant up move after that dip was bought into at around 9:30ish. 58, around about a 300 point trading range for the Nifty Bank today. It's narrower than most days, and after it took a bit of a breather on Friday, it's still at the higher end of the range of 57,000 to 58,000. A lot of the broader market names are the ones where there is action though. There's a lot of stock-specific activity as we speak. Look at the Kirloskar group companies, all of them. Kirloskar Oil Engines, Kirloskar Brothers, Kirloskar Pneumatic, all of them seeing gains of anywhere between 10% to as high as 20%. And all of them are seeing very healthy gains today. Nosil is another one. That's another stock that's a newsmaker after that anti-dumping duty imposition on a very key material that it manufactures, a 20% circuit here as well. Well, of course, there are names like Subros, EMS, Igarashi Motors, all of these small cap names. And there are at least 20 small cap names that are trading with gains of 10% or more. But since we were on the subject of banks, the bankers are eagerly awaiting an FAQ on the RBI's FCNRB scheme to go ahead in full steam. Currently, they still have some unanswered questions on recycling the old dollar deposits and on the extent of leverage that they can provide. Lata is joining in on what more is worrying bankers about this FCNR scheme. Lata.
The bankers were expecting an FAQ last week, and up until Friday evening, there was a hope. A bit of a disappointment that it didn't come. This is regarding the scheme that was announced on June 8th, that they can raise FCNR deposits, which will be hedged by the Reserve Bank. The principal will be hedged by the Reserve Bank. The expectation now, of course, is that the FAQ comes this week, probably even today, is what they are hoping. Now, what do their doubts include? One is whether, old NRE deposits can be broken and recycled into new. Now, actually, the Reserve Bank almost explicitly forbade that because they want fresh dollars. But what the bankers worry is that an NRE depositor who's existing and is getting 5% and sees that another scheme is giving him much better will voluntarily come and break. So what do they do about it? Under the present scheme, they have to just let that person take away the money and maybe go and deposit elsewhere. So they're wondering if there can be a way out. I mean, it's a reality that we have to contend with. The other problem is about self-leverage. It's not very clear whether they can provide leverage to their own customers. Someone comes, raises a deposit, and they give him 5x, 10x loans. They're not very clear whether they can do self-leverage or only give leverage to a customer of another bank. There are some confusion about that and a whole host of other minor technicalities which they want ironed out in terms of hedging the interest which they provide and how that should be hedged, whether it should be hedged at all. All those are doubts which the bankers want answers for, hoping, of course, that they will get some answers in the FAQ today or sometime this week.
Lata, thank you for putting that together for us. Still awaiting that FAQ. Now, Vahan data for the month of June so far is suggesting that strong auto sales continue in that traction, especially in the electric vehicle segment. Sudarshan is here with more details on this. Sudarshan.
So it's been a good last few months for as far as the auto registration data is concerned, and Vahan registration data is indicating another strong month of June 2026. So far, the growth of the entire segment is likely to be more than 20%. The outperformance is expected to come from passenger vehicle followed by two-wheelers. One segment that continues to do well is electric vehicle segment, and we might see a growth of almost 30 to 40%. So first, talking about the registration growth for the entire segment, total growth is seen at 20%, followed by two-wheelers at 19%. Passenger vehicle, as I told you, it will continue to outperform, and growth is seen at more than 20%. For commercial vehicles, growth can be 20%, while M&HCVs may underperform the industry, and growth is seen around 14 to 15%, and three-wheeler growth is expected to be 16%. Now coming to the company-wise, in two-wheeler segment, two companies that are expected to gain market share are TVS and Royal Enfield, while Hero MotoCorp can report a healthy set of growth. Even it can be the same for Bajaj Auto. Now coming to electric two-wheelers, it can be another strong month as far as Ather Energy is concerned, and for Ola Electric, it would be a fourth straight month where their volumes can be of more than 10,000 units. In passenger vehicle segment, two companies that are gaining market share most are Maruti and Tata Motors passenger vehicle. For M&M Auto, it can be a very strong growth in this month too, while Hyundai can lose market share. In commercial vehicle, Ashok Leyland is expected to lose market share, while Tata Motors commercial vehicle is expected to report a healthy set of numbers, and even on market share front, it continues to gain market share. In the tractor segment, there is a mixed trend. We are not seeing an impact of delayed monsoon, and the outperformance is expected to come from Mahindra and Mahindra tractor segment. Now coming to the segment which is a standout and continues to do well is electric vehicle segment. Now volumes are of, we have taken off two, battery operated vehicle and pure electric vehicle. So in the last 2 months, in April and May, growth was more than 40%. It was in the range of 40 to 50%. Even in the month of June 2026, volumes are already higher than what we had seen in the entire month of June 2025. So if you talk about April 2026, growth was 44% and total volumes were more than 2.5 lakh units. In May, growth was 48%. Volumes had increased to 2.76, and so far in June, volumes are already more than 2 lakh units. So it clearly tells you that one segment, electric vehicle, continues to do well. We still have 8 to 10 days to go. Let's see how the trend pans out.
And we'll keep an eye out on that for the next 10 days of the month. Sudarshan, thank you for that update there. On to news from West Asia. Then mediators, Pakistan and Qatar, say that the US and Iran have made encouraging progress on the first day of the high-level talks in Switzerland. They also said that the US and Iran have agreed on a roadmap for a final deal to be reached within 60 days, as well as a de-confliction cell to ensure an end to military operations in Lebanon. Now, CNBC's Dan Murphy has more with the latest. Dan.
First round of direct talks between the United States and Iran has now wrapped, and coming out of this, the two sides say they have a roadmap to move forward over the coming months. Now, according to a joint statement from mediators Qatar and Pakistan, negotiators at this Lake Lucerne summit agreed to try and reach a final deal within 60 days and a framework to end the war that is now in its fourth month. The mediators basically describing the atmosphere as positive and constructive. They say the two sides have also set up high-level committees to oversee the process, plus several working groups on things like the nuclear file, on sanctions, and of course on monitoring as well. Crucially for the oil market, the statement also says a communication line has been set up between parties aimed at the safe passage for commercial vessels through the Strait of Hormuz. And Iran's foreign ministry also says negotiators agreed on a mechanism to guarantee that passage. Now, of course, the devil is in the details here. The exact mechanism itself, the details of that mechanism, is still unclear at this point, but the market has certainly taken this in its stride, with oil prices cooling off in the last couple of hours. And that really matters because, of course, Iran declared the Strait of Hormuz closed again on Saturday over that series of Israeli strikes in Lebanon. And the shipping numbers from Kepler that we've been following show just 5 vessels actually transited the strait on Sunday. That was down from around 26 the day before. So this on again, off again, open and then closed situation around the Strait of Hormuz cannot be the status quo. And it seems as if the US and Iran are attempting to work out ways to keep oil flowing again and to keep Hormuz open. Here's the Energy Secretary Chris Wright speaking on Fox News Sunday.
In the last 24 hours, or yesterday, 67 ships went through the Strait of Hormuz. The day before, it was 55 ships. So, and in terms of oil and oil products, about equal to where we were before the conflict. So yeah, traffic is flowing through the straits quite nicely. Now, that's because of a U.S. military presence. Iranians still have not demined the central shipping channel, but the U.S. opened a separate channel down south, and we've been escorting ships through that for several weeks now, and at very high levels today.
Secretary Wright on Fox News Sunday there. And crucially on the issue of Lebanon as well, the statement also says that parties will create a deconfliction cell with Lebanon and the mediators to hold the ceasefire there. That's really important as well. Iran's Foreign Minister Abbas Araghchi calls that the first real test of whether any of this will hold. And of course, I've also spoken with analysts this morning who have suggested that the situation between Israel and Lebanon right now really is the wild card here. If Israel decides to keep up its strikes against Hezbollah in Lebanon, then perhaps this could derail the entire peace process. So the United States, of course, working to ensure that Israel's needs are also met and that the Israelis are on side with this Iran diplomatic path.
Dan Murphy there with the latest updates from West Asia. Take a short break. On the other side, Jio Platforms has filed for what's likely to be the largest ever IPO in India. We'll get you more on the other side. Stay tuned. Welcome back. Now, from disrupting India's telecom market in 2016 to becoming a digital giant, Jio is now readying for its stock market debut. Jio Platforms has filed for what's likely to be the largest ever IPO of around $4 billion. Rima is here to tell us how this listing is set to be a defining moment for India's public markets and digital economy.
Nearly 10 years after its commercial launch, Jio is finally headed to the public markets. Reliance Jio commercially launched on 5th September 2016. Free SIM cards, unlimited voice calls, free data under its introductory offer. This launch transformed India's telecom landscape almost overnight. It triggered an unprecedented price war and accelerated the country's digital adoption. At Reliance Industries' latest AGM, Mukesh Ambani has now announced that Jio Platforms has filed the draft papers with SEBI for an IPO, and it marks a major milestone in the company's journey. Now, Jio's entry honestly reshaped the entire industry. Reliance Communications exited, SL went bankrupt, Vodafone and Idea Cellular merged. In 2020, Jio Platforms raised more than $20 billion from 13 marquee investors. We're talking about Meta, Google, KKR, Silver Lake, General Atlantic, amongst others. It was valued at $58 to $65 billion at that time. Today, investor expectations are for $110 to $120 billion in terms of valuation. Jio has gone from a disruptive telecom challenger in 2016 to India's largest digital platform with more than 500 million subscribers. And this IPO marks the culmination of what is one of India's most consequential business transformation stories. But now more details on the IPO. Well, it's going to be a pure fresh issue, 27 crore shares on offer, 2.9% equity dilution, no offer for sale, which means no existing shareholder, promoter or other investors like Meta, Google will be selling any stake. The primary objective of this issue is to pare debt. So they want to bring down their debt by more than 27,000 crore rupees. Now, ahead of the IPO, Jio's numbers show a company which is entering cash generation. Revenues stand at 1.46 lakh crore, having jumped 15% last year. Net profit at 30,000 crore, again a jump of 15%. Subscriber numbers stand at 525 million as of last year, with an average revenue per user at 214. But I think the number you need to focus on is the EBITDA less capex. Now that has jumped from 1450 crore in FY24 to 20,000 crore in FY25 to 42,000 crore in FY26. So from FY24 to FY26, we're talking about a jump of 29x. Now, what does this number signal? Well, it signals perhaps that the company's heavy capex days on account of 5G network build-out may have been behind the company. It may have peaked, and now the company is entering into a cash generation phase. Now, you know, for most investors today, you have limited telecom options. You've got a Bharti Airtel, you've got a Vodafone Idea. Now, Bharti Airtel is an investor favorite. It's a premium play, higher ARPUs, higher margins. You get the Africa and Indus Stars optionality. Now, where Jio scales or does better than Bharti Airtel is on customer volumes. Jio Platforms' active subscribers are more than that of Bharti Airtel's India subscribers. But Jio is more than just, mobile subscribers. It offers a play on India's digital economy. It's got mobile, home, broadband, enterprise, and AI all bundled into one. And honestly, it's one of the most awaited IPOs and the first IPO from the Reliance Group in nearly 20 years.
Rima, thank you for putting that together for us. Now, having set up over 3 million outlets in the last 3 years and growing to 22,000 crores in revenue in just 3 years, Reliance Consumer Products has become India's fastest growing consumer company. Mangalam puts that into perspective. Mangalam.
Dare to dream and care to execute. That's exactly what Reliance does. In an AGM where a lot of the spotlight went away into AI, new energy businesses, and the Geo IPO, the footnote, and which was actually, could be a big multi-billion-dollar opportunity for them, is the FMCG play. Reliance Retail has now become an FMCG giant. Remember, it's just been about 3 years since its inception. In FY26, Reliance Consumer Products Limited, which is their retail business, actually crossed gross revenues of 22,000 crores. This number was 11,450 crores in the previous financial year. So it's a near 2x jump that we've seen. So no company in the consumer space has actually crossed 20,000 in such a short span of time, and with the pace that Reliance has done. So that's exactly what has happened out here. 22,000 crore in gross revenue, 2x growth, fastest in the industry, and also the highest in the industry that we're looking at. And it's not just that, look at some of the brands that Reliance has actually grown in its consumer products business. Nearly 5,000 crores coming in for Campa. In some of the important markets, it's also crossed double digit in market share. It's among the top 3, top 4 aerated beverages players in the country. And then Independence, the food brand, also has done about 2,600 crore in gross revenue. So all of this, while reaching 3 million plus outlets and 5,000 plus distributors, is no mean feat. And if you compare Reliance's gross revenue to all the other companies, while all of them, the reported numbers are net numbers, so you have to take that into account. But even then, it is fairly admirable. 22,000 crore rupees stands in line with Nestle's 23,000 crore rupees, above Tata Consumer's 20,000 crore rupees, or even Britannia's 19,150 crores. And remember, these are extremely old companies in India for the longest time. If you compare it to some of the other players like Godrej Consumer, Marico, Dabur, this number looks like it is nearly 2x of that. And imagine a company doing that within just 3 years of its existence, organically and by acquiring brands on a gross revenue basis, 22,000 crores. But they're not stopping here. The near-term ambition is to go to 1 lakh crore in revenue by FY30 and become one of India's largest FMCG companies. Now, if you're looking at the multiples at which all the FMCG companies trade, and at 1 lakh crore revenue, this could definitely be the next multi-billion-dollar opportunity. And that's exactly what Mukesh Ambani said.
That's what they are aiming for. Mangalam, thank you for summarizing that for us on Reliance Consumer Products. A standard disclaimer playing out on your screens as well. Take a short break. Back with more news and updates on the other side. Stay tuned. Welcome back. On to some other important developments then. UK Prime Minister Keir Starmer is facing growing pressure over his political future after a decisive parliamentary victory by his rival Andy Burnham triggered fresh calls within the Labour Party for him to step aside. Starmer is now considering whether to fight a leadership challenge or set out a timeline for his departure amidst his plunging approval ratings. Adding to the pressure, US President Donald Trump has also predicted that Starmer will resign as Prime Minister. And the FIFA World Cup delivered another action-packed day of fixtures. Spain were in a commanding form, putting 4 goals past Saudi Arabia with teenage sensation Lamine Yamal opening his World Cup account. Uruguay were made to work hard by Cape Verde, with the World Cup debutants pulling level twice to share the spoils at 2 each. Now in Group G, Egypt put 3 goals past New Zealand to strengthen their knockout hopes, while Belgium and Iran cancelled each other out in a goalless draw. Matches on the cards today include Argentina taking on Austria, France taking on Iraq, Norway meeting Senegal, and Jordan squaring off against Algeria. And with that, we take your leave on this edition of a Business Lunch. The market still holding on to gains of around 100 points, around that 24,100 mark on the Nifty. From me and the team, thank you for watching. Midcap Radar on the other side.
Good afternoon. Welcome to Midcap Radar live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Vivek Iyer. Vivek, good afternoon. 24,100 mark. We are comfortably above that for now. A wee bit of downtick from the highs of the day, but nothing major to worry about. The advance decline ratio in favor of advances. So it started on the front foot as far as Monday is concerned.
Right. Good afternoon, Sonal. Absolutely right. And the big fall that we saw in IT has been reversed to a certain extent today, and that's aiding the market recovery. And of course, big boy Reliance, after the AGM seeing quite a strong uptick, that too is helping the markets move higher. But a lot lined up on the show, an important corporate conversation as well. So let's start off with the top headlines. Falling crude prices, risk on mood. Nifty holds about 24,100 as small and mid caps march higher alongside frontline indices.
One order, one new market, and potentially a whole new growth trajectory for Kirloskar Oil. A marquee 192 megawatt data center order keeps stock locked in 20% upper circuit. Street takes note. JM Financial and Motilal Oswal lineup upgrades on the counter.
India's largest rubber chemicals maker, Nosil's biggest regulatory overhang, may be nearing a resolution with anti-dumping duties on key rubber chemicals receiving government backing. Stock skyrockets.
Voltas kickstarts FY27 in style. Summer heat translates into record sales. Company sells over 1 million air conditioner units within a single quarter.
Fresh wins in the thermal power segment sent shares of power mech projects higher. With nearly 16,000 crores worth of orders in the hand, the company has now added another marquee project worth over 1,000 crores from JSW Thermal Energy. The order reinforces revenue and execution visibility over the next few years.
Okay, all right, those are the top headlines that we are tracking. The big move on crude oil prices and the mid caps as well is something which is keeping markets afloat. IT also continues to do well, but a lot of action in the broader markets. Let's go across to our colleague Upasna, who's here to take us through the mid caps that are moving around in trade. Upasna.
Well, firstly, let me address the mid-cap index. It's up nearly about 0.3% as we speak. So let us focus on the top gainers in today's trading session. First up, placing the light on NIIT Limited continues to remain in focus. Was in focus last week as well. The stock is up nearly about 12%. And if I look at the 1 month move, it's up nearly about 55%. Next up is EPAC Durable, certainly in focus as company's key client, that is Voltas, has reported more than 1 million sales unit in this financial year. That is in just about 3 months. So certainly the stock is up on back of that, up nearly about 13%, and the volumes are also quite high. They are up nearly about 27 times the weekly average. Nosil also in focus, up nearly about 20%, is also one of the key volume buzzers today. Volumes up 98 times the weekly average. And now moving on to New India Assurance, the run-up continues this week as well. Was in focus last week also. The stock is up nearly about 5%. And lastly, PP Fintech, that is also seeing a dash of green on the counter. So next up, let us look at some of the fertilizer stocks. They are also seeing huge gains today onwards. GNFC and FACT, both of these counters are up nearly about 2 to 4% as we speak. And now on the flip side, let us place focus on some of the top losers in today's trading session. Topping the list is Bazaar Style Retail is down nearly about 5%. Craftsman Automation, Saskin Tech and Rosari Bio, all these counters are seeing deep cuts of nearly about 5%. So all in all, these are the stocks that are on our radar today on the back of this.
Okay, all right, take that point, Upasna. But let's talk about Vash Scientific. Vivek, you have a story here, a big stake sale.
That's right, a big stake sale, a big block deal in the offing over here. Now, Vash, Scientific, now this particular name, viewers will probably know that this particular stock was earlier known as Sequence Scientific. A whole host of corporate developments, corporate actions has happened in this particular company. And right now, the current promoter is a private equity, which is Carlyle. So what we understand from our sources is that Carlyle is looking to sell close to 10% stake in the company. We understand that there has been quite a bit of strong interest coming in from a clutch of mutual funds as well as strategic investors who are keen to acquire stake. Now remember, Carlyle now owns over 61.3% stake, and this particular stake, number one, came in from Carlyle's 53% stake that they had post the acquisition of Sequence Scientific, post which the company went ahead and brought in Viyash Life Sciences into its fold. After that, you did see Carlyle's stake go up to 61%. The stake is held through two arms, CA Harbour Investments as well as CA Hull Investments. We've reached out to both Carlyle as well as Vash Scientific for comments. We are awaiting a response from both of these names. But interestingly, one thing that we need to keep an eye on June 25th, the company has held an investor day. This is, number one, to address a recent acquisition that they made from an Italy-based company. The company is present in the animal healthcare space. So on that particular day, what is the growth trajectory forward is something that the street will keep an eye out on.
Okay, interesting. We'll keep tracking those meeting updates and, of course, what Vivek brought for us as well. That's about Vash Scientific. But let's move forward and welcome Ruchit Jain from Motilal Oswal Financial Services for a technical check. Ruchit, what is the next important level on the Nifty that we are tracking?
Yeah, hi, very good afternoon. If you look at recently last 5 trading sessions, Nifty has consolidated within the range of, in fact, within the band of that 50 EMA and 100 EMA. So 24,200 is the 100 EMA hurdle, and on the low side, 23,800 is the 50 EMA support. So it's just a time-wise correction within this range. But overall, I think looking at the broader market's momentum where there's a good stock-specific buying interest, ultimately we should see a breakout above this 24,200 soon. And once that level is taken out, the market should head higher towards 24,500 where the previous swing high resistance are there. So till 23,800 is intact, the biasness remains positive. 24,200 is initial resistance, above which 24,500 should be seen.
Okay, Richard, thank you so much for sharing your levels and the Nifty. But in terms of individual stocks, what is it that you're tracking today?
Yeah, so a couple of recommendations on the long side. Overall, we are looking at stocks which are showing a relative outperformance in such market. Laurus Labs is looking good over here. If you look at the entire Nifty, pharma space is in momentum today. In fact, many pharma names have witnessed good volumes also along with the price up move. Laurus has been a relative outperformer within this over last couple of months. So this is just a resumption of the uptrend, it seems. So short-term traders can go long in Laurus over here with stop loss below 1380 for potential targets around 1520. And Delivery is one stock which is looking quite interesting. Well, not been in favor of late, but a long consolidation phase has been seen in the stock. It's on the verge of a breakout of that consolidation. If you look at today's volume, it's much higher than the daily average what we have seen. So we are preempting a bit, the breakout a bit because of the volumes that we have seen. So Delivery one can go long at over here for the short term with stop loss below 460 for potential targets around 525.
Okay, take that point, Richard. Thank you so much for joining us. So that's all about the technical bets and important levels on the Nifty. We'll slip into a short break. Up next, we connect with the top management of Power Ricard to discuss their FY27 outlook, more on the data center and generator set business as well. Stay tuned.
Welcome back to Midcap Radar. Well, let's now turn our focus to Powerika and Integrated Power Solutions provider best known for its diesel generator sets. The company also provides critical infrastructure support to the fast-growing data center industry. In fact, a recent Prabhudas Leeladhar capital note suggests data center-related revenue, which accounts for 17 to 18% of sales, is expected to grow faster than the core business over the medium term. To discuss this and more, let's welcome Pradeep Gupta, Whole-Time Director of Powerika, and Ritesh Kumar Agarwal, Group CFO of Powerika. Thank you so much, gentlemen, for joining us. First up, Mr. Gupta, let me come across to you. Like we just said at the start, 17 to 18% of your total business currently is coming in, from that particular segment, that is the entire data center business. Today, we did see, one of the companies, Kirloskar Oil Engines, get an order in that particular space, stock higher by 20%. So a lot of excitement over there. Where can we see, as a pie of an overall revenue, where can we see you growing, and what will it be as far as FY27 is concerned?
So, Government of India has given a tax holiday for 25 years for data center. And you know that broader India growth story is intact, and GDP growth and power demand is growing 6 to 7%. And the long-term power demand and the backup power solution is also healthy, driven by manufacturing, infrastructure, and data center and commercials. The data center is coming rapid growth and main demand in the backup power solution, because all the data centers needs 100% or maybe two-tier backup power as a backup power for the data center demand. So the most of the larger capacities along with the value-added solutions are coming with the data centers. We are also having the long-term order booking in the data centers, and the demand is very bullish. As per the industry reports, although the normal backup power DG set demand is 10 to 11% or 12% in the manufacturing and in the real estate, but the data centers power demand is 20 to 25%. And with the artificial intelligence, with the digital India, with the data center, the demand is growing at 25%. And it is only the beginning at this moment. It is growing at a faster speed. So we are very bullish about the data center demand, and we have a very strong pipeline of the order booking for the data center.
Okay, so Mr. Agarwal, let me come to you for this. 17 to 18% of your total revenues right now, that's what coming from data centers. What will it look like, say, 4 to 5 years down the line? How do margins work here? I'm just trying to understand the data center business, because a lot of companies are now coming to fore and saying they've won this order. How does it work for a company like yourself? Is it margin accretive? What kind of capex do you have to put? Just explain us the economics of a data center business that would work for you, and how is it very profitable for a company like yourself?
Absolutely. So thank you for CNBC. From a business side, if we see from data center, it is Powerika as the early mover in terms of from 2022 when the data center was started. So we get an advantage of becoming a company who actually oversees the complete data center installation. So it's not only the selling, it is the completely the engineering services. So from a down the line 5 year, as you mentioned, about 17 to 18% of the overall business that we have a data center, including the engineering service, we see there is a healthy growth. The order book is very strong per se, from whether it is from a service as well as from the sales side. So down the line 5 year, as we see from a growth from 20-25% CAGR, we see very healthy percentage that is going to come out in and down the line 5 year. That's what I can say.
From healthy? Margin, yes. What is healthy?
Very healthy.
No, can you define what do you mean by very healthy, which will be high double digits? What kind of growth are you looking at?
So what we are saying, 17 to 18%. 3 years back it was 13%. So which is growing faster. The revenue contribution, it is going very faster. Quantifying a number would not be easier, because earlier when we used to see the growth of a data center, which used to be 15% or so, now that demand has suddenly surged. So mentioning any figure may not be appropriate at the moment. We need to watch out for. We believe that will be very high in terms of a percentage, which is going to come up maybe down the line 5 year. Margin, this has this has a good margin, I would say. It's a similar to what we generate the margin in other business. Definitely, when you have a bulk deal, then you might do away. But with the engineering service, we secure the same amount of a margin as we generate in the other business.
So, Mr. Agrawal, is it an annuity business on the service side? Do you get definite cash flows every year when you have to be on the service side of this business?
So it is, so service means it is a complete engineering. So when you supply, so supply along with the installation, that's what we say service. It is not the service that it is not a AMC. It is like the complete engineering package where you supply the generator set, you get the load balancing, you get the data, you get the site ready, you get the installation done maybe on a vertical or maybe horizontal. So depending on the site, depending on the available infrastructure. So that's we fix that data center, or we fix that genset in the particular data center basis the requirement, and setting up the control panel or setting up the genset in such a way that which one to fire first, when to go, which 5 set or which 10 set will go first. So depending on the complete service that has been taken care.
Understood that. Mr. Gupta, let's now focus on the core bread and butter business, which is the diesel, genset business, where a key supplier is Cummins. Cummins had a very strong FY26. They've also guided for healthy growth as far as FY27 is concerned. Where do you see FY27 growth for you? Can we expect mid-teen growth? What will be steady-state growth run rate? And also, given the fact that we now have newer age gensets, where can EBITDA margins trend here?
Mentioned to you, India GDP growth is intact, and basically you know that earlier it used to be a DG set as a backup power, but now business interruption is also very, very important, and nobody in the manufacturing sector wants the business interruption. So everybody wants the zero tolerance for the business interruptions. And although we are also in the renewable business, but renewable business is going to take its own time because there are a lot of challenges for the execution of the project, grid stability, the backup power, the battery power, and all these type of things. So definitely DG set and the renewable power both coexist, because a lot of off-grid installation of the DG set is also there, because you know that a lot of infrastructure projects are coming. For example, ports are coming, airports are coming, then highways are coming, metros are coming, railways are coming. So we are seeing a lot of growth in the infrastructure projects. Then this data center is the growth. Manufacturing, there is a lot of boost, because you know that the main demand is coming because government has reduced the interest rate. Then the demand has come from the rate of interest reduction of there. Then consumption has come because there is a reduction in the income tax. There is a reduction in the GST rates. So from there, the demand has come from these two things. Okay. Manufacturing boost has come from the PLI scheme. So we feel that 12 to 13% top line will increase, and EBITDA will also increase correspondingly. PAT will also increase from the company. So we see that next 5 to 10 years is going to grow for the company very sustainable basis.
So you've given a long-term growth rate that you have. Mr. Agrawal, if you can quickly tell us what the margins would look like for the business going forward, and what is the balance sheet currently looking like? Since you're talking about bigger investments, bigger targets coming in from different segments, will you be taking some debt, or is it going to be via internal accruals?
Okay, so from a margin side, if you see from a steady margin, we have generated from a generator set about 9% or so. So we believe that the long term, it will be better off barring the current year. As we know, the geopolitical tension has impacted not only us, the complete industry sector. There is a price rise on the commodity which is there, which is going to impact maybe a quarter or so, as the price increased price to pass on to the customer takes about 3 to 5 months time. So that we believe that is there. As you already have an order book which is placed, you have already taken an order and the price was quoted. So that, and now new order will come with a new price. So maybe 1 quarter or so, 1 quarter, maybe 2 months further, you might see from a price impact. But steady state from a long term, we see there will be a mix. The product mix is being changing. The operating leverage that is going to that is also going to kick in. So we believe better than 9% on a long term basis, including the product mix, that is going to sustainable from a generator side. And the wind side, as we are adding more on the project. 330 currently, 50 is going to add during the year, and 100 megawatt that we have already won, which is going to come up in a year or year and a half. So that steady increase that we are looking into from a margin side in both the business.
Okay, so one last question, quick question. When you're talking about wind revenues, little less than 20% is what it contributes to your, to your top line. FY26, we did see a dip as far as EBITDA margins are concerned. Steady state EBITDA margins that you expect over there, and could you give us a sense of the breakup between the EPC work that you do over there and the O&M work, because we understand that that could impact EBITDA margins.
Let me just take up. Let me just take up this question of the wind. Basically, we have two verticals in the wind. One is the IPP business. Second is the EPC business. So IPP business currently we have 330 megawatt, and that is going to grow at 20-25% year-on-year basis. We have the target of doubling the capacity by 2030 to make it at 750 megawatt. We have a robust pipeline. Currently, we won 100 megawatt, which is under execution. 50 megawatt we have commissioned just last month, and 50 megawatt is under execution. So in short, 25% growth we will be looking for the IPP business in our own IPP. As far as EPC business is concerned, currently we have 450 megawatt of execution of the wind power project, and 160 megawatt we have order in talk. For that we have signed the term sheet, and we will be having the definitive contract. So practically 400 crores of the top line we will be getting from the EPC business, where we will be having a EBITDA margin of 12 to 13% every year-on-year basis. And IPP, we will be having about, you can say, 100 megawatt every year, where at least 110, 120 crores of the top line will be added, and that will be giving a 90% of the EBITDA margin. So you can say 100 crore of the top line EBITDA will come from the IPP business.
Mr. Gupta, Mr. Agrawal, pleasure speaking with the two of you. Thank you so much for joining us today and explaining the business fundamentals and the outlook going forward. We'll slip into a short break now, get you more on the markets and stock-specific action on the other side. Stay tuned. Welcome back. You're still tuned into Midcap Radar. Aavas Financiers is a stock on our radar. There is an ongoing NHB review and a series of senior management exits as well. The stock is up the day's low after the company rejected some of these reports. But let's go across to Ananya, who's taking us through all the details.
Well, yes, Aavas Financiers has remained in focus over the past few days following the reports of scrutiny by the National Housing Bank and several senior management exits. Now, this spotlight intensified after the resignation of Chief Financial Officer Ghanshyam Rawat and Chief Risk Officer Ashutosh Atre. They resigned recently. Now, this is coming just weeks after CEO Mr. Sachinder stepped down in April and Chief People Officer Anshul Bhargava retired. However, the company has now issued a clarification to stock exchanges, strongly refuting recent media reports around alleged loan classification discrepancies and a purported reversal of NHB refinancing facilities. Now, Aavas said the reports were misleading, malicious and speculative, adding that the NHB inspection is still going on and it is not concluded yet. The company also clarified that it has received no direction to reverse or repay any refinancing facilities, and the routine inspections are a normal part of NHB's regulatory oversight. However, the investors are likely to remain watchful given the timing of this resignation, with CEO, CFO, Chief Risk Officer all resigning within the period of roughly 2 months. So investor will watch out for two things, mainly for the NHB audit outcome and for the company's management transition going forward.
Okay.
Well, thank you so much, Ananya, for joining us and giving us all of the details as far as Aavas Financiers are concerned. A whole host of attrition is what the bank is grappling with currently. But with that, it's all the time we have on this session of Midcap Radar. Your stocks when we return.
Hello, good afternoon. You've tuned into Your Stocks, coming live from the CNBC TV 18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. In terms of the markets, we're at the 24,120. Around that level is what the market is trading at since the last couple of hours. So not much of a change on that front. But broader end of the market, yes, we're seeing a bit of a move there, also performing in tandem with the benchmark indices. So yes, that continues to do well. Today we're seeing green on the screens. In terms of sectors, what's doing well? Let's look at it. Nifty IT making a comeback today. It's holding on to gains of 1.1%. We have pharma, we have autos that's doing well. But on the flip side, what's not doing well is the FMCG pack. So that's seeing a decline today, and we'll keep an eye out on where that's headed. But after last week, what we saw for Nifty IT, today, at least we're seeing an up move coming in here. But that's how we're looking at in terms of the markets. Nifty continues to be at the 24,120 levels, 0.5% of gain there. But let's move on and get started with the show, which is a show where we solve all your stock-related queries. To do that, we have Ashish Kyal, chartered market technician and author at Wave Strategy Advisors, as well as Gaurang Shah, Senior Vice President at Geojit Financial Services, to answer all your stock-related queries. Ashish, Gaurang, good afternoon. Thank you so much for joining us on the show, as always. Let's get started with the query, right? The first query for today coming in from Vinod Kumar, who's writing to us from Kerala. It's an investment query. Wants to know if it's a best time or good time to enter Indo Solar in at the current levels, long-term story. Also wants to know, if not that, any other stock that they can look to invest in that sector. Gaurang, afternoon. What's your view?
Well, thank you so much, Vinny, for having me on the show. Good afternoon, all the viewers of CNBC TV 18, to my good friend Ashish Kyal, and to you as well. So while we remain extremely positive on the sector, that is renewable energy, green, or in terms of wind or solar, a lot of companies have come up in this particular sector over the last couple of months and years. 2 or 3 companies on which we are positive. One of them is, of course, Waaree Energies, which is very much closely related to this clean and green energy segment. And the other one is Premier Energies. But these 2 are the investment idea. One small disclosure, Vinny, all recommendations that I'll be sharing with you this afternoon on the show, they're part of our fundamental research team recommendation from a long-term point of view. Our company, Geojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might have their investment interest. So Waaree Energy and Premier Energy, these are the 3 alternative investment ideas.
Waaree and Premier is your alternatives coming in here. Ashish, on the technicals, Indo Solar, is that a better bet for the long term? And is it a good level to enter that one? Or would you also suggest other names?
I would suggest to avoid Indo Solar because the stock continues to move in a circuit, and we can clearly see that it went all the way to 700, corrected to 390. So the stock movement, price movement is not looking good at all. So I would suggest it's better to avoid something like an Indo Solar, and maybe something Acme Solar Holdings looks to be much better placed, and the chart patterns are much clearer, and it has been in an uptrend. So I would suggest to park something into Acme Solar at current levels, which is around 356. We can expect the stock to go up to the levels of around 430 or 440 levels. And on the downside, the support for the stock is at 330.
Okay. Ashish, thanks so much for that. But, you have some important flashes coming in at the bottom of your screens as well. We have UK Prime Minister Keir Starmer, who's resigned from his post as well. So, important update that is coming in on this front. Okay, let's go across and listen in. He's speaking as well right now. So, listen in to what he has to say.
For contest, this will ensure a new leader is in place before Parliament returns in September. I will remain in post as Prime Minister until the contest is complete. And I will do everything I can to ensure an orderly handover of power. I will also give my successor my full and unequivocal support, knowing that they will inherit a Britain that is far stronger and fairer than the one I inherited 2 years ago, better prepared for the challenges ahead, and better able to ensure the Labour Party secures a second term in office. I want to thank all of those friends and colleagues who have been at my side for these past 6 years or so, for their incredible commitment, service and support. I want to thank the brilliant Number 10 staff and our country's extraordinary civil service who dedicate their lives to public service. And when I leave, the biggest job in the country, I shall spend more time on the most important job, being the best husband I can to my fantastic wife, Vic, who has been a rock by my side through good times and bad, and being the best dad I can to my beautiful children, who are my pride and my joy. Thank you very much.
Oh, that's, the UK Prime Minister who has resigned from his post as well. Will be there till, the new Prime Minister comes into place as well. But that's the latest update that we have coming in on the global front. He said he will resign as the leader of the Labour Party. Important updates there. And he said that, he's handing over a better country to the successor from what he had received. So that's the update coming in there from UK. But let's move on and talk about the other stocks that are moving around, or the queries that you all have sent us as well. Next query for today, we have Rakesh Gupta, who's writing to us from New Delhi. He holds 7,000 shares of PNB. This is at a price of 109 rupees per share. Wants to know, should he continue to hold or sell at current levels? Gaurangji, what's your view on this one?
So, Vinny, the entire BFSI segment looks very attractive, whether they are selective private sector banks, public sector banks, or strong NBFCs. So as a disclosure, PNB happens to be on the positive side coverage from our fundamental team. Yes, in terms of earnings, there has been a little bit of flip-flop, but post the last quarter earnings and the management verbatim, we believe that going forward, the earnings are going to improve. If you invested in PNB from a long-term point of view, continue to hold on to your investments.
Okay, continue to hold on to your investments from a long-term point of view. On the technicals, PNB, should they continue to hold this, Ashish?
Yes, we can clearly see PNB has bounced back from the double bottom pattern around 100 levels, bounced back from there. The momentum is slow as of now, so there can be some time before we can start seeing a positive uptick. But hold on over here from a long-term perspective. We can expect the stock to move towards the level of around 116 over near term, which is the prior swing high. And on the downside, the support for the stock is at 105 levels.
Okay, we'll keep an eye out on that. Let's move on to the next query then. We have Meher, who's writing to us from Visakhapatnam. An investment query. She wants to know if she can buy around 5,000 shares of Vodafone Idea at current levels. Time period is 3 to 4 years. And she also wants to know if she can look at the shares of Vedanta Aluminium. Obviously, we've seen, those other companies which got listed also from Vedanta recently after the demerger. Gaurang, your view on both the names?
So, Vinny, if she's getting attracted for Vodafone from a price point of view, I think there are better names, to be very honest. Having said that, we had a neutral stance on, on Vodafone. Looking at the price, then there are better investment ideas. So on Vodafone Idea, we had a neutral stance, Vinny, as a disclosure. As of now, the stock is under review. So I will refrain from saying buy, sell and hold. But since the question is whether she should buy Vodafone Idea or whether there are better names. So there are better names. Bharti Airtel happens to be one of the name on which we have a positive coverage amongst the cellular service provider companies. And the other is Reliance Industries because of Geo Mobility. Of course, on Friday, during the AGM, we also had an announcement from the management that they are in the process of hiving off Geo Mobility and listing it as a separate entity. But as of now, Geo Mobility business comes under Reliance Industries. So you can choose either Bharti Airtel or Reliance because of Geo Mobility. On Vodafone Idea, we'll need some time because it is under review.
Okay. That's a word there on Vodafone Idea, but other names is what Gaurang has spoken about. Ashish, your view, Vodafone as well as Vedanta for the long term. What's your story, and is it the good time to look at this? Vedanta Aluminium, to be specific.
Right. I would look at Vodafone Idea as a risky bet because the stock has already rallied a great from 8.5 levels, already trading around 15. So it looks risky to be entering now. I agree with Gaurangji on entering at Bharti Airtel at these levels rather than Vodafone because the stock keeps oscillating between this zone, and if you enter at a higher elevated levels, you might again see it going back to 13, 12 or 10 odd levels. So better to avoid Idea, but to enter into Bharti. And with respect to Vedanta Aluminium, there is not much of a price data because this happened recently. And I would suggest to be looking at something like a Hindalco, which has a much bigger history, and the metal space base looks good. I think Hindalco has also corrected and came towards its prior swing high, which is a very important support. So entering now can be a good decision here, and we can expect Hindalco to move towards the level of 1100 on the upside in the near term. On the downside, the support for the stock is at 966.
Okay. That's a view coming in there. Thanks so much for that, Ashish. But on that note, we're going to slip into a very short break. After the break, we'll come back with more of your stock-related queries. Stay tuned in. Welcome back to Your Stocks and CNBC TV 18. We still have Ashish Kyal as well as Gaurang Shah to answer all those queries that you would have sent us. Let's move on to the next query. We have Sunil Kumar, who's writing to us from Vishakhapatnam, holding 1,000 shares of AGS Transact Technologies at a price of 42 rupees per share, making a significant loss on this one. What should he be doing with this, Gaurang? The stock is just 2 rupees now.
Honestly, Vinny, this is like committing a harakiri or suicide. You bought in at 42 and the stock is trading as 2 rupees 70 paise. First of all, ask questions before investing. If you just hear somewhere or the so-called gurus and gyanis on the unsolicited international university of WhatsApp and Google and whatnot, this is what the result is going to be. We don't track such companies, Vinny, so it'll be very difficult for me to comment. One piece of advice that I can give this gentleman is that please try to protect your capital. If your capital gets eroded 70-80%, the big question is whether you'll recover your capital. Forget about making profits on your investments.
Absolutely right. It's better to get the advice before than after you're making a loss where you've lost most of your money there. But it's important not to just take advice from anywhere or just follow any tips. That's the one that's coming in from Gaurang. Let's move on to the next query then. That's the one coming in on HFCL. We have Sekhar, who's writing to us from Coimbatore, holding 200 shares of HFCL. Price is 125 rupees per share. Wants to know if you can look to add more. Is this a good level maybe to enter HFCL again? We've seen these names actually buzz in the recent times as well, Ashish. So is this a good level to enter? Maybe wait for some bit of a correction.
You rightly said that this stock continues to be in the names and it has moved towards the level of 212. So my suggestion would be to book out from here, not to add here. because the stock can reverse equally fast. It comes down very quickly, and before you can think of, it is already down. So my suggestion would be, you are making a good amount of money from here. It's better to be out from here and park somewhere a more stable investment. And IT is looking like a challenge right now, but park into banking stocks, or you can also look at private sector banks, something like an HDFC Bank or an Axis Bank. That looks much more promising at these current levels.
Okay. And Gaurang, your view, HFCL, good bet on the fundamentals?
Well, if I have to look at the past history, Vinny, there is no funda, only mental, right? If you look at the history of this particular company. Having said that, and I've noticed one thing, Vinny, about HFCL is that this stock goes into some kind of very abnormal behavior, circuits up and circuits down. I agree with what Ashish has mentioned, though I won't give any buy, sell, and hold on HFCL since we don't cover such kind of stocks. Get into more fundamentally strong stocks. That will be better for you.
Okay, that's a word coming in on the fundamentals as well. Better stocks to look at other than HFCL. Let's move on. Next query. Puneet is writing to us from Karnataka, holding 90,000 shares of NBCC. 44 rupees is what he's bought it at. Could he continue to hold or look to sell this one? Making a profit on this one. Ashish, your view?
If I heard correctly, 44 rupees is the buy price on NBCC. That is fantastic because the stock currently is quoting around 110. So it's 100% return. I would suggest continue to hold. There is nothing wrong here. The stock is consolidating over since many years, but there is a possibility we can see an uptick towards the level of 125 or 130 over the near term. On the downside, the support for the stock is going to be around 107 levels.
Okay. We'll keep an eye out on those levels over there for NBCC. Gaurang, your view, but for NBCC, how is it looking like? Should they continue to hold, expect more profits?
More is always acceptable, Vinny, but there is no limit, right, for the greed in the stock market. So again, NBCC is one stock on which we had a coverage. Our targets, I believe, were in place and we have dropped the coverage. So I hope it answers this question. I won't give any specifics, buy, sell, and hold, since we have dropped the coverage. But there are better alternatives in the infrastructure space. When it comes to NBCC, there are better names.
Okay. That's a word on the fundamentals. Next query we have coming from Gaurav Krishna, who is writing to us from Patna, holding few shares of NTPC, not mentioned the exact amount, but they mentioned the buy price. NTPC shares they're holding at 387 rupees and Tata Power shares they are holding at 417. On NTPC and Tata Power, they're making some bit of a loss on this one. Long-term view for both the stocks. Gaurang, power, the theme on that front is something that has been in focus for a while. Do you think, this is a good bet for the long term, both these names?
In fact, this is a sector which is in a very sweet spot. Despite of what is going on in the global arena, or with the kind of concern that we have, deficit monsoon, Vinny, and power demand has gone up considerably over the last couple of years, and it is going to go up. Government is going to add somewhere close to about 300 to 350 gigawatts of new power generating capacity in the next couple of years. Large part of that is going to be from clean and green energy. On both the names, NTPC and Tata Power, we have a positive coverage. Continue to hold, and since the quantity is on the lower single digit side, if you have investable amount, you can definitely add to your investments.
Can look to add also to your investments. Power story, good story. Maybe powering up in trade as well is what we could expect from them. But Ashish, is that the view on the technicals?
Yes, absolutely. Because if you look at Tata Power, the stock has retraced nearly 61.8% of the prior rise. From 461, it started correcting and formed a base around 390. So there is a possibility that we should start seeing an upward move from here. It's a good level to enter. A very important price action support at 390. Hold on with that as a support, and on the upside, we can expect a target of around 450 or maybe higher. As far as NTPC is concerned, the movement is very similar to that of Tata Power. Formed a double bottom pattern at 350. Looks like reversing back on the upside. So you can invest more here or add on to the positions, and we can expect a target of 395 on the upside. The support for the stock is going to be at 356.
Okay, we'll keep an eye on those levels over there for both NTPC as well as Tata Power. Let's move on to the next query. This is coming from Jaspreet Singh, who's writing to us from Chandigarh. He wants to know if he can invest in Ashok Leyland. This is a short-term query. Gaurang, your view for Ashok Leyland, short-term?
This is a stock for long-term investors, purely, Vinny. 200 plus was the level, and then we saw the correction. Stock went to, I think, what, 140, 130. Possibly Ashish will be in a better place to comment. But on the fundamental side, from the long-term point of view, Vinny, we remain extremely positive. Month-on-month numbers for specifically for commercial vehicle has been very strong. Traction on the positive side in terms of exports will come in from the free trade agreements that India has signed with many nations. And of course, the opportunity will open up in terms of lot of straight transport entities are now replacing their age-old buses into newer EVs. That will also add to the order book for companies like Ashok Leyland. But this is a long-term advice.
Okay, long-term advice coming in on Ashok Leyland. Gaurang is saying this is a better bet for the long-term story. Ashish, your view, is it a good time to enter Ashok Leyland? If you could give us targets both for short-term as well as long-term?
Yes, when you see currently the stock has shown a very good rise from 140 levels. It found a base there, went to 160 and now consolidating. Relieved the overbought state. So there is a possibility we might start the third wave higher, which can take price over 175 over near term. And on the downside, the support for the stock is going to be near the gap area of around 149. So from short-term perspective, the risk reward is good to enter now. And from a long-term perspective, also the stock can move towards the level of 195 or higher from here on. The overall structure and the pattern looks very appealing at the current levels.
Let's move on to the next query then. We have Mohan, who's writing to us from Noida, wants to know if he can invest in E2E networks for the long term. Gaurang, this is that AI side of the story where we have seen it come, right? And we've seen the stock run up also at certain times. Is that something you're looking at for the long term?
Very honestly, I'll give a pass to this one because I have not looked into, nor my fundamental tracks this company.
Sure. And Ashish, on the technical front, E2E networks, is it a good one to enter at right now?
I don't think the person will be able to enter now because the stock is stuck in an upper circuit with nearly around 124,000 buyers. So I would suggest to avoid any such stock which moves in the form of circuits, because if it goes into circuit down, you are not even able to exit. So my suggestion would be avoid something like this. The chart pattern looks good, but the volatility and the volumes are very erratic.
Okay. That's the view there coming in on E2E networks. Better to avoid such stocks. That's the word right now coming in here. But Ashish, as well as Gaurang, thank you so much for joining us on the show, as always, helping us answer all those viewer queries that we have received. So thanks so much for that. And viewers, thank you so much for sending us your queries. But remember, you can always email us or send us your queries on the WhatsApp number that will be on the screens for you all as well. So do send us your queries. We'll get them answered on Monday, Wednesdays, Fridays at 2 p.m. on your stocks. But up next, your closing bell to take you through the last hour of trade.
beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
The Taiwanese index is up over 2.5% this morning.
IPO platform DRHP being approved. They filed it with the SEBI. The IPO will be a fresh issue of 27 crore equity shares.
The second and third top gainers on the Nifty are IT names like Infosys and Tech Mahindra.
The business is going very well. We cannot call it as a number, but we have shown a very positive trend during this quarter end numbers.
Kirloskar oil, normally you assumed it to have those low horsepower, medium horsepower range of gensets. Now this is a high horsepower genset, and that is a positive sign.
The index has carried on from where it left off from the lows on Friday. Another 150 points added in today's trading session.
Company will be commissioning its first compute capacity by the end of 2026, and that is something that they are quite bullish on.
Government is likely to launch an OFS in Cochin shipyard. We don't know exactly what the quantum can be, but the price that we understand from sources that it can be at a 6 to 8% discount to current market price.
Now DGTR, that's the central government, has given the final approval for that. The final go ahead has been received.
India business, they highlight that is also doing well. The recovery is coming in well.
This IPO marks the culmination of what is one of India's most consequential business transformation stories.
67 ships went through the Strait of Hormuz. The day before, it was 55 ships.
24,100 mark. We are comfortably above that for now. A wee bit of downtick from the highs of the day, but nothing major to worry about.
Well, that was the day so far. 1 hour to go. It's been a good Monday morning. The Nifty's been holding comfortably above the 24,100, a gain of about 0.5%. Oil, ships are flowing freely through the Strait of Hormuz, and that is keeping a lid on crude prices. Brent crude prices, since the word go started the session, have been below that $80 per barrel mark. The big gainers are Reliance Industries. IT stages a rebound after last week's fall, Friday's fall, and you've got some big gainers in the mid-cap space, though the index per se is moving relatively in line with the frontliners.
Well, that's right, Rima. And what's good is that the breadth of the market continues to dominate, with two stocks advancing for one stock that's declining. And I think if the monsoon, is up to expectations, and it's not short of expectations with the market is working with right now, then I think we could see a further flourish in terms of both the headline index breaking out of this range and the broader markets as is are doing very, very well. Even on the days that the Nifty goes on with a cut, the broader markets actually outperform.
Okay, that's how the situation is right now. We've got 1 hour to go. It's going to be an action-packed one on closing bell. Let's run you through the top headlines and what's lined up on the show. Steady day of trade across indices. The Nifty above 24,100. Mid-cap, small caps too join in on the gains. All sectors in the green, barring FMCG, metals. IT stocks lead from the front. A deep dive into Vahan registration data for the month of June. Electric vehicles sustain momentum. Passenger vehicles set to outperform. Details on the show. Cipla perks up on the back of a bullish brokerage note. What's the rationale behind it? What explains this 5% up move? Coming up on closing bell. And then you've got big movers like Nosil, Kirloskar oil, gaining on the back of positive news flow. So we'll talk about all that and more. For now, let's go across to Mitesh to find out the last hour trades. How should you position yourself? Mitesh?
Yeah, good afternoon. So, as I was saying, the Nifty possibly will maintain its up move, and the Thursday's closing was 24,168. I think that's where, we made a high today. So broadly, I think once we get past this 24,170, 24,200 zone, we should head towards 24,350, and in a good case scenario, 24,600. So the bias is positive, but the force is kind of on this lower side as the indicators are rising as yet, but nothing major kind of a breakout happening over here. So generally long bias, I have a buy on Sun Pharma right now. Sun Pharma, I would recommend buying with a stop below 1839 for targets of 1900. And United Spirits is a buy. Keep a stop below 1315. Look for targets of 1390.
Okay, all right. Got that. Thanks, Mitesh, for joining in, giving us those picks as well. Well, let's move to the auto space then. The Vahan data for June 2026 suggests that strong auto sales traction continues, especially in the electric vehicle space. Sudarshan joins us to fill us in with all those details and all those numbers that he's crunched. Sudarshan, take it away.
So auto in the top gear move continues even in the month of June 2026. Even in the month of June, total registration growth is expected to be more than 20%, with passenger vehicle segment continues to outperform the industry, where growth can be more than 20 to 23%, followed by two-wheelers around 19 to 20%. One segment that continues to do well over the last few months is electric vehicle segment. After the growth of more than 40% in the last 2 months, even the June is looking like a very strong month. Now talking about the total registration growth, expected to be more than 20%, followed by two-wheelers at 19%. Passenger vehicle segment growth is seen at 23 to 24%. Commercial vehicle overall growth is expected to be very strong. Here also growth can be 20%. But M&HCVs, while it can see a growth of more than 10%, but may underperform the industry, and three-wheelers growth is expected to be in the range of 16 to 17%. Now talking the segments in the details, first two-wheelers, two companies that are expected to do well are Royal Enfield and TVS Motor. They continue to gain the market share, and other two companies too, Hero Moto as well as Bajaj Auto, may report a healthy growth. In the passenger vehicle segment, two companies that are gaining market share are Maruti and Tata Motors passenger vehicle. It may be a strong growth month even for Mahindra and Mahindra Auto, while Hyundai is losing market share. In the commercial vehicle segment, it's a mixed trend. Ashok Leyland is losing market share, while it's a strong growth month for Tata Motors commercial vehicle, and even on the market share front, it's gaining market share. Now, coming to the tractor segment, we expected that delayed monsoon may impact the tractor industry, but so far we are not seeing any impact, and Mahindra tractor segment continues to outperform the industry. Now coming to the segment which is a standout and it's been performing very well over the last few months is the electric vehicle segment. We have taken two units, that is battery operated vehicle and pure EV, as the matrix to calculate the numbers. Now in the month of April, the growth was almost 44% and total volumes were of 2.52 lakh units. Come to May 2026, it increased to 2.76 lakh units, and the growth has increased to 48%. In June 2026, already so far, just in 21 days, volumes are already higher than what we had seen in the entire month of June 2025, and the growth is so far it's around 10%. So another month where we can see a growth of more than 40%. We still have 8 to 10 days, but as of now, the trends for auto registration are indicating a continued strong demand as far as auto segment goes.
Thank you very much for that. Gurmeet Chadha, Managing Partner, CIO, Complete Circle, is now joining in. Gurmeet, great to have you on the show. Markets have been in a pretty nice groove. Barring the decline that we had on Friday, courtesy IT stocks, we've been inching up, and today as well has been a steady positive session. Overall view on the markets, and then we'll get chatting about individual sectors, including auto.
Pretty constructive, Rima. I think the oil-sensitive part of the market is now looking a touch better. I think despite good data coming month on month, whether it is Vahan data or the dispatches, some concern around El Nino, and I think the spike in crude led to some bit of underperformance. I think, but the numbers are holding up despite, and there is obviously some concern on margins with input pressures. I think already the price hikes have also started. So we've started, we increased weight in M&M. We added Sandhar technology in the portfolio. The other part which is looking very good is the banks. I think with surplus liquidity coming in, which is a large part of the Nifty, we should see cost savings of 6,000-7,000 crores in terms of cost of funds, and NIM expansion maybe between 5 to 8 basis points, largely with banks with overseas branches and foreign partner tie-ups for leverage. And third, we are selectively looking at some of the names where import substitution is happening, with yuan having appreciated 20-22%, and China removing a lot of export rebates. So those are chemicals, metals, largely non-ferrous like aluminium. So this pocket is looking good. And I think if the US trade deal goes through, hopefully first tranche, I think we will probably have more legs in the market.
Okay, all right. Hi, Gurmeet. Good afternoon. Good to see you, Ben. You heard what Sudarshan had to say. The trends are looking quite good from the auto pack. What are you playing out there?
So, Nigel, we anyways have good exposure across M&M and TVS as far as the makers are concerned, and Uno Minda, Sandhar. We've recently added KPIT a little more on weakness at sub 700 levels. We are now adding Motherson wiring, which is a bit of an EV adoption. So a normal model, which I was discussing earlier, takes, let's say, for example, a MG Hector petrol model takes about 15,000 rupees of wiring harness. The same EV model will have 45,000. So it's 3 times the EV. So that's, we are trying to figure out we can play some of that kind of play in EV. So we added Motherson wiring in the portfolio. It's consolidated nicely at 37, 38 rupees post the demerger for a long time. And we are looking at adding more in auto ancillary in case there is more weakness. We have Lumex also in the portfolio. So pretty overweight there. And I think that part of the market should now see some bit of movement.
Got that. Some of these auto ancillaries like Lumax and even Motherson Sumi. We'll talk about pharma in just a bit because Cipla is surging and there's a positive note from Citi. Vinny, can you tell us what the Citi note says?
Hi, so actually this is a 90-day positive catalyst note that Citi has come out with today on Cipla. Buy rating target price of 1,700 rupees per share. But what are the positive triggers here? One, in the near term, US, they believe, will start seeing a rebound. Why? The generic Flovent approval is expected of that drug, as well as generic Ventolin is expected to be launched as well, which will support the growth of the company and trigger the up move in the US markets for Cipla. Now, obviously, India business is also doing well, is what Citi is highlighting, aided by the recovery in the respiratory segment within the IMP for the company. Indore facility, that's actually due for a re-inspection that could happen anytime soon. And if that US FDA positive and clearance comes in, that would be a near-term catalyst for the company as well. Improving geopolitical conditions, easing in concerns of that input cost inflation, margin pressures will start reducing as well. So obviously, these are also some positive triggers in the near term. What Citi highlights that Revlimid had caused some bit of a decline in terms of the earnings coming in because that was coming off patent, right? So that earnings had started coming down. Now they believe that that has bottomed out in the last quarter, that's Q4, and from here on you may start seeing an improvement. Valuations are currently at 25 times FY27, which is favorable in terms of risk reward, is what the brokerage is highlighting, and that is why the stock is passing.
Got it. Okay. All right. Thanks a lot for that, Vinny. By the way, we have some important flashes, I think, with regard to the BrahMos. I think we should get that up for you on the screen. And that explains why we've seen a bit of a perk up in stocks like Bharat Dynamics as well as in BEL. If I read it correct, India is in talks with some foreign players with regard to BrahMos and, selling some part of that. So I think, that's the reason why, India in talks with UAE to sell its BrahMos missiles. Akshdar Air Defense, Thailand, South Africa, Brazil, Chile have shown interest in BrahMos, which is our missile. So that explains why. Stocks like Bharat Dynamics actually have moved to the high point of the day. I think we were tagging BEL as well. I know Bharat Dynamics is the one that has exposure, but I'm not sure. But BEL as well was being tagged. So maybe some kind of rub-off. Gurmeet, how are you all playing this entire defense, theme? I think solar is something that you all have been riding for some time, but any view on this piece of news as well and how it impacts some of these stocks?
So Nigel, two big reforms which did not get much attention is almost removal of monopoly of HAL as far as the fifth generation is concerned, as well as Bharat Dynamic on missile. I think the DRDO has started DCPP, which is Joint Development Production Partners. And I think that's a bit of a game changer. So obviously, other than Bharat Dynamics, you have Solar, which makes propellant boosters. They've recently supplied 300-kilometer range boosters for BrahMos, which also means the Pinaka range can be extended later. Currently, Pinaka is 75, and you have 120, for which the trials have happened. And a lot of Western developed nations have shown interest in higher range of Pinaka. So that helps. And then they have more products like Bhargavastra, which is an anti-drone system, and drones, which is getting a lot of traction. You also have data control, which makes the data pattern, which makes the fire control system of BrahMos. So you need to probably do the value chain assessment there. I think BrahMos has huge export potential. So does drone and some of the other products. I think defense exports will positively surprise. We've done, I think, 38,000 crores last year. I think next 2 years we can cross 1 lakh crores. There's a huge potential there. And our defense portfolio would almost be 15-16%. So we are quite overweight there.
Any new additions in defense?
So, we already have Bharat Electronics, Solar, Data Pattern in the portfolio and Zen Technology. We are evaluating NICE, and we recently added Azad, which is more energy, but now probably getting into quasi-aerospace and defense. So overall, I think would be around 16-17%, but open to evaluating. So we're studying Idea Forge as well, again related to the Yeti drone, which can carry almost 500 kg of warload in a conflict zone, which could be a big, it is right now under testing. So we're studying in case what the potential Yeti has as far as, carrying the load is concerned. So evaluating more opportunities.
Okay, so defense is a big bet. Stay on, Gurmeet. Some more stocks we want to talk about. Nosil Kirloskar Oil. Buzzing, there's some news flow. Kirloskar Oil up 20%. Vinny joins in for more.
Hi, so yes, for Kirloskar Oil, locked in upper circuit after they've secured that 192 megawatt of 96 unit, which they'll be delivering for data center supply order to Hypernext. Now, obviously, this is a 2,500 kilowatt annually of this system that they will be giving. Optim Prime dual core system, power systems is what they're looking at. Now, post this, obviously, this is a very big order win. Why? Because it's a breakthrough order win for them. They had very minimal in terms of data center exposure. Now, this brings in Kirloskar Oil also in the data center play. JM Financials upgraded the stock to a buy. Previous ad rating target price has been increased to 2,430 rupees. Previous target price was 1,955 rupees. They said that this is company has secured a major breakthrough order in terms of data center where they had very less exposure. Other than that, this brings them, exposure and foray into the co-location as well as a hyperscaler data center space specifically for the company where already its peers are there. Motilal Oswal too maintaining their buy rating, target price of 2,350 rupees. Previous target price was 1,900 rupees per share. So increase in terms of target price coming in from both the brokerages. And they said that, a company has already planned some capex coming in for high horsepower side of these segments, right? These data center requires high horsepower. Kirloskar Oil normally was in low horsepower or medium horsepower. So this changes the trajectory for the company as well, and that is why investors are too happy with that stock. Nosil, also we have DGTR, that's a government that have approved anti-dumping duty on rubber accelerators from China, EU and US. This is something that was expected. So this is what has come in line with the expectations. And in March, the Commerce Ministry had notified this anti-dumping duty on rubber accelerators. So if this had not come, it would be a negative. But obviously this coming in is something that the street is liking.
Got it. Okay. All right. Thanks a lot for that, Vinny. Gurmeet, any view on these stocks? Nosil is up and about, and Kirloskar Oil. What a big reaction out there. The JM note is arguing that it deserves as good a multiple as Cummins. What do you think about that?
Like the business, we obviously missed it. I was evaluating it actually, but could not buy it, honest confession. See, what has happened is that other than the data center demand, once you restart the refineries, and the production get kick-started, both for gas, oil, you need a lot of engines with high horsepower and medium horsepower. So it's not as simple that you can just start the refinery again after being shut. So there's a lot of inquiries, even for gensets. That's the other segment which is seeing huge. I mean, most of them are sold out in 29-30. So this is one pocket which will probably surprise on the order side. But as I said, the execution you have to see. But we missed out. I think we kept evaluating, and probably sometimes it leads to paralysis of analysis.
What about Aditya Birla Finance? Market capitalization today crosses 1 lakh crore mark. And we were just going back 4 years back when Vishakha Mulye took charge. And at that time, the market cap was what, 25,000-30,000. What a wealth generator since that ICICI Bank veteran came on board. Any views on Aditya Birla Finance from here on?
So many times we have seen, leadership change making a big difference. I think Vishakha coming was a big trigger. We took the exposure in Aditya Birla Asset Management, which was available at 20-30% discount to HDFC or a Nippon. Even that has done very well with Harish joining as a CIO. Their debt equity mix has changed. Now equity overtakes debt. Earlier debt was higher. They're doing some very good stuff in SIFs. And most of the equity funds have now become quartile 1 across category, which is flexi, large and mid cap and multi. So there's a bit of a re-rating happening there. And I think we entered in 3-digit when the price was 3-digit. I think so. We missed out on finance, but we are there in the Aditya Birla Asset Management.
Okay, all right. Gurmeet, in the past you have liked Stovecraft. The stock at times it's shown a lot of promise. I recall from the time it listed. Then it went through this COVID period where, there was a lot of demand and then slam dunk. Any view on any of these three? Stovecraft actually in the last 1 month has been an outperformer. We had put out this piece that is the kitchen heating up again. Stovecraft, TTK Prestige, as well as Hawkins Cookers, in the near term, it appears, going by what most of them have said at conferences, that the demand for kitchen appliances is strong. Induction obviously is getting a bigger share of that and a lot of traction out there because of the gas crisis. But how do you view these stocks? They are down 20, 30, 40% as well from the peak. Your view?
Nigel, we added when fuel prices went up and there was LPG shortage, more as a tactical play. I think the stock has done really well, almost up, I think, 30% from 550 odd levels when we entered the stock. We'll have to see whether this mix of electric induction and others keeps improving or it's more a bit of a play when LPG was short. So you'll have to see how the trends go back. For now, I think at this price, probably one can wait and see the earnings and the guidance. But overall, in our interaction with Mr. Gandhi and our visit to their plant in Bangalore, there's quite a good plan they have for next 2-3 years. There was some supply pressure with a couple of large institutions exiting the stock after the stock being in a certain range and from missing some guidance. But let's see how it performs. I think probably the market would want to see incremental improvement quarter on quarter. And once that does, maybe there's some more re-rating is due.
Got it. Okay, all right. So for the time being, just wait and watch is what Gurmeet's call is. They're added as a bit of a technical play out there. Got that, Gurmeet? Thanks a lot for joining in and giving us the view on all of those stocks. By the way, just keep an eye out on Vedanta Aluminium. That's a stock I'm looking at. There's going to be these outflows because it gets out of the Nifty Next 50. And there's a lot of supply that's expected of around $140 million. But, at times like this, actually the street is prepared for this because it's not a surprise, right? You know that it's going to happen in the last 30 minutes or so. And it appears there is some kind of buying interest that's taking place. So we'll have to wait by because around $145 million. I went through a lot of notes, alternate notes, and that's the estimate. But for the time being, someone's bid up the stock in anticipation of that move. Normally, the last 30 minutes is where you see those outflows that take place.
Got that. Thank you very much for that. Get into break. On the other side, Helios Mutual Funds, Dinshaw Irani joins in as our Alpha Manager.
Welcome back. Markets continue to hold on to gains. So it's a good time then to bring to us our Alpha Manager of the Day, Dinshaw Irani, CEO at Helios Mutual Fund, who joins us on the show. Hi, Dinshaw. Good to have you on the show. The market now is quite excited about these underperformers. That's the large private sector banks coming to the party. Valuations appear, far more palatable post the recent underperformance. And also the FIs are going to sell less, then probably they'll sell less, where they have the highest exposure, which is the financials. I think that's a top theme, right? Tell us more.
Yep, definitely, Nigel. In fact, by the way, very good afternoon to you and your viewers, and thank you for having me on the show. Yes, that is the case. I think banks are having a breather, given that they were the biggest to be sold off, biggest lot to be sold off by the FIs. So the hope is that not only that they'll stop selling, but when they come back, they'll probably start buying. And actually, you're right about the fact that the valuations are like screaming right now. I mean, below 2 for most of the frontline banks, below 2 price to book for most of the frontline banks, and having such pristine balance sheets. I think it's about time that someone comes and starts taking a relook. However, on our part, we haven't gone about buying these. What we've done is we've reallocated, rather not relocated, rather within, whenever we're getting fresh money, we're picking up more of the consumer-facing NBFCs and market-facing players as such. And that's what we're doing in the BFSI space. The weight overall remains the same.
Are you also looking at consumer-facing names, whether it's in retail, quick commerce? I'm talking about incremental money, which is going to be deployed or has been deployed, say, in the month of May and June.
No, actually, when I said consumer-facing names, I was talking about the financials, the NBFCs and other financial players who are more of consumer-facing than anything else, who aid consumers in terms of loans and fintechs and stuff like that. But having said that, Rima, yes, we have increased our exposure to all the new age companies. We've been fairly comfortable, not all, rather selectively, we've been increasing our exposure to new age companies. And we believe this is the differentiator that India has to offer to the world, the trinity of JAM, as we call it, Jandan, Aadhaar, and Mobile. I think that's given rise to a lot of new industries and a lot of new companies which are consumer-facing based on the India stack as such. I think that's where the real growth will be going forward.
And I think, Dinshaw, if I remember correct, you're sitting on minimum cash, right? You're almost fully deployed.
Totally deployed, Nigel. Not a single penny. Probably a 20-30 bits lying here and there, but otherwise, no, nothing.
Okay. All right. What is the last addition you'll have made? If you could help us out, sector, and we could do a little bit of a guess. If you want, we could, with proper disclosures, give us the name as well. A couple of stocks that you'll have added.
No, so I won't give you the names as such, and you can look at my portfolio. My compliance guy always comes down heavily on me every time I mention a name. So I won't mention any names, but sector-wise, yes, I think it's more of consumption-related stocks that we added to. A few names in the capital goods space that we added to as such. So that way, and plus we've been constantly deploying money in the existing positions where we believe the valuations come off. Like, as I already said, that new age companies, they've been ramped for no reason as such. And that's why we've been picking those up as and when we get a chance.
So I guess the Paytms of the world, Eternal, those are stocks that you'll have in your portfolio. You'll have had in your portfolio. So you'll continue to remain positive on that theme, right?
Yes.
And on consumption, if I were to tell you between discretionary and staples, how are you all positioned out there? Because discretionary seems to be something that most on the street like, but staples of late, suddenly there is some glimmer of hope, and they have been ranked underperformers. I mean, stocks like Lever and all, maybe rightfully so, because they're not growing at all. Last 5 years, 0 returns. Imagine having a stock like that. How are you all positioned on the consumption pack?
So you took the words from my mouth, Nigel. I don't think the FMCG portion, rather the staples portion, is something that we want to look at right now. Obviously, the reason that we always give out is that as you start earning more, you will be spending more on discretionary rather on soaps and toothpaste, because you won't be taking any extra baths or brushing your teeth any more than what you are doing already just because you're earning more. So that's the reason why we're not doing this. And frankly, I mean, the growth rates and the valuations don't match out here. Either one of the two has to converge. Either the growth rates have to go up, which doesn't look like the case, or the valuations have to come off, which looks more like the case. So that's why we're avoiding the staples. We're more in discretionary. Again, in discretionary, we're not in the auto space and stuff like that. We're more into two-wheelers. In white goods, we're not at all there. We're there in the new age discretionary, guys. So that way.
What about EMS as a pack? There is some excitement out there. EMS stocks that have corrected, everyone wanted to get into them, say, 18 months or so ago, and then, everyone shunned them away. Are you all interested in that?
So that's one of the new names that we picked up. The lead player in that segment is what we picked up. And we added to that position also. Given the fact that the biggest overhang for that particular player, and he did correct. He did correct a lot. The biggest overhang used to be the Chinese JVs, which for the approval wasn't coming through. And when they did start coming through, I think that's when we started looking at that name. And frankly, I mean, the stock has done fairly well for us.
Dixon, that's the one. Got it. All right, the largest one out there, and hopefully the JV approval comes through as well. Got that. Dinshaw, you tell me what will make you constructive on the tech names. For the time being, we know that there's a risk. AI play, it's not going to grow. I could make a bullish argument as well, which will definitely not buy. But what will make you, encouraged to at least give them a look, start getting into selective stocks over there? Or do you want, I mean, it's not on your interest list at all?
So right now, Nigel, it's not on our interest list at all. I think the biggest concern, as we've been highlighting, is AI itself. I don't think the companies have been open enough to come and air those concerns. They have now been talking about it, but not really opening up to the whole investment world as such of how AI can be very disruptive. You can see the kind of valuations the AI players are commanding. And as we've always been saying, in fact, you heard Sameer on your show also saying that market cap are not created, disproportionate market caps are not created purely by just because the stock is rising. You take it from other sectors. And I think that's what's happening in the AI play itself. Those market caps weren't around $800, $900 billion each of market caps weren't around earlier. And they're taking it away from players whose market share they're taking away from. And that's why we believe that there's a lot of pain left in this particular sector. We don't mind probably, nobody gets anything at the bottom or at the top. But we don't mind that even after a rise, if they come out and say that, okay, things are evening out, growth rates are going to come back, but obviously they're not going to be exciting growth rates coming back. We're talking about mid to high single digits kind of growth rates, if at all they come up after a couple of years. Right now, it's going to be growth destruction. And that's why we don't trust the valuations, because you're looking at history and you're saying the present valuations look cheap as compared to history, while things are very different the present is very different from what was in the past as such for this particular sector. So I think we're not getting sucked into this value trap, if you will, as such, and staying away for the time being.
Okay, all right. Thanks, Dinshaw, for stopping by and giving us your quick take. I'm not sure. I think next time you need to tell us when you're positive on tech. Because, that's clearly not a sector that you're interested in. But these large financial, organizations that actually have come to good levels, that's bulk of your portfolio. I mentioned in the past as well, BFSI, that's the space that you like. Thanks for stopping by, Dinshaw. Look forward to chatting up with you rather soon. For the time being, we slip into a short break. On the other side, Nimesh is waiting for us. He'll tell us what's going on in dealing rooms. We'll also keep a close eye on the markets and get you some trading ideas from our technical expert.
Welcome back. It's time now to get in Nimesh to find out what Dealing Rooms is saying and doing in today's trading session. Nimesh, hi, good afternoon.
Hi, afternoon, Rima. So a day of consolidation after the gap up opening, but the momentum is clearly there in the broader markets after recent consolidation. So looks like there is a bit of buying interest as well. At the macro level, some things have turned positive for India. The crude is lower, rupees under control, and hence you're seeing a bit of FI flow back as well. So there is a bit of buying as well from large institutions in the cash market of late, and that's been the trend today as well. Technically, 24,300, 24,350 is a level to watch on the upside. If that gets taken out, there could be further short covering rally in the very near term. So that's overall feedback. And also the breadth is quite positive as well in the broader markets today. The mid-cap, the index is up only 0.3%, but a lot of individual names are buzzing into it, and there is a bit of momentum as well. And some of the domestic money is chasing the mid-cap names. So that's the reason why a bit of outperformance is there. But broadly, the momentum seems to be there back from large institutions as well as retail investors.
Got it. All right, Nimesh, what about individual stocks?
So the first stock is Acme Solar. That's been buzzing in trade today, but I believe the street is anticipating a very large order win for the company very soon. So that's the reason why some bit of interest is back from larger HNIs in Acme Solar. The second name is Varun Beverage. That's been a bit of a surprise negative stock for the last couple of days and under pressure of late, largely because there is a fear that there could be a large block deal in Varun Beverages very soon. So watch out for a potential large block in that particular name. The third is Delivery. That's been buzzing in trade today. There was a report as well in the morning. And in general, there are buy flows that I find us to expect high delivery volumes in Delivery today. And the last is JSW Infra. It was part of my charter list last week as well. I had indicated that there could be a large QIP very soon. Looks like that QIP might happen this week. And already the indication is there is very strong demand from some global investors as anchor investors in the QIP. So a very strong demand, and the QIP is likely in JSW Infra this week.
Got it. All right, Nimesh, thanks a lot for joining us and giving us all of those cues. By the way, markets have slipped a little bit from the top. I'm not sure, HCL Tech, that's a stock that's dipped a little bit. ICICI Bank as well has dipped a wee bit in the last few minutes. So some bit of money being taken off the table towards the end of the trading session. What's doing well is Adani Enterprises. I think we should get the intraday chart of that stock zooming away as we speak. Currently at the day's high. Adani Enterprises comes up for you on the screen. But let's focus on the markets. And it's actually still a good day of trade. The Nifty is still going to go on with the raising its bat. It's up close to around 100 points or thereabouts. And all constituents have done well. The Nifty Bank has done well. The tech index as well has bounced back in today's trading session. And big part Reliance Industries, for most of the trading session, has been holding one end up. And remember, Reliance Industries is like an index by itself. In terms of the options data, the 24,100 put, the premium has come down from 140 to sub 50 rupees, around 50 rupees or thereabouts. So that's telling you there is writing at that particular level. So, those writers, they are sitting at around 23,900, which is the low that we saw on Friday. And they're expecting that level to hold out. Remember, this expiry plays out tomorrow. On the upside, the 24,150 call. Premium out there has moved up marginally. There's a mix of activity being seen at that particular level, which tells you that there are some writers as well sitting at that strike. So you put in 24,150 and add roughly around 60, 70 rupees or thereabouts. That's where the 100 DMA comes in at. So this 24,200, 24,250 is going to be a crucial resistance mark. As the chart is telling you, that's where the 100 DMA comes up for you on the screen. A couple of stocks that are moving around. Inox Wind. That one saw a big correction. It's coming for a bit of a short covering bounce in trade today. And MCX has got back to its buying, winning ways. That stock as well is seeing some kind of fresh buying today. Open interest is up by close to around 5%. Stock as well holding with a gain of around 2%. So we seem to be in a bit of a range. We are approaching the upper end of the range. Hopefully, Qs overnight are ain't too bad. And if we get past that 24,250, 24,300 odd, we could easily see another 300-400 points because that's where the bears are standing. They believe they can hold on to this 100 DMA and this level of 24,300 or thereabouts. Mitesh Thakkar is back with us with a couple of fresh trades. Mitesh, go ahead.
TVS Motors is a BTST. It's near the day's high. The hourly charts are quite positive here. So we'll suggest a BTST with a stop below 34.60 for targets or 35.20, 25 for tomorrow. And the other stock on my list, that's Union Bank, which is also BTST with a stop below 175 for targets of 179.5.
Okay, thank you very much for that. Let's talk about one big sector which is doing well today. That's consumer durables. Voltas, though, has cooled off from the high point of the day. It's now just up less than 1%. But it's an important milestone because on account of the delayed monsoon, the heat wave, AC sales for Voltas have crossed the 1 million mark in less than 3 months. So that's fairly positive, and it's lifted up other companies like an Amber or even an EPAC Durables. Upasna is joining in with what she knows. Upasna.
Well, things have turned favorable for the RAC industry on the back of the strong demand that is seen post-April 2026. Now, Voltas has reported that it has crossed 1 million AC sales unit in FY 26-27, and it reaches a key milestone just within the first 3 months of the current financial year. Mind you, this is the fastest ever run rate that the company has clocked in terms of reaching the 1 million units. The company said that the demand continues to remain encouraging across the markets, and company looks to build on to the momentum in the months coming by. Now, FY 26 was a challenging year overall for the RAC industry. Also, if we look at FY 24, it was one of the good quarters for RAC industry because of the severe heat wave that came through. Now, in FY 25, Voltas achieved nearly 2 million RAC sales milestone is the last reported number that the company had crossed such a high number on. Now, next up is EPAC Durables. Even that stock is buzzing as Voltas is one of its key client. It is one of the key volume buzzers today. Volumes are up nearly 27 times its weekly average. And lastly, coming to LG Electronics, well, the management joined us today morning and they have guided that in the current year, the AC sale is likely to cross 2 million units on the back of the heightened demand. And for FY 27, they stick to their guidance, which is mid-teen sales growth and early double-digit margin guidance. And it believes that the consumer demand is likely to continue in the months coming by as well. So all in all, these are the stocks on our radar.
Okay, thank you very much for that. Another consumer durable player, that's LG Electronics, is also in focus. CLSA has a positive stance on the stock. We caught up with LG Electronics Director and Co-Chief of Sales and Marketing Officer on the way forward and whether they're seeing the kind of momentum that Voltas is seeing in terms of AC sales and what their projections are for the full year. Listen in.
We will definitely touch 2 million mark. The reason is, if you remember last year, there was a cool summer. So we started this year, January, with a high channel inventory. So the sell-in shifted towards the first quarter of financial year, from quarter 4 to quarter 1. So that our traditional 60-40 ratio has a little bit shifted towards the other part of the year. And definitely we, being a sales leader, we would definitely like to touch or cross 2 million mark.
Okay, so that's about the consumer electronics space. But having set up over 3 million outlets in the last 3 years and growing to 22,000 crore rupees in only 3 years, Reliance Consumer Products has become India's fastest growing consumer company. Mangalam puts all of this into perspective. Mangalam?
Dare to dream and care to execute. That's exactly what Reliance does. You know, in an AGM where a lot of the spotlight went away into AI, new energy businesses, and the Jio IPO, the footnote, and which was actually, you know, could be a big multi-billion-dollar opportunity for them, is the FMCG play. Reliance Retail is now become an FMCG giant. Remember, it's just been about 3 years since its inception. In FY26, Reliance Consumer Products Limited, which is their retail business, actually crossed gross revenues of 22,000 crores. This number was 11,450 crores in the previous financial year. So it's a near 2x jump that we've seen. So no company in the consumer space has actually crossed 20,000 in such a short span of time and with the pace that Reliance has done. So that's exactly what has happened out here. 22,000 crore in gross revenue, 2x growth, fastest in the industry and also the highest in the industry that we're looking at. And it's not just that, you know, look at some of the brands that Reliance has actually grown in its consumer products business. Nearly 5,000 crores coming in for Campa. In some of the important markets, it's also crossed double digit in market share. It's among the top 3, top 4, aerated beverages players in the country. And then Independence, the food brand, also has done about 2,600 crore in gross revenue. So all of this, while reaching 3 million plus outlets and 5,000 plus distributors, is no mean feat. And if you compare Reliance's gross revenue to all the other companies, while, you know, all of them, the reported numbers are net numbers, so you have to, take that into account. But even then, it is fairly admirable. 22,000 crore rupees stands in line with Nestle's 23,000 crore rupees, above Tata Consumer's 20,000 crore rupees, or even Britannia's 19,150 crores. And remember, these are extremely old companies in India for the longest time. If you compare it to some of the other players like Godrej Consumer, Marico, Dabur, this number looks like it is nearly 2x of that. And imagine a company doing that within just 3 years of its existence, organically and by acquiring brands on a gross revenue basis, 22,000 crores. But they're not stopping here. The near-term ambition is to go to 1 lakh crore in revenue by FY30 and become one of India's largest FMCG companies. Now, if you're looking at the multiples at which all the FMCG companies trade, and at 1 lakh crore revenue, this could definitely be the next multi-billion-dollar opportunity. And that's exactly what Mukesh Ambani said.
Okay, that's about Reliance Retail and the FMCG giant that it's become. Ambrish Balika is also joining in. We've got about 15 minutes to go as we wrap up today's trading session. And the Nifty is just about holding on to the 24,100 mark. Ambrish, before we get chatting about individual movers, let's begin with your pick for the day.
Yeah, good afternoon, Rima. My pick is JK Lakshmi Cement. It's among the largest cement manufacturers. Have a wide range of cement products, including blended and premium variants, catering to both trade as well as non-trade markets, and caters to north, west, and eastern markets of India, with a total consolidated capacity of about 18 million tons. Alongside cement, the company is present in allied business, building materials like ready concrete mix as well as AAC blocks. The company continues to expand its capacity through new grinding units and large integrated projects to strengthen its present, and it's improving the presence across the various key demand regions. And we should see the capacity being hiked to about 30 million tons from about 18 currently by FY30. So despite the ongoing expansion, leverage remains under control. Net debt stayed broadly flat even after the capex spending, and debt ratio also improved marginally. So this gives the company enough room for expansion without stressing the balance sheet. So increase in input costs as well as the logistic cost because of the recent geopolitical issues have already been discounted in the price. So I'm expecting a revenue CAGR of about 10% for the next 3 years. So expected EPS for FY28 is about 44 rupees, and my target price is 792.
Now that. Ambrish, Jio, that's the other big story. The DRHP has finally been filed with SEBI. Investors are anticipating a listing towards the end of the year. Now, we don't know what the price band or the valuation is going to be, right, but the market estimate is it's going to be about $110, $120 billion. And many believe that, they will want to leave some value on the table. So whenever it lists, it's going to be a good listing. Now, so far for investors in India, we haven't had too many telecom plays. I mean, the whole industry has gotten disrupted, Aircel, Reliance Communications. So pretty much you've got Airtel and a Vodafone Idea, which is sort of a risky bet. Exactly. What is your view on Jio? Is it a must-have in one's portfolio if the valuations come at what the market is estimating it to be? Or do you think it's okay to avoid?
Not at all. Because I think this is, one of the most awaited IPOs, and thankfully the announcement has been made. So going by the past track record of the Reliance Group, surely they'll leave enough on the table for the investors. So clearly, I think as and when it comes, although we don't know the real valuation as of now, but then, going by the past track record, I would say it's a must-apply IPO. And at the same time, like you rightly said, there are hardly any pure telecom plays other than Bharti, which is there. Vodafone Idea, anyway, is only a risky bet as of now. So I think there'll be a lot of large investors also. Forget the retail investors. There'll be a lot of institutional investors who will be waiting to invest in Jio.
Got it. Okay. All right. Just a quick word, Ambrish. I wanted to ask you about your view on the Vedanta Group. Any of the demerged entities do you like? There was an event that had to take place, which was the company exiting the Nifty Next 50. And everyone was waiting for that selling. But markets are, anticipating these things. And they're positioned for it. If we pull up a split chart of both, Vedanta Aluminium on the BSE and Vedanta Aluminium on the NSE, the last 30 minutes where you expected to see outflows of around $140 million, that's got lapped up. And the stock, in fact, has moved up instead of moving down. So all that selling actually has got absorbed because the street is well prepared for it. I think in some time my director will pull that chart up. What is your view, Amrish? Anything you like from this pack? Because Vedanta Aluminium listed at 535. That was quite euphoric, I would say, because that would be around 7.5 times. Came down to around 435, 440. From there, now it's up again. There's an event today which has taken place. The oil and gas business as well did see selling lower circuit, that's popped up again. And the steel, iron ore business, various people are positive on that. What do you like from all that is being served from the Vedanta group now?
Like we were discussing a few days back, the stock which I like the most here and the safest one, I think, is Vedanta itself, which is the holding company, which I think one should look to buy even at the current levels. Vedanta Aluminum, yes, I think it can go up to levels of 530, 540 again. But the reason, again, why I'm talking of the holding company is, let me go back to the topic of Jio and Reliance. After the listing of Jio, Reliance will become a holding company. And generally, holding companies get a huge discount to the underlying value. And quite a few holding companies are putting at a 20% discount, about 80% discount at 20% levels.
It's Vedanta Limited, right?
Yeah.
Okay.
So possibly with the listing of Jio, I think the whole holding company valuation concept may change. And I think Reliance would, in fact, be responsible for that. And because of which I'm saying, just not Vedanta, possibly look at buying all the other holding companies, because possibly the valuation itself could change going ahead.
Okay, so you're saying buy Vedanta Limited, right?
Yeah.
Okay, got it. All right, you're expecting the holding company discount to narrow, if I got that correct.
Exactly.
Got it. All right. Request you to stay with us. But Amrish, just to put out, the view that Vedanta Limited only has a stake in Hindustan Zinc, and some other smaller businesses.
Yeah, that's true. That's true.
Got that. Okay.
So basically, this discount will reduce.
Got it. Okay. Vedanta Limited gets bulk of its value from Hindustan Zinc, as Amrish says, that for various companies, he expects this holding company discount to actually narrow, which in turn will help Vedanta Limited. Got that, Amrish? I request you to stay with us, Amrish. For the time being, we'll slip into a short break. Come back. We'll continue our chat with Amrish. We'll also focus on a couple of other stocks.
Welcome back. We've got about 4 minutes to go before we wrap up the trading session. And now the Nifty's below the 24,100 mark. So it's come off a tad bit from the high point of the day. Ambrish is still in conversation with us. Ambrish, any new ideas that you'd like to share with us?
That for the time being, there are not too many other new ideas. I mean, I've already shared, I think every week I share a couple of ideas. So that's the one which I keep, like holding as of now. But among the older ideas which I had shared earlier, both EMS and EPAC, I think have done wonderfully well today. But I would still say hold on for a while longer.
Is there a case to buy EMS or EPAC at these levels?
No, I wouldn't suggest buying at this point of time. I mean, especially EPAC. Although if one has, hold on maybe for the next couple of days, because of the extended summer. I think this AC story has played out extremely well. But once you have heavy rains coming in, hopefully over the next 1 or 2 weeks, this story itself, this sentiment could change a bit. So I think one should utilize this move and book.
Any of these other companies, snacking ones, restaurant brands, Asia stock is up 10% today. The change of hands have taken place. Barbecue Nation as well. The stock has moved around 650 rupees. I saw an Equirus note that was talking about more than 1,000 rupees of target price. The stock, though, has doubled, I think, from the lows earlier this year. Do you like any of these?
Here I would clearly like, restaurant brands where I think there can be still a bit more of upside, maybe either 15 to 30% more from here. And the second one would be specialty restaurants, which again has been lying low for a while. It only now has started moving. The balance sheet is still in an extremely good position. And I believe that the input costs, with the increase, I think can easily be passed on to consumers. So that happens with a lag of possibly 3 or 4 months, and that should happen.
One quick word, Aequs Limited is extending gains. So last week we were talking about that maiden investor day where the company set targets of 4 to 6x growth by by 2031, and they're basically saying that what we did in aerospace, we want to now replicate in the consumer electronics space. Have you had a look at this company?
No, not
Aequs
really.
Limited.
No, I don't really track it very closely, so it's difficult to comment on it.
Got it. Okay. All right. Ambrish, we appreciate you stopping by, giving us a lot of ideas as always. It'll be useful to our viewers. So just keep some of those ideas in mind. Well, time to wind down the markets. Today was a good day for the markets. The Nifty goes home with a gain of around 75 points. You would want a better end to trade, but we slipped below the 24,100 mark by the time we wound up. What did well? Cipla was the top gain on the Nifty, up 5%. So, and you had the Nifty that did well. You had the Nifty Bank that was up 200 points. The IT index as well was higher in today's trading session, pulling back the losses that we saw on Friday. And Reliance Industries as well did its own. So you had both the opening batsmen and the one down as well that performed in trade, which is good news. However, there was one pack that didn't do well, which was the FMCG, consumption-based stocks. Titan was down. You had Nestle that was under some pressure. Trent as well was down close to around 1%. Asian Paints was one of the big losers. That was down close to around 2% in today's trading session. From the broader markets, a few stocks that deserve special mention. Mankind was up 5%. Delivery was up close to around 5% in trade. Aditya Birla Capital, well, what a beautiful move that stock has seen. 1 lakh crore in terms of market capitalization. On the flip side, SAIL came in for profit taking. That was down 3.5%. Varun Beverages, the street is anticipating a large trade. It'll be interesting to see whether or not it takes place in the block window. That will, get the short stuck on the wrong side, but we'll have to see how that goes if in case that large trade takes place. IndusInd Bank as well was lower in trade, and Waaree Energies did see some selling in today's trade. From the broader markets, a few more big movers. Norcil was up 20% in trade today. EPAC Durable was up close to around 10%. You had IDBI Bank that was up close to around 5% in trade. Vedanta Aluminium played out that special situation today with regard to rebalance and exit from the Nifty Next 50. So stock went up close to around 5% in the last 1 hour or so. All in all, a good session. You could quibble that you want to end at the high point of the day, but you go with gains of around 70, 80 points. You'll be happy with that, with the breadth of the market firmly in favor of the number of stocks advancing. We'll wrap up on this edition of Closing Bell. You don't go anywhere. The team of Markets Forward comes up next.
Indian markets end higher after a range-bound session, with all major indices closing in the green. The Nifty settles above the 24,100 mark, led by gains in IT and pharma stocks as investors navigate a cautious trading day.
Auto stocks perk up in trade as vehicle registrations jumped 20% to 17 lakh in June, continuing the momentum seen last month. The growth is driven by strong passenger vehicle sales and the sharp rise in electric vehicle registrations.
Voltas races past the 1 million AC sales mark in FY27 on the back of heat waves and a delayed monsoon. LG Electronics also flags a good summer season for ACs. Despite a 10 to 12% price hike, stocks of AC makers perk up.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear up for the next trading day. I'm Vivek Iyer, and with me today is my colleague Ritu Singh. Ritu, it was a session where you actually saw the Nifty managing to hold out about the 24,100 level, and the mid-cap and small-cap end of the markets also moving in tandem with the benchmark indices.
That's right. It was a good trading session holding up above that 24,100 mark. Lots of action in the broader markets as well. And we've got you covered over the next 20 minutes with all of the big news and the key developments on Dalal Street, the top corporate voices, events to track ahead. So let's get straight to it. What we have first up is a lineup. Let's tell you what we have in store today. We'll start with the top movers and shakers of the day, from auto stocks to Cipla and the railway pack. We'll also take a closer look at the key triggers and the stocks that are making headlines today. And last but not the least, we also delve into the key market events to watch out for tomorrow's trading session. So with that, let's get to it. Our first segment of the day, Vivek, take us through the top movers and shakers.
Well, that's right. First up, have a look at the entire IT pack. On the session of Friday, you actually saw most of the IT names take quite a bit of a pounding. This was after the very weak guidance or the guidance cut that we saw from Accenture, but post which you saw the Indian IT stocks too move quite negatively. But today, most of the IT names managed to see quite a bit of a rebound. So names like Coforge, Telecom, Persistent Systems, all of them moving higher in the session. Towards the latter part of the trading session, we did see some news come about on one of the agencies indicating that India and UAE were in talks to go ahead and see a sale as far as defense equipment is concerned. That led to a bit of a leg up across most of the defense stocks, names like BEL, Bharat Dynamics, Solar Industries, all of these names moving higher in the session. Of course, big boy Reliance Industries, that held up the market today. Very strong commentary coming in from the AGM. That particular stock amongst the top gainers as far as the Nifty was concerned, cooling off a little bit towards the end of the session. Kirloskar Oil Engines. Now, this particular name hit the upper circuit, taking the group companies along with it. Two important developments. Number one, the company for the first time received an order as far as a data center project was concerned. And secondly, an upgrade coming in from JN Financials. And lastly, Aegis Logistics. This particular stock has done very well over the last month or so, continuing its up move up by over 6% today. Very few laggards, given the fact that the advanced decline ratio breadth was quite strong. But SAIL, one of the top mid-cap laggards, down almost 3% in the session. VBL, that particular name, one of the top laggards as far as F&O is concerned. Supply concerns is something that we flagged off earlier today. Cummins, again, one of the competitors getting in a key order for a data center. That is as well as a significant volume activity was seen in Cummins today. And lastly, Craftsman Automation, well, that particular stock on very good volumes today saw quite a bit of selling pressure. So Ritu, a day where you saw advanced decline ratio quite in favor of the advances, and select sectors like IT and defense clearly being an outperforming sectors.
That's right. We'll focus on all of them in just a bit. But for now, we had strong growth momentum come in for autos. Registrations were up 20% in June, led by passenger vehicles and EVs. Sudarshan, in fact, joins us now with more details on this one. Sudarshan, a good couple of months for automakers now it's been.
Auto in the top gear move continues even in the month of June 2026. Even in the month of June, total registration growth is expected to be more than 20%, with passenger vehicle segment continues to outperform the industry, where growth can be more than 20 to 23%, followed by two-wheelers around 19 to 20%. One segment that continues to do well over the last few months is electric vehicle segment. After the growth of more than 40% in the last 2 months, even the June is looking like a very strong month. Now talking about the total registration growth, expected to be more than 20%, followed by two-wheelers at 19%. Passenger vehicle segment growth is seen at 23 to 24%. Commercial vehicle overall growth is expected to be very strong. Here also growth can be 20%. But M&HCVs, while it can see a growth of more than 10%, but may underperform the industry, and three-wheelers growth is expected to be in the range of 16 to 17%. Now talking the segments in the details, first two-wheelers, two companies that are expected to do well are Royal Enfield and TVS Motor. They continue to gain the market share, and other two companies too, Hero Moto as well as Bajaj Auto, may report a healthy growth. In the passenger vehicle segment, two companies that are gaining market share are Maruti and Tata Motors passenger vehicle. It may be a strong growth month even for Mahindra and Mahindra Auto, while Hyundai is losing market share. In the commercial vehicle segment, it's a mixed trend. Ashok Leyland is losing market share, while it's a strong growth month for Tata Motors commercial vehicle, and even on the market share front, it's gaining market share. Now, coming to the tractor segment, we expected that delayed monsoon may impact the tractor industry, but so far we are not seeing any impact, and Mahindra tractor segment continues to outperform the industry. Now coming to the segment which is a standout and it's been performing very well over the last few months is the electric vehicle segment. We have taken two units, that is battery operated vehicle and pure EV, as the matrix to calculate the numbers. Now in the month of April, the growth was almost 44% and total volumes were of 2.52 lakh units. Come to May 2026, it increased to 2.76 lakh units, and the growth has increased to 48%. In June 2026, already so far, just in 21 days, volumes are already higher than what we had seen in the entire month of June 2025, and the growth is, so far, it's around 10%. So another month where we can see a growth of more than 40%. We still have 8 to 10 days, but as of now, the trends for auto registration are indicating a continued strong demand as far as auto segment goes.
Well, thank you so much, Sudarshan, for joining us, giving us a sense of what exactly to expect as far as auto sales are concerned. It appears to be a very strong month despite all of the disruptions that we've seen. But to take the discussion forward, we are joined by market expert Ambrish Baliga as well as Jay Thakkar of ICICI Securities. Good afternoon, gentlemen, and thank you so much for joining us. Well, Jay, let me come across to you first. Nifty just managing to hold out about the 24,100 levels. Where do you see markets headed from here on? And a view as far as the auto or the Nifty auto space is concerned.
Hi, very good afternoon to you, Vivek. We will see, overall Nifty is in a uptrend. Positionally, I would say that 24,500 to 24,800 is what we are looking going forward. But then in the short term, there is some pause in the Nifty because of which, we are seeing the supply around the levels of 24,200 levels on the upside. So that really needs to be taken off in order to gain that upward trend or continuation of the same until 24,500, 24,800, which eventually our targets are. Until that happens, you cannot rule out the time-wise, correction. I would say some consolidation within this range of say 23,800 to 24,200 on a conservative basis. However, on the put side, you have this 24,000 strike, which has the highest put base, and followed by 23,800 and 23,500, which is the worst case scenario. And on the upside, 24,200, that's the strike. Once those levels are taken off, I think the next base is at 24,000, call base is at 24,500, which would be the immediate target. If you see the overall market breadth, it is still very much positive. We are seeing good sectoral rotation. In fact, the industrials are doing quite well. Since past week, we have seen the defense mainly within that, and the railway stocks are doing relatively better, but then the power names or power finance names are also doing quite good. Selective banking names are doing good. So apart from IT, I would say most of the sectors, stocks specifically, are trading positive. Bank Nifty, Vivek, that's the final thing which I would like to add. If that manages to take off 58,000, for these series, 58,000 has the highest call base. If those levels are taken off maybe tomorrow or day after, that will help Nifty to take off 24,200. And that momentum will thereafter take Bank Nifty to 59,000. Else, that could be a consolidation of 1,000 points out there as well. So overall trend is positive. It really needs to be watch that whether the immediate resistance are taken off or not in order to gain further momentum.
Okay, Ambrish, I know we've asked you your view on the tech sector countless number of times, but I'm asking only again because, start of, previous week again, on the back of some weak guidance coming in from Accenture, we saw pressure on shares. Today, the IT pack was doing relatively better, so it's been fairly volatile. I mean, names like Persistent, Infosys, Coforge, Tech Mahindra, all of them rebounded in trade today. There's no new fear that is coming to the market. The AI trade, of course, is very well playing out. But what will trigger a re-rating from here, or some sort of stability at least?
No, I think we'll have to wait for that stability to come in. I think it'll be at least either 2 to 3 quarters away. I mean, that AI fear clearly is playing out, and rightly so. So I would possibly wait for another 1 or 2 quarters more, not just for the earnings, but also for the management commentary, which I need to see, becoming more positive. I need to see more amount of investments, going into AI. HCL Tech, for example, has made they've taken one baby step, but then I need to see this happening across. It's only then that I'll really go out and start buying into IT stocks, the Indian IT stocks.
All right, stay on, gentlemen. We also had shares of Cipla that surged nearly 5% in trade today after Citi put the stock under a 90-day positive catalyst watch on possible rebound in the US business and also easing geopolitical concerns. Vinny Motiwala joins us now with more on this one. Vinny.
Hi, so actually this is a 90-day positive catalyst note that Citi has come out with today on Cipla, buy rating target price of 1,700 rupees per share. But what are the positive triggers here? One, in the near term, US, they believe, will start seeing a rebound. Why? The generic Flovent approval is expected of that drug, as well as generic Ventolin is expected to be launched as well, which will support the growth of the company and trigger the up move in the US markets for Cipla. Now, obviously, India business is also doing well, is what Citi is highlighting, by the recovery in the respiratory segment within the IMP for the company. Indore facility, that's actually due for a re-inspection that could happen anytime soon. And if that US FDA positive and clearance comes in, that would be a near-term catalyst for the company as well. Improving geopolitical conditions, easing in concerns of that input cost inflation, margin pressures will start reducing as well. So obviously, these are also some positive triggers in the near term. What Citi highlights that Revlimid had caused some bit of a decline in terms of the earnings coming in because that was coming off patent, right? So that earnings had started coming down. Now they believe that that has bottomed out in the last quarter, that's Q4, and from here on you may start seeing an improvement. Valuations are currently at 25 times FY27, which is favorable in terms of risk reward, is what the brokerage is highlighting, and that is why the stock is passing.
Well, thank you so much, Vinny, for joining us and giving us a sense of what exactly drove the stock of Cipla higher in the session today. But now moving on to a mid-cap pharma company, a company by the name of Vash Scientific. That particular stock gained over 6% today, and this was on the back of a CNBC TV 18 exclusive. So what we are learning from our sources is that Carlyle, the private equity firm, which is now the promoter of the company with over a 60% stake, is looking to pair close to 10% stake in the company. We understand that a clutch of mutual funds and strategic investors have already evinced interest to go ahead and pick up stake as far as Vash Scientific is concerned. Remember, Carlyle, Vash Scientific was earlier known by the name of Sequence Scientific, and earlier Carlyle had picked up majority stake in Sequence Scientific up to 53%, and then consolidated another portfolio company by the name of Vash, and post which their stake went up to over 61%. Carlyle holds stake in Vash in two arms. The first arm, of course, is CA Harbor Investments, and the second one is CA Hull Investments. CNBC TV 18, we've reached out to Carlyle as well as Vash Scientific for a comment. Their response is still awaited. One important thing to watch out for as far as Vash is concerned is going to be the fact that the company is going to hold an investor day on June 25, 2026. One of the key triggers or the key discussion points there will be the recent acquisition of an Italy-based company. But other than that, also the guidance as far as FY27, FY28 is concerned is something that the street will keep an eye out on. Gentlemen, Ambrish, if I could come across to you, you heard, you heard Sudarshan, you heard Vinny, and also you heard the developments as far as Vash is concerned. Within the pharma space, where will your preference lie? Will you look at the large cap generic names or maybe even a smaller name like a Vash? Interesting developments here, not exactly a generic player for humans, but rather more in animal healthcare. Where would your preference lie?
No, among the mid-cap funds, surely I would be looking at something like a Vash. where I still see the performance improving going ahead. If you see the last couple of quarters, they've been extremely good. And the recent acquisition also will I think, play a decent role because the spends on pet care clearly is increasing, day by day. Among the larger ones, I still like Sun Pharma and Lupin, where I still see a decent upside of another 20-25% more from here.
All right. Thanks very much. Let's move on to, from infra and industrials to consumer durables. A number of stocks were in focus today. They were driven by a mix of order wins, policy developments, and business updates. So for us, let's get you the key names in the radar. Devyani joins us with that wrap.
Well, first up is Kirloskar Oil. And the company has secured a 192 megawatt hyperscaler data center genset supply order from Hypernext. The JM Financial has also upgraded the stock to a buy with target price raised to 2,430 rupees per share, and Motilal Oswal has maintained a buy, raising the target price to roughly around 2,350 rupees per share. Now, NOSIL is next. Now, the government has approved an anti-dumping duty on rubber accelerator imports from China, EU as well as the US. So this is a direct positive for NOSIL. Now, EPAC Durables was also on our radar with Voltas, which is a key client for EPAC, seeing a strong sales of 1 million AC units just in the first 3 months of FY27. Now, on the back of order wins, Texmaco received multiple orders worth 265 crores. Hence, it was definitely on our radar, as well as RVNL, which received an order worth roughly around 2,977 crores from NMDC.
Devyani, thank you very much for joining in with that. Still have Amrish Baliga and Jay Thakkar with us. Jay, any view on Kirloskar Oil Engines? It's secured a data center genset supply order. It's got an upgrade from JM Financial as well. I think Motilal Oswal has also raised the target price on that stock. Any views there?
Well, Ritu, it's a non-FNO stock, and I generally don't track this stock. Hence, I won't be able to comment on this.
Yeah, Jay, just wanted a view, on the back of this particular development, you actually saw some amount of profit booking come across as far as Cummins was concerned. If you could look at the chart of Cummins, as well as some of the select industrial names or capital goods names like L&T, names like Siemens, all of them saw a bit of profit booking. Do you feel there is now a toppish pattern further downside from here on?
Well, Vivek, no. I am, in fact, rather bullish on the overall industrial space, and which includes the capital goods names. So I would say that L&T among that, as of now, seems to be the top pick. On the upside, I think that L&T is likely to inch towards 4,400 positionally, and I think that 4,100 now in the near term will act as a very critical support for the stock. It has seen a good, breakout on the upside. In fact, as far as the futures data also, when I looked at it, then we have seen a good long additions out there relatively. So that is the topic, followed by Cummins, ABB. These are also a couple of names which I think are likely to do better only. So if at all there is any tips, this space should be utilized as a buying opportunity. In fact, why I think that industrials are looking better, a few of the names wherein we have seen some short covering happening. So if you talk about railways, then definitely there are shorts that have built up there. So within the railway space, you can see some short covering happening. Within defense, there was good amount of shorts. We saw that getting covered, a few of them, or partially in April. May again saw some consolidation, but then relatively now again in June series, we are seeing a good upward breakout as well as momentum in this defense name. So that as well among the industrial space. And obviously infra EPC names are also doing relatively better. So I think overall space of industries which you just asked me looks positive. And if particularly if it is about cap goods, then I think ABB, Cummins, L&T, all of them are looking better.
All right, Amrish, any thoughts on the industrial space and also Kirloskar Oil, if that's something you've looked at?
Yeah, I think whatever news has come as far as the data center demand for Kirloskar Oil, I think that's extremely positive, no doubt. But then we should also look at the other companies which are there in that space. I think Cummins would be the other one, I think, which will benefit quite a lot because of this. Although the valuations for both are, I think, decently rich, but because of this news, I think it can still go further up.
Well, thank you so much, Amrish, as well as Jay. Slightly mixed view coming in as far as capital goods infra is concerned, but you continue to remain a bullish stance, especially as far as dips are concerned. Thank you once again. We'll now move on. We'll take a short break, and we'll, on the other side, get your top corporate voices along with the key market events to watch out for.
Welcome back. You're watching Markets Forward. Let's get you, as promised, some top corporate voices of the day. We had LG Electronics, which says it has crossed 1 million air conditioner unit sales in the first half of this year, which was helped by a strong summer season. The company also remains confident of selling 2 million AC units in this year, while maintaining its mid-teen revenue growth and early double-digit margin guidance for the full year FY27.
Delhi-based VMAT Retail says that it is seeing very strong demand trends and seeing strong growth opportunities in East India, particularly West Bengal.
Powerica says it continues to see a strong order pipeline from the data center segment, which now contributes 17 to 18% of its revenue. The company notes that the share of data center business has risen from around 13% a few years ago, reflecting growing demand. The management also expects the overall margins to improve as the product mix shifts and the operating leverage also kicks in.
And before we wrap, we bring you the key market events to watch out for tomorrow's trading session. Devyani Vibhuti is standing by with all the key events to watch out for.
Well, let me start with the global events. The Japanese core CPI is set to come out tomorrow, along with Singapore's core CPI as well as CPI numbers on a year-on-year perspective. Now, the USA S&P Global Services, Manufacturing as well as Composite PMI for June come out tomorrow as well. Now, the domestic front, the India Flash Manufacturing and Services PMI for the month of for the month of June is set to come out tomorrow. While on the markets front, the Nifty weekly options expiry is also set for tomorrow. Now, Saturday Credit Care, Manappuram Finance and City Union Bank are also likely to be buzzing tomorrow with the board meeting to consider fundraising for each of them. Now, on the IPO front, the Waterways Leisure Tourism IPO begins tomorrow and goes on till the 25th of June 2026. Now, in other news, the US and India bilateral trade talks start tomorrow, where Representative Jamieson Greer begins a 2-day visit to India tomorrow.
Devyani, thank you very much for joining in with that. So with that, we've come to an end for this edition of Markets Forward. For the markets itself, 24,102 is where we close. It's been a decent trading session. Let's see tomorrow, how we go from here. Some of the key levels that our guests highlighted to watch out for. Bank Nifty also closing above the 57,930 odd mark. And on that note, we're going to wrap up this edition of Markets Forward. We'll be back with more news and updates when we return. For now, from Vivek and me, it's a goodbye. Thanks for watching.
Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The top stories that we're tracking for you this evening. Iran's foreign minister claims major progress after the first round of talks with U.S. officials end in Zurich. Negotiations lasted 18 hours despite tensions sparked by President Trump's threat to attack Tehran if it does not restrain the Hezbollah. Iran claims securing waivers for oil exports and the release of some foreign assets. Crude oil prices fall after Iran closes the Strait of Hormuz over Israel strikes in Lebanon. Ship tracking websites showed 12 vessels crossed the strait on Sunday, which is sharply lower than 35 transit on Saturday. Sensex and the Nifty end in the green after a range-bound session. All sectoral indices gain in trade. The rupee weakens by 35 paise against the dollar to move closer to the 95 mark. U.S. Trade Representative Jamieson Greer set to arrive in New Delhi for negotiations. Commerce Minister Piyush Goyal says the trade deal is likely to include preferential tariffs for India, along with rules of origin and investment provisions.
I have heard the answer of my parliamentary party to that question, and I accept that answer with good grace.
The UK is set for its 7th Prime Minister in a decade as Keir Starmer resigns less than 2 years after leading Labour to a landslide victory. He exits amidst policy missteps and scandals involving close aides. Andy Burnham, frontrunner to succeed him, won a parliamentary seat just days ago at the Makerfield by-election. Shares of Reliance Industries gain after Chairman Mukesh Ambani announced the Jio platform's IPO, likely to raise a record $4 billion. AI deployment across businesses and scaling up of growth engines gets a thumbs up from brokerages. The southwest monsoon finally making some progress after remaining stationary for 14 days. The weather department says the monsoon is likely to reach Mumbai within 48 hours. The sale of air conditioners surging due to the extended heat wave. Voltas alone manages to sell 10 lakh units in the last 3 months. Debutant Cape Verde's dream run continues, holds a higher-ranked Uruguay to a draw. Egypt tops its group after a 3-1 win against New Zealand, secures its first ever win since its World Cup debut 92 years ago. Well, let's go straight to the top story this evening. Officials from US and Iran held the first round of in-person negotiations in Switzerland's Zurich. Iran's foreign minister and mediators are claiming major progress after the talks lasted 18 hours despite tensions being sparked by threats from President Trump. Now, in a social media post, Iran's foreign minister said the mediation by Pakistan and Qatar has delivered major progress to end the war in Lebanon. He also claimed US sanctions against oil and petchem exports have been waived and that some frozen assets have been released. Both the mediators, that's Qatar and Pakistan, also released a joint statement claiming encouraging progress. While the main negotiators have left Zurich, a technical team from both the US and Iran are staying back to continue the talks to reach a lasting agreement in 60 days. The joint statement also said a communication line has been established to avoid incidents relating to safe passage for commercial vessels in the Strait of Hormuz. The joint statement also addressed the situation in Lebanon with the formation of new deconfliction cell. The US, along with Iranian and Lebanese officials, will be members of this cell to ensure the termination of all military operations. However, Israel continues to maintain its forces will remain in southern Lebanon as long as necessary to defeat the militant group Hezbollah. Despite all of this, shipping traffic at the Strait of Hormuz remains constrained. Iran announced the closure of the strait over the weekend after Israel launched fresh attacks in Lebanon. Brent crude prices remain firm around the $80 mark. Here's Inzamam Rashid reporting from Zurich on the first round of negotiations between the US and Iran.
These were talks that effectively went on till around 3 o'clock this morning, Switzerland time, up in the mountain resort of Bergenstock, where the Pakistanis, the Qataris, the US delegation and the Iranians were thrashing out discussions. And it came after a day of diplomacy, of negotiations, a day of twists and turns, where there were pivotal moments which almost completely disrupted the negotiations because of words from President Trump from over 4 24,000 miles away in the United States, threatening with renewed threats towards Iran, suggesting to the Iranians that they may not even make it home because they have shut the Strait of Hormuz, or that's what the Iranian military have been saying. Anyway, so there were talks that took place. Then there was this kind of disruption. The Pakistanis then managed to get the Iranians back to the table to carry on discussions, and then they talked through till around 3 o'clock in the morning. Now, it's my understanding this morning that the leaders of all those countries will depart. The Iranians have now left the Bergenstock resort and will be heading back to Tehran, but there will still be teams on the ground from all 4 countries up in the Bergenstock resort to have technical discussions over a number of issues around Iran's nuclear program, around the Strait of Hormuz, around releasing some of Iran's frozen funds, which is actually at the top of the Iranian agenda, and also talking a bit about how the region looks in the future, whether there will be US military withdrawal from the region as stated in the Memorandum of Understanding. So it was a day of a lot of tension, but also some positive steps as a result of those negotiations, and we'll have to see how the next few days here in Switzerland pan out. But the leaders, those top negotiators, are now leaving the country and heading back to their respective homes.
It's a great day, a day which is going to promote peace and prosperity, not only in the region where crisis really created humongous challenges, but this will have global peace. And I must, at this point in time, with the fullest sincerity at my domain, thank President Donald Trump for his visionary and very dynamic leadership, which has resulted in this meeting here today.
Well, one of the mediators there, Pakistan's Prime Minister. Now, US Vice President J.D. Vance, also in Switzerland, he quipped about his 2 favorite people in the world, with one being an Indian and the other a Pakistani. Remember, J.D. Vance is married to Usha Vance. Take a look.
I will say that since Field Marshal Munir welcomed us with the Prime Minister in Islamabad, I have joked that I have 2 very, very important people in my life, an Indian and a Pakistani. The Indian is my wife, and the Pakistani is Field Marshal Munir. And I've probably talked to Field Marshal Munir more than I've talked to anybody else over the last 3 months. Would not be here without his statesmanship. He is, of course, a great military leader, but I think he's shown himself to be a great diplomat.
Well, that's J.D. Vance there on Pakistan's army chief. Now, 54 people were injured, 18 are missing after an explosion at Qatar's Ras Laffan LNG complex. Authorities said the blast was triggered by a technical accident and added that there was no threat to public safety. The incident occurred as workers were restarting operations that were halted after an Iranian attack, but that took place in March. Qatar Energy did not say whether the explosion has caused any damage to the plant. They did say it was an operational incident. Now, Brent crude prices continue to hover around the $80 mark as investors digest the developments in Switzerland. Manisha is standing by with more on the outlook for crude oil and the status of shipping in the Strait of Hormuz. Manisha.
Well, it has been a volatile peace talk between US and Iran from threats from both sides, but the parties still meeting, looking at various points to talk about. And that clearly has led the crude oil prices back below $80 a barrel. At the high point in sense of West Asia conflict, the crude prices did go to 120. So from 120 in the month of May to below 80 right now is nearly 40% of a decline that we have seen come in for the crude oil prices. It was 8% down in the previous week, 6% down in the week prior to that. So it has been a constant decline that we are looking at into the markets there. Also, investors are reacting to the peace, positive signs in sense of progress of peace talk between US and Iran. The joint statement between Qatar and Pakistan talking about an agreement to a roadmap aimed at securing final agreement in 60 days is what the street will be looking at. But amidst all of this, we've seen the shipping numbers increase and kind of fall yet again as Iran says that Israel's attack on Lebanon and the retaliation is something that they will not be working with. So when you look at the numbers coming in on sense of shipping data at the Strait of Hormuz, whether it is from various agencies like the Windward, Telecom or Kepler for that matter, suggest that while before West Asia conflict, the everyday shipping passage via Strait of Hormuz was at 120 to 140. It declined to nothing, to single digits some days between the last 3 months therein. But since the US and Iran talked about opening up the Strait of Hormuz without a toll, we did see traffic at around nearly 25 ships on previous Thursday. It went up to nearly 35 ships passing Strait of Hormuz on Saturday. Sunday saw a decline to a total 12 vessels that have passed. But on Monday, that is today, there is a sense from the satellite data that no ship perhaps is passing right now. Of course, the number varies between many of these agencies depending on which ship has switched off its AID corresponder. But today, from where we stand, there's no ship passing, and the market's, of course, watching this very, very closely.
All right, Manisha, yes, we will be watching it very closely, but around $80 a barrel, that is crude for now. On to the equity market action. The markets did end higher after a range-bound session, with all major indices closing in the green. The Nifty above 24,100, led by financial heavyweights like Reliance and Infosys. The Sensex closing 290 points higher, 249 higher on the Bank Nifty, and the Nifty mid-cap index gain of about 200 points there. Rima standing by now with the day's market action. Rima, closing in the green, that's the Monday afternoon for you.
Overall, a steady Monday trading session. We gave up some gains towards the end of trade, hovering around the 24,100 mark, but we had a gap up opening. And broadly, it was a session of consolidation. The big driver today was easing geopolitical tensions. Mediators, Pakistan and Qatar, after the high-level meetings which took place between US and Iran over the weekend in Switzerland, said that they've made encouraging progress. They've agreed on a roadmap for a final deal to be reached within the next 60 days. That provided that macro tailwind. Brent crude prices were hovering below $80 per barrel. The intraday high on the Nifty was 24,168. The next test is the 100-day moving average at 24,200. Mid-caps, small caps all moved in step. The advances outpaced the declining stocks, so that was positive. Gains today were led by the IT sector, defense, pharma. FMCG was the only sector ending in the red. Cipla was your big gainer today after Citi initiated a 90-day positive catalyst watch with a buy and a target price of 1,700. IT led the rebound after Friday's fall. So Infosys, Tech Mahindra see buying in the mid-cap space. Signed, Coforge ending in the green. Other pharma names like Dr. Reddy, Sun Pharma, higher. Large-cap banks, whether it's HDFC Bank, ICICI Bank, Kotak, all tracking higher by the close of trade. As I said, FMCG was the only laggard. Asian Paints was down nearly 2. Titan, Trend, Nestle, HUL under pressure. Reliance Industries, actually that was the big mover today. After the AGM, we saw some fresh targets, upgrades being set. For CLSA, it's 1,800. Lots of mid-cap action. So no sell surge after the DGTR cleared the anti-dumping duty on rubber accelerators from China, US and EU. Voltas cooled off slightly, but still ending in the green. The company saw 1 million of AC sales in the first 3 months. The Kirloskar Group was in the spotlight after Kirloskar Oil secured a hyperscaler center genset order. Companies, names like New India Assurance, Aegis Logistics, Aegis, all of them extending gains. So the mid-cap screen was very much alive. We gave up some gains towards the end of trade, but all in all, not a bad session with macro tailwinds providing that uplift today. Let's see whether we can continue the momentum in tomorrow's trading session.
Rima, many thanks. Here's the latest in the trade negotiations between US and India. Now, US Trade Representative Jamieson Greer will arrive in New Delhi later tonight, and this comes just a week after another US trade delegation held talks for 4 days with Indian officials in the capital. Commerce Minister Piyush Goyal says a deal with the US is likely to include preferential tariffs for India. Abhimanyu standing by with more on Greer's visit and what we can expect. Are we anywhere closer, Abhimanyu, to that deal?
This is possibly going to be the final lap of discussions between India and the United States for an interim trade deal. Now, just 1% of discussions are left as per the US ambassador to India and also as per India's Commerce and Industry Minister. Now, the USTR, Jamieson Greer, is expected to reach India tonight, and in course of 2 days, that is on the 23rd and 24th of June, he is expected to meet India's Commerce and Industry Minister and several senior officials from India's Department of Commerce. It remains to be seen how early both the sides are going to finalize the tariff tariff architecture for the interim trade deal, and also discussions are likely for a larger BTA between both the sides. Now, the Commerce Ministry has indicated that the discussions are likely to include issues like preferential tariffs, investment provisions and rules of origin, even as both the sides are looking to deepen not just investment but also trade across several sectors, including defense, critical minerals and energy. The Commerce Ministry had earlier indicated that India and the US are engaged seriously to deepen their bilateral trade and investment and cooperation across several areas. Earlier, sources had indicated that 10% tariffs are expected to lapse on the 24th of July, and in case a deal is not reached by then MFN tariffs are going to apply. So India, of course, is looking for a preferential tariff architecture for the benefit of its industry, for its exporters, and it remains to be seen how early that is going to be finalized between both the sides.
All right, Abhimanyu, many thanks for joining us. The big story coming in from the UK, Keir Starmer has resigned as Britain's Prime Minister and Labour Party leader less than 2 years after leading the party to a landslide election victory. Starmer conceding to mounting pressure from within his own party over broken election promises, policy missteps and scandals involving several close aides. This will pave the way for Britain's 7th Prime Minister in a decade. Starmer said he will remain in the post until a new leader and Prime Minister is elected by the governing party. In a visibly emotional speech outside 10 Downing Street, the outgoing Prime Minister said that every decision he made in office has been about putting the country he loves first. Meanwhile, Andy Burnham, the frontrunner to replace the Prime Minister, won a parliamentary seat just days ago at the Makerfield by-election. Burnham has announced that he is running for the Labour Party leadership.
The question my party is asking now is whether I am best placed to lead us into the next general election. I have heard the answer of my parliamentary party to that question, and I accept that answer with good grace. Every decision I've taken has been about putting the country I love first. That is why I will resign as leader of the Labour Party. And when I leave the biggest job in the country, I shall spend more time on the most important job, being the best husband I can to my fantastic wife, Vic, who has been a rock by my side through good times and bad, and being the best dad I can to my beautiful children.
Well, that's Keir Starmer. And Andy Burnham, who's referred to as the King of the North within the Labour Party circles, is all set to ascend the Britain Game of Thrones. Sanjay Suri joins us now from London. Sanjay, tell us more about Burnham's Manchesterism and his economic beliefs, and what could this mean now for Britain?
There are clear reasons why Andy Burnham has been spoken of as the King of the North, at least within the Labour Party. His record as Mayor of Manchester, and he's had a long spell there, has been impressive in a local sort of way. But that has been his emphasis, that growth needs to be driven locally rather than nationally. The Greater Manchester region has had a far better record in growth and investment than the average for the rest of the country. He's had a number of administrative successes as well. He brought in what has been called the B network to integrate bus services with trams and cycling. He's established a homelessness fund. He's promoted affordable housing. A lot more to be done there, it has to be said. These have been local successes, but the national challenge necessarily will be of a different order. Burnham is spoken of as the soft left, meaning he's not a centrist or even near right in a Tony Blair sort of way, but he's not hard left either. He nevertheless is supportive firmly of trade unions and of taxation to improve services for people. Taxation inevitably will be the most controversial issue he would get tested on, and as Prime Minister that he is expected to become, his task would not be quite as simple as multiplying Manchester's success nationally. He would now be positioned on the other side of his earlier stand to promote the local against the national, or at least give it more emphasis than the national direction. But of course, once he's in the top job, a lot that came before can and will change. It always does. At the moment, he's looking a winner, it has to be said, because Starmer has looked the loser. But Burnham is the winner within Labour, other than the by-election win. Nationally, the right-wing Reform Party led by Nigel Farage is way ahead of Labour in the polls. Can Burnham reverse that? That will be the big challenge for him and for his soft left policies.
Sanjay Suri, many thanks for joining us. Meanwhile, in Colombia, right-wing candidate Cipla has narrowly won the presidential runoff with over 99% of the votes counted. The Trump-backed candidate had won nearly 49.7% of the vote, according to an initial count of the runoff elections. Cipla has pledged a military crackdown on illegal armed groups in the country to rein in drug trafficking and crime. We take a break, but up next, shares of Reliance Industries gain after Chairman Mukesh Ambani announces the Jio platform's IPO. That and more when we return. Shares of Reliance Industries gained in trade after Chairman Mukesh Ambani announced the Jio platform's IPO. The public issue is likely to raise a record $4 billion. Brokerages waving a thumbs up to the conglomerate's plans to scale up its growth engines and boost AI deployment. Mangalam joins us now with more on the plans to bolster the FMCG business. Take a look.
Dare to dream and care to execute. That's exactly what Reliance does. You know, in an AGM where a lot of the spotlight went away into AI, new energy businesses, and the Geo IPO, the footnote, and which was actually, you know, could be a big multi-billion-dollar opportunity for them, is the FMCG play. Reliance Retail is now become an FMCG giant. Remember, it's just been about 3 years since its inception. In FY26, Reliance Consumer Products Limited, which is the retail business, actually crossed gross revenues of 22,000 crores. This number was 11,450 crores in the previous financial year. So it's a near 2x jump that we've seen. So no company in the consumer space has actually crossed 20,000 in such a short span of time, and with the pace that Reliance has done. So that's exactly what has happened out here. 22,000 crore in gross revenue, 2x growth, fastest in the industry, and also the highest in the industry that we're looking at. And it's not just that, look at some of the brands that Reliance has actually grown in its consumer products business. Nearly 5,000 crores coming in for Campa. In some of the important markets, it's also crossed double digit in market share. It's among the top 3, top 4 aerated beverages players in the country. And then Independence, the food brand, also has done about 2,600 crore in gross revenue. So all of this, while reaching 3 million plus outlets and 5,000 plus distributors, is no mean feat. And if you compare Reliance's gross revenue to all the other companies, while all of them, the reported numbers are net numbers, so you have to take that into account. But even then, it is fairly admirable. 22,000 crore rupees stands in line with Nestle's 23,000 crore rupees, above Tata Consumer's 20,000 crore rupees, or even Britannia's 19,150 crores. And remember, these are extremely old companies in India for the longest time. If you compare it to some of the other players like Godrej Consumer, Marico, Dabur, this number looks like it is nearly 2x of that. And imagine a company doing that within just 3 years of its existence, organically and by acquiring brands on a gross revenue basis, 22,000 crores. But they're not stopping here. The near-term ambition is to go to 1 lakh crore in revenue by FY30 and become one of India's largest FMCG companies. Now, if you're looking at the multiples at which all the FMCG companies trade, and at 1 lakh crore revenue, this could definitely be the next multi-billion-dollar opportunity. And that's exactly what Mukesh Ambani said.
All right, Mangalam, many thanks for joining us. That's Reliance Retail Juggernaut. And of course, the standard disclaimer on your screens, not forgetting the company that operates CNBC TV 18 is controlled by the Independent Media Trust, of which Reliance Industries is the sole beneficiary. And with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC TV 18. Stay tuned. We're back in a moment with plenty more.
Welcome to Indianomics. The minutes of the Monetary Policy Committee were made public on Friday, and they showed that most members have preferred to pause given the very high uncertainty surrounding food and fuel inflation. During June 3rd to June 5th, when the meeting was on, crude was $95. And even now, although it's fallen, no one is very sure of the opening of the Straits of Hormuz. Likewise, the exact impact of a deficient monsoon on food prices is unclear, members have argued. RBI members also point out that the last available inflation number for April, when the meeting was on, is below 4%. Also, members have argued that there is no demand pull inflation, no overheating of the economy. It's a cost push inflation, and hence policy must wait to see if it is getting transmitted into second round of price hikes. So, where does this leave us from here on? Is an August rate hike even less likely since crude prices have fallen since the June meeting? I'm joined by two external members of the MPC, Mr. Nagesh Kumar and Saugata Bhattacharya. Gentlemen, good morning and thank you very much indeed for your time. Mr. Nagesh Kumar, let me start with you. Now, in the August meeting, what exactly will you watch out for? Other members have said that they will look for a second round of transmission or for any signs of overheating. What exactly will you watch out for when you take the decision in August?
Well, I think what is very important for all of us to watch is the evolving growth and inflation dynamics. So if we see a major impact on inflation, or if we see a major impact on economic growth, then accordingly the action would be thought about, So,
okay. Mr. Kumar, since the policy was announced on June 5th, that evening itself, we got growth numbers which were much stronger than expected. I mean, we had a 7.8% Q4. One full month was war impacted, and still the growth was very strong. Will not that give you the confidence to move ahead that, growth is very sound? It doesn't require help. Would that be an argument?
Well, it is certainly a very encouraging thing that we saw 7.7 point kind of growth in the outgoing year. But, the inflation side, the pass-through of the rising crude oil prices started happening only in May. And so one could not see the impact of that already in those numbers. So this will still be unfolding. And so one has to be waiting for, the new data to come in. And especially after the pass-through, partial pass-through, I would say, began to happen. And secondly, another good news, potentially, until it holds, this peace process, the deal was signed, but of course there are 2 months of negotiations, one has to watch out. But already in anticipation of this, and the blockade has been lifted, the oil prices have begun to come down, which is a good news for India.
Okay. No, I agree with that. Crude has come down by 20% since you all met on June 5th. But, the way in which the Reserve Bank has projected the inflation, the expectation is that very soon we will be at 5% and maybe closer to even 6% by the time we come to the third quarter. So would you wait to see a 5% before you move, Mr. Nagesh Kumar, or will you move in advance?
No, I think one has to see not only the numbers, but also inflationary expectations, how they are building up. And so, RBI conducts forward-looking surveys. So the one gets a hang of or, some movement, which way it is going. And if the situation begins to go out of hand, there may be a case for, taking preemptive action. However, as I said earlier, the oil prices have begun to go down, which is the major factor in driving prices in India. So I do not, at this moment, I do not see a major cause of worry or alarm.
Okay. Well, even now, oil companies are making losses. The entire thing has not been transferred to the consumer. But let me get Saugato into the conversation. Saugato, let me start with the other point which only you make and which all of the market makes. But we don't see it in the minutes. The global neutral rate appears to be rising. Clearly, Kevin Marsh's statement was not dovish, even if you don't argue it is hawkish. And the ECB has already raised rates. The global interest rate trajectory is going higher. Will we be caught behind the curve?
No, I'm not really sure whether we will be caught behind the curve, but I mean, the space for cutting in response to any potential slowdown that happens, that space is narrow. So of course, you have to look at macroeconomic stability issues. You have to look at the external balance, given the fact that we are operating in an open economy, macroeconomic environment. So you have to consider global interest rates. But the primary focus, I think, should remain the domestic growth inflation balance. And that's still a very evolving story. But I completely agree with you that rising global rates, rate cuts are almost out the window. When global real neutral rates are rising. So that does constrain domestic monetary policy.
The same question that I asked Mr. Kumar, what will you watch out for in terms of, overheating or in terms of second round impact? Exactly, can you train our eyes to what you will watch out for?
It's very obvious, really. You need to look at what is called underlying inflation. So some say super core inflation. So if you take out the effects of precious metals, etc., oil, gas, food, so all of that. So the moment you begin to see, and actually you are beginning to see that in the May inflation numbers that I was beginning to talk about earlier, some read-through that is slowly coming in. So I think we will need to see another month worth of inflation data. So obviously it's both core goods and core services inflation, which will begin to signal whether inflation is getting embedded in the system. And of course, as Dr. Kumar says, the path of household and enterprise inflation expectations will also be a major factor in looking at how inflation is getting entrenched into the system.
As you point out,
in actuality and in terms of it.
Yeah, as you point out, and we are playing that statement of yours, already 1 year ahead inflation expectations have risen. Therefore, what would you wait for to vote for a hike?
So of course, there are, as you know, the Reserve Bank of India is working with a couple of committees to try to recalibrate the inflation expectation survey, both enterprise and household surveys. So that while that is in progress, but it is a little worrying that household expectations of current inflation are higher than the actual print of inflation. So that is something that needs to be watched. But even more than inflation expectations rising from the already elevated levels, that's one trigger point in association with actual prints of inflation, core inflation, underlying inflation feeding into the system. And of course, together with this, as you rightly mentioned.
Right now, the conflict is in a ceasefire, and certainly our hope is that we get to the final deal and a permanent settlement. But right now, I think we've made great progress, and we should all celebrate that. In terms of when the nuclear inspectors are going to start, it's funny, we were trying to call some of the inspectors last night around 2 in the morning. As you can expect, not many people were answering their phone at 2 in the morning. I expect that will happen at the minimum this week. But we think even some of those conversations with the inspectors and with the IAEA could happen as soon as today. But I haven't checked in with our team since we made that 2 a.m. phone call to some of those inspectors. Sorry.
Mr. Vice President. Thank you, Mr. Vice President. Did you, going in, expect the Iranians to make Lebanon as much of a linchpin as they ended up doing? And how would you describe the progress on Lebanon? I know Mr. Araghchi said it was very good progress, but what's your characterization of it?
Yeah, I would describe it as very good progress, too. I mean, look, we want a regional ceasefire, right? We want Hezbollah to stop firing at our friends in Israel. We want Israelis to be able to live in peace. We also want to make sure that, you know, when things happen, they don't spiral into a broader escalation. And so we've been, I think, very good at setting up what we're calling a deconfliction mechanism. But what it really is to say that when things happen, the sides are actually talking to one another. Sometimes, you know, you've got a bit of a chicken and egg problem, that you've got a junior guy who fires a drone that didn't have approval from the high command. Okay, of course, Israel has to respond to that. But then sometimes that response, we could actually have a better and more peaceful situation if Israel responds in the context of a conversation that's ongoing between Hezbollah, Lebanon, Israel, and other partners in the region. There really hasn't been a mechanism to have those discussions until basically around 4 p.m. yesterday, Bergenstock time, when we set that up. So what we're trying to do is to say, first of all, Israel and every other nation in the region has the right of self-defense, but we want to make sure that everybody has that right of self-defense in the background where we're talking about how to de-escalate these conflicts rather than
education platform Corsera says AI course enrollments on it have risen from about 15 per minute a year ago to nearly 20 per minute today, roughly 1 every 3 seconds. The company has also expanded its enterprise reach to thousands of organizations as demand for AI-related training accelerates across sectors. In February 2025, Greg Hart took over as president and CEO, stepping into the middle of what he calls a rapid shift in how people learn and work because of AI. He joins Shireen Bhan at Coursera's Silicon Valley headquarters to talk about what this surge in demand means and whether traditional models of online learning can keep up.
You know, what a year it's been for you, Greg. Coming into Coursera, you joined in February of 2025. You're in the middle of the AI onslaught. Describe to me what the journey has been so far.
It's been fantastic. So, as you mentioned, I started in February of 2025 at a time when AI, had already been a burgeoning, topic of interest for learners around the world. That has just accelerated. We are seeing the pace of interest in AI skyrocket. A year ago, we saw about 15 enrollments every minute in AI content. So far this year, we're up to 20 enrollments per minute on Coursera, so 1 every 3 seconds.
1 every 3 seconds?
Yes, somewhere around the world, somebody enrolls in an AI course on Coursera every 3 seconds.
Okay.
So it's been phenomenal. And then, of course, as you know, we announced and then closed the acquisition of Udemy, one of our competitors, about a month or so ago now. And so a lot of focus on bringing the two companies together. So it's been an eventful first year.
It has been an eventful first year, and I'll talk to you about the integration of Udemy in just a second. But let's go back to the landscape that we find ourselves in. And I think the question that everyone seems to be asking each other here in the Valley and around the world is, are you going to be cloudified or not? And do you have an answer to that?
Well, I have a really strong perspective on that. First of all, everyone around the world needs to upskill and reskill in this age of AI, because AI is changing what's possible so rapidly that if you're not upskilling and reskilling yourself to enable the right way to take advantage of those capabilities, you will be left behind. That's true of companies, that is true of individuals. That is Coursera's mission. We are aiming to help upskill and reskill the entire modern world for the moment that we're in. There has never been a more pressing need for upskilling and reskilling, post-secondary education than the moment that we're in right now, with the way that AI and technology generally is changing the landscape of what's required in the workforce.
As far as AI is concerned, from a market standpoint, they see it almost as a double-edged sword for Coursera, and that's reflecting on your stock, right? So how do you address some of those concerns on what you can do with AI, but also how do you deal with the headwinds that you have to encounter on account of AI?
Well, I think that one of the things that we're seeing is that there's skepticism that in an age of AI, the content that Coursera has to offer and Udemy has to offer is less valuable. I have a different perspective. My perspective is that in an age where it's easier than ever to create content, the value of expert human-created content from the leading universities in the world, which was how Coursera was founded.
That's a very, very good and very classic Trump deal. That's great for our people, great for the people of Iran, and fundamentally, again, will contribute to this regional security architecture that we've built and that we're going to work very hard to ensure that it endures. So from Switzerland, thank you all for being here. I appreciate the questions and I appreciate the engagement. I'm looking forward to going back home, and we'll certainly keep everybody updated on what happens in the days and weeks to come. Thank you all.
He was, I had dinner with him a couple times, and he was a big part of what we would cover in the old days, because he would, when he was making monetary policy, we'd say that his briefcase would indicate whether rates were going to stay where they were, whether they were going to be increased. There was a briefcase indicator. All of Wall Street would watch when he'd be walking along in his trench coat to see.
What was in the briefcase?
All of his papers,
Yeah.
and we figured if there's going to be, I guess Mark Haynes came up with this, the late great Mark Haynes, that if it was really thick, there's probably going to be a change in rate, because
they would have had more to read and to go through and to prepare for.
But I don't know if you were able to hear anything that the vice president said. Obviously, shifting gears to Iran now, in Switzerland. But it's going to be it's 60 days, and I guess we're early on.
Online education platform Corsera says AI course enrollments on it have risen from about 15 per minute a year ago to nearly 20 per minute today, roughly 1 every 3 seconds. The company has also expanded its enterprise reach to thousands of organizations as demand for AI-related training accelerates across sectors. In February 2025, Greg Hart took over as president and CEO, stepping into the middle of what he calls a rapid shift in how people learn and work because of AI. He joins Shireen Bhan at Coursera's Silicon Valley headquarters to talk about what this surge in demand means and whether traditional models of online learning can keep up.
You know, what a year it's been for you, Greg. Coming into Coursera, you joined in February of 2025. You're in the middle of the AI onslaught. Describe to me what the journey has been so far.
It's been fantastic. So, as you mentioned, I started in February of 2025 at a time when AI, had already been a burgeoning, topic of interest for learners around the world. That has just accelerated. We are seeing the pace of interest in AI skyrocket. A year ago, we saw about 15 enrollments every minute in AI content. So far this year, we're up to 20 enrollments per minute on Coursera, so one every 3 seconds.
One every 3 seconds?
Yes, somewhere around the world, somebody enrolls in an AI course on Coursera every 3 seconds.
Okay.
So it's been phenomenal. And then, of course, as you know, we announced and then closed the acquisition of Udemy, one of our competitors, about a month or so ago now. And so a lot of focus on bringing the two companies together. So it's been an eventful first year.
It has been an eventful first year, and I'll talk to you about the integration of Udemy in just a second. But let's go back to the landscape that we find ourselves in. And I think the question that everyone seems to be asking each other here in the Valley and around the world is, are you going to be cloudified or not? And do you have an answer to that?
Well, I have a really strong perspective on that. First of all, everyone around the world needs to upskill and reskill in this age of AI, because AI is changing what's possible so rapidly that if you're not upskilling and reskilling yourself to enable the right way to take advantage of those capabilities, you will be left behind. That's true of companies, that is true of individuals. That is Coursera's mission. We are aiming to help upskill and reskill the entire modern world for the moment that we're in. There has never been a more pressing need for upskilling and reskilling, post-secondary education than the moment that we're in right now, with the way that AI and technology generally is changing the landscape of what's required in the workforce.
As far as AI is concerned, from a market standpoint, they see it almost as a double-edged sword for Coursera, and that's reflecting on your stock, right? So how do you address some of those concerns on what you can do with AI, but also how do you deal with the headwinds that you have to encounter on account of AI?
Well, I think that one of the things that we're seeing is that there's skepticism that in an age of AI, the content that Coursera has to offer and Udemy has to offer is less valuable. I have a different perspective. My perspective is that in an age where it's easier than ever to create content, the value of expert human-created content from the leading universities in the world, which was how Coursera was founded, and the top technology companies in the world, because we have content from Google, from Meta, from Microsoft, from Anthropic, from OpenAI, from AWS, is even more valuable. And then what Coursera brings to the table is not just a catalog of that content, but a deeply rooted in academia and in education perspective on how to deliver that learning in a way that gives verified assessment and proof of learning. And we see that reflected in the huge demand for micro-credentials across all of our platform. And so I think we are uniquely positioned to actually help with that.
Will that ensure that you can enjoy the pricing premium that you have so far?
Well, I think that that gives us an opportunity to both do a few things. One, continue to expand the audience that we serve. So with the combination of Coursera and Udemy, we now have close to 300 million registered learners around the world. That is a massive, massive number. And we serve 18,000 enterprises. So we're not just a consumer-focused company, but we also help both businesses and universities and governments adapt to the pace of change by enabling them to leverage Coursera to help upskill and reskill their constituents, whether those are employees or students or faculty or government civil servants.
The number that you gave me of individual users who are signing up, what's happening on the enterprise side? How many are you adding every second on the enterprise side?
That number is actually a combined number across both enterprise in terms of enrollments across enterprise and consumer. But we're seeing huge interest in AI-related content, not surprisingly, on the enterprise side as well. And so the primary reason that enterprises come to Coursera or to Udemy is to help upskill or reskill their workforce. Historically, pre-ChatGPT, in November of 2022, that was probably on more technical content or a more general, learning and development type benefit. Now that is increasingly on how do I leverage AI within my workforce. And so what we do with enterprise is really sit down and try and understand the objective that they're trying to accomplish, and then work with them to craft exactly the right approach to enable them to get that upskilling and reskilling in a function-by-function way. So it's not just general AI education, but it's actually very practical, targeted AI upskilling for a given function within an enterprise.
So how does that change the rules of engagement as well as the partnerships that you have with enterprises, the likes of Anthropic and so on and so forth?
Well, in terms of rules of engagement, we have content from Anthropic on our platform. with OpenAI, we both have content from OpenAI that is offered through Coursera to some of their partners. And then we've actually helped to develop capabilities on OpenAI that they leverage in their OpenAI certificates. And so, which are all AI-focused certificates that they offer, primarily for education purposes. And so we are both a content creator, a content receptor, and a technology creator that works with them.
So what, if I were to ask you to simplify for all of us, what will be the big differentiator and the moat for you going forward in an era where it is easier to create content? I know you gave us a glimpse into why you believe that the content you create is different and not commoditized, but what will be the key differentiator going forward as people refine these skills?
I think one of the big things that we're focused a lot on right now is learning about AI through AI deployment in the flow of work. So using technologies like MCP, Model Context Protocol, we have integrations already with ChatGPT. You know, we were one of the very first partners that they had there. We recently launched our integration with Microsoft Copilot. We have integrations as well with Anthropic, with Claude. And so deploying that within the flow of work, and then also leveraging all of the data that we have on the right way to help people learn. What is most effective at not just going through content, but actually delivering true learning. And we're very focused on skills and skill delivery, skill assessment, and proof in a verifiable way of mastery of that content. That, we believe, will be what sets us apart. It's the history of the company coming out of academia, but it's also what we believe will set us apart as well.
So all the new signups that are happening, everyone coming for AI, or is there anything else?
No, there are a lot of other, so obviously AI is the topic du jour around the world, but there are a lot of other things that we see, not just in sort of response to AI, but generally. So huge amount of interest in human skills right now. So creative thinking, communication skills, resiliency, flexibility. And I think one of the reasons for that, and we've seen interest in content and courses in those areas more than double over the last year. One of the reasons for that, I think, is that our people recognize that as technology is capable of doing more and more, and your technical skills might not, you know, perhaps matter as much as they used to, that the human skills you have actually become a really important differentiator. That's one of the big areas of interest. We're also seeing a big increase in sort of more domain-oriented learning. So in particular, healthcare has been.
Hello and welcome to News Center. I am Ashmit Kumar. Now, after 18 hours of intensive and what both the sides are calling productive talks, top Iran negotiators departed Switzerland. The discussions had nearly collapsed earlier after US President Donald Trump threatened to strike Iran and take control of the Strait of Hormuz if no deal was reached. The warning came amidst growing concerns over Iran's support for Hezbollah. Since then, tanker traffic through the strait has rebounded. Tehran's lead negotiator, meanwhile, Mohammad Bagher Ghalibaf, responded by urging Washington to be careful with its rhetoric. Despite the tensions, the talks gained momentum, with mediators Pakistan and Qatar saying that both sides made encouraging progress on the very first day. The parties have now agreed on a roadmap aimed at reaching a final deal within 60 days. Iranian Foreign Minister Abbas Araghchi has said that sanctions on Iranian oil have been waived and some frozen assets released. He also announced a reconstruction and development plan, along with the creation of a high-level committee to oversee mediation efforts. A direct communication channel for the Strait of Hormuz is also being established, while a deconfliction cell facilitated by Qatar and Pakistan will work to ensure an end to military operations in Lebanon. Now, Araghchi said that the first real test of this agreement will be the success of the Lebanon deconfliction mechanism. Fighting between Israel and Iran-backed Hezbollah has long been a major obstacle to any deal, with Tehran insisting that Israeli strikes must come to an end. Meanwhile, in Lebanon, emergency services say that 13 bodies have been recovered from the rubble in the south of the country. In Gaza, Israeli forces said that they killed 2 Hamas fighters during these operations.
What we told the Iranians yesterday is when you guys engage in what us millennials might call trash talk, you can't expect the President of the United States not to respond and not to correct the record. So when they say things that aren't true, the President is going to respond to it. I'm going to respond to it. Americans are going to respond to it. When they make threats that aren't rooted in reality, they have to accept that the President of the United States is actually going to set the record straight. That's all that happened. So yes, there was a little bit of threatening, there was a little bit of whining, but at the end of the day, the talks continued and we made great progress. We've been, I think, very good at setting up what we're calling a deconfliction mechanism, but what it really is to say that when things happen, the sides are actually talking to one another. Sometimes, you've got a bit of a chicken and egg problem, that you've got a junior guy who fires a drone that didn't have approval from the high command. Okay, of course, Israel has to respond to that. But then sometimes that response, we could actually have a better and more peaceful situation if Israel responds in the context of a conversation that's ongoing between Hezbollah, Lebanon, Israel, and other partners in the region. There really hasn't been a mechanism to have those discussions.
Well, that was J.D. Vance saying that there was a little bit of threatening, a little bit of whining, but there seems to have been productive talks to understand whether what the road ahead may look like. Well, to take this discussion ahead, I'm now joined by former Foreign Secretary Shashank and former diplomat Veera Sikri. To both our panelists, thank you for joining us. Mr. Shashank, let me come to you first. Let's begin with the optics. What we saw, very dramatic visuals coming out of Switzerland in those talks. Foreign Minister Araghchi walks in, has a brief dialogue with Shahbaz Sharif, then decides to walk out. J.D. Vance can be seen in those visuals right at the back of the room with a confused, baffled expression. And that was, of course, coming in the midst of heated tweet exchanges on X that were being posted by Donald Trump himself, the president. Just help us understand, those not familiar with the art of diplomacy, was that deliberate? Was that something last minute? How do we read into the visuals that we saw, that we woke up to this morning?
I'm glad that Mr. J.D. Vance is leading the American team in Switzerland, number one. And he made very clear that while he is very friendly with the Pakistanis, he also has an Indian wife. So therefore, Indians feel that, okay, it is not just Pakistan, which has no relations with Israel and which is leading the negotiations for peace. The point is that Pakistan will not be able to do it on its own. I mean, of course, they can talk to Iran, they can talk to the Americans, but they will not be able to carry any kind of confidence with the Israelis. Therefore, we need to have the Qataris, the other Arabs also present, the other countries also from outside, they have to make their contribution. And the point is that J.D. Vance was able to bring the hotheads to a more peaceful kind of a situation. And I think that was very important because this is a very difficult time. We all in Asia and in the near close to the region would like very much these talks to succeed. And this deconfliction mechanism, whatever they call it, I think that is important, that at least people are not trying to talk to each other directly, indirectly. And I must say that the Americans at various other levels are playing a useful role in bringing the Lebanese, the Israelis, and the other parties to the talks. So I think there is what I would say is that both sides, the Americans under President Trump, they talk in such a language that, I mean, definitely many of them would just walk out of the room. On the other hand, they also know that President Trump has some very cool and experienced people with him. And so it is possible that this is an opportunity which one should not miss out. So I think J.D. Vance is leading the team and that he's playing a very good role there.
Well, let me also get Ambassador Sikri on that. Ambassador Sikri, if you can see the visuals that are playing on the screen, again, the visuals that we all woke up to this morning. Syed Abbas Arakchi walks in, brief exchange, walks out. J.D. Vance again at the back of that room with a confused expression. What did you make of these optics? How do you read these maneuvers, if they can be called as such, by the Iranian leaders?
I think the prime factor that comes out, that Lebanon remains the critical issue in the progress of the talks. Because as we know in the memorandum of understanding that has been signed, Lebanon and the need for ensuring the territorial and sovereignty and territorial integrity of Lebanon, and the need for bringing, making the Lebanon issue the central point for the resolution of all the other issues, has been reiterated in paragraph 1 itself. So I think that the fact that the Lebanese issue is critical came out today itself, because we know that the Lebanon conflict is still continuing. And of course, there are conflicting versions, whether the Hezbollah fired or whether Israel fired first. But the fact that Iran is ready to walk out of the talks on the issue of Lebanon became very clear, whether it was because of what President Trump said or whether it was because of the situation on the ground. The Lebanon issue is what is going to make Iran walk out of the talks unless it's brought to a satisfactory resolution. And there is a deconfliction cell, as you have mentioned, which has USA, Iran, and Lebanon. Now, this is interesting. This deconfliction cell only has these three. It does not mention anything about the mediators. It does not mention either Pakistan or Qatar. So it is these three, but Israel is not there in the deconfliction cell. And we know that Israel is the one which is causing all the problems, because Israel has categorically said that they will not vacate the territory of Lebanon that they are presently occupying. So I see this as coming to the head in any future negotiations as a great point of clash, as a breaking point, as a security red line, as it were, for Iran. Other than that, I think as Foreign Minister of Iran, Arakchi has said, he has talked about considerable progress. He's talked about, the issue of the reconstruction fund having gone ahead, the issue of the release of some of the frozen assets of Iran, and other issues on which there has been progress. But Lebanon, I see this coming up again and again as a critical deal breaker, as it were. So I hope that the deconfliction cell can solve the problem, and that Israel will indeed heed the voice of America in not provoking any further clashes in Lebanon.
Right. Let me take that up. Mrs. Shashank, again, a very important point being made. Deconfliction cell includes Iran and the US, also includes Lebanon, makes no mention of Israel. How effective will this be? The negotiators are already saying that the true test of the MOU will, of course, be clause number 1, which is Lebanon, will, of course, be the deconfliction cell. But there's no presence of Israel as far as this cell is concerned.
Well, just as well that Israel is not there, because Israelis have made their position very clear that unless the Hezbollah is ruled out of the control over territories in Lebanon, they will continue to take action against them. So I think earlier the Americans had said very clearly that Iran should really distance itself from its proxies in the region. So that was perhaps considered to be a bit too strong for the Iranians, and they did not like it, because the Iranian delegation itself is walking very carefully. There are so many other hardliners within Iran who have told them that, look, if you make any concessions, then you will be disclaimed totally by the top leadership. So therefore, it is a very difficult situation. One has to go slowly on that, and I'm glad that Israel is out of it, and they are being indirectly involved, firstly by the Americans, and then in Washington, I think the peace process that between Lebanon and Israel is going on. So it is the responsibility of the Lebanese also to exercise their rule as a government and to make sure that the Hezbollah and people of Shia faith in Lebanon, they go for peace and whatever way it is possible. It will take time, but they should move in that direction.
Sure. Ambassador Sikri, let me also get you on a couple of issues here. There's been a working group formed for monitoring and dispute resolution group for effective implementation of the MOU. Now, Iran negotiators are very clear. There are 5 points they want implementation to begin before there can be any meaningful talks. The 5 points are Lebanon, of course, removal of the U.S. blockade, safe passage of Hormuz with no toll, U.S. waiver on Iranian oil, as well as restoration of the frozen restricted funds. That's a tall order to achieve. You think, what is your assessment? Will Iranian negotiators be willing to be flexible on any one of these counts to ensure that these talks do proceed as per the 60-day roadmap?
Well, I think on the first point, Lebanon, I think they're going to be very strict. But I think on the withdrawal of the naval blockade, President Trump has said that he has given the orders, and some visuals showing that the withdrawal of the 3 aircraft carrier groups had begun. But of course, it will take some time. It's going to be another few days before it's known. And then as far as the waiver of the Iranian oil exports, again, the reports are that all the ships are there at the Karga Island terminal, and that the ships are loading up. And so the exports are likely to start very soon. So the expectation is that by the time the Iranian oil exports start, the naval blockade will have been withdrawn, and that this will, the Iranian exports will continue without any hindrance. That is the expectation. We hope that that is materialized. And thirdly, on the opening of the Strait of Hormuz, although Iran had threatened at one point during the talks at Lake Lucerne that they are going to walk out because they're going to close the Strait of Hormuz once again. But we know that on the ground, effectively, the Strait of Hormuz has more or less remained open. And we know, for example, that many Indian ships, 3 carrying fertilizers and 1 carrying petroleum products, has gone through safely. So likewise, I'm sure many other countries also would have had their vessels going through. So de facto, it does seem that the Strait of Hormuz is open, but the sensitivities are very much there, and I think this is going to be watched very, very carefully. It's not going to be smooth and easy sailing. And if at any point it appears that the withdrawal of the naval blockade is not proceeding as promised, or if any of the other, the prevention of the free sailings of the ships through the Strait of Hormuz is impeded, I can see a lot of blockades coming up. But otherwise, as of now, other than point number 1 that you mentioned, I think the others are proceeding smoothly.
Just before we close this segment, Mr. Shashank, one final question for you. J.D. Vance also said that that international experts will, of course, be visiting Iran for inspecting their facilities, international experts. How do you see this? Do you begin to see some movement as far as that critical nuclear question is concerned between the two sides?
Look, as my colleague Veena Sikri is saying, that things, if they are moving well towards a peaceful resolution and an agreement, things on the nuclear issue also should move well. Because after all, we know that when JCPOA was in force till President Trump moved out of that, the Iranians were by and large sticking to the terms of the agreement and not enriching beyond the number which was prescribed. It is only later on that they started moving up. Perhaps that was also a part of their technique to put pressure on the other partners, on the other these players to come forward. And I think that has been okay. I mean, they have suffered a lot. There's no doubt about it. The kind of bombing which has gone on by USA and Israel. But I think President Trump, at least, in all the kind of threats that he makes, he also made this point very clear that he would also like to put a toll on the Strait of Hormuz, which means that he's more or less agreeing to the Iranians to do whatever they wanted to do to put their service charge, etc. And therefore, that should give some satisfaction to the Iranian hardliners that they might be able to do after 60 days that to collect some money from there.
Sure. So clearly, productive talks is what both sides are claiming. We'll, of course, have to see whether it yields results in the days to come. 60-day roadmap is what both sides are looking at for arriving at a final deal. With that, it's time now for heading into a very short break. But coming up next, U.S. Trade Representative Jameson Greer is heading to India for key talks with Commerce Minister Piyush Goyal on the interim trade deal and the broader bilateral trade agreement. Details when we come back. Welcome back. Now, India and the US will hold ministerial talks in New Delhi tomorrow to discuss an interim deal and the larger bilateral trade agreement. Now, the US delegation is being led by Trade Representative Jameson Greer. Ahead of these talks, Commerce Minister Piyush Goyal said that the deal is likely to include preferential tariffs for India, along with rules of origin and investment provisions. Now, Goyal added that implementation of the framework agreement will depend on resolving outstanding tariff concerns. The talks follow chief negotiator-level discussions and Prime Minister Narendra Modi and the US President Donald Trump's bilateral meeting in France. The two sides are looking to finalize the interim pact ahead of a key tariff deadline on July 24th. However, a fresh set of tariffs may also be in focus as far as these talks are concerned. Remember, on June 2nd, the USTR proposed imposing 12.5% tariffs on 54 countries, including India, after conducting probes under Section 301. The US alleged that India failed to prohibit the import of goods produced with forced labor. A report by India-based think tank Global Trade Research Initiative argues that India should treat trade negotiations and Section 301 tariffs as entirely separate matters. It argued that trade pacts should not function as protection payments against future unilateral US actions. The report also cautions India against rushing into a bilateral trade agreement, noting that trade data indicates the damage from tariffs may be manageable. In fact, India's exports to the US exceeded the previous year's levels despite high tariff barriers in FY26. Now, the report also warns that long-term commitments in a rushed deal could cost India more than the tariffs themselves. The GTRI also notes that Section 301 tariffs target May countries, not India alone. Even if a deal is signed, there is no guarantee that new tariffs will not follow. The United States has already launched Section 301 investigations against trading partners such as the EU and Japan, despite existing trade agreements. Well, joining us now is, again, former Foreign Secretary Shashank. Joining us in a bit will also be former diplomat Veena Sikri. Mr. Shashank, let me come to you again. As far as these trade negotiations are concerned, we're very close. We're being told the final 1% is what is in the works right now. Jameson, last time we had Brendan Lynch. Now we have Jameson Greer himself. These are ministerial talks. Let me begin by asking, what are the biggest concerns that India will be voicing as a part of these trade negotiations for that final 1%?
Well, I guess that one is that there should be predictability and no unforeseen additions to tariffs, number one. Secondly, on items that we agree to have some kind of tariffs which are adjusted bilaterally, then they should not be put any unilateral tariffs later on. And I think thirdly, if there are any kind of unilateral tariffs under 301 or whatever other sections of the American domestic legislation, then India should not be in any worse position than other countries with whom the Americans are having bilateral trade agreement. So therefore, I think these are a few basic things which should be observed by the Americans, and I'm quite sure that our Prime Minister has made many of these things clear to the American leadership. And I'm quite sure that while the Americans have agreed that India is a tough negotiator, but they also know that Indian leaders have to take care of the Indian interests first. And he's trying to do something for America, that's fine, so long as India is not discriminated against in any of the other tariff matters.
Sure. Mr. Shashank, also let me ask you this in context of that July 24th. Many are referring to it as the drop dead date. That's the day when the existing US tariffs, they run out. And then after that, there's a big vacuum as to what happens after that. What will be the tariffs that Indian exporters will have to deal with. There inherently seems to be a pressure for India to sign some kind of interim deal. The question that many are asking is that, is an imperfect deal the better way, along with the certainty that it brings? Or is it better to wait out and negotiate a better deal, subject to, of course, all the volatility that it tags along with it?
Well, what I've been hearing from the experts, they say, well, wait out. But I feel that perhaps better to have some kind of an interim deal and carry on the process in whatever agreements we cannot reach. So we should not give a negative kind of a position, but at the same time, tell them that India is a huge market, but we have very many food security concerns and the lifestyle, life patterns of the poor farmers and the dairy workers. So all those things have to be kept in mind by us.
One concern that has been raised by platforms like the GTRI is essentially that the Section 301 tariffs, it's being used as a pressure tactic, that this is tantamount to asking for protection money from India, that even countries which had signed a deal, take the likes of Indonesia, Japan, EU, for example, even they are facing additional tariffs over and above what they agreed to. The argument being made is perhaps it's not wise to agree to an interim framework at this stage, especially on the back of quote-unquote protection money being asked.
No, let us see 2 points. One is that the American Secretary of State said very clearly that whatever tariffs they are trying to apply are not India-specific. They are a global position taken by the Americans. The Indonesians and the others who had signed earlier agreements with the Americans, they have faced the new tariffs after the negotiations were completed. In our case, we are conducting the negotiations after these Section 301 tariffs have been imposed. And so we can very well make our position very clear that this is how we would like to do it. I'm quite sure that other countries, when they negotiate in future with the Americans, would also like to have a similar attitude in their negotiations.
Ambassador Sikri is with us again. Ambassador, again, the talks are due to begin shortly. 301 is the big concern that India has raised repeatedly. Tell us, the question being raised by many is that should there be a carve-out as a part of at least an interim deal, that there will not be any additional unilateral tariffs imposed on India once a bilateral trade agreement has been signed between the two sides?
This is a very important point, but then we do know that within America, the legal case is still playing itself out, and that we don't. There's so many judgments and counter judgments, and President Trump is appealing those judgments. We know all of that, and we know that where it will land up is not very clear. But as far as India is concerned, we want a final deal. It will be the first tranche, no doubt, but we want a deal which will respect India's red lines as far as agriculture, dairy, and other issues are concerned. These issues are very important for us, and there should be no sudden imposition of additional tariffs of any kind. For example, this issue of Section 301, the question of the labor, the child labor, and so on. I mean, India has been vigorously protesting against this for a very long time. It's not just now under President Trump, but even earlier when this question of Section 301 comes up and the question of child labor, India has protested it very strongly, not only with USA, but in the WTO and many other venues as well. So India will continue to say that, and we will certainly want an assurance from the American side on Section 301, because this uncertainty of saying that, that it's going to impose a 10% extra tariff because of Section 301, and that this will be like a Damocles sword hanging over India India's head whether this 10% is going to be imposed or not going to be imposed. This kind of uncertainty, I do not think India would like to live with it at all. So we will definitely want a tranche, the first tranche to be negotiated, which is categorical and clear, and no uncertainties about things like Section 301. These must be cleared out of the way right now. And I think we would like to continue without any of these, no 15%, 50%, no 18%, nothing, just a regular trade deal between the two countries.
Ambassador Sikri, another issue that is being raised is that even under the tariff pressure, even under this tariff burden, the Indian exporters clocked higher exports to the United States in FY26 as compared to the previous fiscal year. That is being used as an argument to say that perhaps it's in India's best interest to wait out this negotiation with the US for negotiating a better deal. Again, the same question I want to ask to you is it better to go for an imperfect deal now that will give us certainty, or is it better to perhaps wait this out, negotiate with the US a little longer till we're able to crack a deal that suits our exporters?
I think we will wait it out, because if it's a question of waiting it out, we will not accept an imperfect deal, because once you sign an imperfect deal, you're agreeing to something that is inherently not in keeping with your own national principles and trade negotiations. And yes, it is true that India's overall exports all over the world have gone up because India has been able to negotiate very successfully some very good FTAs with other countries, including the Gulf Council and so on. And with the UK, we have negotiated a very good FTA, and it is supposed to come on stream by the 15th of July. Of course, we have heard today that Prime Minister Keir Starmer has resigned, so I don't know what will be the fate of this. But the expectation is that this deal will remain on track and will come on stream by 15th of July. We certainly expect a huge increase in India's exports under the India-UK FTA, because the UK is a very important market for India. But so that's what I'm saying, that India is prepared and ready to adjust to the difficulties of India's trade with USA that have come in because of the uncertainty of the tariff regimes, the very unilateral nature of the tariff regimes that President Trump has been imposing on all countries of the world. We just hope that because of the court judgment in America, this uncertainty and the volatility of the tariff regime will now come to a certain degree of settlement. There's only this issue of 301 that now remains, and if that can also be negotiated away with the USA, then we should be able to do a first tranche, but it will be a first tranche. There will be other issues remaining to be negotiated. We would hope to have a first tranche which is clear and unequivocal. I don't think we will accept a wishy-washy first tranche.
Right, Ambassador Sikri, Mr. Shashank, for joining us with that perspective. Of course, Jameson Greer due to land tonight. The negotiations, the talks will begin tomorrow. But that's all the time that we have. It's a wrap on this edition of News Center. More news and updates will continue right here.
Microsoft isn't just building AI tools, it's rebuilding the entire software stack for the AI era. At the core of this transformation is Core AI, a startup inside Microsoft led by Jay Parekh, focused on creating the next generation of agentic applications.
So how many times do you get mistaken for Satya?
I was waiting. I was like, I wonder if she's going to ask that question.
Of course I'm going to ask you. So how many times do you get mistaken for Satya?
From weekly iteration cycles to rethinking how humans and AI agents work together, the rules of software are being rewritten in real time. Core AI is building the end-to-end platform to run, manage, and secure agentic applications across enterprises.
Meeting Satya Nadella, joining Microsoft in 2024 to set up the AI startup, if I can call it that. You know, with a 50-year legacy behind the organization, how challenging has it been?
Yeah, so when I got here about a year and a half ago, really what we want to do in the Core AI team is help not only the company, but also our customers kind of reimagine, rethink what it's going to take to build, to run, to manage all of these like new applications that are being invented, being created out of this technology that is AI, right? So, and that requires an entirely top to bottom kind of systems overhaul of what we've done to build software in the past, right? So in terms of like being able to build the applications with different tools, being able to support and build a new platform where these agents are running because they're interacting with the real world, they're thinking, they're planning with the models. You need different security guardrails around these things. So the entire technology stack needs to be kind of, we need to rethink the whole thing. And that's what we're focused on, is migrating or kind of transforming the way we create this new agentic software stack.
You know, I'll come to the agentic software stack in just a little bit, but let's talk about what's happening with the pace of change that AI has brought upon us. I mean, you know, within 3 months, the world is looking completely different. Now, from your point of view, as you plan out for the future, is this pace of change sometimes overwhelming? I mean, how do you deal with it?
Yeah, it is.
And
absolutely.
how do you plan for it?
Absolutely. Everything's going so fast, right? And sometimes for us, it is where you will come up with a plan or an idea one day and you wake up the next day and you have to stretch it out and try something else. So there's a few things here, which is one is it's really about the way we are working as an organization, because the technology in the world is going to keep changing quickly. So saying, hey, we're going to read more, we're going to like work more hours, we're going to invent more days of the week, like while those things they would be nice, they still probably won't keep up, right? So a lot of it is really making sure we are adapting faster and faster. And so that is a lot of how you kind of change the team dynamic. So one is making sure we do have time to learn, to observe, to be curious with our customers. Two is making sure our iteration cycles are very fast, right? So we don't do, for example, you know, planning over a really long period of time, because you can go and make a plan for a roadmap for 6 months or a year, and you know within like a few weeks that it's going to be out of date.
Right.
So you want these short iteration cycles of what you're doing. You absolutely want a North Star, but you want to be iterating kind of week by week.
So is it literally
adjusting.
week by week?
It's day by day for some teams, you know, at most kind of week by week. Yes.
You know, agentic future that everyone's talking about at this point in time. Where are we in that journey? You know, are we close to that inflection point? I'll link that back to what Satya said in his post yesterday, that we have to reimagine the workforce and reimagine work with human capital and token capital coexisting. So what does that mean now as far as the way that organizations are structured? What do you prioritize today?
Yeah, so there's going to be a few things. One is just the overall system that is supporting this new way of working, right? So it's going to be the tools that we use as employees to do our job, whether you're in finance or you're a developer or whether you're a salesperson. There's where these applications and how those applications are going to run within your enterprise, as Satya mentioned in his post, where there is this end-to-end system, right, that has to come together that does allow you to manage kind of your human capital, your tokens, and then really we got to be focused on these different outcomes, right? And knowing what we can do with the power of the technology plus the power of our people. What types of new problems should we go tackle? What is the ROI on that, and what more value can we build? Either stuff that we may be able to do to save, because some organizations and some teams may get the biggest benefit there, but also what else can we tackle together? So it's really bringing those together and not as disparate concepts. But for me, what I focus on in all of the stuff that we do in our team, it's really how do we get to a new cycle of delivering that value, that quantifiable ROI to the customers.
You know, when you came up with the idea of the agent factory, and as you look at where we are today, what is the most exciting aspect of it, and what is it that we should be prepared for as we look at 6-12 months down the line?
Well, I think for us, it is continued change, right? So that is something that is both exciting. It's also hard as a product building organization of how to, one, make sure that you create these very valuable technologies that organizations can be successful with, that they can deliver that ROI, but also making sure that a platform that is adapting over time too, right? Because you can build the platform in a way and the tools in a way that they solve yesterday's problem, and then you're always kind of lagging the technology. So it's exciting to be able to build the flexibility in the platform and how to build the flexibility in the platform. I would also say that for us going forward is how you're going to manage your AI applications, right? And Satya talked a bit about this of how do you manage that. In some ways, the cost of the cost of this estate. And there's a lot of work that we're excited to do and that we'll do around, you have all of these different use cases. You can imagine in an enterprise, you may have thousands, tens of thousands of these AI agents and use cases. Some of them may need the premier tokens, like the premium tokens, I should say. And then over time, as these things are doing different types of workflows and tasks, you can optimize that with your data, in your tenant, with your kind of compliance and guardrails. And then you can use kind of model choice, framework choice, tool choice to really make sure you have the right quality for the job, but you also have the right cost efficiency for the same job.
Which also means that you need to have an open ecosystem.
Yes.
You know, what have been the results in terms of efficiency and optimization that you've been able to drive through the work that you've done so far?
So this is an area of constant work for us, right? So for example, in GitHub Copilot, we have work and science work that goes into modes that developers, builders can use where they defer to an automatic picker. So based on your task, based on what you're trying to do, we locally can classify that and pick the best model, right? So it doesn't always have to be the premium model. It can say, hey, you're going to use this for this complex planning task or this complex refactoring task, but these other things, we can pick a cheaper, faster model for that, right? So we want to take some of that burden of having to pick off the end user and make that just part of the platform, part of the product. But that's also requiring you have model diversity, right? So both in GitHub and in our productivity M365 Copilot, as well as in Foundry, we offer that choice of the wide range of choice, right? Big models, small models, open, closed, but also multimodal, image, voice, video, etc. Those are all part of that builder creation process.
Were you surprised by what we've seen recently with companies saying we've blown through our budgets? Did that surprise you?
Yeah, I don't know.
Token maxing is now almost an insult.
So, as somebody who's been in tech for a long time and led, supported kind of technical product organizations, I think it's easy to, I think, get over-rotated on these activity metrics, right? And a long time ago, it would be like, you would have lines of code or these types of things. These are activity metrics, right? And if you're in sales, it's like, okay, how many leads do I have, right? And you could have lots of leads, but if none of them are qualified or none of them are real, that doesn't turn into, that's activity, right? It's not actually revenue. So it's not that it's a new thing to me. It's actually, again, businesses needing to separate kind of these activity metrics versus these output metrics that are important to the business, right? Or because the activity doesn't always translate into the outcomes. One of the things that we work on in our team here is equating, okay, if we're going to invest X dollars, some number of people and some amount of tokens, what is that, what is the output, the impact to the business that we get? And thinking about that time from an idea that somebody has to when it ends up in our customer's hand, what can we do to shrink that time, but also make that experience more valuable, more delightful, et cetera, right? So these are the metrics that actually move the needle for our customers, for our business, versus these activity metrics, right? It's easy, you can imagine, everybody should use a lot of tokens, right? We all see what happened in the news about that. But now we have to just be wiser, smarter, and kind of come together with the right controls, with the right visibility into how these token resources are being used.
Speaking of ROI, I think what has worried the street is that, this massive capex spend being announced by each of these companies, including, of course, Microsoft, $190 billion in 2026. And is this real? Is this going to lead to an unraveling? I'm sure you get a lot of those questions as well, but how do we make sense of this, of the kind of spends, what it's eventually going to lead to, what it means as far as an ROI perspective is concerned?
Yeah, absolutely. So I think just staying focused on what value we're delivering to customers, right? When we see kind of the evolution of how people are using the products, right? So you could even go back a couple years ago and say, okay, Copilot, what was the typical use case? It was ask a question, get an answer back, right? Now today, people are launching very big, elaborate research projects like competitive research or product research or ways to kind of maybe think about a business model analysis where they're bringing in different artifacts, maybe a spreadsheet, presentation, outside research, other information that may be in your flow of work, right? Stuff that's in your Teams or email or other documents. That corpus and being able to think about it, reason about it, do more sophisticated kind of planning or outcomes, that is where I think the flow of work is just picking up the pace, right? So doing a question, getting an answer back, that was, a year or two ago.
Yeah.
But now if I can use this technology to do what would take, days, weeks, months with a lot of people, and I can do that in hours or minutes now, then I think there's tremendous demand. And that's what we see in how we're building our products and how we generate our ideas for our roadmap too, right? Which is to really be able to have the tools and the platform support these more complex and just higher ROI or just more valuable outcomes, right? And I think then the spend will flow from that. Now, we obviously continue to match, our spend is based on our demand, right? So but the demand comes from working backwards and working closely with our customers.
Let's talk a little bit about India, because you've said previously that it's not just about the models. It is going to be about how those models are deployed at scale, how they're used, and of course that's where the talent aspect comes into play. You know, how do you read the India story in an AI landscape?
Yeah, so India is just it's a really exciting community in India, right? In GitHub, we have 27 million developers that are in the GitHub community in India. Just this year, we've seen more than 2 million new developers join the GitHub platform, right? So it is an incredibly fast growing and very, very vibrant community of developers. And it is one of the most activated, I would say, in terms of thinking about using AI and actually building ambitious product solutions to serve the world, right? So very exciting to see the range of what people are doing from the big multinational companies in terms of what they're doing to help even other companies around the world do transformation, as well as the startups and how small teams moving fast with this technology are building some of the most valuable startups in the India startup ecosystem of all time, right? So very, very fast moving. It's a community that's contributing a lot to open source in AI as well. And it is an area where we continue to invest. Obviously, Microsoft all up is investing in data centers and skilling. We have a big presence there for our own product development in the different offices as well.
You know, the debate on whether India should do frontier models or not, we do now at least have one. And we've just announced a big deal where HCL Tech, one of the services companies, has decided to pick up a little over 10% stake in Sarvam. Do you believe that that is going to be crucial? It's going to be imperative as India builds out its AI ecosystem, this kind of ecosystem building?
I think it's important for where there is the talent and the dollars to continue to invest in as much of the stack as possible. Like there is an incredible amount of investment going into building out the infrastructure. There is obviously a vibrant startup community. The larger, I would say, the companies that are doing work for all the multinationals, like we work with, you know, Wipro, Infosys, all of them in terms of what they're doing to drive that transformation. So it is very good, in my opinion, for investment to be happening at all of these layers of the stack, because so much is still yet to be invented and to be decided. And having having folks work on what may be specific needs of the Indian market, I think is great. It's a valuable part of the ecosystem.
You know, sovereign AI and a national strategy as far as AI is concerned, I mean, that's gotten a lot of play on account of what we're seeing happen on the geopolitical front. With the Trump administration telling Anthropic what it can or cannot do as far as Claude is concerned, does that become an emerging concern for the industry? And, you know, and how do companies like yours look at it?
So the way I think about it is, again, we have defined and we are working on this end-to-end system in terms of how organizations all around the world can build these AI applications, how they can contextualize it or connect it with their data, right, their proprietary business data, how they can run this in this platform, how they can govern these applications for their compliance, their governance, their whatever sovereign constraints or requirements they may have, and then how we can make this whole thing continually improve over time, right? And so that really is the notion of the platform that we're trying to build. And so that over time, this should be able to meet whatever requirements, because it does, as a platform, allow you that flexibility. It does allow you that choice. So you can lean into one model, you can lean into lots of models. If something happens in the geopolitical landscape, you have choice, right? And that's where the extensibility, the flexibility of this end-to-end system, this end-to-end platform, I think is super important as we see the world continue to change.
The anxiety is also coming from is that what is this technology going to do to people in the workforce, in the workplace? How do you address that and I'm sure that, a lot of young people who come to you, or startups who come to you, or even employees who talk to you about that. How do you address that question, the short-term, medium-term dislocation that is expected, but in the long term, what do you believe is likely?
Yeah, I think for us it is, one, it's a journey. And I'd say that, one, we have to think about the type of people that we need for different problems, different projects, right? And I think some ways you see maybe the specialization in an organization is starting to blur, right? You're starting to see folks in our legal team or our finance team using our developer tools to help them do their jobs. You're seeing people in maybe in product and engineering being able to think about maybe marketing strategies, because they're able to brainstorm with these tools, right? And give it context in work and other documents they may have. So in some ways it's really neat because the functions are blurring, which means, one, people are learning things that maybe they, in the past, because they were specialized inside of a function, they couldn't learn, right? Or it was hard for them to learn. Now you're able to kind of, I would say, expand your knowledge across the function and really think about, okay, I have this product, I have this feature. I'm not just going to be responsible for the code or for the spec or just for the design of it. I'm going to think about it with a couple of other colleagues, how we think about the idea, how we vet the idea, how we iterate on it, how we build it, how we get it into customers' hands, how we position it against the competitors. So we're not going to have all of these handoffs where we go slow. But now if I can have employees actually gain way more experience because they can understand these different functions that may have been separated from them, then I think that is a huge learning opportunity for the organization. And then I'd say the other thing for us is just continuing to learn and gain new skills about how to use these tools, right? And that, I think, is something we invest a ton in terms of how we drive those programs, those learning programs. And, frankly, the other thing that we see a lot of is there's a lot of work that is, I would say, we classify it as toil. It's like repetitive, mundane work that isn't, and goes kind of in your face of when you're trying to create and deliver value to customers. There's a lot of work that we can automate away that then saves time. You get time back to then go work on those higher ROI or higher value or higher ambition problems.
Well, we look forward to hearing more from you, and we look forward to seeing you in India. Jay, thanks so much for joining us here on Voices from the Valley. Appreciate your time.
Thank you.
And wish you the very best of luck.
Thank you for having me.
Well, with that, it is time for us to take a quick break, but the headliners and newsmakers will continue. We're right back with you after this short break. Stay tuned. Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The top stories that we're tracking for you this evening. Iran's foreign minister claims major progress after the first round of talks with U.S. officials end in Zurich. Negotiations lasted 18 hours despite tensions sparked by President Trump's threat to attack Tehran if it does not restrain the Hezbollah. Iran claims securing waivers for oil exports and the release of some foreign assets. Crude oil prices fall after Iran closes the Strait of Hormuz over Israel's strikes in Lebanon. Ship tracking websites showed 12 vessels crossed the strait on Sunday, which is sharply lower than 35 transit on Saturday. Sensex and the Nifty end in the green after a range-bound session. All sectoral indices gain in trade. The rupee weakens by 35 paise against the dollar to move closer to the 95 mark. U.S. Trade Representative Jamieson Greer set to arrive in New Delhi for negotiations. Commerce Minister Piyush Goyal says the trade deal is likely to include preferential tariffs for India, along with rules of origin and investment provisions.
I have heard the answer of my parliamentary party to that question, and I accept that answer with good grace.
The UK is set for its 7th Prime Minister in a decade as Keir Starmer resigns less than 2 years after leading Labour to a landslide victory. He exits amidst policy missteps and scandals involving close aides. Andy Burnham, frontrunner to succeed him, won a parliamentary seat just days ago at the Makerfield by-election. Shares of Reliance Industries gain after Chairman Mukesh Ambani announced the Jio platform's IPO, likely to raise a record $4 billion. AI deployment across businesses and scaling up of growth engines gets a thumbs up from brokerages. The southwest monsoon finally making some progress after remaining stationary for 14 days. The weather department says the monsoon is likely to reach Mumbai within 48 hours. The sale of air conditioners surging due to the extended heat wave. Voltas alone manages to sell 10 lakh units in the last 3 months. Debutant Cape Verde's dream run continues, holds a higher-ranked Uruguay to a draw. Egypt tops its group after a 3-1 win against New Zealand, secures its first-ever win since its World Cup debut 92 years ago. Well, let's go straight to the top story this evening. Officials from US and Iran held the first round of in-person negotiations in Switzerland's Zurich. Iran's foreign minister and mediators are claiming major progress after the talks lasted 18 hours despite tensions being sparked by threats from President Trump. Now, in a social media post, Iran's foreign minister said the mediation by Pakistan and Qatar has delivered major progress to end the war in Lebanon. He also claimed US sanctions against oil and petchem exports have been waived and that some frozen assets have been released. Both the mediators, that's Qatar and Pakistan, also released a joint statement claiming encouraging progress. While the main negotiators have left Zurich, a technical team from both the US and Iran are staying back to continue the talks to reach a lasting agreement in 60 days. The joint statement also said a communication line has been established to avoid incidents relating to safe passage for commercial vessels in the Strait of Hormuz. The joint statement also addressed the situation in Lebanon with the formation of new deconfliction cell. The US, along with Iranian and Lebanese officials, will be members of this cell to ensure the termination of all military operations. However, Israel continues to maintain its forces will remain in southern Lebanon as long as necessary to defeat the militant group Hezbollah. Despite all of this, shipping traffic at the Strait of Hormuz remains constrained. Iran announced the closure of the strait over the weekend after Israel launched fresh attacks in Lebanon. Brent crude prices remain firm around the $80 mark. Here's Inzamam Rashid reporting from Zurich on the first round of negotiations between the US and Iran.
These were talks that effectively went on till around 3 o'clock this morning, Switzerland time, up in the mountain resort of Bergenstock, where the Pakistanis, the Qataris, the US delegation and the Iranians were thrashing out discussions. And it came after a day of diplomacy, of negotiations, a day of twists and turns, where there were pivotal moments which almost completely disrupted the negotiations because of words from President Trump from over 4,000 miles away in the United States, threatening with renewed threats towards Iran, suggesting to the Iranians that they may not even make it home because they have shut the Strait of Hormuz, or that's what the Iranian military have been saying. Anyway, so there were talks that took place. Then there was this kind of disruption. The Pakistanis then managed to get the Iranians back to the table to carry on discussions, and then they talked through till around 3 o'clock in the morning. Now, it's my understanding this morning that the leaders of all those countries will depart. The Iranians have now left the Bergenstock resort and will be heading back to Tehran, but there will still be teams on the ground from all 4 countries up in the Bergenstock resort to have technical discussions over a number of issues around Iran's nuclear program, around the Strait of Hormuz, around releasing some of Iran's frozen funds, which is actually at the top of the Iranian agenda, and also talking a bit about how the region looks in the future, whether there will be US military withdrawal from the region as stated in the Memorandum of Understanding. So it was a day of a lot of tension, but also some positive steps as a result of those negotiations, and we'll have to see how the next few days here in Switzerland pan out. But the leaders, those top negotiators, are now leaving the country and heading back to their respective homes.
It's a great day, a day which is going to promote peace and prosperity, not only in the region where crisis really created humongous challenges, but this will have global peace. And I must, at this point in time, with the fullest sincerity at my domain, thank President Donald Trump for his visionary and very dynamic leadership, which has resulted in this meeting here today.
Well, one of the mediators there, Pakistan's Prime Minister. Now, US Vice President J.D. Vance also in Switzerland. He quipped about his 2 favorite people in the world, with one being an Indian and the other a Pakistani. Remember, J.D. Vance is married to Usha Vance. Take a look.
I will say that since Field Marshal Munir welcomed us with the Prime Minister in Islamabad, I have joked that I have 2 very, very important people in my life, an Indian and a Pakistani. The Indian is my wife, and the Pakistani is Field Marshal Munir. And I've probably talked to Field Marshal Munir more than I've talked to anybody else over the last 3 months. Would not be here without his statesmanship. He is, of course, a great military leader, but I think he's shown himself to be a great diplomat.
Well, that's J.D. Vance there on Pakistan's army chief. Now, 54 people were injured, 18 are missing after an explosion at Qatar's Ras Laffan LNG complex. Authorities said the blast was triggered by a technical accident and added that there was no threat to public safety. The incident occurred as workers were restarting operations that were halted after an Iranian attack, but that took place in March. Qatar Energy did not say whether the explosion has caused any damage to the plant. They did say it was an operational incident. Now, Brent crude prices continue to hover around the $80 mark as investors digest the developments in Switzerland. Manisha is standing by with more on the outlook for crude oil and the status of shipping in the Strait of Hormuz. Manisha.
Well, it has been a volatile peace talk between US and Iran from threats from both sides, but the parties still meeting, looking at various points to talk about, and that clearly has led the crude oil prices back below $80 a barrel. At the high point in sense of West Asia conflict, the crude prices did go to 120. So from 120 in the month of May to below 80 right now is nearly 40% of a decline that we have seen come in for the crude oil prices. It was 8% down in the previous week, 6% down in the week prior to that. So it has been a constant decline that we are looking at into the markets there. Also, investors are reacting to the peace, positive signs in sense of progress of peace talk between US and Iran. The joint statement between Qatar and Pakistan talking about an agreement to a roadmap aimed at securing final agreement in 60 days is what the street will be looking at. But amidst all of this, we've seen the shipping numbers increase and kind of fall yet again as Iran says that Israel's attack on Lebanon and the retaliation is something that they will not be working with. So when you look at the numbers coming in on sense of shipping data at the Strait of Hormuz, whether it is from various agencies like the Windward, CENTCOM or Kepler for that matter, suggest that while before West Asia conflict, the everyday shipping passage via Strait of Hormuz was at 120 to 140. It declined to nothing, to single digits some days between the last 3 months therein. But since the US and Iran talked about opening up the Strait of Hormuz without a toll. We did see traffic at around nearly 25 ships on previous Thursday. It went up to nearly 35 ships passing Strait of Hormuz on Saturday. Sunday saw a decline to a total 12 vessels that have passed. But on Monday, that is today, there is a sense from the satellite data that no ship perhaps is passing right now. Of course, the number varies between many of these agencies depending on which ship has switched off its AID corresponder. But today, from where we stand, there's no ship passing, and the market's, of course, watching this very, very closely.
All right, Manisha, yes, we will be watching it very closely, but around $80 a barrel, that is crude for now. On to the equity market action. The markets did end higher after a range-bound session, with all major indices closing in the green. The Nifty above 24,100, led by financial heavyweights like Reliance and Infosys. The Sensex closing 290 points higher, 249 higher on the Bank Nifty, and the Nifty Mid-Cap Index a gain of about 200 points there. Rima standing by now with the day's market action. Rima, closing in the green, that's the Monday afternoon for you.
Overall, a steady Monday trading session. We gave up some gains towards the end of trade, hovering around the 24,100 mark, but we had a gap up opening. And broadly, it was a session of consolidation. The big driver today was easing geopolitical tensions. Mediators, Pakistan and Qatar, after the high-level meetings which took place between US and Iran over the weekend in Switzerland, said that they've made encouraging progress. They've agreed on a roadmap for a final deal to be reached within the next 60 days. That provided that macro tailwind. Brent crude prices were hovering below $80 per barrel. The intraday high on the Nifty was 24,168. The next test is the 100-day moving average at 24,200. Mid-caps, small caps all moved in step. The advances outpaced the declining stocks, so that was positive. Gains today were led by the IT sector, defense, pharma. FMCG was the only sector ending in the red. Cipla was your big gainer today after Citi initiated a 90-day positive catalyst watch with a buy and a target price of 1,700. IT led the rebound after Friday's fall. So Infosys, Tech Mahindra, CE buying in the mid-cap space. Sign, Coforge ending in the green. Other pharma names like Dr. Reddy, Sun Pharma, higher. Large-cap banks, whether it's HDFC Bank, ICICI Bank, Kotak, all tracking higher by the close of trade. As I said, FMCG was the only laggard. Asian Paints was down nearly 2. Titan, Trend, Nestle, HUL under pressure. Reliance Industries, actually that was the big mover today. After the AGM, we saw some fresh targets, upgrades being set. For CLSA, it's 1,800. Lots of mid-cap action. So no sell surge after the DGTR cleared the anti-dumping duty on rubber accelerators from China, US and EU. Voltas cooled off slightly, but still ending in the green. The company saw 1 million of AC sales in the first 3 months. The Kirloskar Group was in the spotlight after Kirloskar Oil secured a hyperscaler center genset order. Companies, names like New India Assurance, Aegis Logistics, Aegis, all of them extending gains. So the mid-cap screen was very much alive. We gave up some gains towards the end of trade, but all in all, not a bad session with macro tailwinds providing that uplift today. Let's see whether we can continue the momentum in tomorrow's trading session.
Rima, many thanks. Here's the latest in the trade negotiations between US and India. Now, US Trade Representative Jamieson Greer will arrive in New Delhi later tonight, and this comes just a week after another US trade delegation held talks for 4 days with Indian officials in the capital. Commerce Minister Piyush Goyal says a deal with the US is likely to include preferential tariffs for India. Abhimanyu standing by with more on Greer's visit and what we can expect. Are we anywhere closer, Abhimanyu, to that deal?
This is possibly going to be the final lap of discussions between India and the United States for an interim trade deal. Now, just 1% of discussions are left as per the US ambassador to India and also as per India's Commerce and Industry Minister. Now, the USTR, Jamieson Greer, is expected to reach India tonight, and in course of 2 days, that is on the 23rd and 24th of June, he is expected to meet India's Commerce and Industry Minister and several senior officials from India's Department of Commerce. It remains to be seen how early both the sides are going to finalize the tariff architecture for the interim trade deal, and also discussions are likely for a larger BTA between both the sides. Now, the Commerce Ministry has indicated that the discussions are likely to include issues like preferential tariffs, investment provisions and rules of origin, even as both the sides are looking to deepen not just investment but also trade across several sectors, including defense, critical minerals and energy. Also, the Commerce Ministry had earlier indicated that India and the US are engaged seriously to deepen their their bilateral trade and investment and cooperation across several areas. Earlier, sources had indicated that 10% tariffs are expected to lapse on the 24th of July, and in case a deal is not reached by then MFN tariffs are going to apply. So India, of course, is looking for a preferential tariff architecture for the benefit of its industry, for its exporters, and it remains to be seen how early that is going to be finalized between both the sides.
All right, Abhimanyu, many thanks for joining us. The big story coming in from the UK, Keir Starmer has resigned as Britain's Prime Minister and Labour Party leader less than 2 years after leading the party to a landslide election victory. Starmer conceding to mounting pressure from within his own party over broken election promises, policy missteps and scandals involving several close aides. This will pave the way for Britain's 7th Prime Minister in a decade. Starmer said he will remain in the post until a new leader and Prime Minister is elected by the governing party. In a visibly emotional speech outside 10 Downing Street, the outgoing Prime Minister said that every decision he made in office has been about putting the country he loves first. Meanwhile, Andy Burnham, the front-runner to replace the Prime Minister, won a parliamentary seat just days ago at the Makerfield by-election. Burnham has announced that he is running for the Labour Party leadership.
The question my party is asking now is whether I am best placed to lead us into the next general election. I have heard the answer of my parliamentary party to that question, and I accept that answer with good grace. Every decision I've taken has been about putting the country I love first. That is why I will resign as leader of the Labour Party. And when I leave the biggest job in the country, I shall spend more time on the most important job, being the best husband I can to my fantastic wife, Vic, who has been a rock by my side through good times and bad, and being the best dad I can to my beautiful children.
Well, that's Keir Starmer. And Andy Burnham, who's referred to as the King of the North within the Labour Party circles, is all set to ascend the Britain Game of Thrones. Sanjay Suri joins us now from London. Sanjay, tell us more about Burnham's Manchesterism and his economic beliefs, and what could this mean now for Britain?
There are clear reasons why Andy Burnham has been spoken of as the King of the North, at least within the Labour Party. His record as Mayor of Manchester, and he's had a long spell there, has been impressive in a local sort of way. But that has been his emphasis, that growth needs to be driven locally rather than nationally. The Greater Manchester region has had a far better record in growth and investment than the average for the rest of the country. He's had a number of administrative successes as well. He brought in what has been called the B network to integrate bus services with trams and cycling. He's established a homelessness fund. He's promoted affordable housing. A lot more to be done there, it has to be said. These have been local successes, but the national challenge necessarily will be of a different order. Burnham is spoken of as the soft left, meaning he's not a centrist or even near right in a Tony Blair sort of way, but he's not hard left either. He nevertheless is supportive firmly of trade unions and of taxation to improve services for people. Taxation inevitably will be the most controversial issue he would get tested on, and as Prime Minister that he is expected to become, his task would not be quite as simple as multiplying Manchester's success nationally. He would now be positioned on the other side of his earlier stand to promote the local against the national, or at least give it more emphasis than the national direction. But of course, once he's in the top job, a lot that came before can and will change. It always does. At the moment, he's looking a winner, it has to be said, because Starmer has looked the loser. But Burnham is the winner within Labour, other than the by-election win. Nationally, the right-wing Reform Party led by Nigel Farage is way ahead of Labour in the polls. Can Burnham reverse that? That will be the big challenge for him and for his soft left policies.
Sanjay Suri, many thanks for joining us. Meanwhile, in Colombia, right-wing candidate Cipla has narrowly won the presidential runoff with over 99% of the votes counted. The Trump-backed candidate had won nearly 49.7% of the vote, according to an initial count of the runoff elections. Cipla has pledged a military crackdown on illegal armed groups in the country to rein in drug trafficking and crime. We take a break, but up next, shares of Reliance Industries gain after Chairman Mukesh Ambani announces the Jio platform's IPO. That and more when we return. Shares of Reliance Industries gained in trade after Chairman Mukesh Ambani announced the Jio platform's IPO. The public issue is likely to raise a record $4 billion. Brokerages waving a thumbs up to the conglomerate's plans to scale up its growth engines and boost AI deployment. Mangalam joins us now with more on the plans to bolster the FMCG business. Take a look.
Dare to dream and care to execute. That's exactly what Reliance does. You know, in an AGM where a lot of the spotlight went away into AI, new energy businesses, and the Geo IPO, the footnote, and which was actually, could be a big multi-billion-dollar opportunity for them, is the FMCG play. Reliance Retail is now become an FMCG giant. Remember, it's just been about 3 years since its inception. In FY26, Reliance Consumer Products Limited, which is their retail business, actually crossed gross revenues of 22,000 crores. This number was 11,450 crores in the previous financial year. So it's a near 2x jump that we've seen. So no company in the consumer space has actually crossed 20,000 in such a short span of time, and with the pace that Reliance has done. So that's exactly what has happened out here. 22,000 crore in gross revenue, 2x growth, fastest in the industry, and also the highest in the industry that we're looking at. And it's not just that, look at some of the brands that Reliance has actually grown in its consumer products business. Nearly 5,000 crores coming in for Campa. In some of the important markets, it's also crossed double digit in market share. It's among the top 3, top 4 aerated beverages players in the country. And then Independence, the food brand, also has done about 2,600 crore in gross revenue. So all of this, while reaching 3 million plus outlets and 5,000 plus distributors, is no mean feat. And if you compare Reliance's gross revenue to all the other companies, while all of them, the reported numbers are net numbers, so you have to take that into account. But even then, it is fairly admirable. 22,000 crore rupees stands in line with Nestle's 23,000 crore rupees, above Tata Consumer's 20,000 crore rupees, or even Britannia's 19,150 crores. And remember, these are extremely old companies in India for the longest time. If you compare it to some of the other players like Godrej Consumer, Marico, Dabur, this number looks like it is nearly 2x of that. And imagine a company doing that within just 3 years of its existence, organically and by acquiring brands on a gross revenue basis, 22,000 crores. But they're not stopping here. The near-term ambition is to go to 1 lakh crore in revenue by FY30 and become one of India's largest FMCG companies. Now, if you're looking at the multiples at which all the FMCG companies trade, and at 1 lakh crore revenue, this could definitely be the next multi-billion-dollar opportunity. And that's exactly what Mukesh Ambani said.
All right, Mangalam, many thanks for joining us. That's Reliance Retail Juggernaut. And of course, the standard disclaimer on your screens, Network 18, the company that operates CNBC TV 18, is controlled by the Independent Media Trust, of which Reliance Industries is the sole beneficiary. And with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC TV 18. Stay tuned. We're back in a moment with plenty more.
Vishal Sikka helped build SAP, one of the world's most powerful enterprise software companies. Sikka spent nearly a decade at SAP, rising to become its first non-German board member. In 2014, Infosys made a historic hire, bringing in Sikka as the first non-founder CEO to transform the company. His 3-year stint was marked by bold ambition and a bitter public fallout with the founders. Since then, Sikka has turned entrepreneur. In 2019, he founded VNI Systems, a Silicon Valley AI company built around one big idea, that enterprise leaders shouldn't need a data scientist to talk to their own data. The company has filed 30 patents, raised nearly $200 million, and counts TCS, Google Cloud, SAP, and KPMG among its partners.
Hello and welcome to Voices from the Valley. I'm Shireen Bhan, and joining me today is a guest that I had with me exactly 10 years ago here in the Valley. Palo Alto is where we were, and today we're in the Stanford backyard in Menlo Park. Vishal, it's great to see you back on the program. Thanks so much for joining us. So much has changed, not just in the last 10 years, but in the last few months. I mean, artificial intelligence is coming at us like a juggernaut. You know, from where you are sitting today, Vishal, what's the most transformative change that you are witnessing?
One is in the technology itself, the rate at which around here, you know, I was reading somewhere that 91% of the unicorns are in the Valley, in the startup unicorns. All the rest of the world, including the rest of the United States, is 9%. So the amount of work that is going on in the technology itself is just astounding. And every day you see something new. But what I am even more excited about is what can you do with it? And the great problems that we can solve with it. And somehow it is the nature of our minds that we tend to think about, when we see a new technology, we tend to think about the problems that we already know about, you know, the past. But what is really exciting is the things that we will do with this. And that is what I am really psyched about. To give you an example, drug discovery is on the minds of a lot of people. I serve on the board of GSK. And when AlphaFold discovered 200 million proteins, that really boosted the whole drug discovery process. Of course, there's a lot more to drug discovery than protein finding, but that protein folding, the 200 million proteins that AlphaFold found would have taken humanity more than 400 million years by today's process. So it shrunk the 400 million years of effort into like a few months. And so the thing is, what is it that we can today think that would take decades to do that you can now do in days or hours or even minutes? And I think those problems are just so exciting to go after.
So what is exciting you at this point in time specifically? What are the kinds of problems that you intend to go after?
Of course, you know, problems that humanity faces that are of a really, really complex nature, problems that businesses face that are of a really complex nature that are, so drug discovery is one example of those, but every company you know, that works in different industries has problems of that magnitude, of that scale, and I want to go after those. And so I'm here. You know,
you just set up a new office to do exactly that.
To do exactly that. Yeah, this is what I'm doing here, and you will be the first one that I'll talk to about this. But really, my team is inside there. We are all very fired up about it, and I will soon be ready to talk about this.
Okay, we look forward to that. But you know, since we're talking about things that are firing up imagination, but also firing up conversation. You know, Satya Nadella wrote a post yesterday, which has evoked a fair degree of response. I think the reason why it's evoked so much response is because it captures how people are feeling at this point in time, especially those who are not on the AI bus. Have you missed the AI bus? If you have, what happens to you next? The concentration of power, have we become a tech oligarchy almost? How do you respond to some of that, Vishal?
The asymmetry problem is real, and you and I have talked about this over the years. It is getting worse. I've been talking about this for a long time, more than a decade, and it is getting much worse. So just to put some numbers in perspective, out of 8 billion people in the world, only about 2 million could build an AI application. That's it. And this is not people who are building the models. These are people who would apply them to do something, to find if this roof is going to fall, or when a machine is going to fail, or if something is fraud, or to approve a loan. Those kinds of problems, that's 2 million. Out of those, the ones who could operate a machine learning model, an AI model, is about 250,000.
Wow.
The number of people who can build a frontier model is about 5,000.
5,000, that's it?
Yeah. In the whole world, the number of people who can build a foundation model, so like one of the 100 or so big models that are on the various leaderboards, is about 5,000 people building them. And out of those, the ones working in the frontier labs are about 1,000, 1,100. So this is an unbelievably asymmetric situation. So you have essentially a bulk of the world who is completely blind to this, completely oblivious to this. And yet here in the valley, we get excited on a daily basis that, oh my God, this dropped and that dropped and what happened here. And so I think that fixing that asymmetry is a very, very important problem. That is something also for India, that is something I have spoken to folks in India about a lot. That needs to be fixed.
From your vantage point, as a former insider, what happens now to the services model? What happens now to SaaS companies? And I think that is the question that's being asked. And I don't know if we have any definitive answers on the way forward. As you look at it, is it all gloom and doom? Are we already prematurely writing obituaries? Or do you believe that the path forward could see these companies make the pivot, make the transition into an AI world?
No, that's a very important question. The answer is multifold. It is not a simple, straightforward answer. Does AI make it possible to do the work that we have done before dramatically faster and easier and cheaper? Yes, it does. I have examples where not just things happen 30% faster, but like work that would have been done by teams of people over years can be now done.
You were giving me an example where you were sitting outside on a bench quite literally and creating something that would have otherwise taken you years.
It was a very shocking personal example because that was years of my own life that I was able to recreate basically within less than an hour. And I just could not get over it for many days, that what the hell just happened. Because I built a system that I had a large organization that painfully built over years, that more or less a kind of a low fidelity version of it I was able to build in less than 1 hour.
In less than 1 hour, what had taken you several years to build previously?
An elite team that had taken 2.5 years of overtime, 500 people. Initially 100, going up to 450, 500 people, 2.5 years of our lives. Painful 2.5 years of working 15-hour days that I could basically redo in 1 hour.
By yourself?
By myself, sitting by myself, and it worked, and I showed it to people and they could not believe it. And so what does that mean, right? And I think we can look at it in these two ways, back to your question. All the work that we do today, that armies of people do today, could be done in minutes by people who understand what they are doing. But at the same time, there are completely new kinds of things that this technology can enable. And you could get on that bandwagon and say, you know what, I'm going to solve the most important problems for you. And so whether the companies survive or not, or thrive or not, is more a function of, can we transform ourselves in time to help everybody who needs help with these kinds of things? Or will the wave come and destroy our prior way of working? And I think both of these are very, very likely possibilities. The wave is here. It is not like...
Yeah, it's not, the wave has hit us.
The wave has hit us. It's not Vishal Sikka saying, oh, look, the wave is coming. This wave is, the water is in our living room. The wave is here. And so it will wipe out the prior way of doing things. There will be single people, small teams of people who will do these things. And therefore, how quickly can we move to the new kinds of things that are possible to do where the skills are not there yet? And we just talked about the vast gap in skills. So I think that to me is the big divide, is how quickly do you go over to that other side? And if you see a sense of urgency. I was talking to a friend of mine about Netflix and how when the streaming became good enough, they basically put the old DVD company in and said the whole company now is the streaming company. At the time it was a radical decision that the entire operation, they said, is the past. So something like this, I think, has to be done probably. But I'm very glad I'm not doing it.
That you're not there to have to do it, right?
Yes, exactly.
I was just having a conversation with somebody that Dheeraj Pandey.
Dheeraj, yeah.
And he said, I wouldn't be surprised, or he believes that it would be the right thing for some of these companies to do is to in fact go private. Because he said, as a public company, you just will not be able to make this kind of a transition.
Yeah, you would think that now people would be much more open to it because this is here. There are thousands of examples, and what the technology is capable of is already known. But I think Dheeraj is right. Being private would afford a lot more independence and freedom to do the radical changes that would be necessary.
But speaking of radical steps and radical actions, we've just seen an announcement coming in where HCL Tech has picked up 10.5% in Sarvam, which was India's frontier model company. Will bets like that now have to become stable stakes? They will, yeah. I think I met Roshni back in February. I think what she has done is exactly right. I think it is. India is too important and India is too big to let go of any of these layers. I think it is a fallacy that we should not work on the foundation models. I think for two reasons. One, you have to have your own foundation models, and we are too big and too important to let go of that. But at the same time, we are still very early. As dramatic as the advances have been, we tend to think of this as, wow, we are so far behind, but we are not. It is still like maybe the second over of a T20 match, maybe the third over, But there are still remaining, 37 overs still to go. And I think on power consumption, on hallucinations and understanding of the world, on improving access, there are so many advances that are still to happen in AI that it will be years of work, and I think that we should be working on those. And I see, and of course on the applications of it, what can we do with this continuously? I think all of this has to happen at the same time. One of the other developments, of course, has been the US government basically coming and saying that pull the plug on Claude Fable and Mythos and don't give access to anybody else but US citizens. Now, to your point, that you believe that it is going to be a sovereign priority, a national imperative to actually have your own foundation model, because this is the world that we're going to live in. And increasingly so.
And we are so important as a country, not only for our own citizens, but for the world, that we have to have control of our destiny on this front. And I also think that we have to be prepared that any of these kinds of decisions, any of these lightning bolts can drop anytime. And so having independence there, having our own Atmanirbharta would be absolutely critical. So that's why it's a good thing that Sarvam is doing what they are doing. We need a lot more of that. A lot more of that.
Well, how do we get a lot more of that is the question. You know, the criticism is that, look, the private sector hasn't done the heavy lifting when it comes to R&D, when it comes to R&D spends. The government has done the heavy lifting as much as is possible at this point in time. We've just got the first tranche of the research RDI fund going into more space tech ventures. But what more can and should be done for us to be able to play, successfully this long test match if we're only in the first few innings?
Yeah, I think that in India we are fortunate that we have a government which is not only aware of the state of AI and the issues with AI, but is frankly ahead of that. When you listen to the Prime Minister, when you listen to Mr. Vash now, when you listen to Abhishek used to do it, now it is Rajiv, the leaders in India know the stakes and what needs to be done. So beyond what the government is doing, one of the key things that is missing is that, there was a great ice hockey player, Wayne Gretzky. He used to say that I skate to where the puck is going to be, not where it has been. And so you have to have people who understand where these trends are headed and put 2, 3, 4 year out bets.
The question though is, you're speaking about taking that moonshot. Now, what is it going to cost to be able to take that moonshot? Who's going to foot the bill of that moonshot?
That is an extremely important question. I believe, and I come from, this is my 5th decade in AI. I come from a world where I believe that much better approaches are still in front of us. I think this idea that every time you write a prompt and these thousands of GPUs burn and then you make a minor change to the prompt and then thousands of GPUs burn, I think this is complete nonsense. There are going to be much better AI approaches that are going to come in our future. So we have to build those. So I think we have to be pragmatic about it.
Is there a sense of urgency now? I mean, this trip, all I've heard from everybody is, the token maxing is over and efficiency is in. Is there a sense of urgency on that?
Absolutely. This is the most important thing, and the Chinese models already do this. If you look at DeepSeek and Minimax and all these models that are coming out of China, they already have their #1 priority as their efficiency of model execution. I think you will see more and more of that. NVIDIA itself is working on that, on their own models, but also on, of course, this unbelievable engineering that they do. And you were at AMD earlier today. So all these people are working on it, but the model technology itself has to go through improvements. And I hope that we can sponsor some of those.
You're talking about OpenAI and you're talking about Anthropic. You've known OpenAI for as long as the company has existed, Vishal. But as both these companies go public, what do you believe, forget the market and what it eventually gets valued at and so on and so forth, what could both these companies going public actually mean for the AI ecosystem? Will it put in more discipline and rigor into how things are approaching this and this whole business of burning through stuff, or do you think that what could the impact be?
I think it will be very, very positive. My instinct is that it will be very positive. It will be, of course, liquidity moment for the employees who have built these companies. I think it will also be the scrutiny that public markets bring, the responsibility that public markets bring will be a very good thing. And I think that exit will propel dozens of other companies, hundreds of other companies into going after that. So the Valley, we are on Sand Hill Road. The Valley has always been like that. I have been here now, this is my 36th year in the Valley. And it's always been Sand Hill Road. There is a mindset here that people innovate, people build new things. There is a sense of purpose around that. Of course, the funding and the financial success and all of that. I think that these companies going public, especially Anthropic and OpenAI going public, will have a very positive impact, not only on the Valley but on the world at large. It will also force a lot of rigor in the way they operate. I hope that they can continue to be bold and continue to invest in the future, which of course Silicon Valley companies do, even when they go public, like Google. Google is actually raising money.
Yes, as is NVIDIA, by the way. Who would have thought?
Who would have thought, So I think that it's going public, getting the regular public involved in these companies is going to be very positive.
What does that signal to you? The fact that Google is raising money, the fact that NVIDIA is doing bonds to raise money, what does that tell you?
I think these are companies that understand the future, the power of the future. They don't live in the past. They don't look backwards. They look forward. I think this is what, more than anything else, what AI is teaching us to do is to free ourselves from the known. If you put yourself in the mindset that, let us say we get to models which are 100% accurate. We are not there today, but let's say in the near future we get to models where at any moment in time they have a perfect capture of everything that happened before. What do we do then? In that situation, what happens? Let's say all of humanity's knowledge is embodied in these models, maybe with a 1 minute delay. And now you're able to ask this model anything. I think in that situation, I've thought about it. One of my friends in India asked me about this. When I came to this country, I was the age of a little bit older than your nephew. I was 19. And my uncle gave me a book by Krishnamurti, the Indian philosopher. The book was called Freedom from the Known. Because I had walked in from Western India to Syracuse, New York.
Yeah,
where it was
Baroda to Syracuse.
Baroda to Syracuse. It was minus 22 Celsius on the day that I arrived there. Minus 22. And I was wearing the North Star shoes, and my brother came to pick me up, and he was like, have you lost your mind? You will get a frostbite, they'll have to cut your leg off. So I had to go through this exercise of freeing myself from what was known. And I think, and Krishnamurti's point was that when we free ourselves from the known, we liberate ourselves. Our mind can think freely, we can create new things, we can create completely new worlds. So I think that in the time ahead, that's what I tell my own sons, that's what I tell the youngsters, that you will soon approach a point where AI will be so empowering that you will have no limits to what you can imagine and what you can build. And so what would you build in this kind of a situation? I think that these companies understand the power of that, that there is a great future in front. And they are not beholden to the past. They are willing to sacrifice the past in order to get there, to attack the future. I think if we had 1 billion people, the Prime Minister thinks this way, if we had 1 billion people who are able to be entrepreneurial, this would be an amazing thing. So that's what I am working on. By the way, that's what Vandana is working on. Her company is working on this. And I think that is what the future is calling for.
Speaking of the future, Vishal, human capital and token capital and how the two will coexist, I think again is the big question. What does it mean in terms of the workforce? What is it also going to mean in terms of pricing, how you do contracts and so on and so forth? Chandra at the TCS AGM said that for every employee you'll have an agent. So, if you have 3 million people in the workforce across the IT, or 5 million or whatever the case, maybe you'll have as many agents as well. Do you see that as the future?
100%. Actually more. You will have hundreds of agents. My nephew, he lives here in San Francisco, he's building a world model. He has an agent that he uses to run his entire household and his work. But it is not one agent. There are something like 150 agents that he has to manage his music, to the lighting in his house, the locks, the security, his car, and his work, his Slack channels, what the people are doing, have they checked in their code in GitHub. He has dozens of these agents that run constantly doing his thing. It is shocking. So it's not only one agent per employee, we'll have hundreds of agents per employees. And I think that is a very good thing. I'll give you one example. over the weekend, I counted how many photos I have in my phone.
Physically?
Yeah, I mean, there is a way that you can count that. And I am not an avid photographer. I am not a heavy-duty photo capturer. I, on average, do 6,000 pictures in a year on my iPhone. And I was calculating in the days before the iPhone, how many pictures did we do? And probably in my case, it would have been 250 or so in a year. And of those, maybe 20 were taken by me.
Yeah.
So what does that tell you? I think that we tend to not take into account the dramatic possibilities that these new mediums offer to us. And this is what is going to happen. We are, instead of 300 times as many pictures, you will have 300 times as much work happening and we won't even know it. We will get used to it. I just hope that India thrives in that transition, that we manage this transition, and that people manage themselves through this transition. But if we do, there is no doubt that this will be a great enabler. And token capital is a good way to think about it. That's a present way to think about it, the way we have AI today. It may not be, tomorrow's models may not be like these token generators, there might be other things. But today, I think for sure, this is a very good way to think about. Like you have people who are generating certain amount of work, and then you have these agents that are generating a certain amount of work, and you have to find a way to maximize both.
Well, speaking of exciting possibilities and exciting opportunities, with what you're building here, and this is in a sense a fresh startup innings for you. What can we expect? I mean, what are the kinds of things that you intend to chase after?
My dream is to help businesses thrive. This is a huge wave that we have created, that AI is a huge wave. I think businesses have to learn to ride this wave. I want to help them ride this wave. And in the process, I want to create a culture where large numbers of people can thrive. And if I manage to do this in the years to come, I'll be very happy.
Best of luck with that, Vishal, and may you thrive, and may all those who you hope will thrive along with you find their success as well. But always a pleasure. Thanks so much for joining us here on Voices from the Valley. It's great to have you back on the program. That's it then on this edition of Voices from the Valley. Keep your comments and your feedback coming in. We'll be back with more newsmakers and headliners. Till next time, thanks very much for watching.
Online education platform Corsera says AI course enrollments on it have risen from about 15 per minute a year ago to nearly 20 per minute today, roughly 1 every 3 seconds. The company has also expanded its enterprise reach to thousands of organizations as demand for AI-related training accelerates across sectors. In February 2025, Greg Hart took over as president and CEO, stepping into the middle of what he calls a rapid shift in how people learn and work because of AI. He joins Shireen Bhan at Coursera's Silicon Valley headquarters to talk about what this surge in demand means and whether traditional models of online learning can keep up.
What a year it's been for you, Greg. Coming into Coursera, you joined in February of 2025. You're in the middle of the AI onslaught. Describe to me what the journey has been so far.
It's been fantastic. So, as you mentioned, I started in February of 2025 at a time when AI, had already been a burgeoning, topic of interest for learners around the world. That has just accelerated. We are seeing the pace of interest in AI skyrocket. A year ago, we saw about 15 enrollments every minute in AI content. So far this year, we're up to 20 enrollments per minute on Coursera, so one every 3 seconds.
One every 3 seconds?
Yes, somewhere around the world, somebody enrolls in an AI course on Coursera every 3 seconds.
Okay.
So it's been phenomenal. And then, of course, as you know, we announced and then closed the acquisition of Udemy, one of our competitors, about a month or so ago now. And so a lot of focus on bringing the two companies together. So it's been an eventful first year.
It has been an eventful first year, and I'll talk to you about the integration of Udemy in just a second. But let's go back to the landscape that we find ourselves in. And I think the question that everyone seems to be asking each other here in the Valley and around the world is, are you going to be cloudified or not? And do you have an answer to that?
Well, I have a really strong perspective on that. First of all, everyone around the world needs to upskill and reskill in this age of AI, because AI is changing what's possible so rapidly that if you're not upskilling and reskilling yourself to enable the right way to take advantage of those capabilities, you will be left behind. That's true of companies, that is true of individuals. That is Coursera's mission. We are aiming to help upskill and reskill the entire modern world for the moment that we're in. There has never been a more pressing need for upskilling and reskilling, post-secondary education than the moment that we're in right now, with the way that AI and technology generally is changing the landscape of what's required in the workforce.
As far as AI is concerned, from a market standpoint, they see it almost as a double-edged sword for Coursera, and that's reflecting on your stock, right? So how do you address some of those concerns on what you can do with AI, but also how do you deal with the headwinds that you have to encounter on account of AI?
Well, I think that one of the things that we're seeing is that there's skepticism that in an age of AI, the content that Coursera has to offer and Udemy has to offer is less valuable. I have a different perspective. My perspective is that in an age where it's easier than ever to create content, the value of expert human-created content from the leading universities in the world, which was how Coursera was founded, and the top technology companies in the world, because we have content from Google, from Meta, from Microsoft, from Anthropic, from OpenAI, from AWS, is even more valuable. And then what Coursera brings to the table is not just a catalog of that content, but a deeply rooted in academia and in education perspective on how to deliver that learning in a way that gives verified assessment and proof of learning. And we see that reflected in the huge demand for micro-credentials across all of our platform. And so I think we are uniquely positioned to actually help with that.
Will that ensure that you can enjoy the pricing premium that you have so far?
Well, I think that that gives us an opportunity to both do a few things. One, continue to expand the audience that we serve. So with the combination of Coursera and Udemy, we now have close to 300 million registered learners around the world. That is a massive, massive number. And we serve 18,000 enterprises. So we're not just a consumer-focused company, but we also help both businesses and universities and governments adapt to the pace of change by enabling them to leverage Coursera to help upskill and reskill their constituents, whether those are employees or students or faculty or government civil servants.
The number that you gave me of individual users who are signing up, what's happening on the enterprise side? How many are you adding every second on the enterprise side?
That number is actually a combined number across both enterprise in terms of enrollments across enterprise and consumer. But we're seeing huge interest in AI-related content, not surprisingly, on the enterprise side as well. And so the primary reason that enterprises come to Coursera or to Udemy is to help upskill or reskill their workforce. Historically, pre-ChatGPT, in November of 2022, that was probably on more technical content or a more general, learning and development type benefit. Now that is increasingly on how do I leverage AI within my workforce? And so what we do with enterprise is really sit down and try and understand the objective that they're trying to accomplish, and then work with them to craft exactly the right approach to enable them to get that upskilling and reskilling in a function by function way. So it's not just general AI education, but it's actually very practical, targeted AI upskilling for a given function within an enterprise.
So how does that change the rules of engagement as well as the partnerships that you have with enterprises, the likes of Anthropic and so on and so forth?
Well, in terms of rules of engagement, we have content from Anthropic on our platform. with OpenAI, we both have content from OpenAI that is offered through Coursera to some of their partners. And then we've actually helped to develop capabilities on OpenAI that they leverage in their OpenAI certificates. And so, which are all AI-focused certificates that they offer, primarily for education purposes. And so we are both a content creator, a content receptor, and a technology creator that works with them.
So what, if I were to ask you to simplify for all of us, what will be the big differentiator and the moat for you going forward in an era where it is easier to create content? I know you gave us a glimpse into why you believe that the content you create is different and not commoditized, but what will be the key differentiator going forward as people refine these skills?
I think one of the big things that we're focused a lot on right now is learning about AI through AI deployment in the flow of work. So using technologies like MCP, Model Context Protocol, we have integrations already with ChatGPT. You know, we were one of the very first partners that they had there. We recently launched our integration with Microsoft Copilot. We have integrations as well with Anthropic, with Claude. And so deploying that within the flow of work and then also leveraging all of the data that we have on the right way to help people learn. What is most effective at not just going through content, but actually delivering true learning. And we're very focused on skills and skill delivery, skill assessment, and proof in a verifiable way of mastery of that content. That, we believe, will be what sets us apart. It's the history of the company coming out of academia, but it's also what we believe will set us apart as well.
So all the new signups that are happening, everyone coming for AI, or is there anything
Oh, no,
else?
there are a lot of other, so obviously AI is the topic du jour around the world, but there are a lot of other things that we see, not just in sort of response to AI, but generally. So huge amount of interest in human skills right now. So creative thinking, communication skills, resiliency, flexibility. And I think one of the reasons for that, and we've seen interest in content and courses in those areas more than double over the last year. One of the reasons for that, I think, is that our people recognize that as technology is capable of doing more and more, and your technical skills might not, perhaps matter as much as they used to, that the human skills you have actually become a really important differentiator. That's one of the big areas of interest. We're also seeing a big increase in sort of more domain-oriented learning. So in particular, healthcare has been a big increase over the last year. It's one of the few sectors in the US economy where you're seeing a lot of job growth within that sector. And so we're seeing a lot of need for training and learning around healthcare as well.
Let's talk a little bit about India, because that is a big focus market for you, not just in terms of the number of users that you have there, but also what you get done out of India. How has that played out for Coursera? And over the next few years, how do you see India playing for the Udemy Coursera, combined entity?
Well, it's an extremely important market for us, both strategically and also from a, how we build what we build. So more than 20% of our workforce is in India. And that's not just engineering and product. That's across data, operations, marketing, finance, sales, content. We have a huge set of teams in India that are helping us continually improve the product and grow the business. It also is one of our most important strategic markets from a business perspective. So on the Coursera side, it's our number 2 market in terms of registered learners behind the US. And my bet is that India will pass the US at some point in the next few years in terms of just sheer size of number of learners. And then on the Udemy side, it's also an incredibly important market. We believe that there is a real need within India to benefit from exactly what Coursera and Udemy offer. Obviously, the Indian population is massive, and India has historically had a really powerful and important role in sort of initially, offshoring and service organizations, et cetera. A lot of, and of course, it has gone well beyond that, but that's still an important part of the economy in India. A lot of those roles are being directly impacted by AI. And the Indian government forecasts that AI can add about 40% to the economy by 2035. That's only going to be recognized if India can actually upskill and reskill their population to take advantage of that opportunity. That's where we come in. It's one of the reasons that we're, partnering with the government on Karma Yoga Bharat, and we think that's a really important part of helping the government achieve their overall goal of Viksit Bharat. And so we're looking to partner not just with the government on things like that, but also with universities in India. And one of the things that we see a huge interest in India is micro-credentials. And because the Indian government has what I think is a very forward-thinking approach to online learning, where you can take up to 40% of your credits online, we are very focused on working with NSQF to get as many micro-credentials as possible available for credit. Just because we see really strong signals, not just from students who are interested in those, but also from employers. 100% of Indian employers would be willing to pay a higher salary to a student who comes out of university, not just with a degree, but with a micro-credential. So there's clear demand for that. And my perspective is for India to actually address that opportunity that AI represents, they need to continue to be very forward-thinking, and we're very excited to continue to play a role in that.
You did a significant price cut for India, down about 60%. We spoke then. How much has that changed the trajectory of growth for you in India?
It's definitely helped. I mean, I think we've been really pleased by the fact that, number one, we're more affordable and therefore more accessible to a much broader set of the population. We are priced in a way that makes much more sense than it had historically. And I think it helps, have a broader portion of the population really understand the value of the offering that we had. Whereas before, it was priced in a way that, a lot of people just unfortunately couldn't afford. Now it's much, much more accessible. And so we've seen that, help with a growth acceleration perspective.
Let's talk about AI within Coursera. I mean, everyone working at Coursera now skilled in AI. How much of AI are you using within the organization already?
Everybody is using AI all the time, every day, in many, many different ways. And so when I joined in February, one of the first things that we focused on is how do we make sure that, because we had been using AI, well, obviously we had lots of courses on AI on the platform, like we've spoken about. We've been using AI on the platform as well as part of our product efforts from very shortly after the launch of ChatGPT back in November of 2022. But I felt like internally, we weren't necessarily like upskilling and reskilling ourselves as quickly as we needed to. And we're a learning company. We need to make sure that we are not just preaching it, but also practicing it. And so one of the things that we did is we created we created sort of a tops down and a bottoms up approach. The bottoms up approach is something that we call AI Sparks. So everybody has access to Gemini, to Chat, and to Claude.
With token limits.
Yes, we are very mindful of token limits. But actually, really, when we started it, we weren't focused on that. We were focused more on making sure that we just gave people the ability to experiment and to really learn. And what we wanted to do is bring people together on a regular basis to just share what they'd learned. And so every month we do an AI Spark session, which is people across the company are volunteering to share, here's what I did, here's how it changed the flow of my work, here's how it improved it. And then people just start sharing, and they're among the most popular meetings that we have as a company. We also have a centralized organization in India, the SOC, we call it. And the SOC takes in requests from any different department within the company of, we have a need for a workflow that we've been doing by hand, or we've been doing in, sort of a semi-automated way, but it's not nearly as efficient as it could be. Can you help us create a better workflow leveraging AI? The SOC will take in that request. In a week, they'll turn around a pilot. They'll then work closely with the team that submitted it. In another week, they'll hand it over. And so we go from idea submission to handover of an actual workflow in 2 weeks, where the SOC has also trained the team in how not just to maintain it and run it, but also to improve it. Because one of the real things that we're focused on doing is every time any team is engaging with AI, we want to make sure that they are improving their baseline of what's possible tomorrow or next week, et cetera. So it's not just using it for, a query to get a question back, but how do you actually create a workflow? How do you create an agent that can help you be more efficient in your role? And how do you start measuring the impact of all of that, both in terms of, cost savings from an efficiency perspective, but also in terms of ROI for things like outbound sales on our enterprise side. And we see really positive signals across all of that. One of the things I'm most proud of about the SSC is that their pilot success rate is 95%.
No.
And so very
And this
few
is
of
all
the
happening out of
pilots-
India.
It's all happening out of India, in collaboration with folks around the world. But that is very different than what we've seen from other companies. And MIT cited a study that the opposite was true. Most of the time, 95% of them fail. And so I think that's in part because of the passion of that team and the way that they engage and the way that they are very focused on not just, creating a tool, but then also training and helping the people learn how to fish.
In a way, do you think we're at that point where we're only going to see an accelerated pace of creative destruction and we're going to see more entrepreneurship, not less, even though the narrative is that big tech is sort of, controlling everything. There is this tech oligarchy in place. But, do you think we're actually going to end up seeing more creation?
I think we will, for two reasons. One, not everybody's going to work for big tech. And the ability to create a startup is far easier now than it was 20 years ago. And if you think about, just the US technology industry, one of the reasons that the US technology industry is often the envy of the rest of the world is because it created an environment in which it was easier to create startups and raise money for startups in the US than anywhere else. Well, now AI is democratizing that around the world because you don't necessarily have to have access to nearly the capital or the network or the engineering talent to create an idea and create a business around it. So I think it will be very much a diffusive force in terms of the number of ideas that come up, not a destructive force, and in terms of the pace of change that we see.
If I would ask you in terms of direction and in terms of what we can expect from you, in terms of AI offerings, and of course on the back of the Udemy deal, what would the next few months look like? I mean, what could you potentially end up doing at the end of 2026 and 2027?
Well, one of the things we're very focused on right now is bringing the two companies together. So right now we have a Coursera platform and a Udemy platform. Our goal is to obviously get to a single unified platform. That is the number one focus for the company
when do you hope
right
to get
now.
that?
We'll come back to you a little bit later and share that. But we're prototyping on that now, and we've been doing a lot of planning on it. It will be, what I can tell you is that that platform will look very different than either Coursera or Udemy do today. It will be, we believe, a far more effective vehicle for not just learning, but skill delivery, and not just skill delivery in a check the box sense, but in actually a verified assessment and proof of that skill delivery, because that's what employers are looking for. And that's certainly when consumer learners are coming to us, that's why they're coming to us. It's why our certificates are so popular, our micro-credentials are so popular. And so it will have AI as a core feature of that platform, and one that helps us deliver an experience that is more in the flow of work or in the flow of life, more interactive, more engaging, and more effective at delivering outcomes.
So what is the one skill that you have learned in the last 12 months that you've been here? And what is the one skill that you hope to put down on your to-do list?
In terms of the skill that I think I always want us to improve at as a company is how do we move faster? I just think there's so much benefit from speed that will, even if we're moving at 2x the pace that we are today, in a few months' time, I'll still want us to move faster. So that's always the thing that I'm focused on for improvement. In terms of what I've learned over the last year, I would say that one thing that stands out for me is how important it is to ensure that the entire company is aligned around our mission, and that no matter how much you think you've said that and made that clear across the organization, reinforcing that on a regular basis, both of the wins and where you might be struggling against that mission, is so important to give people context and help focus their attention. And so that would be the thing I would say that as I've taken away from the last year.
So what is the message that you want to send out to all the Corsarians in India?
Well, I would say, first of all, thank you for everything that you do for not just Coursera and for Udemy, but for all of our customers around the world, whether those are individual learners, whether those are enterprises or universities or governments that leverage Coursera and Udemy. Thank you. Second, continue to focus on those customers, continue to invent the future of learning every day on their behalf. And I look forward to seeing you on my next visit.
Well, we hope to see you in India, and look forward to seeing a lot more of you there as well, Greg. But we wish you the very best of luck with all the plans that you've laid out for us here on the program. And thanks very much for your time today.
Thank you so much. It's been an absolute pleasure.
Well, with that, it is time for us to take a break here, but the conversations and headliners will continue on Voices from the Valley. We'll be back with you in just a moment.
Microsoft isn't just building AI tools, it's rebuilding the entire software stack for the AI era. At the core of this transformation is Core AI, a startup inside Microsoft led by Jay Parekh, focused on creating the next generation of agentic applications.
So how many times do you get mistaken for Satya?
I was waiting. I was like, I wonder if she's going to ask that question.
Of course I'm going to ask you. So how many times do you get mistaken for Satya?
From weekly iteration cycles to rethinking how humans and AI agents work together, the rules of software are being rewritten in real time. Core AI is building the end-to-end platform to run, manage, and secure agentic applications across enterprises.
Meeting Satya Nadella, joining Microsoft in 2024 to set up the AI startup, if I can call it that. You know, with a 50-year legacy behind the organization, how challenging has it been?
Yeah, so when I got here about 1.5 years ago, really what we want to do in the Core AI team is help not only the company, but also our customers kind of reimagine, rethink what it's going to take to build, to run, to manage all of these like new applications that are being invented, being created out of this technology that is AI, right? So, and that requires an entirely top to bottom kind of systems overhaul of what we've done to build software in the past, right? So in terms of like being able to build the applications with different tools, being able to support and build a new platform where these agents are running because they're interacting with the real world, they're thinking, they're planning with the models. You need different security guardrails around these things. So the entire technology stack needs to be kind of, we need to rethink the whole thing. And that's what we're focused on, is migrating or kind of transforming the way we create this new agentic software stack.
You know, I'll come to the agentic software stack in just a little bit, but let's talk about what's happening with the pace of change that AI has brought upon us. I mean, you know, within 3 months, the world is looking completely different. Now, from your point of view, as you plan out for the future, is this pace of change sometimes overwhelming? I mean, how do you deal with it?
Yeah, it is
and
absolutely.
And how do you plan for it?
Absolutely. Everything's going so fast, right? And sometimes for us, it is where you will come up with a plan or an idea one day and you wake up the next day and you have to stretch it out and try something else. So there's a few things here, which is one is it's really about the way we are working as an organization, because the technology in the world is going to keep changing quickly. So saying, hey, we're going to read more, we're going to like work more hours, we're going to invent more days of the week, like while those things they would be nice, they still probably won't keep up, right? So a lot of it is really making sure we are adapting faster and faster. And so that is a lot of how you kind of change the team dynamic. So one is making sure we do have time to learn, to observe, to be curious with our customers. Two is making sure our iteration cycles are very fast, right? So we don't do, for example, planning over a really long period of time, because you can go and make a plan for a roadmap for 6 months or a year, and within like a few weeks that it's going to be out of date.
Right.
So you want these short iteration cycles of what you're doing. You absolutely want a North Star, but you want to be iterating kind of week by week.
So is it literally
adjusting.
week by week?
It's day by day for some teams, at most kind of week by week. Yes.
Agentic future that everyone's talking about at this point in time. Where are we in that journey? Are we close to that inflection point? I'll link that back to what Satya said in his post yesterday, that we have to reimagine the workforce and reimagine work with human capital and token capital coexisting. So what does that mean now as far as the way that organizations are structured? What do you prioritize today?
Yeah, so there's going to be a few things. One is just the overall system that is supporting this new way of working, right? So it's going to be the tools that we use as employees to do our job, whether you're in finance or you're a developer or whether you're a salesperson. There's where these applications and how those applications are going to run within your enterprise, as Satya mentioned in his post, where there is this end-to-end system, right, that has to come together that does allow you to manage kind of your human capital, your tokens, and then really we got to be focused on these different outcomes, right? And knowing what we can do with the power of the technology plus the power of our people. What types of new problems should we go tackle? What is the ROI on that, and what more value can we build? Either stuff that we may be able to do to save, because some organizations and some teams may get the biggest benefit there, but also what else can we tackle together? So it's really bringing those together and not as disparate concepts. But for me, what I focus on in all of the stuff that we do in our team, it's really how do we get to a new cycle of delivering that value, that quantifiable ROI to the customers.
When you came up with the idea of the agent factory, and as you look at where we are today,
25 years, Bloom Energy has been chasing one big idea, reimagining how the world generates power. Today, that vision has made it one of Silicon Valley's most closely watched clean tech companies, with a market capitalization of over $80 billion and a stock that has surged more than 1,200% over the past year. As the AI boom fuels an unprecedented demand for power, Bloom Energy finds itself at the heart of the conversation on energy security, data centers, and the future of electricity. Its fuel cell technology is already powering some of the world's largest enterprises, and now the next phase of growth could be even bigger.
You know, we were last here in 2016 and so much has changed for Bloom Energy since then, and so much has changed for the world that we live in.
Absolutely. So what AI has done is catalyzed a revolution we saw coming 25 years ago. Our thesis was the world is going from a mechanical industrial age to a digital age. Everything is transforming to dependence on digital technology. And what does digital run on? Electricity. So for the first time in human history, unlike heat energy being the predominant need for energy to keep yourself warm and to cook your food so you don't get poisoned, electricity becomes the main staple of energy. That was our thesis, and we said digital electricity for a digital world is going to be required. And what is digital electricity? It is not a gas turbine or an engine that first heats the fuel, creates a fire, combustion.
Yeah.
That heat energy then runs a turbine. It becomes mechanical energy. You put big copper coils around it to convert the mechanical energy to electrical energy. Then you have freeways or highways and surface streets called transmission and distribution.
Yeah.
So before you get your electricity, when you flip a switch, what was happening was fuel is being consumed to make heat, chemical energy to heat energy, to mechanical energy, to electrical energy, to highways, to distribution streets. We said that's nonsense. You need to be able to make clean electricity from a molecule to electricity with no middlemen, who are all going to take their share and make this whole equation inefficient. And do that in a clean way, right where you consume the electricity.
Absolutely.
This was the Bloom thesis
25 years ago.
25 years ago, because Internet 1.0 had just happened. And we saw where the world was going to head with Moore's law and this continuous learning and digitization.
But did you anticipate this kind of power demand?
We anticipated an extremely large energy demand. So if you look at our mission statement, it was affordable power for everybody on the planet. Look, I'm an abundance guy. For some people, the glass is half full. For some people, the glass is half empty. For me, it's always overflowing, because if I drink the half in the glass, somebody is going to pour me another half. So for me, it's about abundance, right? So I always envision the world to be this place where there's abundance of electricity. But the but is, even I did not anticipate the extreme rate at which this growth in electricity demand is going to happen, which is predominantly being triggered by AI.
Yeah.
And we can talk about it, right?
Yes, we do want to talk about it. I mean, visualization is going to probably help people understand this better. When we talk about the surging power demand, the explosion that we're likely to see on account of all of this build-out that's happening linked to AI, what are we talking about?
So first and foremost, right, how exciting is this? For the first time in human history, we are manufacturing intelligence as a product, as a commodity. That's amazing. What it's going to do for the wellness of people all over the world and uplift lives in the long term. That's pretty amazing. That's exciting. But manufacturing intelligence, unlike a factory that manufactures chemicals or materials, what's the input? All the data that's out there and electricity. That's it. The machines are the GPU chips.
Yeah.
The output is intelligence. And there is no higher value product
electricity would have created than intelligence. So the value is very high. So, but then how does it actually happen? So these computer racks that are in big data centers, they're about the size of a big Godrej safe.
Yeah.
That
everybody in India understands.
That everybody in India has, right? That safe with the CPU chips, which was the previous generation of great IT data centers that we're all familiar with, would consume about 13 kilowatt hours per rack, 13 kilowatt per rack. 13 kilowatts will be roughly maybe 20 Indian homes. Today's GPU chips in that same Godrej safe size unit would consume more than 300 homes worth of power.
Wow.
And the chips that are being built 2 years and 3 years from now will probably require 2,000 to 3,000 homes worth of power in that one Godrej safe. And there are thousands of these Godrej safes in a single data center. How do you bring all this power into a data center? And how do you create that much electricity? And by the way, think about this. That factory is producing all this intelligence for a reason. It's going to make every other factory making everything else a lot more productive, a lot more efficient. It's going to allow us to do things in hospitals, in other places, in like research centers that we could never do. They all need one or two of these Godrej safes sitting everywhere there, sitting in every laboratory, in every building, needing 3,000 homes worth of power coming into that. So it's an explosion of demand.
Yes.
And that's what's creating this need.
You know, thank you for giving us that visualization of the kind of demand explosion that we're likely to see. And that is why people are excited about what Bloom Energy is doing. Now, talk to us about what it means to actually be able to cater to that kind of demand. It's being reflected in your numbers. I mean, we've seen record numbers as far as your financial performance is concerned. But what does it mean to be able to deliver to that consistently?
Great question. So when you have that large a demand of power needed in one single place, the only way to produce that power is right where you need that power, not producing it somewhere else and bringing it over. On-site power. That's very clear, and it should be clear even from the industrial age. Very large petrochemical plants, very large cement factories, they produce their own power. They didn't depend on the grid because the grid only brings power to spread it out to lots of people. Not for a one single concentrated use. So on-site power. Once you get to on-site power, countries like India should learn from what we are already facing in the US. The initial thought was we could use the grid. When you use the grid, very quickly you find out that the grid is not meant to support those kind of very large loads that can go up and down and create instability in the grid, so reliability goes down. If 95% of all the freeways and surface streets, like we talked about, transmission distribution, is being used by a single customer, then everybody else should not pay the toll. And if they did, the rates for all of these people are going up, and that's going to create a backlash.
And you're seeing that happen here in the US.
You're seeing that happen, right? So we decided we need to do on-site power. But the knee-jerk reaction was, let's bring the power plant that was hundreds of miles away and put that in our backyard. And it was okay as long as it was somebody else's backyard. If it is your backyard, you don't want the power plant in your backyard.
You don't want to deal with the heat.
It's noisy, it's heat, it's pollution, it's SOx, NOx, particulates. And it is unsightly to see, which means your property values are going to go down, and nobody wants it in their backyard. So you need not just power on site, but you need that power to be clean, no air pollution. You want that power plant not to consume water and take away the water that you need for your community. You want it to be quiet. Bloom thought about these things 25 years ago and said that's what digital electricity needs to look like. So we don't combust the gas. So we provide no air pollution. We produce no air pollution. We don't consume any water when we run it. And because we are modular and fault tolerant, we don't require backup generators that are running on diesel. You're very familiar in Delhi about having backup generators and what that does to your air. We use none of that to provide reliable power. So we were custom designed deliberately for applications like this for the modern age. And finally now, people are realizing that, hence the demand.
So let me push back on this, because I think the general narrative is that, yes, we get the fact that we don't want to power data centers using thermal, but renewable energy, and why can't we do renewable energy? Is that not the smart alternative? And that is the way that India is looking at it. You're saying that's not sufficient, and that, in fact, will not be enough at all.
I think we need all of the above. We are all of the above, believers in the total electricity system as you design it. Should there be nuclear? The answer is yes. Should there be solar, wind, hydro? The answer is yes. However, let's again go back to some numbers. India today consumes roughly 2,000 terawatt hours of electricity. So just remember the number 2,000, because we don't care about the terawatt hours. It's hard for people to fathom it. 2,000. The US, with 1/4 the population, consumes 4,000 terawatts of electricity. China, about the same size as India in terms of per capita, consumes 10,000 terawatts also. So China consumes 10 times more power and is building at a rate a lot faster than India. India's at 2,000. So imagine just getting to even today's China's numbers, 3 years, 5 years from now. That's 5 times the amount of electricity that India produces today. That has to happen in a very short amount of time. No one technology, especially solar and wind, because of the amount of land use that you have and the amount of land India has, and there are other needs for the land. There are other needs for the water. And remember, solar and wind are like rainwater. Nature gives it to you when it wants to, not all the time, which is not conducive for data. And even if you build those renewables, bringing that reliably to a data center in those large numbers we talked about earlier, there's not enough copper that India can import to be able to build those lines. So it's an and solution. So we should be adding renewables to power the general public. You need dedicated data centers running today on natural gas and in the future on green molecules such as hydrogen. But that is farther away. Reliably today on natural gas. What is great about this? Friendly countries like Australia, like Canada, like the US, like many countries in the Middle East. So the multiple sources of natural gas that India can rely on to create energy security and build a data center economy, because the speed at which AI is moving, if India misses this by a few years, the economic impact of keeping up is going to be pretty severe.
Well, you know, speed is of the essence and time is critical, as you point out. And that's the other thing that I want to talk to you about, which is very specific to the Bloom success story. And that is your execution timelines. You know, what you were able to do in 90 days, you've now been able to bring down to 55 days. How does that happen?
So, look, I think you're referring to the example where we did 55 megawatts for Oracle. We had promised that we would deliver from the day we signed a contract in 90 days, and we delivered in 55 days. And the reason is, again, our digital electricity platform was built with a hope that one day it'll be like an appliance. You basically bring that home, plug it into the gas pipeline, plug it into your system, and it's ready to run. That's when I would say we are really at our peak of speed. But we're doing very well today on that journey. So it used to take us months. Now we have shortened that to days. Our goal is to shorten it to a day where it's so easy to just apply it. And it's a Lego block-like model where not only can you do it at speed, but you only pay as you grow. Typically what will happen in a power plant is you'll build a very large power plant expecting a 5-year demand because it takes 5 years to build it.
Yeah.
So you would project out what you need and you'd build it and it'll sit idle, that excess capacity will sit idle until such time that you need to use it. Why would you do that? With us, just buy the Lego blocks you need today and we'll keep adding the Lego blocks as you grow.
As you grow.
Right? Pay as you grow.
Well, you know, one, of course, is the aspect of speed. The other is efficiency. And I think that is becoming very crucial to all the conversations that are happening now linked to AI. How efficient are you today over the existing solutions? And what's the plan in terms of enhancing efficiency?
Look, here's what I can tell you. From a data center and an AI perspective, there is not a solution in the world, even in the horizon, that comes anywhere close to where we are today. Let me explain what that means. The chips use low voltage, direct current as opposed to alternating current, DC versus AC. So think of this DC low voltage as being Hindi, okay? And what the grid provides, high voltage alternating current, is like Latin. And we go and convert that to Greek, and then we convert that to English, and then we convert that to Japanese along the way before we bring it to Hindi. That's what happens in a data center. All these conversion devices. So in a gigawatt data center, there's about $1.5 billion worth of equipment that's simply doing all these translations and taking away power at every step and being inefficient. We just eliminate that all with 800-volt DC architecture. Again, designed for the digital world, right? Because of that, number one. Number two, because we don't burn the natural gas, we are very highly efficient compared to at any size. So if you think about small, few megawatt, like data centers, we'll be at twice the efficiency of an engine or a turbine at that size. 50+% compared to the 25-30% on a lifetime. That's number two. Number three is when you generate the power on site, anytime you convert a molecule to electricity, you also generate some heat with it. That heat gets wasted in a large power plant. Because we are right next to the data center, that heat is used for cooling without using the electricity. So when we use that heat as well as the electricity, it's almost a 90+% efficiency compared to a 30% total use with all these translators in between. So we are already at a very amazing rate. And one beautiful thing that I'm looking forward to that we're going to bring into our technology is we are able to capture all the carbon dioxide being produced in the tailpipe in high concentration. When we bury that in the ground, which is called carbon capture and sequestration, we not only get zero air pollution, zero water, very high reliability, on-site power, on time, very quickly at AI speed, we also have zero carbon dioxide emissions. So it is not an argument between the environment and the economy. We don't believe in or, it's and. Good for the environment and good for the economy.
You know, and I think that is the dilemma that hyperscalers and everybody else in the AI ecosystem is grappling with, that you need all of this to be done, but at the same time, the environmental cost is starting to bite. So I would imagine that there are a lot more people today at your doorstep than there were maybe even a couple of months ago.
That's very true, because number one, today we are the best available option. With carbon capture and sequestration, we will be the best, period.
That's a big claim.
That's what we will do. There will be, my dream, Bloom is really successful when any place in the world you want to convert a molecule to electricity, there is no better solution than our platform.
Well, you know, I'm sure people watching this are going to take note of that very big statement that you put out, KR. But, you know, I want to come back to talk to you about all of this big spending that's happening, and you're really in the heart of it. You know, you have your pulse on the actual spends. $600 billion, $700 billion, $800 billion just in this year. You know, that's the kind of capex that's being spent by the big tech companies on the AI infrastructure build out. And at the same time, there is growing concern, at least from a market's point of view, that, you know, is this far too ahead of anything real at a fundamental basis? How do you see the two?
You know, the stock market valuations and where they all fall are in the realm of you and your analysts. You know that better than I do. I'm a technologist. Okay, so let me speak to fundamentally the value creation that is long-standing and sustainable. Unlike the dot-com bubble, unlike a financial crisis where homes were being loaned to people that did not have a credit, AI today is being built, that infrastructure is being built by these large companies who have very strong balance sheets, predominantly on the backs of the profits that they're making and the revenues they're collecting.
And now also raising money.
And like raising money to build it bigger. Can there be bumps along the road given the speed at which this is going? And again, a speed that we have never seen in any part of any industry, right? Most probably, yes. That's just the nature of things. But while there may be bumps, is this trajectory going all the way up north? Absolutely. This genie is not going back in the bottle. The AI genie is not going back in the bottle, right? That's for sure. Now, to build that are the companies that are betting on their ability to execute. Can they execute on the IT side of the picture? The answer is yes. The big questions that we have to ask is the policy, the legal framework among the governments that regulate it or don't regulate it or create any kind of burdens on that. How is that going to play out? Number one. And the second biggest thing is electricity, is power. The amount of power needed and the growth that has to happen there is something since Edison we have never done.
Every time I talk to a CEO, very often the analogy that I get is AI is like electricity. Does that make you smile when you hear that?
But there's some truth to that also, and here's what it suggests, right? In a digital world, next to food, shelter, water, air, electricity is a necessity. A kid being born anywhere on the planet, if he or she does not have electricity, they don't have a future. That's how essential electricity has become in our modern life. And for us to be there to say, we want to make this accessible, affordable, clean, and available in abundance to everybody, means that the opportunity for any young kid being born, sky's the limit.
So electricity is AI as well, right?
Electricity is, we used to call oil liquid gold.
Yes.
Electricity in this age is the invisible gold.
is the invisible gold. Well, we wish you the very best of luck here. Thank you so much for joining us. Appreciate your time and good luck with Bloom. And we look forward to catching up with you in India. But thanks very much for joining us on Voices from the Valley today.
Thank you. Pleasure to speak to you.
Well, I have to tell you that this was a masterclass in all things related to how power will fuel the AI revolution. So remember to tune into this conversation. If you enjoyed it, do send us your feedback and your comments. We always like to hear from you. Till next week, from all of us here on the team, goodbye and many thanks for watching.
Good evening. Thanks very much for joining us on India Business Hour. I'm Shireen Bhan. The headlines that we're tracking for you this evening.
A little bit of threatening, there was a little bit of whining, but at the end of the day, the talks continued and we made great progress.
US and Iran claim progress after the first round of talks end in Switzerland. Negotiations lasted 18 hours despite tensions sparked by President Trump's threat to attack Tehran if it does not restrain Hezbollah. Iran claims securing waivers for oil exports and the release of some frozen assets. Crude oil prices ease with Brent dropping below the $80 mark. Shipping traffic at the Strait of Hormuz remains stalled. Ship tracking websites show 12 vessels crossed the strait on Sunday, which is sharply